Because TSMC coming through with some strong sales numbers, an increase of 30%, sales rising 30% on strong and sustained demand for AI chips. We'll see if there is a positive read-through for ASML. We're watching Sanofi as well. That is potentially a stock that will face some pressure. It's halting an autoimmune disorder drug trial. Latest setback for the company after finding that evidence that is not working, so that is a potential drag on Sanofi. Watch that stock. Also watching WH Smith coming through with a potential impairment charge and may also be raising additional capital. The impact in the Middle East weighing potentially on that company's numbers. So we watch that stock as well, Hannah.
Okay, so tech in Europe in focus, drug makers in focus. They were yesterday, again in focus on the back of that Sanofi story, and a bit of focus on UK retail as well, perhaps, or global retail, in fact. Let's have a look at the start of the European trading day. We are out of the gate, and the FTSE 100 first to move, pretty flat actually this stage of the trading day, perhaps reflecting the fact that we've got some mixed inputs, if you like, to the FTSE calculation this morning. On the one hand, US markets went higher after the European close yesterday. On the other hand, the FTSE set to underperform, perhaps on the back of some of the mining moves, the oil price moves. Perhaps that's all part of the conversation as well. So the FTSE 100 up, though, by 0.2%, and in fact not underperforming the rest of the market. So the futures had suggested that maybe we would see that. But no, the FTSE kind of in the mix with the CAC 40 and the Xetra DAX, both of those moving higher this morning. The IBEX over in Spain up by 0.4%. Thinking about where the US futures picture is, though, Tom, and thinking about the still big unknown in the trading day ahead, which is the US CPI picture, raises questions about whether these gains in the European stocks are maintained. But for the moment, we move higher.
And again, I'll repeat, the European stocks have outperformed their US counterparts so far this month. We'll see if that continues. Across your sectors, travel and leisure at the top of the list, gains of 0.6%. Also coming through with some relatively decent upside is tech as a sector that is seeing some upside as well, up 0.4%. Auto is also gaining 0.4. On the downside, just two sectors so far in terms of what we're seeing on selling. Telecoms down about 0.1%. Utilities also down just 0.1%. But broadly, this is very modest upside that we're getting across most sectors. Again, just two sectors in negative territory, and across the benchmark gains of around 0.2%. And we're also watching some individual names, of course, the likes of ST Micro and ASML in the tech space.
Yeah, absolutely. Yeah, it's interesting on a day where US futures are pointing quite decidedly to the downside now, down by 0.5% on NASDAQ futures. Europe is maybe increasingly going its own way, and we see most, as you say, most sectors in positive territory. Yes, there's catch-up from yesterday's US trade, but it's interesting nonetheless. Utilities and telecoms, as you say, the negative sectors this morning. Let's get some further analysis of what's happening on these markets then. 8:02, so 2 minutes into a European session that shows modest gains on this CPI day over in the US. Marina Zavalock joins us, Chief European Equity Strategist over at Morgan Stanley. Marina, nice to speak to you on this programme. Thanks for joining the opening trade. So I guess I want to ask you first off about the detachment between European stocks and the global narrative, because it seems on quite a few occasions we come in and we can join dots between what we're seeing in Asia and the US, but it seems to sort of bypass Europe. And some days that's great for Europe and some days that's not great for Europe, depending on where the rest of the global markets are moving. And often it has to do with tech. So how do you play Europe in that context?
Yeah, I mean, maybe I'll explain that dynamic first, which is that basically earlier this year, we had a lot of diversification flows coming into Europe. And since the Iran escalation began, back 3 months ago, that completely stopped. So all the flows basically started to go into the US week after week, flows into the US basically nothing into Europe. So then when you have a market pullback, we're not participating as much in the pullback because we didn't participate as much in the rally to begin with. And then within Europe, I mean, you could take a tactical view. You can kind of look through the current volatility. We prefer to do the latter. We just refreshed our sector model. We would actually, on this volatility, we would be doubling down on the AI complex within Europe. So we've already liked the semis number one in our model, but
Yes.
I mean, the fundamentals are just outstanding and they're just going higher.
Okay.
We also like mining. We would be buying it on this dip as well.
Okay.
Capital goods, we just upgraded.
So let me ask you about that, about Europe's AI complex then. Is that trade, is it linked to your view on the AI theme more broadly, or is it for the reasons that you've described, the fact that Asia and the US have moved in different directions sometimes to Europe? Is it kind of detached from your broader global AI view?
It's linked to the global view, but of course in Europe we don't have as much retail participation, so we've lagged the moves in the US and in Asia. So it's linked to the global view, but it's not as volatile in the current market volatility. And it has more catch-up to do as the trade. The AI trade overall is going to continue to broaden.
On the European AI theme right now than the US one, based on pricing and how far they've come?
I mean, me personally, I have a lot of conviction on the European AI trade, but I haven't compared them side by side because I focus on Europe.
How broad-based is that view on European AI? And are there parts of the stack that you want to be leaning into more than other parts? And you pointed out there's a smaller number, clearly a much smaller number of players. So is it a fairly broad-based view? Anything related to AI that sits within European tech, you want to lean into that, or is it do you bifurcate it a little
I mean,
bit?
there's definitely different pockets.
Yeah.
So there's the AI capex trade, where in the US you can argue that half of the market cap, at least, of the S&P is exposed to this AI capex trade. In Europe, it's about 15% of the European MSCI Europe or SXXP. That's our favorite part of the complex, and that's especially semis. And there's various cap goods, which are now the largest weights in the cap goods index. There's powering AI, that's utilities.
Yep.
That's taken a bit of a breather, but we still like it longer term. We think it's kind of a grind higher trade. And then there is AI ROI efficiency, which is less of a focus for the market, but we really like the banks for multiple reasons, one of them being that they're the first in line to see the ROI benefits.
The banks
The banks
are the first in line
Europe.
to see the ROI benefits
Yes.
of AI.
Yes.
That's interesting. Is your call on miners, your positive call on European miners, is that also an AI story?
That's also, well, copper, our commodity strategist estimates about 1/3 of demand growth is AI linked, but copper has other drivers as well. There's supply constraints, supply disruptions. There's a lot of inventory building both in China and in the US. So it's a dynamic story, but it is AI related.
Can I ask Marina, what kind of upside you would expect to see for European stocks if we see some dramatic developments in the Middle East, by which I mean a medium-term peace deal, even just a short-term extension of the ceasefire?
Yeah.
What kind of expectations should we have about the upside that still remains for European stocks on that kind of theme?
Yeah, so if we had, say, an MOU agreement announced one day here in the future, then we think this would unlock inflows that have been lacking in European equities and a broadening. And the upside we estimate just in the short term from that kind of tactical dynamic is 3 to 5% tactically. And then longer term, we have 10% upside to European equities, but probably upside risk to that.
Is there a limit to the bounce because of a perception that perhaps this war, this issue could return? You know, the Strait of Hormuz has been closed, and so it could be closed again. Yeah,
I think there's the initial trade on any deal, which is the market will just assume that it will remain, you know, the deal will lead to a resumption in flows. Yeah. And we'll have that 3 to 5%, you know, sharp spike higher. Probably half of it will happen day one. And then there's the trade after the trade, which is thinking about, well, how quickly will the Strait of Hormuz reopen? And how much of this has already been priced in, because we've had various waves of the market pricing in imminent deals.
We're looking ahead, of course, to the European Central Bank and its action tomorrow, and markets not quite consensus, but almost there in terms of expecting an ECB hike, and the market's pricing in more than 2 hikes this year. So I'm thinking about the European economy. I'm thinking about discretionary.
Yeah.
Is something like discretionary something you'd steer clear of? How are you thinking about the European consumer and sectors related to that?
We're underweight discretionary retail. It's a tough environment. I mean, a lot of the macro indicators that are Europe specific are deteriorating. Hiring is slowing down. It's one of the, in general, I'm not very worried about ECB hikes. In general, for the index, as long as it's moderate level of hikes, it's good because we have a lot of exposure to banks.
Yes.
But for these smaller pockets, like discretionary retail, real estate, I would steer clear, and we're underweight.
Discretionary retail, real estate, but banks get another boost, not just from AI and ROI, but also higher rate environment.
Yeah, definitely. Higher yields, steeper curves, very bullish for banks.
So you like the banking sector. What's your concern? What's the thing that could undermine the way you're thinking about European stocks right now? So we've talked about AI, we've talked about banks, talked about mining, and I guess the one of the big challenges is what's going on in the Strait of Hormuz.
Yeah.
There's a huge amount of new listing coming to the market around AI. What worries you about your strategy at this point? What's the biggest unknown?
I mean, my biggest concern is that every year for the last 10 plus years in the summer, Europe trades choppy and sideways in aggregate as an index. Choppy, sideways, one day we're up, the next day we're down. Even under the surface, you will have momentum unwinding, the short momentum leg squeezing one day. So it's a bit of a directionless environment, period,
that's
seasonally.
World Cup.
Yes. Yeah.
Although
Anna's obsessed with this story.
I am obsessed with this, but I mean, it does often distract. I remember working in a bank, and the bank had to put on screenings because they anticipated that if they didn't, people would leave the building.
Yeah, we have all of our flags going up in my...
Yeah, you see, it can be
Anna's front-running the fact that you're going to be
it's a huge
distracted.
distraction. Yes,
through the World
I am.
Cup.
I'm making excuses
Many
for
of us will
myself,
be.
perhaps. Although I will say these things happen late in the European day, don't
Yeah, so
this time around. So maybe it's not quite the distraction.
But back to your question, I'm less concerned about material downside. I'm more concerned about a lack of direction, choppy sideways markets, and that some of these fundamental drivers that I'm talking about, they are more material. I mean, Europe tends to take a life of its own at the end of the year and in 1Q, so just having to wait for that period where we can focus on European drivers.
Just picking up on the World Cup again, Marina, is there a case that you could see some consumer stocks jump on the back of the World Cup?
I think less so in Europe.
Less so in Europe.
Yeah.
Okay. Don't lean in necessarily to the drinks makers of the Netherlands and elsewhere. Marina Zavalok, thank you very much indeed. Really interesting views on the European equity space as we see that outperformance, at least this month, European stocks versus the US. Morgan Stanley's Chief European Equity Strategist. Let's look at the core 6 for today then and check in on some of those movers. Standing out right now, Nestle actually, talking the consumer, up 1.2%. So a decent session so far, a decent print at least, early days for Nestle. On the downside, you're seeing a bit of pressure when it comes to that AI story, because Schneider Electric does have exposure to data centers, currently down 1%. ASML also a little weaker, despite the strength coming through from TSMC and their sales on AI demand. ASML is actually down 0.3%. Rheinmetall in the defence space, that's been under pressure in recent days, currently down 0.3%, but a decent session for LVMH, up 0.9%. And Novo also getting a lift, up 2 points. Let's cross over to Alex. Alex Morgan standing by with some of the other names on the move this Wednesday. Alex.
Morning, Tom. Yep, WH Smiths, as we were talking about earlier, expected to get a hit this morning. They're down around 15%. Now, they've had, if you like, sort of a profit forecast cut. They've had that capital raise and an impairment charge, now 16%. So the stock very much in the red. WH Smiths, of course, having moved to focus on the travel sector being one of the areas hit by the conflict in the Middle East. All right, let's flip it over and have a look then at other stocks on the move this morning. Sanofi, now, you were talking about them. Of course, they've had a new hit for the CEO to deal with, down around just under 1%. That was focusing on the autoimmune drug that's just been pulled, so that's another headwind for Sanofi. Turning over then to have a look at something else, another one on the move this morning. Yeah, ST Micro, this is an interesting one, up around 2%. This course on the semiconductor trade. And just finally, we've got Adidas, which are on the move this morning. Adidas, you were talking about the World Cup there. I can tell you as an Englishman, it's always a nervous time around the World Cup. But Adidas around 1% up this morning. They had an upgrade to buy from BFOA, and that's putting them alongside some other names like LVMH. So Adidas in the green, WH Smith this morning very much in the red, Tom.
I'll pick up, Alex. Thank you very much, Alex Morgan, with your movers and ahead of the World Cup, of course. Coming up on the programme then, we'll be back to the tech theme. Anthropic releases its latest AI models, but there's one big caveat. Find out what next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We are 16 minutes into today's session. You're seeing some modest upside coming through for European stocks across the benchmark, up 0.3%. Of course, investors, many of whom will be holding their breath ahead of inflation data out of the US. The biggest gains coming through right now for the FTSE MIB over in Italy, up 0.6%. Here in the UK, the FTSE 100 adding 24 points at 10,251.
Let's talk about some corporate news flow here in the UK. The owner of Boots is reportedly in talks to sell the business for around $10 billion. That report coming from the Financial Times, which says that Sycamore Partners, which took control of Boots last year, is talking to parties including the billionaire Western family and the Australian pharmacy group Sigma Healthcare. Let's get more then with Jennifer Creary, Bloomberg's global business reporter, who is with us to give us the latest on this story. So why could Sycamore Partners then want to offload Boots, Jen? Bring us up to date.
Well, because it could be potentially very lucrative. So a potential sale of Boots could come in at about $10 billion. That would make it the largest for a UK retailer since 2021. That's when private equity firm CD&R bought supermarket chain Morrison's for $9.4 billion. So in a way, this is Sycamore's modus operandi, right? They want to cash in on Boots' recent turnaround through either an IPO or a sale. Boots itself is set to get a new CEO. It's got Alex Baldock coming in, formerly of Currys. So Sycamore would be going out on a high. I think what's really interesting here are the prospective buyers. So the FT is reporting that Sycamore is in talks with the billionaire Weston family. So they're the owners of Associated British Foods, as well as the Australian pharmacy group Sigma Healthcare. Now, the FT is also reporting that talks with strategic buyers started before Easter. So what does this tell us? If the Westons buys Boots, it'd mark the family's return to UK retail after it sold Selfridges for £4 billion in 2022. And if Sigma buys Boots, then it would signal an acceleration of the Australian group's international expansion. So Sigma recently formed a joint venture with a chain of pharmacies in and around London called Greenlight Healthcare. So this isn't the first time that the city has seen a potential proposed Boots sale. Walgreens first explored a sale of the chain in 2022, but the sale process was pulled after bids failed to meet expectations. So let's see if things change this time around.
So, Jen, we can rule out an IPO for now. Is that pretty clear? That sounds like bad news for London, at least for our capital markets.
Yeah, exactly. So if an IPO doesn't take place, it would come as a blow to the City of London. So bankers were hoping that several kind of household names, including Boots, Waterstones and Superdrug, could really buoy London's IPO drought. So it would certainly be a disappointment, but it's also worth noting that the FT report says that these talks are at an early stage and no decisions have been made over a sale yet.
Okay, yeah, an important caveat. Bloomberg Global Business reporter Jennifer Curry, thank you for getting us up to speed on that story. Meanwhile, let's get back to the IPO story that we know is going to happen, which is SpaceX, the IPO on Friday. Concerns, of course, are being raised about the potential impact of demand then for the company's shares from index tracking funds. With us now is Bloomberg Equities reporter Henry Wren. Henry, what are the concerns when it comes to SpaceX's IPO and how these funds, ETFs and others, index funds, are exposed to that stock or will be exposed?
Yeah, so many of the index providers, they have announced that they are going to fast-track SpaceX into their indexes, right? So that includes the likes of NASDAQ and FTSE Russell. So when you think about it, according to third-party research, about 30% of SpaceX float will be bought by those passive funds in just 15 trading days, a very short of time. So we're talking about, in terms of volume, about $22 billion here. So why is this important? Well, think about it, because those passive funds, because they're buying based on rules, so they will automatically generate upward pricing pressure in SpaceX. But also in the meantime, if you're an active investor in anticipation of passive buying, you would also buy as a result, because you're thinking of there could be upward pricing pressure, so we'll buy into it as well. So this upward pressure is self-reinforcing. And then we look at the other side of the market, the other stocks, because for index funds to buy into SpaceX, they would have to use the other stocks to fund their purchase. And for the sake of that, they have to sell the other stocks, so other stocks may face a downward pressure instead.
Yes, so the portfolio effects of all of these big listings, certainly an area of focus, Henry. And so the AI build-out is part of the SpaceX narrative, and it's certainly been something that has been supporting some of the AI universe within Europe, and ASML is one of those. You've been writing about ASML. I was looking at the year-to-date gains for ASML up by more than 60%, but that's not actually that impressive, is it, given the company with which ASML sits?
So on the surface, indeed, like ASML, as you mentioned, up 60%, near a record high as well, one of the Europe's pride for sure. But if you compare to the other folks in the industry, like, for example, its peers like Applied Materials or Lam Research, or its key customers like Intel and Samsung, its gains are lagging. Actually, our data would show that on a relative basis, ASML's valuation is close to a decade low versus its key semiconductor equipment peers like Applied Materials. So what's really going on here again? So there are some concerns in the market about its supply capacities. So obviously the demand is very strong. It's not a concern. But how fast can ASML ramp up its supply? This is question number one. And the question number two being like how, in terms of its key customer, TSMC, how fast it could adopt its next generation of EUV machines, its most cutting-edge, advanced chip-making machine. So that's another question as well.
Okay. Henry, thank you very much indeed with the deep dive on ASML, well worth a read. And the potential market implications, of course, of SpaceX and its IPO. Bloomberg equities reporter Henry Wren. Sticking with tech, the IBM CEO says AI will change the shape of workforces, but won't necessarily lead to fewer jobs. He was speaking exclusively to Bloomberg's Romain Bostick at the Mizuho Technology Conference in New York.
I'll give you an example. So you can certainly improve productivity of individuals. We'll call that productivity apps. That's where both economists and CFOs get very concerned. But where's my bottom line on that? Is it leading to less expense or more revenue? Where is that? And that's hard to find. But let me give you a second example, and you'll say, okay, I can see that. We are pretty acquisitive. Anybody who does M&A, you often bring the entity in, and actually normally your profits might decrease for the first year or two until you take all of the cost and get the cost synergy. Using AI tools now, we can probably add 10 points of profit synergy on day one, because the amount of time it used to take to move contracts over, to do all of the sales automation, to do all of the revenue forecasting, all of that now using AI can be shrunk down to literally a few weeks. If you can do that, I can now take that 10%, I'm not saying it's 90%, but 10%, and invest it instead in marketing and R&D and innovation to drive the revenue growth even higher. That's an example of what I mean by use the AI to really fundamentally change how you do business. It's got to become part of your operating model of the company.
Are you taking that medicine yourself internally?
We are. In the last acquisition we did, we actually managed to take out about 60% of the G&A on day one.
What's the message, though, that you have, not only for your partners, but also internally for your own workforce with regards to how this actually not only helps, but maybe the idea that maybe it requires a smaller headcount?
It's not necessarily going to be a smaller headcount. So a lot of people talk about this. So let me give you an example. On college hires, we tripled our hiring in 2026 compared to 2025.
Okay.
Is the
for entry-level positions?
For entry-level positions, tripled. Absolute number, tripled. So you look at me and say, why? Because my belief is if these tools make people who are coming in out of college more productive, quicker, that means we are going to be advantaged by having more capacity to build things at a cheaper cost point, which means we can go get market share. Will the shape of the workforce change? Absolutely. But I think there will be more people in the value-driving functions, be it R&D, be it sales, be it marketing, and the creative activities. And some of what I would call classic back office will decrease because you don't need so much there. So the shape of the workforce changes. Total employment is not decreasing.
Okay, IBM CEO Arvind Krishna speaking to us exclusively with views there on how AI will reshape the labour market. For more on the tech outlook here in Europe, and particularly London's role in the AI boom, check out the latest episode of Bloomberg Tech Europe. It's at 8:30 a.m. UK time, airing this Friday.
They come around quickly. Excellent. Essential viewing on the tech story. Coming up on the programme then, Tom, we're going to get into the subject of private credit, and that links to technology, doesn't it? Because at the beginning of this year, we spent so much time talking about the links between software and private credit. That led on to lots of conversations about retail investors trying to get their money out, about gating, redemption requests. A feature, not a bug, is the message we were hearing earlier on from Apollo.
Yeah, Scott Kleiman of Apollo saying that there will, though, need to be, because of the lack of exits, at least in the industry, as a whole, some capitulation, particularly as interest rates normalise. So we'll have a lot more on that. We're going to head back to Super Return in Berlin. We're going to be speaking, Danny Berger, to James Reynolds from Goldman Sachs Asset Management. Going to be asking him why he sees resilience in the private credit market. That is next. This is Bloomberg.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
You're back with the opening trade, 30 minutes into our session that shows Europe standing out from the crowd, really, when it comes to the global narrative around stocks. So Asia under pressure, selling in the Asia session. The US, it seems, the futures picture there looking weak as well. Nasdaq futures now down by 0.6%. So a continued focus on technology weakness. Now, to some extent, Europe has not played in the technology boom as much as other parts of the world, as we were hearing from Morgan Stanley earlier on. So maybe that leaves us with the ability to go our own way a little bit. For today, it's the CAC 40 that outperforms, up by 0.4%. Other markets in Europe actually pretty flat, but the CAC 40 lifted by a combination of energy stocks, technology. So those are the themes that lift us a little bit higher, with the DAX broadly flat this morning. Tom, what do you see under the hood?
Yeah, it's also worth noting volumes are down about 20% versus that 20-day average. So that's also a factor. Maybe a bit of a story around investors on the sidelines ahead of that big macro event, which is the inflation, the CPI data out of the US. Across the breakdown, though, that you're seeing across the stocks 600, you are seeing the majority of stocks in positive territory then. 400 stocks seeing some upside. On the downside, 185. So that is the breakdown broadly in terms of gainers and losers. If we look at some of the individual names on the upside, interesting to see as we think about the NASDAQ 100 called lower again. ST Micro getting an upgrade from Bank of America. So that French-listed company gaining 2%. Again, on the AI story, so some upside there for one of the tech names in Europe. And it was interesting to hear from Morgan Stanley saying they are bullish on European AI names. Adidas up 0.9%. This is also an upgrade coming through, and a view from RBC that actually the luxury sector could turn around. LVMH then getting a lift on the back of that as well, up 0.8%, adding close to 4 points. On the downside, let's flip the board. WH Smith, potential impairment is the impact of what's happening in the Middle East. So that stock is down, and down hard, down 15% right now, the retailer. So global ramifications as a result of the Middle East and an impairment charge. That is a challenge. Sanofi is currently down 1%. It has halted an autoimmune drug trial, not getting the results it was hoping to get. So that is a negative for Sanofi. And Nokia, which was under pressure yesterday, it is exposed to the data center story, currently down 2.6%. And there is a view maybe that the TSMC numbers, with the read across to the sector here, maybe not quite as strong. Sales were up 30%, but maybe not quite as strong as some of the estimates out there. And Nokia potentially exposed to that story, currently down 2.6%. It has been a bit of a bellwether around the AI story. Anna.
It has. Let's get an update on some of the other stories we're following this morning. And we'll start with developments in the Middle East, Tom. US forces carried out strikes against Iran hours after President Trump blamed Tehran for shooting down an American military helicopter off the coast of Oman. In response, Iranian state media said the country hit 21 US targets across the region, including sites in Jordan and Bahrain. Supermicro shares fell in extended trading after it announced plans to raise $7 billion through a package of equity offerings. The proceeds will be used to purchase components needed to fulfill customer orders for its AI servers. Supermicro says it currently has around $39 billion in outstanding orders. And Taiwan is said to be considering tighter export controls on AI chip sales to China to further align with US measures. Sources say the proposal would restrict sales to all Chinese customers and allow authorities to prosecute chip smuggling as a criminal offense for the first time. The move is part of ongoing trade talks with the United States. Tom.
Now, the biggest names in private equity are back in Berlin for Super Return, the global industry's largest event. But with returns for investors dwindling in recent years, dealmakers are likely to face demands to hand their money back. Let's take you back then to Berlin and Bloomberg's Danny Berger, who is on the ground with another great guest. Danny.
Tom, thank you so much. That's right. I'm here in Berlin and so pleased to say that joining me now is James Reynolds, Goldman Sachs Asset Management Co-Head of Private Credit. James, thank you so much for joining.
Thank you for having me.
And there's a moment where it feels like your industry, at least the media attention, had kind of calmed down a little bit. But in recent weeks, more redemption requests, be it Cliffwater, be it from BCred, still this concern looms large. Does it just show to you that the kind of stress in the system, that it's here to stay for some time?
I don't think so. And first of all, we need to contextualize a little bit. You know, the media gets access to the BDC,
right?
Because only the BDCs do reports.
Yeah, I should probably clarify the stress
that's
in the
raw
retail
materials, right? But that's only about 450 billion in a context. Direct lending is about 6 trillion, and I would also have the broadly syndicated loan market in that, because at the end the borrowers are the same. So that's 6 trillion. By the way, when we talk about private credit, and you start looking at private IG, investment grade, and also ABF, you're probably talking about a 30 to 40 trillion asset class. So we need to contextualize a little bit. Like the news flow is a narrow lens onto something that is much bigger, and it's difficult to extrapolate.
Well, perhaps the reason that it's been brought on this narrow lens is just the fact that this industry, not necessarily Goldman Sachs, but a lot of your peers, basically pinned their next leg of growth on retail, that this was the future, the democratization. And I just wonder if that narrative has also shifted, that this industry needs to take a step back. I mean, your co-head, Vivek, has been very clear, you know, the term, and you as well, that the term semi-liquid doesn't make sense. Gates are a feature, not a bug. Do you think that the lessons have been learned for this industry, or is there still some maturing that needs to be done?
Look, I think, and we've been very clear about these vehicles should not influence how a GP does invest, right? And, you know, there are a lot of benefits to these vehicles, but if you think about our platform, about 85% of our platform is made of different type of vehicles. You know, more sticky, long-term, patient, institutional type investors. And so it's very complementary to what we have as a platform, but it's not the sole driver of how we do invest, right? And that's really important for us, and that has allowed, you know, to create, I would say, further growth on our platform. But the growth has not solely come from those vehicles.
Got it. So is that basically...
And the mix is very different for us, is what I would say. I was saying to you earlier, 20% will be institutional investors in these, in our private BDC, about 40% will be Goldman Sachs, wealth management clients. So the mix is a little bit different as well. And so you're starting to see dispersion.
So what difference does that make to you then if you do have some of these BDCs pulling back? Are you just seeing less people in processes, for example?
Yeah, so what happens, by the way, a lot of the attention is on the outflows. We really need to look at the outflows, the inflows, the repayment as well. So it's a more nuanced picture. But what it means is that there's less capital available to be deployed. If you think about the BDC industry as a whole, it went from 60 billion of AUM in 2021 to 450 billion roughly in 2025. So very active, and you could say that the marginal price setter was the BDC industry in the US. By the way, we're talking US here again. We need to contextualize. So right now, with that industry being somewhat on pause in terms of capital available to deploy, the yields have increased, right? Supply, demand, the yields have increased 20% at least in the US compared to maybe 3-6 months ago. We have capital, we're deploying, we're very active. I was saying earlier that Q1 was our most active investing quarter. Our business is also very global and diverse. It doesn't rely solely on our US BDC to be active. But yeah, this is a good environment for us to lean into.
When you think about activity levels for the industry as a whole, maybe they're more depressed, but I wonder for GSAM specifically, if you would compare this to a 2021, for example, which is how your volumes actually look, what would you compare this period in history to?
I would say first, our business is much more diverse today than it was in 2021. We have new businesses that didn't exist for us in private investment grade, asset-backed finance. The main difference is that the capital structures today take into consideration the fact that the rates are higher, much higher than they were back in 2021. I would say M&A volume is lower. If you think about M&A volume in particular when it comes to private equity M&A, it's lower certainly than it was. But I would say because you probably have less availability of capital, certainly less from the BDC standpoint, again, the yields are more attractive overall than they were back in 2021. And so, we have the opportunity with kind of how the platform is set up to lean into a market where we think the opportunities are more attractive, or lean back, slow down. And that's what we've done, frankly, in 24, 25, in particular in the US. If you look at those kind of 2 years or year and a half, we invested more outside of the US where we found better opportunities, better priced, maybe slightly more reasonable leverage levels. And now is a good time actually to lean back into the US.
So if a large part of that is because there are just less players who are present in the market, does that dynamic continue? Do you think it's an industry that shrinks even more than it already has and presents more opportunity for GSAM?
I don't think the industry is shrinking, by the way. I mean, again, you have to net the outflows with the inflows.
Sure. Right? But something's happening if it's just less competitive.
It's on pause. I would say it's on pause.
Okay.
I think it's a test for the industry. Performance matters, right? Underwriting matters, and you're starting to see dispersion in performance. I was saying earlier, we're starting to see a real flight to quality, in particular amongst institutional investors. They're looking at the performance and they're starting to vote with their feet as well. So I think the industry is on pause. I mean, we've been doing private credit for 30 years and 26 years for me. It's been a very good asset class, certainly for us, consistent returns, especially when you also adjust for the risk. So I would say it's not shrinking. We're still growing, by the way, certainly for us. I think the industry as a whole, maybe some parts of the industry, maybe it's more on pause. But if you think about private investment grade, asset-backed finance, I mean, this is also a growing part of this industry.
Well, one of the parts of the industry that it felt like it was on pause was tech-related deals are way down. Software valuations have come under pressure. How are your software companies performing right now? What does it look like on the ground?
Actually, our software sector across our portfolio is one of our best performing sector right now, and we just finished our portfolio reviews for the first quarter. We also learned to, I mean, you've got to be nuanced, right? I mean, not all software is created equal, and and we've had a framework for a long time, by the way, with dedicated teams, in the US and in Europe to software and healthcare, and our software investments tend to be very large, very entrenched, systems of record, mission critical, high risk of failure. And right now, the key question really for those companies and their owners is embrace AI. Embrace AI, embed AI in all your features, in your product suites. We're not seeing, churn away to AI native. We're not seeing downsell because of AI, but the key is to embrace AI, and then hopefully we'll see, and we're starting to see it for the market leaders, acceleration of the top line, and then we'll see whether it also provides a margin boost in the next few quarters.
Can I just say, just hearing, you being one of the leaders of private credit, saying that software is one of your best performing businesses, is just so counter to what we've been hearing at the moment. So does that mean that this is even a sector that could grow within GSAM, that it is successful clearly on your platform and you're not backing off of it?
Well, we're constructive about it. We also, need to answer, the questions from our LPs. And so we're being very detailed about this is the type of software that we like and that, we would underwrite. And this is what we have shied away from, right? Also, these businesses that we have in our portfolio tend to have very high margins, they're very cash flow generative. I mean, they're really, they're special businesses. But there's a lot of education to be had as well with our own investors, right? Because they read the same headlines. The public markets, by the way, starting also to differentiate. When you look at valuations of software businesses, 3 months ago, the whole sector took a plunge. I think right now you're starting to see a real differentiation amongst the software companies.
On the point of margins, I wonder how much you're looking at the cost of compute. It feels like this narrative that is starting to creep in of these companies that are having to adopt a lot of AI. You hear stories of Uber runs through their entire year's tokens budget in just a couple months. Are you starting to see that filter through some of your portfolio companies, just how expensive it is to run some of these systems?
No, not yet, I would say, but that is certainly a consideration for management teams and the owners. By the way, that's going to create a further barrier to compete and further barrier to entry, because scale does matter. When you think about the investments that you need to make here, the cost of compute, the tokens, I think that's going to favor, the more scaled businesses. That's true to software, that's true everywhere, it's true in our industry as well.
So it just goes back, benefits Goldman companies yet again in this trend.
Yes, it will benefit the larger scale players, and I think that's true across most industries.
All right, James, unfortunately we're out of time. Thank you so much for joining. Really wonderful to see you. Great to see you as well. Tom, and that, of course, is James Reynolds of Goldman Sachs Asset Management.
Danny, thanks very much. I'll pick up Bloomberg's Danny Berger live on the ground at Super Return, and her coverage continues throughout the day. We'll be hearing from guests including Victor Kosler from Strategic Value Partners and Thoma Bravo co-founder Orlando Bravo. Coming up on the program, oil is ticking a little higher this morning, up 0.3% as traders weigh fresh strikes between the US and Iran overnight. The ceasefire clings on. We have the latest from the region next. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world world of politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to the minute news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome back to the Opening Trade. We are 47 minutes into today's session. You're seeing European stocks modestly higher by 0.2%. Strongest gains coming through for the Italian FTSE MIB, up 0.9%. Here in the UK, FTSE 100 is gaining 18 points, Anna.
Okay, let's focus in on oil because it's ticked a little higher actually this morning, just up 0.1% though, 91.63. But it's been quite a journey over the past 24 hours. We've seen the United States and Iran exchanged strikes once again overnight. President Trump said the US retaliated against Tehran for shooting down an American Apache helicopter. For more, we're joined by Bloomberg's Abir Abu Omar, who's in Dubai and can bring us up to speed. I mean, we still talk about the ceasefire clinging on, Abir, even though we've seen the US and Iran exchanging fire by some definition, at least overnight. Bring us up to speed.
Good morning, Anna. So look, I mean, the question we woke up to this morning was, what ceasefire really when you see these hostilities taking place over the past week and into this morning? So what happened overnight was that the United States troops had attacked Iran. Some parts in central Iran were attacked, according to IRIB, that is the state-owned media in Iran. And this is essentially what the U.S. had said. This is what CentralCom had said about the attack, saying that it was a proportionate attack in response to Iran downing a helicopter, a U.S. helicopter, yesterday. Now, President Trump did tell ABC News yesterday that he has to respond in a powerful way to the downing of the helicopter. This morning, Iran retaliated against the attack by attacking GCC countries. That includes the Fifth Fleet, the U.S. Fifth Fleet in Bahrain, and also a U.S. airbase in Kuwait, but also in Jordan as well. So you're seeing an uptick in these hostilities between the United States and Iran following what we saw at the beginning of this week, where Israel got directly involved in Iran again by attacking central cities in the Islamic Republic, including places in Tehran, the capital. Iran retaliating by hitting northern Israel as well. Meanwhile, look, the incursion of Israel in Lebanon continues. It is the deepest in 25 years. That is a sticking point for Iran, where it said it will not come back to the negotiating table unless Israel's attacks against Lebanon cease to happen. But President Trump maintains that the truce talks are still ongoing, that they are continuing to be intense, and that is definitely something that we're keeping an eye on over the next couple of days.
Abir, what does this mean for the oil markets? There's some reporting that Kuwait is actually getting oil onto the markets for its Asian buyers.
Yeah, so look, Kuwait is providing about 4 million barrels of export crude or export materials crude to countries in Asia, including South Korea and China. This is more evidence to show that a trickle of shipment is coming back to the Strait of Hormuz. Now, inevitably, it's not what it used to be pre the war in late February, but we've seen signs over the past couple of weeks about movement coming back to the Strait of Hormuz. But again, look, as I mentioned, it's nothing compared to the movement, the normal movement of the tankers and ships in the waterway that used to carry 20% or so of the world's crude shipments. But something, again, to keep an eye on, it is a sticking point for President Trump to reopen the Strait of Hormuz if this MOU that we've been talking about over the past 2 months or so is reached, along with an extension of the ceasefire for 60 days, and then the other concessions will be discussed at a later stage, Tom.
Okay, Bloomberg's Abir Abu Omar in Dubai with that update. Abir, thank you. Let's look at what else we are monitoring throughout the day. The Bloomberg Invest event continues, or at least begins, in Hong Kong. The annual Super Return is underway. Danny Berger's on the ground for us in Berlin with some fantastic conversations and insights. At 9 a.m. UK time, we're going to get Italian industrial production at 1:30 p.m. UK time. It's the big one. Key data, of course, out of the US. May consumer price index data, CPI data, and aftermarket. Stateside on the earnings front, Oracle's fourth quarter results.
Let's turn to Skylar Montgomery-Koenig from the Markets Live team for some analysis ahead of the key CPI print, which is coming out of the US later on. Good morning, Skylar. So what's your thinking going into this number? Clearly, we're impacted by Friday. The jobs report was really strong and had a big impact on markets. As a result of that, do you think we're primed to see more of the same, sort of doubling down on pricing in a Fed hike in December? Or is the risk that actually we see something dovish?
Yeah, I mean, I think it's a very, very high bar to get a dovish print, and I'll give you 3 reasons for that. The first is just the momentum and data has all been one direction, right? Economic surprises are positive. We've had 3 above expectations non-farm payroll prints that have been very strong in a row, and inflation surprises are already positive as well. The second is, if you look at economists' estimates, there's this bias to really believe in the Fed's inflation fighting ability. So if you look at economic surprises prior to 2022, 2020, through the 2010s, they were biased very much to the downside as the Fed kept missing its inflation target. In the 2020s, they've been biased upwards. So you've had inflation surprises very much tending to be to the upside. And then finally, I'll just say there's no world or no one expects a low inflation print or an inflation print that's in line with the Fed's target. So if you look at consensus estimates for headline CPI, that ranges 4% to 4.3%. So if your low range or your low estimate is 4%, that's still very concerning and tells you that the direction of inflation is upwards and hawkish.
Skylar, what happens to the 60-40 portfolio in this environment? You're seeing a correlation between bonds and equities.
Yeah, absolutely. So if you look at the 3-month correlation between bond and equities, since the Iran conflict started, that's been positive. And it's really worrying for investors because the idea is when you have inflation come in from a supply shock, that inflation being higher means that the Fed has to react hawkishly. That's negative for bonds, but it's also negative for growth, which isn't as positive for equities either. So they sell off together. So going into this inflation print, yes, we very well could get a downside surprise, and that would boost bonds and equities together, whereas an upside surprise would have them sell off together. But I think the worry from a portfolio perspective is that your bonds aren't insulating you anymore. If they're not moving in opposite directions, then where is your protection coming from?
Yes, a topic of conversation on this program. Let's talk about FX and what is likely to happen with the dollar. So the dollar will be in focus as we get that data. We'll see what response we get there. But I wonder how much the AI dynamics are also sticking to the dollar as well. I mean, clearly the geopolitics also has been a driver of a recovery in the dollar over recent months. But the AI theme stands out to me. We're going to get the listing, of course, of SpaceX this week. We've got Oracle earnings coming later on today. So we've got news flow coming around AI, and I know Standard Chartered have been making this link between the dollar strength they see coming actually from the AI theme and the way that drives the US economy.
Yeah, absolutely. I think when I'm thinking about growth and inflation dynamics right now, AI is positive for growth in the US and it's positive for inflation, whereas the energy shock isn't as negative for growth in the US as it is elsewhere, but it's still positive for inflation. And the worry is when you have a supply shock, yes, it's technically a one-time supply adjustment. How long it lasts depends on how long energy prices stay high, but it can be persistent more so if growth is stronger, because that means that companies can pass on that cost to consumers. So the worry now is because AI is boosting the US economy, that inflation becomes more persistent. That feeds into your growth outlook for the dollar, so you get performance as well because people are wanting to buy US equities and US bonds with higher yields. But you also get yields moving in the dollar's favor recently. And so I think certainly the next few months, the outlook is very positive.
The relative outperformance of European stocks in the last 10 days, at least, does that unwind pretty quickly, given the dynamics you're pointing to in terms of AI in the US? Or is there space now for European stocks to start to put in a better showing?
I'm very hesitant on European equities. I think the growth outlook is quite negative because they're so dependent on imported energy. And the market's been focusing on inflation, rightly so, because inflation surges before you start to see that demand destruction. But we've had it long enough that you will get demand destruction. And I think people are saying, well, what if the bubble bursts? But if you look at the .com, when the bubble bursts, European equities underperformed U.S. equities. So, if you're imagining a worst-case scenario, risk sentiment turns against European equities.
Thank you very much indeed. Skylar Montgomery-Koenig from our Markets Live team. That is it for the opening trade. Currently, European stocks are up 0.2%. US futures pointing lower. The pulse is up next. This is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The U.S. and Iran trade fire after President Trump blames Tehran for shooting down a U.S. helicopter off the coast of Oman. The SpaceX IPO frenzy continues to build ahead of its debut on Friday. Analysts warn demand from index tracking funds could drive up shares even higher. Plus, U.S. inflation is set to jump after a hot jobs report. Bond traders pricing multiple Fed hikes, with some seeing a move as soon as September. So happy Wednesday, everyone. Some will say that it's, bump day. So let's have a look at what the markets are telling us. We've seen quite a lot of volatility. The tech retreat has been deepening somewhat. Again, I guess traders pairing exposure ahead of day that is also expected to show that U.S. inflation has hit the highest level in more than 3 years. A couple of other things we're watching out for. Look, oil prices mostly weathering some of these retaliatory attacks between the U.S. and Iran. Brent 91.42, and then gold. Spot of gold, we don't look at gold actually every day. Now, probably we should go back to that $4,179. When you look at the European markets map, again, stock markets seem to be turning a little bit more volatile, certainly than they did in the last couple of weeks. Traders, I guess figuring out this growing list of risks. So stretched tech stock valuations, but also escalating Middle East tensions. The FTSE MIB and the CAC gaining between 0.2 and 0.4%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So geopolitics and tech definitely dominating the news agenda again. The U.S. and Iran have exchanged fire again, and we'll have the latest in just a moment. Meanwhile, traders await today's, of course, U.S. CPI numbers. Out in a few hours, we discuss all of this with BlackRock's Vasiliki Pachatouridi and our very own Simon Kennedy shortly. But first, let's continue our coverage of SpaceX's upcoming IPO. Concerns are being raised about the potential impact of sharp demand for the company's shares from index tracking funds. Well, we're now joined by our Bloomberg senior strategist, Neil Camping, who's been really looking at tech very closely. Neil, thank you for joining us. So what exactly are the worries?
Morning, Van. It's the question that's being discussed is potentially that the passive funds will inflate, if you like, perhaps to a degree artificially, the appetite for this particular offering. And of course, once the passive funds are then positioned into the stock, then where is the follow-up demand thereafter? Passive funds clearly are a very big determinant. I mean, we know that in certain instances, passives for certain funds are twice as big in terms of overall valuations relative to active funds. The key things to look out for in the next 24, 48 hours are messages around how many times oversubscribed the deal is. Speaking to an IPO specialist recently, suggesting to me that if we hear multiple times oversubscribed, that's low numbers of oversubscription. If they talk about 10, 20, 30x, then we know that there's a lot of appetite from retail, from institutions, active and passive funds. So we'll have to keep a close eye on the words used in press releases, press reports in the next 2 days.
So interesting. It's like central bank watch. Every word matters. So meanwhile, Anthropic is also set to release basically its latest mythos. Do you say mythos or mathos? I say mythos, but I don't know the Greek way. Models. How are these different and new?
So the new models are basically the ones that we had in beta form earlier, and they were not available for public use because of the cybersecurity issues. The issues were they found that sort of other technologies couldn't find flaws in existing models for 40 years. They found them in a matter of minutes. What they're releasing now is products into the market. They've used examples where they can do a task in 1 day that has taken a group of engineers 2 months to do in the past. This is accelerating products to market, brings in revenue, and clearly is trying to widen the gap in terms of the revenue model versus rival OpenAI.
Neil, thank you so much. Neil Camping there with the very latest on some of the tech stories. Now, the U.S. launched strikes against Iran yesterday after President Trump blamed Tehran for shooting down an American military helicopter off the coast of Oman. Now, the U.S. Central Command described the operation as, quote, proportional response, suggesting that Washington was seeking to contain the confrontation rather than resume full-scale hostilities. Well, according to Iranian state-run media, Tehran later hit several U.S. targets across the region. So let's get the latest from Abir Abu Omar. Abir, what is the latest exactly on the ground?
Good morning, Francine. So look, some retaliation that has happened this morning from the Iranian side. This is after President Trump told ABC News yesterday that he will hit Iran in a powerful way because of what happened on the day prior, which is when Iran had downed an American helicopter. The crew members were safe, so they ejected. President Trump had said that the red line for him to return back to hostilities would be the death of American troops on the ground. Now, that did not happen, but he felt the need to respond. So the Iranian retaliation came this morning in the shape of attacks against some U.S. bases in the GCC. That includes Bahrain. The U.S. Fifth Fleet was attacked. Kuwait as well had a U.S. base attacked. And then we also saw attacks in Jordan. Iran, on its side, said it will not sit idle in the face of these American hostilities. But for the time being, it looks like the attacks on both sides have stopped. Meanwhile, President Trump did say that the truce talks are ongoing. Our own sources do confirm to us that the truce negotiations are intensely being held, with Pakistan still mediating. Now, we've been hearing this we've heard this a lot of times over the past few months, Francine, but for the time being, again, President Trump seems to be intent on getting this truce, or the MOU, as we've been calling it, that would reopen the Strait of Hormuz and extend the ongoing ceasefire, if we're still calling it that, for the next 60 days or so.
Yes, but where does it leave the peace talks?
So yes, look, they're still ongoing according to our sources, according to President Trump. Again, he's mentioned over the past couple of months that he wants to get this deal across the line. He's getting a lot of pressure internally as well, with those polling numbers coming in, and also the elections coming up in November, the midterm elections coming up in November. So he seems intent on getting a deal down the line. Now, there are some concessions that are left on the table. Lebanon, for example, sticking as the last concession point for the Iranians that are adamant on not getting back to the negotiation tables unless Lebanon is stopped, unless Israel stops attacking Lebanon. Now, Israel does have its deepest incursion in Lebanon over the southern part of Lebanon for the past 25 years. Israeli Prime Minister Benjamin Netanyahu saying he will not stop those hostilities because he's seeing Hezbollah attacking the northern part of Israel. Israel is adamant on protecting itself against the Iran-backed militia in Lebanon. So look, the concession points are still very much on the table. We still haven't talked about the highly enriched uranium, the frozen assets, $24 billion of those, and also the oil sanctions that Iran wants to get through the line again. So those will come at a later stage, but for now, the MOU or the interim deal negotiations, according to the American side, according to our own sources, are still very much on the table, Francine.
Abir, thank you so much. Abir Abu Omar. Now, for more on the markets, we're joined by Vasiliki Pachaturidi, EMEA Head of iShares Fixed Income Product Strategy at BlackRock, and Simon Kennedy, our very own Senior Executive Editor for Macro Markets. He lives and breathes markets. So thank you both for joining us. Vasiliki, I mean, overall, look, we're expecting a CPI print in the U.S. It's unclear how central banks deal with inflation, but it's very likely that inflation is going up in the U.S. given the jobs report on Friday.
Yeah, absolutely. I mean, in general, we've seen a bit of a shift across central banks, both here in Europe, in the UK, and in the US, a more hawkish tone. We have a lot of meetings coming up. I would say that the message has to be one of patience and nuance. Yes, definitely, I can see the hawkish tone being validated to an extent, but policy is already tight to an extent. We know inflation is not purely demand-driven, it's supply-driven, and then the transmission mechanism from rate hikes is uneven. It doesn't hit necessarily the places where inflation is coming from. It's hitting the real economy first. But having said that, I do think that the case for owning bonds remains strong, and we do see that from bond ETF flows having had a record month last month in May. So there's still a lot of demand for income, resilience, diversification coming through from investors.
Sam, what are you looking out for in the next 24 hours? And one of we have brilliant pieces on Bloomberg, but one of my favorites was basically, if you look at the Treasury market, it's kind of telling the Fed they really need to hike.
Yeah, so if you look in the US 2-year, and we had this story yesterday, we've touched on it again this morning in the positioning, is that the 2-year yield is suggesting that the Fed is not restrictive, and therefore the message to Kevin Walsh as he takes over at the Fed is that at some point rates are going to have to be hiked. If you look at other parts of the market, they're looking at a series of hikes. Mark Cudmore talking earlier on Bloomberg about how either they'll hold or they'll do several. You can't just go one and done really in this kind of instance. So that's what markets are on guard for. And in the next 24 hours, the next few hours, as you say, US CPI coming up, and that's a really big, above 4%. That's a really big number, and it's starting to. Since that jobs report on Friday came in strong, people have tuned into this. There's definitely a sense that this is a big report than perhaps it was a week ago.
Do you think? I mean, could it be one and done?
I mean, we know that the Fed doesn't move in such singular ways. But again, I just don't think that we're going to see a Fed that is going to rush into it. Obviously, we're now in blackout period. Next week is also going to be the first meeting that we're going to see the new chair coming through. So I also think the next couple of Fed meetings are also going to be communication tests that will shape market expectations when it comes to the new composition of the Fed and the new chair.
So, I mean, what does it mean in terms of where you want to be positioned, for example, even in European bonds compared to treasuries?
Yeah, absolutely. As I said, I mean, we've seen record flows into bond ETFs. So, again, taking a couple of cues from what investors are really doing. A couple of things. Core exposures, they do definitely stay on the short to intermediate part of the curve. People want to earn income, but they don't want to take big durational bets. I don't blame them for that. Cash is kind of increasingly being seen as a source of return. The front-end rates are very elevated, and we are starting to see some re-risking in parts of the credit market and also emerging market debt. But again, investors are focusing very much on the carry as opposed to the idea of spread compression, which we know spreads are very tight right now.
Simon, when you look at the big driver in U.S. economics, I mean, how much of it is actually AI? So the idea that, equities are supported, people feel richer, they spend, and that's fueling inflation, but also growth after that blowout jobs report on Friday.
So, yeah, the recent debate is that maybe AI is more inflationary in the short term. The dream that Kevin Walsh has talked about a bit, the AI being this productivity miracle that we saw under Greenspan. It's going to take some time for that. While we're investing in data centers and the like, there's going to be inflationary. But certainly the wealth effect is a big one, and we see stocks continuing to go up. And certainly, when we talk about the K-shaped economy, certain elements of the American economy are feeling very happy about what they're seeing in their pensions, in their 401s and the like. And so that does lead into a kind of an inflationary environment, a spending environment, and one that kind of boosts inflation at the same time gives markets that long end we just talked about some slight concerns.
Vasiliki, I mean, I guess two questions. On the back of that, we have a brilliant opinion piece by Clive Crook saying, let's count the ways that Kevin Walsh could disappoint and will disappoint Trump. But actually, my question to you is that if the Fed hikes maybe more aggressively than we had expected, what does that mean for Europe?
I think, the idea, like some of the more structural issues that central banks are facing, economies are facing, the developed market is facing, remain quite similar in the sense of like fiscal sustainability is something, it's a transatlantic phenomenon. So again, kind of Europe, we know that tomorrow is pretty much locked in. September is on the table for the ECB, but I just want to emphasize that, it's all about inflation. That's the primary kind of issue, the driving data point. But the indirect effect of inflation is the secondary market effect of inflation. They can take us up to the end of 2026 or early 2027. So timing has become uncertain as well, and markets don't like uncertainty. But on par, I would say we prefer duration in Europe over duration in the US, and we're even more cautious about long end duration from US Treasuries as opposed to European government bonds, which have been very well bid and very much in demand.
Is emerging market debt actually becoming more attractive in this kind of environment?
Yeah, I would say so. Again, selectively, we've seen emerging market debt, particularly local currency debt, performing really well. Like real yields remain quite elevated, and there are pockets. There are markets within that I would urge kind of investors to look that have different fundamental stories than the US and Europe. And a good example of that is Brazil. Obviously, real yields are the highest amongst all sovereigns, and also Brazil is the only EM economy that is expecting rates to go lower over the next 12 months. So again, the issue of diversification, we talk a lot about diversification from fixed income being challenged, but again, within fixed income, there are pockets, areas of the market that people can diversify, and of course, other asset classes that offer that as well.
And Simon, you and the team are, I know, looking at dollar. Is there anything else that we should be looking out for in the next couple of weeks?
Yeah, I think the interesting thing on the dollar, and ING was talking about that this morning, is that the big debasement trade that we were talking about a year ago has kind of been put on the back burner as people see the Fed talk about inflation, talk about the Fed raising rates. So there has been this kind of a little bit of a platform for the dollar. Whether it continues, whether we kind of get back into the US exceptionalism debate, remains something to be seen, but there's certainly some support there for the dollar from this environment.
All right, thank you both for joining us. A great way to get us started on this Wednesday morning. Vasiliki Pachaduridi, EMEA Head of iShares Fixed Income Product Strategy at BlackRock, and our very own Simon Kennedy, Bloomberg's Senior Executive Editor for Macro Markets. Coming up, private capital is in focus as the boom shows signs of faltering. We're live at the world's biggest private markets event for an interview with the Fortress Co-Chief Executive. That's coming up next, and this is Bloomberg.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Now, the private capital industry is convening in Berlin at an uncertain time following warnings of a credit market downturn and some significant write-downs. Redemption requests that were previously contained to U.S. private credit vehicles have spilled over to Europe. Well, let's head to Super Return, where Danny Berger has a great guest for us. Hi, Danny.
Francine, thank you so much. I'm so pleased to be here this year at Super Return with Jack Newmark. He is, of course, the co-CEO of Fortress Investment Group. Jack, wonderful to see you. Thank you for joining.
Thanks for having me on.
And look, this is an industry where I think there's a lot of contemplation as to whether the pain for credit right now is very much so just headline-driven, or if under the surface there's a real reconsideration that needs to happen. Fortress is interesting because you can often take advantage of other people's pain and maybe stress in the system. I just wonder, is there stress in the system at this point?
Yeah, so I think the way we think about it is that there's certain parts of the private credit market that are going to go through disruption. I think the software part of the market is the most obvious one right now. But when we look at credit more generally, there's a lot of sectors that are still performing really well. There's a lot of opportunities to go originate loans that we think are good risk-adjusted returns. But there are parts of the credit market that I think started to get a little bit toppy, and there may be some repercussions in those.
Well, what do repercussions look like?
I think it's going to be lower recoveries. Namely, I think there's going to be defaults in the software sector, but I think you really have to watch what those recoveries look like. And I think the severities in some of these software loans could be more extreme than what we've seen in the past. And for managers that over-concentrated in those sectors, that could obviously have an effect of having their underperformance be more material than it would be in other credit cycles.
It does feel like a lot of the conversation has been defending software and saying, look at our underlying portfolio companies, they're still performing healthy. I wonder if the reckoning has actually happened yet. Because again, the conversation is there, but has the actual reckoning occurred of looking at some of these loans, which again, defaults and recoveries are going to look poor?
Yeah, I think it's more the anticipation of what could happen at this point. I don't think you've necessarily seen a lot of these software companies get in a position where there's actual bankruptcies on the near-term horizon. But I think when you look at where some of them are heading, especially the 2020, 2021 vintage software loans, I think people are fairly highly confident that there's going to be defaults that come and that there's going to be some bad outcomes for those loans.
Do you think that has an overall effect on the industry itself? Maybe an icing over, especially for funds who were over-indexed to software? Does it have wider ramifications than just those individual performances themselves?
Yeah, I think in terms of future opportunities for certain managers, it could have an impact. I think when people think about credit, they want diversification, they want good portfolio management, and over the last 10 to 15 years, there hasn't been a big difference in managers, and you could over-concentrate your book, you could take certain risks, and it ultimately didn't show through in the returns because we had such a benign credit environment. I think now the world we're heading is going to be one where there's different return profiles for different credit managers, and some credit managers are going to have to justify the fact that they got over-concentrated in certain sectors.
It's interesting you talk about this because a lot of people have said it's time now for diversification. We learned that over-indexing to software was a mistake. What do you then make of some individual funds piling so heavily into AI and AI data centers. I know this is something specifically Fortress is not doing. So are you seeing something others aren't and staying away from this trade?
Yeah, look, I think that some of these data center trades are really compelling. If you look at the counterparty risk, they're incredibly high-quality counterparties. They have lots of access to capital. That can make you feel very good. I think from an equity perspective, investing in some of these AI opportunities are clearly important for your equity return profile. But I think as a credit manager, our view is you have to diversify. I would not over-concentrate in software. I would not over-concentrate in AI. I think you just see that as a credit manager, there's real risk you could have underperformance if you make too big of a bet on any sector. So I don't see anything coming with data centers that are problematic. But when we look at our portfolio, we have questions about residual value, and ultimately we just want to be more diversified across a series of sectors.
So it sounds like it's fair to say that this is not something you'll participate in, or is there some elements that maybe you're eyeing that if you get comfortable enough, maybe with the digital economy, Fortress might?
Yeah, we've definitely done a couple triple net lease transactions with data centers. I think we look at smaller size transactions. We think those may be more liquid if you ever need to try to sell the underlying real estate. So I think that's one thing we focus on. And then we look at the overall concentration in the book, and we want to keep it, relatively small as a percentage.
Right. Well, I mean, you've seen, for example, banks have started also to become over-indexed to AI because of the bonds coming through the broadly syndicated loan market and some of the other deals. So they've started to sell SRTs, and some of your peers have been interested by this trade. I wonder what you make of that, of buying exposure that way via what the banks are putting out.
Yeah, it's similar to the data center trade for us. We don't want to chase trends. We don't want to over-concentrate. If we think we can get excess yield by doing something that's more unique to Fortress, that's what we're going to lean into. And so for SRTs, a lot of the underlying exposure you can originate on your own, and you can control the structure. You can control what assets go into it. You're not going to be a passive, very high attachment point lender, which is effectively what you are in an SRT. I think if SRTs were trading at high teens yields, I might have a different answer than I do when they're trading at lower double-digit yields. So for us, we'd rather just try to go create that exposure on our own rather than be a passive, highly levered exposure to something someone else originated.
Where on the platform are you most excited about? Where are you seeing some of the biggest opportunities right now?
Yeah, I think real estate credit has been one that we've been really focused on. I mean, that trade has gotten a little bit more competitive over the last 6 to 12 months. But I think if you look at where we are in the real estate cycle, lending against real estate right now, you're lending at lower LTVs than you've ever lent against. You're getting paid for the risk, high single-digit, sometimes low double-digit unlevered yields, and you're doing it on cap rates that are sort of at the bottom of the cycle. And so you have a lot of cushion in your real estate credit investment, and you can still get leverage on those loans from the banks to generate high teens levered returns. And so for us, that seems like a really attractive way to get exposure to real estate without having to make a bet on rent growth or cap rate compression.
I was going to say, just on that, how big of a difference does it make if we start to see hikes instead of cuts in this rate cycle right now for real estate and otherwise? The ECB will be meeting this week. The Fed right now, bets are on markets that they'll have a hike this year instead of a cut. How big of a difference does that make?
Well, it's going to hit everything if you have higher rates for longer. I think it's a combination of interest rates, inflation, and watching the consumer that we're really focused on. I think that there's a lot of companies that already have a very little cushion on their cash flow. And so if you have higher rates for longer, you have a little bit of consumer pressure because there's an inflationary environment, that could have real ramifications and could be a trigger for more opportunity on the corporate side or the real estate side.
All right, Jack, just about out of time. Thank you so much for joining. Really wonderful to see you.
Great. Thanks, Danny.
Hopefully see you back in New York sometime soon. Francine, that is Jack Newmark, co-CEO of Fortress Investment Group.
Danny, thank you so much. Great interview, as always. And we'll get back to Danny with plenty more from the Super Return Conference in Berlin. Because up next, we have an interview with Victor Kozla, the founder and Chief Investment Officer at Strategic Value Partners. That's coming up shortly. And this is Bloomberg.
to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving someday.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The U.S. and Iran trade fire after President Trump blames Tehran for shooting down a U.S. helicopter off the coast of Oman. The SpaceX IPO frenzy continues to build ahead of its debut on Friday. Analysts warn demand from index tracking funds could drive up shares even higher. Plus, U.S. inflation is set to jump after a hot jobs report, while bond traders price in multiple Fed hikes, with some seeing a move as soon as September. So back to Super Return in Berlin now, where much of the private capital industry's top brass is convening this week. Weighing, of course, on private credit is the impact of AI risks on investments in tech companies. Let's get back to Danny Berger, who has another great guest for us.
Francine, I do indeed, and that guest is Victor Kosla of Strategic Value Partners. Victor, thank you so much for joining. I just say, you know, we were just talking about this. A lot of people love to talk about at Super Return that everything is okay and there are no issues. You often are more outspoken than most when there are pockets of stress, and you've warned of fat tails. Maybe things are calm on the surface, but underneath the hood, not so much. Where do we stand in that at the moment? Are you seeing some still maybe red amber flags underneath the surface?
Yeah, we've got a real disconnect today, right? The economy's okay. Credit spreads at the headline level are tight, right? And then at the same time, what you have is you've got higher default rates. There are entire sectors, Danny, like private equity, like real estate, which are constipated, right? They can't sell. Private credit just joined the party a little bit too. So I think it's fair to say that there's a lot of stuff going right. I think on balance, it's also fair to say, my God, there are lots of the canaries in the coal mines are telling you a bunch of stuff.
That has to be an issue, though, because this industry needs to be exiting, right? That's the promise you give to your LPs. Well, what has gone wrong in that we got to this point, that year after year of LPs saying we want our money back, and we're still not at that point?
You know, when trillions and trillions of dollars of deals were done before the hike in interest rates in 2022, right? So 0% rates, people did all these deals. Rates are no longer zero. You've got valuation multiples are no longer what they were. For a lot of these businesses, you've got a problem. Now, add to that, just more zip, right? You have a software shock running through. 20% of software debt is valued, priced below 80 cents, suggesting distress. That much distress in software. There's an oil and gas shock, which is starting to reverberate through. Interest rates are starting to go up. So trillions of dollars of deals, interest rates changed, and now you've got these, it's amplified by these shocks, and that's the problem. You've got to find clearing levels for these assets if you want to sell, and the clearing levels are not what people thought they would be, should be.
Can I just go back? You mentioned within some of that, there's a canary in the coal mine. Is that just the stuck assets or the canary in the coal mine, and what does that indicate to you?
No, to us, the canary is really when assets are stuck. Assets are stuck because people can't get the price they think those assets deserve, right? Assets are stuck when, when you have a line of redemptions and you can't meet the redemptions and you have to gate, right? Those are very obvious canaries in the coal mine telling you there are lots of problems underneath this unruffled extent.
I guess also what I'm trying to get at is if there are canaries in the coal mine, what does it lead to? Like, what is the big disruption if at the moment it is just people not willing to mark down assets?
It's starting slowly, because people have been waiting for so long. It's starting. So can I tell you what we see?
Yes.
In our world, we lend money to people at 15% plus so they can hang on to assets longer. We go out and we buy assets, paying very little for the equity because they are so over-levered, and we de-lever them. And then we also convert debt into equity to kind of own the asset. That entire ecosystem opportunity set has just exploded in size. If you look at somebody like us, we started out 3-4 years ago with a pipeline of $75 billion. We have a pipeline today of $365 billion, right? And we invest $6 billion, $7 billion a year. So for us, when we say a pipeline of $365 billion, it's moving. People are starting to recognize the issues, and every one of those transactions.
Does this go beyond software? Like how widespread is this? Or are there any other industries that this phenomenon is concentrated in? Are there opportunities for you?
Danny, we've talked in the past. I know I can sound pretty brave. We have 0% exposure to software. When software goes bad, it just doesn't have cash flow go down 20%, it falls off a cliff.
I would figure, Victor, like maybe there's some nice little juicy deals in there that maybe you want to get some because valuations have fallen enough. No, we're not there.
The businesses which get into trouble in software don't just get into little trouble, they fall off a cliff. So we've looked hard, we haven't done anything, and I bet you if we are talking a year from now again, I'll tell you, still done very little because the businesses which are in trouble are so damaged.
Well, where are the opportunities then you're finding? Any sectors in particular?
The real economy. For us, our focus over the last 10 years, 15 years, right? It is in buying into industrials, manufacturing, chemicals, consumer products. We buy a lot of real assets. Power plants, airplanes, toll roads, right? That real economy is kind of our focus. And Danny, for us, all these problems in software or oil and gas shock, this stuff, one tree does not fall in the forest all by itself, right? It reverberates through. Because the amount of capital available to do this stuff is shrinking so quickly, right? So the opportunity set in the real economy, it has just gotten so much better with these companies.
Is part of that also just because so much money is being funneled into AI data centers? Is there a kind of crowding out that you're seeing that it's less competitive and you're seeing more opportunities in other parts of manufacturing because everyone's being distracted by this big shiny thing over here?
Yeah, it is. It's that. the data center, these guys are such voracious users of capital. Most firms now, they used to have private credit and CLOs and high yield. They've got a now special asset class called data centers, right? It just tells you the crowding out effect. I think it's a little bit more than that, though. You know, when you buy into these real economy assets or businesses, our view, you've got to fix them. They're broken. Some of the stuff which gets into trouble, good management teams have gone. You've got to often strengthen the management team. We bought assets like real estate, where leasing prices compared to the peers have dropped by 30%, and they shouldn't. So I think to our point of view, you need those skills to kind of actually work the asset. It's not just, hey, I'm buying a good asset cheap, right? And those skills are in short supply, right? So, and that to us is kind of, so the capital would like to do this, it just has trouble, those skills are in short supply.
And AI can't do that yet. AI can't turn around a company yet and hire the right management.
They can't get leasing in a property up by 30%.
And that's probably right. Victor, thank you so much for joining. Really great to see you. Francine, Victor Khosla of SVP.
A pleasure.
Danny, thank you. Danny Berger there in Berlin. Danny will have plenty more interviews throughout the day. Now, there's plenty more from Super Return, but in the meantime, we also really focus on Anthropic because the chief executive says AI will make the software industry larger, not smaller, although firms that don't adapt will disappear. Well, Dario Amodei spoke exclusively to Bloomberg Originals about how the company is working to align its business model with its values.
If you pick a business model that fundamentally conflicts with your values, you're going to have a hard time, right? Either you betray your own values or you become irrelevant. And so when we thought about it, we said, look, you know, we've seen the world of social media, the consumer world, it really seems to, you know, encourage engagement, even addiction, you know, the slop we've seen with AI video models. It's like, what's going on is it want to maximize the number of minutes that you're paying attention to because that's the advertising revenue-driven incentive. Whereas if we look at enterprise, look, I mean, you know, we want to make these models useful to people. We want to use AI to, you know, cure diseases that we couldn't cure before, right? Well, that's working with biotech, it's working with pharma, it's working with academic research groups. All of those are enterprises, right? We want to use AI to, like, you know, to make energy cheaper and more efficient. That's all enterprise. And so I think it served us well to have this business model that largely aligns with our values.
Soon after Claude Cowork was released, $285 billion in market value vanished overnight. Traders called it the SaaSpocalypse.
This kind of white-collar wipeout story in the software sector, terrifying.
Some of those are down for 9 days in a row, so clearly the tension is building.
If AI continues improving at this pace, how much of traditional software gets replaced and how fast?
I think with AI, like, the pie is getting bigger, right? So the existing incumbents may be smaller in relative terms. Some of them may go down in value. Some of them may even go out of business if they don't adapt in the right way. But, like, I would guess that the software industry gets larger, not smaller, although there will be some big losers. Those who don't kind of see what's coming, who don't identify the moats they have, they're going to have a really hard time.
That was truly a fantastic conversation, and you can watch that full conversation on the new episode of The Circuit with Emily Chang. Subscribers can access it on the terminal, but also on Bloomberg.com from 1 p.m. UK time today. Now, coming up, quantum computing has the power to transform industries across the globe, but has yet to move from the lab to practical use. Well, our interview with the Chairman and Chief Executive Officer of IonQ is next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
A quantum foundry that we have committed will be open to all comers that are acceptable to the United States. So the 36 odd companies that are here, we are happy to give them our best technology, the same as we use for ourselves at that level, that they all get access to.
And you say all comers as to what's been approved. This is the idea that this is about furthering the U.S.'s aims to make sure that they have an advantage with regards to what gets made, and I would presume so that it doesn't get in the hands of the countries that we don't want it to have.
Well, I think that is easy. I mean, like, there have always been restrictions on advanced technologies that you cannot sell it or provide it to certain places. I think that is fine. But in a new area, it's really important to be first, both for the economic competitiveness long term, but also for national security. I think for those two reasons, it's imperative that we get there first.
Do you think the U.S. will be there first?
On quantum, absolutely.
You're not concerned about some of the reports that we've heard about some of the progress that we've already seen in China?
I'm paid to be paranoid, so I wouldn't say I'm not concerned. Yeah. However, from everything I can see, I think we are ahead. Are we ahead by a decade? Probably not. But are we ahead by a couple of years? That would be my guess.
Well, that was Arvind Krishna, the IBM Chief Executive Officer, speaking with Romaine Bostic about the future of quantum computing. Now, several large companies are racing to build working quantum computers, which they argue will transform finance, medicine, and, of course, cybersecurity. While some have demonstrated impressive advances recently, none have yet been able to demonstrate applications beyond research. Well, we're now joined by Niccolo De Masi, Chairman and Chief Executive Officer at IonQ. So, Niccolo, thank you so much for joining us. So this is exciting. We have a lot of research also that our Bloomberg Intelligence put together saying, if you look at the funding of quantum computing overall, we're looking at $17 billion. Why was IonQ not part of the recent Commerce Department funding announcements? Did you do that intentionally?
Yeah, so we're actually buying another public company in the U.S. right now called Skywater. There's SEC rules about issuing equity when you're in the middle of a merger. We raised $3.5 billion last year, so we have tremendous access to the private capital markets. We were the first public company in our sector. We're the largest public company in the sector. We've been at it for 30 years. And so, you know, for sure, we always look at our capital needs, and we also, of course, are very active on the M&A front. We bought Oxford Ionics, you know, here just a year ago for $1 billion.
So, I mean, the big question is, when do we really see it in real practice? So where do you see and when do you see, like, real-life application of quantum?
Well, IonQ demonstrated quantum advantage a number of times even a year ago on our 2024 machines. So we announced, you know, a 20x speed up in computational drug design with AstraZeneca, NVIDIA, and Amazon. We've made progress with Ansys and Synopsys on computational engineering. We announced over a year ago that we were able to help LLMs speed up and reduce their error rates while they're learning by putting one of our machines on the loop. So IonQ is a very different category, I think, than most companies that, you know, you said a couple of minutes ago, people were in the research phase. We've moved out of the research phase. We're into the engineering, manufacturing, and scaling stage. It's why we're buying Skywater. It's why we bought Oxford Ionics. You know, we started this industry 30 years ago. We're the first company that has published a shovel-ready blueprint of our full fault-tolerant system 6 weeks ago. And so we're really at the point where we can throw money at this scale-up, if you will, to go faster, and that's very much where we are right now.
Nicola, do you need others also to be successful so that investors really latch on to this? So on this program, we talk quite a lot about quantum computing. Not everybody does. So does it need to almost go more mainstream to have that, advantage?
Well, we were the first quantum company to reach 7 figures of revenue, 8 figures of revenue, and last year 9 figures of revenue. We very much, our ambition is to be the first to 10 figures of revenue. So it's becoming a real business. We were the first IPO in the sector in 2020. People used to ask me what quantum computing is 5 years ago. Today, your program speaks about it. And of course, governments are also realizing this is important for economic growth, national security, and of course, the jobs of the future. We've seen Prime Minister Starmer and Minister, Lord Valence, taking a great leadership position in the UK with programs such as their Procure and the National Quantum Computing Center. The U.S., of course, is also running a DARPA, QBI, and other nations are realizing that resilience through quantum is very much an important national theme and opportunity. So I feel like it's going mainstream pretty quickly. I mean, people see tech trends and they can, envisage the future, and they want to capture that for their country and their company if they can.
So what does President Trump's funding of IBM actually mean for IonQ?
Oh, I think it's a great bet on both sides of the Atlantic on the growth, maturity, and opportunity for quantum leadership in the Western world, right? So our business is unique. We believe we're the leader in quantum computing and quantum security and quantum sensing, and we also have a merchant supplier function and product family that's important to IonQ. So we make the world's most accurate atomic clocks. Yeah. We sell those to other quantum computing companies. Assuming our Skywire transaction closes, over the summer, we will then have the largest merchant supplier function in the world. And so a lot of these companies are actually customers of ours. We're supporting their growth as well. So, investment IonQ is an investment on the industry, not just IonQ's individual path to computing, sensing, networking, and so on.
I know you mentioned the UK, but how much of your business actually comes outside of the US?
About a third. So we said about a third of our customers are international, about a third are buying more than one product from us across our quantum platform, and about 60% are commercial, is what we said on the last earnings call. So we're a business that has been, we've been first at everything. We turned our machines on in 2017. We've been doing useful things in the last 5 years. It becomes more powerful every generation of system. And of course, we were also the first to predict that the so-called Q-Day event was going to come, in the late 2020s, not the 2030s. And we're really making the future happen at IonQ with partnerships like Oxford Ionics, here in the UK. I was the only quantum CEO of the Technology Prosperity Act signing last September with Prime Minister Starmer and President Trump. So I think both nations recognize how special Oxford Ionics and IonQ are together. 1 + 1 = 30 is what I'm trying to achieve here for both nations.
So, Nicola, Q-Day, for those that are less familiar with the term, is basically the day where a quantum machine breaks the RSA encryption. I think Google's prediction is that it comes as soon as 2029.
Yeah. So we said end of 28 last year.
Yep.
I think a number of companies, were still thinking this was 2033 last year. And we said, look, we published our roadmap last year on June 9th. And we said, we're going to be able to do it by the end of 28, by the end of this U.S. administration. I think, like with everything we've done at IonQ, we always lead the way, and other people then agree with us, ultimately. And so, China's goal is 29, I believe, in their 5-year plan. I think Google agrees with us. I'll be unsurprised if soon the whole world agrees with us. But for sure, it's inside the planning cycle of CTOs, CEOs, and commercial companies, and governments also need to take notice of this.
How does quantum computing differ from, but also complement AI? And is there a bottleneck for acquiring talent?
Yeah, good question. So we're finding that the most successful adopters of our systems are the ones that are, of course, working with us on hybrid workflows. Right. So, you have a computer in front of you. The input machine is probably analog. You're calling a quantum computer. The output probably comes back to an analog computer. You need to have domain expertise, classical computing expertise, and quantum expertise. The intersection of those talent pools is certainly going to be, I think, some of the hottest jobs, in the coming years, and probably even, this century. I think the 21st century is going to be the quantum century, but starting, in the next year or 2 or 3, you're going to see that intersection of those 3 talent pools and that Venn diagram is where the kind of $100 million AI engineers today are going to be generated. So we very much are speaking to political leaders and, of course, commercial leaders, but how we can work together to create those jobs. One of the most exciting things for INQ is we're not a job disruptor, we're a job creator. There's no jobs that are going away because of quantum computing at INQ. These are all brand new problems that currently take between a century and a millennium for a GPU data cluster to solve. We're trying to turn that into hours and days. So turning almost every impossible applied science problem for classical GPUs into a solvable problem. That means we're creating jobs, we're driving economic growth, and most importantly, we're keeping humans in charge. So there's no hallucinations, there's no correlation engine. I don't know about you, but I'm not using AI for my, my calendar because I can't afford hallucinations, mistakes.
No one can afford hallucinations.
No one can, right? No one can. But quantum is old-fashioned computing. You're in charge. You design the algorithm. You tell the machine to run the algorithm. It doesn't go off and try and do something else.
Yeah, very reassuring. Nicolas, thank you so much for joining us. I hope this is one of many interviews to come. Nicolas Demasi, Chairman and Chief Executive Officer at INQ. Now, there is a little bit of breaking news out of Iran. This is one of our biggest stories today. Iran is said to review the U.S. talks in light of the latest attacks. This is according to the state-supported IRNA news agency. Iran also saying that diplomacy does not happen in a vacuum. And this is a state-run IRNA agency citing the foreign ministry spokesperson. So we'll have plenty more on Iran throughout the day, of course, and we'll keep a very close eye on what's happening in the Middle East. Staying with tech, though, ASML's ascent to fresh record highs has boosted European markets, yet it's done little to improve what is the company's cheapest relative valuation in years. Now, while the Dutch firm's shares are up some 64% this year, the gain has lagged that of the broader U.S. semiconductor sector. So Sarah Jacob, our Amsterdam reporter, joins us now. Sarah, good morning. ASML up more than 60% this year. Its relative valuation is the cheapest in years. What exactly is going on?
Good morning. Yes, that's right. ASML stock has reached record highs. In fact, earlier this month, ASML became Europe's most valuable stock ever. And, just to remind, the viewers are watching, ASML is the only company that makes extreme ultraviolet lithography tools. These are machines that are necessary and crucial to make, advanced chips that power all these artificial intelligence applications. So we've seen the demand for their tools to be really high, the stock gaining still. Those gains have lagged its chip equipment peers, for instance, Applied Materials in the US, but also customers like Samsung Electronics. And a couple of reasons here. One of them, of course, is in terms of adoption of its next generation tools. Investors worry a little bit about the pace of that adoption. We heard from TSMC, its key customer, which said it would hold off on using ASML's or adopting ASML's high-NA tools through 2029. And there's also some concerns about supply and ASML's ability to capture this momentum.
Sarah, thank you so much for the great explanation. Sarah Jacobs in Amsterdam on ASML. Now, for more on the tech outlook here in Europe and London's role in the AI race, also check out our latest episode of Bloomberg Tech Europe with our Tom McKenzie. That's at 8:30 a.m. UK time this Friday.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back. It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tensions escalating. Iran and the U.S. exchange fire overnight after Tehran shot down an American helicopter. CPI on deck. Investors bracing for the latest print with strong jobs data, bolstering bets on Fed rate hikes. And an all-star lineup throughout the day from Super Return as private market dealmakers flock to Berlin. Don't miss our interviews with Churchill Asset Management CEO Ken Kensel and Brookfield Private Equity CEO Anuj Ranjan this hour. All right, let's get a check on how markets have been faring around the world. A volatile week so far. Let's get straight to Winnie Su in Hong Kong for the latest from Asia. Winnie.
Good morning, Vonnie. We are seeing investors turning more cautious in Asia ahead of that CPI data from the U.S., especially after these hot prints from the U.S. jobs number last week, reinforcing the bets for the Federal Reserve to raise rates. And hence, you can see that MSCI Asia here down 2%. And also, the declines are mainly led by South Korea's Kospi Index down 4.5%. Now, the bright spot is still in the Indonesia market, with the index here up 2.7%, still extending gains from yesterday as the Bank of Indonesia raised rates yesterday. Now, flip aboard, we take a look at the inflation numbers from China because we continue to see that divergence with the CPI and PPI numbers. When it comes to the PPI, we are actually seeing a bit of an uptick there, while CPI continues to struggle, coming at 1.2% year over year, and that is missing estimate of 1.3%. Now, it really goes to show how these manufacturers continue to struggle to pass these higher input costs to their consumers, and that consumption demand remains pretty weak, and hence we are seeing the onshore yuan, in fact, erasing some of its earlier gains.
All right, Winnie, thank you so much. Now we'll get over to London for a look at Europe. Here's Justina Lee. Justina.
Good morning, Vonnie. Now, here in Europe, we always have the fear of missing out on the AI trade, but actually this month it's kind of helping Europe hold up a little bit better, you know, even after the sell-off overnight. And of course, U.S. futures still down. I mean, the Stoxx Europe 600 down modestly, and we can see, of course, there is still kind of a big fall when it comes to tech stocks. But ultimately, for the European benchmark, that's a relatively small weighting, and I think that explains kind of the relative resilience in European stocks here. Also pretty resilient are Italian stocks, as we've been talking about. You know, ST Microelectronics actually kind of is doing pretty well today, and also a lot of focus on those Italian bank stocks, potentially over a deal that's kind of the talk of the town in Milan. And now if we flip the board here, now a lot of focus is of course on the US CPI number today and also the ECB decision coming tomorrow. Now we can see here that when it comes to short and bond yield, that's been on the rise kind of all year long, reflecting the gains in oil. Now when it comes to the move tomorrow, everyone's basically expecting a 25 basis point hike from the ECB, but the focus is on whether they're going to telegraph kind of more hikes coming this year, with traders unsure of whether we're going to get 2 or 3 by the end of this year, Vonnie.
All right, Justina Lee, thank you so much. Justina Lee there in London. Resilience in Europe, as Justina said, not so much here in the United States, though we should reserve judgment until after the CPI data. That could change the calculus wildly. Yesterday, we had, again, a wild day. At one point, the S&P was down 2%. At one point, it was up 1%. So these markets are really confounded. Right now, we are pointed lower. Lots of geopolitical tension in the air, even though oil is not reflecting that so much. Lots of offsetting factors for oil, of course, including emergency reserves getting released and inventories getting drawn down and all sorts of other things supporting prices potentially to have them not rise as much as they potentially would. But we do have the VIX trading at a 21 handle. Yesterday, it was really just the tech companies and energy that sold off. Everything else in the market was strong. We'll see what happens today, but right now, futures pointed lower and bond yields are staying where they were. So just a little bit of a movement, maybe a basis point or two here and there, but we're back up, as you can see, 413 and change on the 2-year and almost 501 on the 30-year. All right, let's get to some individual movers now. Back over to London and Chloe Melly. Chloe.
Good morning, Bonnie. We're seeing a real retreat in that tech sector this morning as traders expect U.S. inflation to hit the highest level in more than 3 years. And at the same time, we have also got those renewed tensions in the Middle East and all of those worries about this potential AI bubble. And so all of this is dragging down that sector this morning. Moving on, but staying within tech, and Supermicro is also seeing a bit of weakness after announcing a plan to raise $7 billion through equity offerings to buy the components that are needed for AI servers. And so this announcement is dragging down there. And finally, we've got Cracker Barrel boosting its guidance thanks to very strong sales of its patriotic merchandise. And so that is really boosting the stock this morning, up almost 10% for Cracker Barrel.
All right, Chloe, thank you so much. Chloe Melly there in London. Also coming up this hour, we'll be live in Berlin at Super Return with Churchill Asset Management CEO Ken Kensel and Brookfield Private Equity CEO Anuj Ranjan. Plus, we'll count you down to the CPI data with Andrew Hollenhorst of Citi later this hour. Overnight, Washington and Tehran exchanging attacks after President Trump blamed Iran and retaliated for the shooting down of an American military helicopter off the coast of Oman. U.S. Central Command describing the operation as a proportional response. Iran later hit several U.S. targets across the region, according to state-run media. Bloomberg's Abir Abu Omar joins us now from Dubai. Abir, where does this leave what already has been a fragile ceasefire?
Indeed, Vonnie, a fragile ceasefire. But look, for the time being, we saw the attack from the U.S. side and the retaliation from the Iranian side. That is across countries in the GCC, including the U.S. Fifth Fleet in Bahrain, a U.S. base in Kuwait, and then another U.S. base in Jordan as well. From both sides, however, it seems like the hostilities have ended. For the time being, President Trump is adamant on the fact that the deal or negotiations towards a truce are still underway. Our own sources report to us that the truce talks are going intensely and that Pakistan is still very much involved to get this MOU through the line. And look, from the response that we got from the Central Command, from the United States, it looks like this retaliation or that this response in the U.S. attack was very much calibrated. It looks like it was proportional. This is quoted from CENTCOM saying that the attack was proportional to the degree of attacks that came from Iran earlier on. And so it looks like it's ended for the time being, but President Trump has come across over the past 2 months or so and said that reaching a deal or an MOU or an interim deal that would reopen the Strait of Hormuz immediately and extend the ongoing ceasefire for 60 days, he said that that was imminent multiple times before. The last of those was yesterday, where he said we could see a deal within a day or two. So we continue to monitor the situation and whether President Trump will come again and say anything about this MOU getting through the line. But for the time being, as I mentioned, the hostilities seem to have paused in the Middle East for today, at least.
All right, Abir, thank you so much. That's Abir Abu Omar there in Dubai. Here in the U.S., results for congressional primaries rolling in, with Democrat Graham Plattner winning his Senate race in Maine and GOP incumbent Lindsey Graham securing his spot in South Carolina. Kate Ackley of Bloomberg Government joins us now from Washington. So, Kate, what can we tell about turnout in Maine that gives any kind of clues as to what the runoff and what the November portion of this is going to look like?
Well, for sure, you know, Graham Plattner, the Democrat there who won handily, he's had a lot of negative media stories, stuff about his past and his relationships with women. He still was able to get more than 70% of the vote there, almost 75%. But, you know, the state's governor, Janet Mills, who had suspended her campaign, you know, she still picked up a fair number of votes. But you look at that general election matchup with sitting senator, the incumbent, Susan Collins, and we're just expecting to see a ton of attention on this race, really a key battleground race for control of the Senate. You know, it's one of those situations where obviously President Donald Trump is not on the ballot in these midterm elections. So races like this will be sort of a proxy. We're going to hear a lot about Trump, and already, you know, Graham Plattner in his speech last night was talking about Susan Collins being, you know, voting too much with Trump, even though she does have a fairly you know, more independent voting streak than many other Republicans. But that's going to be a big line of attack. Expect to hear a lot about Trump, who obviously is not on the ballot there. And yes, you mentioned Lindsey Graham won his primary in South Carolina, you know, easily. So we've seen some other general election matchups set going out to the battle where a president Trump-backed candidate won the Republican nomination to take on Congresswoman Susie Lee in the 3rd District. So, you know, we're starting to really, as we get through this primary season, starting to see these general election matchups really take shape throughout the country.
Kate, thank you so much. We will be looking forward to the primaries coming up with you as well. That's Kate Ackley joining us from Washington. Let's turn to tech now, and TSMC reporting a 30% rise in monthly sales as companies rush to build AI infrastructure. Joining us now is Neil Campling. So Neil, 30%, certainly the market is not suggesting that it was a better than expected number. ADRs are down in the pre-market. At the same time, it was better than last month. What can we tell about the earnings season, let's say?
Yeah, morning, Bonnie. I think you mentioned at the top of the hour about the volatility in the market tape yesterday, and underneath the hood, actually, if we look at the chip sector in particular, there's an 11% intraday swing from highs to lows at some point during the session. So investors are nervous about the sector, given it's had a massive run, and TSMC have just delivered an improvement from the April numbers. But given that the street analysts are expecting 35% growth for all of Q2, we're going to need to see another incremental uplift in terms of that growth rate in the June monthly sales to meet analyst expectations. So good numbers, but we have a high bar to beat for the rest of the quarter for sure.
Can we talk about ASML for a second? Because its gains, while great year-to-date, haven't matched those of its peers. Does it have the same pricing power, and can it ramp up supply?
That's a great question. I think, interestingly, perhaps it's a reflection of the fact that Europe has few tech winners, again, as you alluded to earlier in the program. But if we look at it, ASML has probably got the greatest pricing power of all the chip equipment makers, because it really makes the leading edge technology manufacturing productions that no one else can make. They really has a monopoly in the business. So perhaps it's a sign of being European more than anything else, but actually it should have more pricing power than I think many investors give it credit for, to be honest.
All right, Neil, we have to leave it there, but much appreciated. Neil Campling of Bloomberg News. Now to other top stories trending on the terminal this morning. Apollo co-president Scott Kleinman sees private equity capitulating on valuations after borrowing costs are normalized. Speaking with Bloomberg's Danny Berger from Super Return in Berlin, he said PE has lost its way a bit, and some managers will now have to raise smaller funds or, quote, go away because of mistiming investments. SoftBank's talks to raise at least $6 billion through a margin loan backed by its OpenAI stake have stalled. is coming just weeks after SoftBank cut its initial target from $10 billion. According to sources, the company is considering various fundraising options and could move forward with the margin loan at a later stage. SoftBank declined to comment. And Florida-based Vanguard Energy is in advanced talks to send Cuba its largest U.S. fuel cargo since the Eisenhower administration. Vanguard is set to ship 100,000 barrels of gasoline and 150,000 barrels of diesel. That's enough gasoline to supply about 11 days of typical demand. The fuel is designated exclusively for the private sector rather than state actors. Coming up, Churchill Asset Management CEO Ken Kencel joins us from Super Return in Berlin. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The biggest names in private markets gathering in Berlin for the Super Return Conference. Bloomberg's Danny Berger is live at the event for an exclusive conversation. Danny.
Bonnie, thank you so much. I'm so pleased to say that here at Super Return, I am with Ken Kencel. He is, of course, the Churchill Asset Management CEO. Ken, wonderful to see you.
Great to see you, Danny.
You've been a busy man at this conference. I know you chaired the Private Debt Day.
Yes.
I just wonder, what's been the mood? How does this Super Return and the private credit players, how does it compare to years past when, we were kind of singing Golden Age from the rooftops?
Right, Golden Age from the roof.
Yeah.
Well, maybe it's more like platinum design or platinum period, maybe versus Golden Age. But I would say the mood is optimistic. And optimistic because for the first time, you're seeing some disruption in the market that is actually creating opportunity, right? So obviously, concerns about redemptions, concerns about AI and software, but for traditional middle market lenders that maybe aren't as oriented to software or AI, and there are those of us that aren't, I would say more optimistic about terms and structure and opportunity to do new loans than lenders have been in some time.
Does that mean if you are still one of the lenders that, unlike Churchill, has been very over-indexed to software, that you're still feeling the pain right now, that they're not really making it through this period as unscathed?
I would say redemptions are causing certain lenders to pull back, but that's creating opportunities for other lenders. So we're, for example, we're very low software. We're less than 5%. So for us, that dynamics today actually are creating opportunity. Opportunity for new deals, opportunities to maybe do some larger deals that ordinarily would have gone to the BSL market or even to those large cap private credit managers. So in that sense, I'd say a better dynamic than we've seen in some time.
Can you explain that a bit? Why are larger deals coming your way now? What in the dynamics has changed that's allowed that to occur?
So the folks that were doing those kind of large cap deals, many of them were software, were primarily driven by retail flows. So if you look at what's happened to those firms, because of the redemption pressures and the redemption dynamics, they're pulling back a bit. And those were the firms that were generally leaning into those private credit deals at the upper end or even the BSL market. So with that bid gone, you're seeing traditional private credit managers like Churchill and others step in and get access to somewhat larger deals, but on terms that are more consistent with a private credit execution.
So part of the retail pullback that happened, it was in large part software, but it was also this bigger conversation of, are marks honest? Are funds really marking these things how it should be? Is there some can kicking, extend and pretend? I wonder if that reckoning has happened in this industry. When you look out in your peer group, do you think marks are more honest today than they were in the past?
Look, I certainly think private credit marks, you know, when all of us, pretty much all managers today are getting quarterly marks from third parties, I'd say private credit marks tend to be more direct and more influenced very quickly because of those third-party valuations. I mean, all of us that have publicly registered vehicles utilize third parties on every asset every quarter. So I think in that sense, it's translating very quickly into our marks. Private equity tends to be a little bit slower, longer term in terms of how they look at things. And many of them don't have public vehicles, so they're not using third-party marks. So I think in private credit, you're seeing that play out pretty quickly, and I would say pretty transparently.
Because of some of the stresses of other players, consolidation has been a really big theme. Churchill, I know you're celebrating your 20th anniversary
20th
this year.
anniversry, yes.
Happy.
We rang the bell.
Very cool.
Weeks ago.
I actually remember seeing you on. We had you on our show. We called you out. I know you didn't see us, but we saw you. 20th anniversary, and you've been now with Nuveen for some time as well.
Yeah.
And I just wonder how we should be thinking about consolidation in this industry. You've done this, you've melded with a larger platform.
Yeah.
Just how difficult is it? And are you expecting that process to happen a lot? And should there be a lot of speed bumps we see as funds try to come together?
I think you are absolutely going to see a continued consolidation. The difference today is that in order to be relevant and really be active in private credit, you have to deliver the whole solution. And that means $300, $500, $1 billion of financing. The days of clubbing up in advance of each lender doing $50 or $100 million are over, right?
Why is that? Why are club deals over?
Because the private equity firms, primarily the drivers of those new deals, are looking for a full solution. If they're looking to raise $500 million, they're not going to go to 5 people today. They're going to go to one lender.
That's interesting. So it's not just the LP side, it's also the buy side.
It's the buy side, the private equity side. So the result is the largest scaled players are seeing the most attractive deals, and it's become very difficult to build a diversified portfolio if you're starting from scratch. So we've seen consolidation in the space, larger managers raising more capital. I think the statistic I saw was 95% of the capital that's been raised in private credit over the last 5 years has been with managers that have had 4 or more funds. So the allocators are looking to consolidate the number of firms they work with. That's resulting in a consolidation in the marketplace overall in terms of lenders at scale. And I think smaller lenders are going to try to find larger partners or be part of larger platforms as fundraising becomes more important.
Do you think we'll see a lot of heartbreak, if I can torture a metaphor? Marriage is hard, and it's hard to undo.
Yes.
Especially when egos are in the room, which this industry might have 1 or 2.
Yeah, 1 or 2, yeah. I think the benefits of a global platform from a fundraising perspective are actually very significant, right? So you're seeing smaller managers be acquired by insurance companies. You're seeing smaller managers see the benefits of being on a larger platform. You've seen traditional asset managers want to get into alternatives and acquire private credit, private equity, and other types. So I think that consolidation is something that's here to stay. And certainly we've benefited from our partnership with TIA and Nuveen and having global distribution. And I think that's going to be a theme for sure.
Does it go beyond smaller lenders looking for larger lenders? Do you think it will also be the case that if you're a standalone private credit, you need to have equity, you need to have real estate, that you also see more asset class leaders come together too.
Absolutely. Absolutely. I'd say if you're a boutique today, you're going in one of two directions. You're either accepting that you're going to continue to be a boutique and have a very clear niche where you invest. You've seen that with some of the lower middle market managers, maybe some of the distressed or restructuring managers. But if you want to raise broader capital and scale your business, global distribution is absolutely critical. And there are only a few platforms that can help provide that, right? Whether it's a large-scale traditional asset manager or even an insurance company, I think that's going to become the name of the game. So I would say you're going to see a bifurcation of managers, either go large and scale or stay a boutique, stay very niche-focused, and kind of be what you are, which tends to be more limited from an investor standpoint.
And obviously you have a huge global distribution channel as well, given, you know, as you were saying, TIA and Nuveen. So are you fielding phone calls every day of someone saying, hey, Ken, can you buy us up?
Well, it's interesting. So we're launching new strategies all the time. So we're launching a capital solutions strategy. We're looking at credit secondaries, but it's all in and around our private equity relationships. So I think the best managers are evolutionary versus revolutionary in the way that they grow and build their platforms. So we are looking at adjacencies to grow our platform where we already have strength and relationships and we can capitalize on that. So absolutely have benefited from TIA's support and Nuveen as a global partner. Obviously, they're going through their own transaction now with the Schroders deal.
Right.
So I think, you know, we look forward to continuing to build that global platform. And look, institutional investors continue to allocate to private credit. Despite the dynamics in retail with redemptions, if you look at institutional allocations, they remain growing and actually are up year over year in private credit. So despite all the noise we've seen in retail, having institutional global investor base is very important.
I only got about 30 seconds here, but I would be remiss if I didn't ask you, the flows are coming in, there's still institutional demand. What is the big opportunity right now, Ken? Where are you putting that to work?
I would say that it's actually a very attractive opportunity. We're seeing larger deals. We're seeing wider spreads today, 50 to 75 basis points wider spreads today. And we're seeing a dynamic, because of the disruption we've seen in retail, where the dynamic overall today is actually favoring lenders versus borrowers. So a little disruption is not a bad thing.
Certainly not. Ken, we're going to have to leave it there. Thank you so much for joining.
Thank you.
Always a pleasure to see you. That's, of course, Ken Kinsell of Churchill Asset Management.
Danny, thank you so much. That's Bloomberg's Danny Berger. Let's get straight now to your front page news. Major news outlets leading with the US and Iran exchanging strikes following the downing of a US helicopter gunship off the coast of Oman. U.S. Central Command says its jets struck Iranian air defense, ground control stations and surveillance radar sites near the Strait of Hormuz. The U.S. says the operation has been completed. Iran then said it had launched drone strikes against a U.S. Navy fleet in Bahrain. All right, coming up, we're going to look ahead to the CPI data with Andrew Hollenhorst of Citi. Stay with us. This is Bloomberg Brief.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there, you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fragile truce. Iran and the U.S. exchanged fire overnight after Tehran shot down an American helicopter. CPI on deck. Investors bracing for the latest print with strong jobs data potentially bolstering bets on Fed rate hikes. And we're live from Super Return in Berlin as private market dealmakers flock to the city. Don't miss our interviews with Brookfield private equity CEO Anuj Ranjan and many more later this hour and into the next hour. So we have equity index futures on the decline. Yesterday was a strange day. The S&P at one point was down as much as 2%, up as much as 1%. This was a tech-led sell-off, tech and energy for the most part, with oil prices continuing to be muted, dampened even as there was escalation overnight between Iran and the United States. But as you can see, it looks like we might be in for another decline day for tech companies. But we wait till after the CPI print because that, of course, has the potential to change everything. Right now, we're trading with almost 21 handle on the VIX, so definitely tension rising. The dollar index is trading at 99.9. The yen trading at 160.43. So there's lots of potential little pain points in this market here. Volumes have returned as well. Total equity volume was the 3rd highest of the year yesterday. If we look at bonds, we can see that we are still elevated, remaining so, back up a point for the 2-year yield at 413.49 and back up another more than a point at nearly 501 on the 30-year. Let's get to some individual movers now. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. It's set to be another tough day for the U.S. tech sector, with traders paring back that exposure to some of those names because of that CPI data that we've got later on, but also those renewed tensions in the Middle East and some of those worries around a potential AI bubble. So we're seeing all of those names in the red this morning. Moving on, but staying within tech, and Supermicro is also seeing some weakness today after announcing a plan for a $7 billion equity raise to buy the components that are necessary to make those AI servers that are in very high demand from that company. But we are seeing that weigh on that stock a little bit. And finally, let's flip over to Cracker Barrel and end on a positive note, because that is a company that has boosted its guidance, and we are seeing that reflected in that stock this morning, up almost 9%, really seeing that strong demand from its patriotic products. So good day for Cracker Barrel, at least.
Chloe, thank you so much. Chloe Melly there in London. Iran's foreign ministry saying it is reviewing its diplomatic process with the U.S. A state-run news agency reporting that the ministry's spokesperson added, quote, "Wherever necessary, our armed forces will respond to the enemy with authority." This all after Washington carried out what it called proportional strikes against Tehran following the downing of an American military helicopter near Oman. Bloomberg's Abir Abu Omar is back with us from Dubai. Abir, it looks like things have calmed down just a little bit. Is this potentially done for the moment?
For the moment, it seems like that would be the case, Vonnie. But look, we had a 24-hour calmness after Iran and Israel were exchanging fire earlier this week. And then we had this attack by the United States on Iran. This is after Iran yesterday downed a U.S. military helicopter. No one was injured. The 2 crew members were reported to be safe. But President Trump did tell ABC News yesterday that he must retaliate or respond to Iran in a very powerful manner. And this is what we saw happen with a lot of sites in Iran, including Qashm Island, seeing explosions. A couple of water tankers as well had seen explosions in parts of Tehran, and that led Iran to respond by retaliating against Gulf allies, or some Gulf allies, as well as Jordan this morning. That is what we saw, some U.S. bases in Kuwait, as well as the U.S. Fifth Fleet in Bahrain and a U.S. base in Jordan. Now, President Trump, throughout this whole thing, has maintained that a truce is underway, that it is imminent, that we could see it in a day or two. This is what he told reporters in New York yesterday. And so we wait and see whether this deal is in fact imminent. It's not a narrative that we haven't heard over the past couple of months for sure, but this is what we're going with for the time being. And what else we're going with is the fact that the hostilities between those 2 warring parties for the time being, again, seem to be over for the day, Vonnie.
Abir, thank you so much. Abir Abu Omar there in Dubai. Citi's Andrew Hollenhorst looking ahead to the CPI print in just a couple of hours, writing, quote, May inflation data overall unlikely to change the recent market narrative that sticky price pressures may lead the next move in policy rates to be a hike rather than a cut. I'm pleased to say Andrew joins us at the desk. He's chief US economist at Citi. Of course, Citi and you not looking for a hike next. In fact, looking for 3 rate cuts still by the end of the year. Is that still what you're thinking?
That's still our view. We think cuts are certainly more likely than hikes. To get to rate hikes, I think you need to see evidence that inflation is really picking up, the labor market is tightening, and we have kind of broad inflationary pressure. But having said that, the Fed does have an issue here with their preferred measure of inflation, which is core PCE inflation. That's been elevated. Core CPI should come in a little bit cooler, a little softer today, but core PCE is still going to come in quite strong. We think there's some methodological reasons for that, but it's a big messaging problem for the Fed. How do you talk about holding rates steady, even cutting rates, when you have core PCE inflation that's running north of 3% now?
So is that what Kevin Warsh will do next week? He'll come in and talk about other measures of inflation, and if we get a hot print today, he'll be able to say we're not concentrating on the traditional CPI data?
Yeah, I think that's the key question for Warsh. If you look at core PCE inflation has been the Fed's preferred measure. When they talk about the 2% target, that is a PCE target. What we heard from Warsh in some of his congressional testimony and earlier was this openness to thinking about things like a trimmed mean inflation. So what you're trying to do with these various measures of underlying inflation is cut out the outliers. If you have prices that are rising very quickly, prices that are falling very quickly, things that are volatile. What you do with a traditional core measure, you strip out food and energy. What you do with a trimmed mean is you just say, let's take out those things that are outliers and let's just focus on what's kind of in the middle of the distribution. That trimmed mean PCE number is down at 2.4, 2.3%. So that looks a lot closer to target as opposed to core PCE itself, which is above 3%. So what's Warsh going to focus on?
And we also have the Cleveland Fed's median, right? Yep. But there are problems with both of those indicators too. Yeah. And what should we be watching out for if we do start to look at those instead? Yeah, so
this is going to be the big debate. Which measure should you look at? How should you look at those measures? I think what I would like to see Fed officials do, what I think they might ultimately come out with, is not emphasizing any one measure over another. Yes, PCE is the target, but we're trying to get a sense of underlying trends. So trying to basically take an average of these measures and say, if I look across all these measures, where are we? I think if you look across all those measures, we're somewhere certainly north of 2% inflation. I think we could argue, is it more like 2.5% inflation? Is it 3% inflation? But the trend has been downward. That's the important point to me. Let's see what Warsh has to say about it.
Andrew, what would it take for you to change your mind on 3 rate cuts by the end of the year? And bear in mind, 2 of those rate cuts you say are coming before the November midterms.
Yeah, so we have inflation that's above target. We have an economy that's still expanding. So the only real reason for the Fed to be cutting rates here would be some concern about the labor market. Now, you look at the last 3 jobs prints, and we have an acceleration in payroll growth. So you say, okay, how could this Fed be even thinking about cutting rates? I think what we need to see is some weakness in the jobs data. Those payrolls numbers have been strong. If you look at the full constellation of labor market data, we still see pretty weak hiring, pretty weak demand. We saw that in that NFIB small business survey. Small businesses are not excited about hiring. So if we see weaker labor market data over the next several months, then we would still be on track for those rate cuts. On the other hand, if we have a strong jobs report for the month of June that we'll get in early July, that would be a signal to us that the Fed's not going to cut this year. We'd shift those cuts out. The bar to hikes, I think, is very high. So I don't think we'd be putting hikes into our forecast, but could we be pushing those cuts out further? Yes, if the labor market data stays strong.
And they would go sort of as a trio. Or you're saying that if you decide to change your mind, all of those 3 cuts will be shifted out of this year, not just one?
Yeah, I think we probably shift all of those 3 cuts into next year with the idea that by next year, we think that we're going to see inflation that really has come down to something closer to 2%. We still think that we're on that track. It's obviously been a very, very bumpy road to get there with this issue that we're having now with core PCE, but the idea that, yes, the Fed can slide rates back towards neutral.
You're not concerned about secondary impacts from the Iran war then? You think that's pretty much behind us in terms of what it will cause prices-wise?
It's still early days. It usually takes months for those effects from energy prices to pass through to core inflation. But 2 things are making us feel a little bit more confident that we're not going to have a big pass-through into core inflation. One is that the oil price spike just wasn't as high as we were worried about, right? We were talking 3 months ago about, could we get oil prices up to $200 a barrel? Certainly we're elevated, but we haven't seen those kind of numbers sustained. And then number 2 is, how is this coming out and passing through into the areas where we would expect there to be very quick pass-through? Things like airfares. We've seen airfares go up, but again, that effect has been relatively muted in the U.S. as well as internationally. So that's making us feel more confident that we're not going to get a lot of pass-through into core inflation.
In terms of who else is on the Fed, many people say, look, it's going to be consensus. It's not just Kevin Warsh. Now, we know Kevin Warsh is going to have a very strong voice at this Fed, particularly in the beginning, because the Fed is going to want to show, support for the new Fed chair as well. Who will he have as allies, or is there anybody we should be watching out for in terms of potential dissenters or people that really will not be in agreement with him on economic views?
So that's absolutely right. He has to forge a consensus. He's going to want to forge a consensus. And we had some dissents at the last meeting. We had 3 Fed officials who said the Fed should now formally have a neutral bias, not to be easing, not to be hiking. Right now they have an easing bias. That probably will come out of the statement, and there probably will be consensus around that. And I think Warsh can characterize that as just providing less forward guidance. I'm really interested in where Governor Waller is going to be. We've seen Waller, who's been quite willing to look at the data, change his views. A few months ago, he was more worried about the labor market. Now he's less worried about the labor market and more worried about inflation. So in terms of somebody who could kind of swing and potentially be an ally for Warsh, potentially have a different view than Warsh, Waller would be someone to watch.
Andrew, we have to leave it there already, but cannot wait to speak to you after the FOMC decision next week. So this is the appetizer to the main event, if you like, with the CPI data later today. Andrew Hollandhorst of Citi joining us there. Now to other top stories trending on the terminal this morning. Democrat Graham Plattner won the party's Senate primary in Maine after a campaign riddled with accusations of past misbehavior. Those include a since-covered-up Nazi symbol tattoo and a report that some of his ex-girlfriends found his behavior disturbing. Plattner will now face incumbent Republican Susan Collins in a race that is increasingly important for Democrats if they want to reclaim control of the Senate. Apollo co-president Scott Kleinman sees private equity capitulating on valuations after borrowing costs are normalized. Speaking with Bloomberg's Danny Berger from Super Return in Berlin, he said PE has lost its way a bit and some managers will now have to raise smaller funds or, quote, go away because of mistiming investments. The Qatar Investment Authority's deal-making push may be hampered by Iran's attacks on the country's energy infrastructure and its inability to ship products. The conflict is expected to cost Qatar about $20 billion in lost revenue and impact the sovereign wealth fund's financial resources, which are linked to gas revenues. Coming up, back to Super Return, an exclusive interview with Brookfield Private Equity CEO Anuj Ranjan next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Some breaking news. We are getting information from Kyoto that the Bank of Japan chief Ueda is in hospital and will miss the policy meeting. He's going to be absent from the policy meeting this month, and he's expected to be in hospital for about 2 weeks. As we know, the yen has been trading around 160.45. It is still around that level, but this is important news for BOJ watchers. Obviously, a hike expected at this month's meeting, but the BOJ chief will be absent from that meeting. He's hospitalized and will be in hospital most likely for about 2 weeks, according to Kyoto. Let's head back now to Berlin, where leaders in private markets are gathered for the annual Super Return Conference. Bloomberg's Danny Berger is at the event with another exclusive conversation. Danny.
Bonnie, thank you so much. I'm so pleased to say that I am here with Anuj Ranjan, the Brookfield Private Equity CEO. Anuj, thank you so much for joining.
Thank you for having me.
And just looking at the backdrop of where things stand for private equity right now, deal volume, realizations are down about like 20% so far this year compared with last year. It is this logjam that has been ever present. We're talking with Scott Kleiman earlier, who said we still have a while to go to work through that. Is that your estimation, too, that this kind of stickiness, the stuckness of the industry is going to take some time to get through?
I think yes, but I think it's really differentiated into different categories of the private equity universe. Resilience is really the new growth, and the markets used to pay up for things that could scale very fast. And today, it's changed. The market is now paying up for things that can't be knocked over. Businesses or assets that are hard to replicate, hard to replace, that are critical to the global economy and form the backbone of it. These are the areas that people want to invest. And if you own businesses in that space, there are still buyers in that universe. And it's not just about the public markets. It's not just about the sponsors. It's about strategic investors that want to own these businesses for the long term.
What I also hear from you is just asset heavy. I mean, what you're describing is an asset heavy business. How big of a paradigm shift is this for the private equity industry? Because it used to be high cash flow, asset light, really fat margins. Is that model now pushed to the side? Is that gone?
You know, it's not pushed to the side, but I'd say more broadly, even if you look beyond private equity, the world is shifting. And even the world's biggest and greatest technology companies are now asset heavy. If you think about it, AI, it needs power, it needs land, it needs chips and compute, and it needs steel. And these are some of the critical resources and ingredients to the success of AI and the success of these major technology companies.
At Brookfield, we're a big investor in real assets. We find ourselves at the center of this build-out, and it's created a tremendous amount of opportunity in a space that actually one would have not normally considered was traditional private equity in the past.
And you've been in real assets for some time. That's certainly part of Brookfield's DNA. A lot of other people are trying to make this pivot now, too, which maybe haven't before. Maybe they were more software-inclined investors. And I wonder, how much of a change is it to have an IC to evaluate these companies? Do you think it's difficult, I don't want to call them tourists, but people who are more new to heavy industry real asset, is it difficult for them to make the switch?
Absolutely. I think these businesses are amazing companies. They're highly resilient, they're highly durable, but knowing and understanding them at depth, knowing and understanding the operations of them at depth is not something that's so easy to learn overnight. It takes decades of building a capability. Not much different than building a capability in software or in technology or in consumer. And my personal view is the private equity universe is very big. Those that will do the best are the ones that focus on areas where they can run businesses better than anyone else could. It's probably not possible to run such a wide array of businesses so great. You have to have a spot where you have history and experience. Ours is heavy assets. It's a space that we've been in for decades, and it's a space that we know really well. We're leading in, and we're doing even more.
But for focus in that asset class specifically, it feels like money is going in to literally everything. Like ex-politician can lease some land in Louisiana and have some concept of a plan. An IPO and money comes in. It feels like money is flowing indiscriminately to anything that seems like it's linked to AI data centers. Does that end in tears?
You know, it's funny. Headline-grabbing news is often around big IPOs of the tech companies that are coming, that are often AI-linked, and that's where it seems like there's a bit of a gold rush. But while it grabs the headlines, there's actually, I think what the real point is that the public markets have actually been quite healthy and healthier than they've been in the past. And there have been many mid-market industrial businesses and other businesses that are also going public and also attracting those capital markets. But I think the real trick, to be honest, it comes back to owning businesses that create their own optionality for exit. Right. Coming back to your first point on DPI and the logjam, I mean, you want to own businesses that can be appealing to a strategic, that can generate cash flow and pay dividends, and that aren't only dependent on IPOs. You want to create your own exit, not be dependent on the timing of the public markets alone.
By the way, when it comes to public markets, do the big IPOs, do they help or do they hurt trying to exit via IPO? Because it is competing at the end of the day for the same institutional capital, and these are giant companies between SpaceX and the large language models that are likely coming public.
Yeah, look, so far we've seen that overall, I'd say it's helped. I'd say the inflows in public markets in general across IPOs or across issuances has been stronger in the last year than it's been in the past. And many companies have managed to go public that are hard asset linked, heavy asset linked, heavy asset services. At the exact moment that a big IPO comes, like this Friday, maybe there's an attention shift. But overall, I think the public markets are healthier than they were in the past.
So you wouldn't recommend taking a company public on Friday, for example?
Maybe not.
Might not be the move.
Might want to wait past the weekend.
Yeah, I think that's probably fair advice. By the way, on these large language models, you have this partnership with OpenAI, along with some of your peers, the DeployCo. I know it's only been a month. It's in its infancy. Just how is that going? Has the work started there yet?
Absolutely. Look, we're really, really excited about it. We think the AI race is shifting. It's shifting from invention to execution. And the technology is no longer the bottleneck. The bottleneck is being able to deploy AI at scale in industry, in enterprises. And the winners in this market will not be those who have the best model. The winners will be those who can get the technology in the hands of real traditional businesses in the real economy as fast as possible. That's the gap that we're investing in, and that's the gap we're trying to fill with the deployment company, with our partnership with OpenAI. And it's an incredible opportunity. I think that's going to be what really defines OpenAI and others as category winners.
Well, on that, because whether your competitors are part of this deal or not, it has been this attempt to try to enable companies with AI to make sure that they don't get left behind. Is there alpha generation to that, or when everybody has these tools, it becomes just a need to have, and it's not necessarily, if everyone's improving their margins through AI, it basically nets out in the wash?
It's a great point, and I'd say it's actually both. On one hand, there is alpha generation. There are absolutely productivity gains in these businesses. We've seen examples in many of the traditional portfolio companies that we own where we've been able to derive real EBITDA improvements, cash flow improvements in a business. We're able to reduce costs. We're able to help predictive maintenance or increase throughput of a manufacturing facility using real AI tools. So it does lead to real benefits, and we're really excited about that. At the same time, I don't think it's that you invest in AI as a business and you have alpha generation, but if you don't, you stay flat. If you don't, you get left behind. And your business actually, it may decline. And so there really are going to be winners and losers coming out of this. And so it is a little bit table stakes. It is something that if a company wants to survive and thrive in this new era, they do have to make the investment. They do have to deploy AI in their enterprise. And so they have to do that just to keep up. But those that do it well, those that do it fast, those that can do it at scale, I think they'll have huge advantages in the future.
We're gonna have to leave it there, but just quickly before we do, on this point, the stuff is expensive. The cost of compute is just going higher. How are you thinking about that in your portfolio companies and the margin compression or the margin pressure you might face as they adopt more AI and use up more tokens?
You're absolutely right. Compute is one big bottleneck. It's one area that we see all of these groups trying to expand. But the truth is, the productivity gains need to pay for that. And a lot of those productivity gains are not just the compute power of the technology, it's actually utilizing your people, upskilling your people to be able to use technology more efficiently and to deploy it more efficiently in your company. And then you can maybe minimize how much compute you need or that cost while maximizing the impact on the business.
So you're not token maxing, you're not calling your CEOs and being like, hey, how many tokens can you use at once?
Not yet. Maybe I'll say something different in a year.
Anuj, thank you so much for joining. Such a pleasure to see you here in Berlin. Bonnie, that's Anuj Rajan of Brookfield.
Danny, thank you so much. Bloomberg's Danny Berger will be bringing you interviews throughout the day from Super Return in Berlin. Now a look at what's ahead for your trading day. First up, the main event today is May CPI. That's out at 8:30 a.m. New York time, obviously. Then we get the federal budget balance. That's at 2 p.m. Eastern. And earnings coming from Chewy before the bell and Oracle after the close. Here are some pre-market movers. Supermicro tumbling once again, down more than 8%. It says it's planning to raise $7 billion in an equity deal for AI equipment. TSMC, well, came in with sales rising about 30% in May. Investors not loving that. It's not on track to beat for the earnings quarter. We'll see what it does next month. Oracle down more than 3%. It's falling ahead of earnings due after the market close, and we're anticipating quite a large move after earnings, at least according to options markets. Let's take a look at your macro environment as we go into the Wednesday session with a lot of question marks. So we have NASDAQ 100 futures pointing to a second down day for the NASDAQ. Remember, yesterday we were going to be looking at a second up day, and it all turned around. Tech selling off and continuing to sell off in the pre-market. The two-year yield is at 4.13. It is back up that basis point that it lost yesterday. And we have the VIX trading just below 21. It was above that just a few moments ago. This unsettling environment that we're in, where the US and Iran were trading fire overnight, appears to have stopped for now. But there is that tech sell-off to contend with as well. And volume is back. This is what we're looking at in terms of Brent crude. So even with all of those over and backs, Brent hasn't really advanced. We're at 91.26, and WTI is still below $88 a barrel. Gold as well, continuing its sell-off. It's staring firmly in the face now of $4,000. All right, that's it. Do stay with us. We will be counting you down to that CPI data, the all-important data coming at 8:30 a.m. Eastern. It will be key in terms of the Fed decision coming next week. We also want to reiterate that we got news that the Bank of Japan Governor Ueda is hospitalized for 2 weeks and will be missing that Bank of Japan meeting next week, where widely the bank is anticipated to hike rates. That's it for Bloomberg Brief.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The markets are wagging the economy, not the other way around.
The majority of the opportunity here is really in the AI compute space.
As long as the capital markets remain open to these really massive market caps, that's the opportunity.
This is really, I think, an earnings-driven story.
It could be more choppy this summer, but we don't think that the bull market in equities is over.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Wednesday, tech stocks decline, extending losses following wild swings for high-flying chip stocks as a record-breaking SpaceX IPO is reportedly 4 times oversubscribed. Investors are bracing for a hawkish Fed heading into the next read on inflation. CPI expected to hit fresh multi-year highs.
There is so much money sloshing around in capital markets. You see companies that are spending and spending, and they have the money to spend. They are raising money, and people want to give them money to spend. How much of it is bleeding into the increase in consumer prices that everyone is feeling? And that's what we're going to see today at 8:30 a.m. The potential for a north of 4% CPI year over year would put it at the highest level going back to 2023, as we see components and energy costs for everything rising.
So we haven't had a 4 handle for 3 years. Just think about that. Where was FUD funds 3 years ago? 5 handle. Right now, 375. How much work does this Fed have to do later this year?
In 2023, the Fed was hiking rates. At that point, people thought that they were on a rate hiking cycle, and they expected this to cause pain. Remember the pain speech? Well, now we're in a situation where people are still pricing in potentially, not pricing in, we're pricing in 1 rate hike by the end of this year. But the talk on Wall Street is still of the potential for a rate cut, even as you see a reacceleration of inflation. And I will tell you, down on the beaches of Rio, when I was talking to different CEOs, all I can say is everyone's talking about how demand is absolutely surging regardless of higher prices.
Okay, well, I wasn't on the beaches of Rio, but I was at the Knicks game, which in itself is basically highlighting inflation. I think it's particular to New York City, but obviously highlighting inflation. When you look at what Bloomberg Economics is talking about, they're saying that core inflation, though, which is more relative to Fed fund rates, actually they expect a subdued reading because people are paying up a lot more for things like gasoline, which is going to be part of this hot CPI print, and potentially taking away from other parts of the basket.
I'm looking for something to throw around the table.
I know.
Don't get me fired. Right, I'm just looking around. I can't find anything right now.
I came in and rearranged you to set up so that you couldn't throw anything at me this morning.
I'll find it in the commercial break. Let's turn to crude. Brent, WTI looks like this. It's pulling back. We're down by 1/10%. Such an unusual week for the energy market. It's been an unusual year. Brent crude on Monday topped at 98. It's down to 91. We've got an 88 handle on WTI, yet we've got every single reason in the last week to expect crude prices to be higher.
And we had one last night. You have the U.S. carrying out 3 waves of strikes against 20 IRGC targets. This is a retaliation of Iran downing a U.S. helicopter. I was with the president right after the Knicks game, before we went back to Washington, D.C. We asked him about this, and he said there's going to be a report that comes out Tuesday. Well, it wasn't a report. It was a response to Iran, and still oil is lower. And a lot more barrels are coming out than people had expected, whether it's ADNOC, whether it's now that Kuwait is able to get some barrels to Asia. It's just hard to really understand that all of this is going on while the strait continues to be closed.
Jeff Curry of Carlisle put out another piece essentially saying, you guys are all crazy. And he said, we're robbing Peter to pay Paul. Essentially, we are flooding the market with all of this oil, whether it's from the SPR, et cetera, and then keeping demand high so that you don't get the corrective mechanism that you need to really right-size the situation, which is why he thinks we have a couple weeks left before we hit tank bottoms and all hell breaks loose. And that's essentially the reason why he is incredibly bullish on commodities.
88 as it stands won't crush demand, not stateside, that's for sure, given the performance of this economy so far. Brent crude at 91. Coming up this hour, Steve Chevron of Federated as tech stocks retreat, Stephen Kirk of the Council on Foreign Relations as the US and Iran trade fresh strikes, and Veronica Clark of Citi suggesting rate cuts are more likely than hikes. We begin this hour with stocks extending losses following a very volatile session. Steve Chevron of Federated calling it the storm before the calm, writing, to be clear, we would see any volatility as a buying opportunity. Steve joins us now for more. Steve, good morning. Good to see you. Good morning. What do you think is behind the latest fragility, the latest wild swings for tech stocks?
Yeah, let me just say, I'm not coming from either Rio or courtside at the Knicks game. I'm fresh off the New Jersey Turnpike, where our traffic has been insane coming into the city, which is, I think, a sign of actually strong consumer demand. But look, I think there are a lot of non-fundamental factors that are going to interfere with markets and cause volatility over the summer. People need to make room in their portfolios for all the equity capital that's being raised, including SpaceX. Pension funds and kind of investors that are targeting allocations, equities have run so hard over the last quarter. Fixed income has struggled so much that there's going to be a rebalancing trade, very likely, that I think will interfere with markets. Inflation. I think today's inflation report is going to mark the worst of the worst. This is going to be the biggest jump on a month-over-month. I think we kind of stabilize from here.
You think this is the peak?
Well, not necessarily the peak. You could get a report that's hotter, but the jump. I think we're going to go from 3.8 to 4.2 likely today. I think that's the biggest jump. So after this report, I think things will get bad at a less bad rate, which is usually what markets look to have an inflection point. You've got uncertainty around the midterms that'll start to come in and then you have a new Fed chair that's going to get challenged. So I think you could see volatility over the course of the summer. Our anchoring point, though, is that we still sit in what is, at worst, the middle of the biggest infrastructure build-out since the railroads, and margins that are growing at the fastest pace in my lifetime, and it's not as short as it was, you can see from the gray hairs. So we want to own that, and if we see volatility on some of these non-fundamental factors, we're likely to buy it.
Own at what price? And this is the key issue, because everybody has their hand out. Everybody wants to raise money, and the sums of money are getting bigger and bigger to pay for higher and higher cost items because inflation is going up as quickly as people can raise money to pay it.
I think prices are up. I don't think inflation is in place. And I think that that's a key element. I don't think what we have is a self-reinforcing upward cycle in prices. And the reason I don't think we have that is we don't see it in wage gains, which are still pretty modest at 3.5%. And what you're seeing is pockets of weakness in parts of the consumer basket that's offsetting the strength that you see in energy commodities. What we have is a Strait of Hormuz that's closed. And if energy is not flowing, prices are going to be higher. But what we don't have that we had in kind of 22 and 23 was just more and more money getting pumped into the system, whether it was through government stimulus or rates that are zero. And so I think what you're going to see is, on a year-over-year basis, the biggest jump, this kind of 4% number. And then I think we'll see a string of 4% numbers. But then all of a sudden, when you get to the back half of the year, you've lapped the tariffs. Even if energy prices stay exactly where they are, once you get to next March, energy inflation is zero at that point, right? So, and I think what we're likely to see is energy prices that ease some, not necessarily go back to where they were pre-conflict, but ease some. So I think we have higher prices. I think it's hurting some people, but I don't think that this is that self-reinforcing inflation cycle.
I would take issue with one thing, and this is something that I was hearing from a lot of...
I would expect that, Lisa. That's kind of what we do
here. By the way, you're off to a fantastic vacation next week, so don't exactly cry me a river about our experiences.
Fair enough.
You know, let's not go there. But I will say, one thing that, as I was talking to different CEOs, they're talking about how much money they have and that their margins have been increasing, not decreasing. And you said that fiscal isn't necessarily coming in the same way that it did during the pandemic. Maybe so, but you're getting tax breaks that are giving them a lot of cash. At what point will companies have to raise wages in a commensurate way because they have so much money, they need to build their business, they are all investing in CapEx? I mean, why isn't that a likely outcome?
So let's talk about the margins first. And this is really important because in a high inflation environment, usually stocks don't do as well as they do in a low inflationary environment, unless earnings are growing above trend. And they do particularly well when margins are growing. So what the history shows is that stocks can do as well in a high inflation environment as they do in a low inflation environment if margins are growing. And that's why you see the stock market as resilient as it is. As it relates to wages, wages are growing. They're growing at about 3.5%. And that's about where you want it, right? When it gets over 4, that generally becomes a self-sustaining kind of problem. That's 2022. 3.5% with inflation kind of around 3, let's say that's been the average, that's real wage growth. And again, that's very different than what we were seeing with the inflation of 22-23 when we had a record period of negative real wage growth for the consumer. So the consumer here, and I think this is the biggest contrarian call, we all know how difficult the consumer's been, how K-shaped it's been. But look at the bottom part of the K. All of a sudden, instead of adding 10,000 jobs a month, we're adding 180,000 jobs a month. And the biggest decline in the unemployment rate so far this year is folks, some college degree, high school diploma, less than a high school diploma. I think that bottom part of the K is set to do a little bit better than what we've seen over the last year.
Steve, what do you think the Fed does next week with all of this?
I think you're going to see the Fed likely on hold. What I expect to hear from Warsh is how he's going to look at things. He's not going to come out and say, hey, we're not hiking or we're hiking. I think he's going to maybe reiterate that he's going to look at trimmed mean measures of inflation. I think he's going to lay out a framework or a series of breadcrumbs that will communicate to the market that this Fed's not going to hike. I mean, I really think that
not going to hike this year.
Because here's why. What is it going to do? The parts of the economy that are rate sensitive have already been in a recession. That's been what we've talked about around this table. So are we going to punish the low-end consumer more? Or are we going to punish small businesses more? Because you can raise rates all you want. It's not lowering a chip price. It's not lowering the price of a gas turbine because the buyers don't need debt and they're price insensitive. So what you don't want to do is hike rates and destroy those interest rate sensitive parts of the market so that if AI CapEx slows down, you find yourself in a negative cycle. So I think this Fed will understand that. I hope that they'll understand that. I think it'd be a real policy error to get too aggressive on rates.
So you're looking for something dovish relative to more hawkish expectations?
I'm expecting him to, drop some breadcrumbs. And the breadcrumbs would be things like, I'm going to focus on trim mean inflation.
I or we?
What's that?
I'm going to or we're going to?
That's the question, right? Because he does have the hardest management role, I think, of any Fed chair in a while, particularly with his predecessor sitting there, apparently keeping a low profile, but then giving speeches that aren't so low profile. So we're gonna see. We've always assumed that even though it's a committee, the Fed chair sets the direction. I would expect that Warsh, being well prepared and very interested in this job for a long time, will be able to navigate that. We will see if it really is a committee. Strap in.
He's had 10 years to think about it, that's for sure.
He's very well prepared for this job.
Without a doubt. Steve, you wear the New Jersey sun well. It's good to see you. Thank you, sir. Steve Chevron of Federated. Who needs a vacation? Who needs Rio?
Is that what you said? Okay, this is John's take. This is John's take. After I went to Rio and Bree went to the next game, John's like, who needs to go on vacation?
He looks so tan and rested already. Right?
Yeah, if you spend a lot of time on the soccer field.
It's that Italian blood. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Good morning. U.S. forces carrying out fresh strikes against Iran, targeting air defense and surveillance sites near the Strait of Hormuz yesterday afternoon. The attacks coming after President Trump blamed Tehran for shooting down an American military helicopter on Monday. Bank of Japan Governor Kazuo Ueda has been hospitalized and is set to miss next week's monetary policy meeting. The BOJ writing in a statement, quote, his hospital stay is expected to last approximately 2 weeks. The deputy governor will serve as acting chair for the meeting. TSMC reporting a 30% rise in its monthly sales, the increase reflecting continued strength in demand spurred by a global rush to build AI infrastructure. Asia's largest company has become an essential global AI player by making cutting-edge semiconductors for companies including NVIDIA and AMD. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. More from Vonnie later this hour. Up next on the programme, a ceasefire on the brink.
I would say the ceasefire is on massive life support. In that part of the world, ceasefires when you're shooting in a more moderate manner. We're going to win one way or the other. It's going to be militarily or on paper.
Up next, we catch up with Stephen Kirk of the Council on Foreign Relations, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Inflation data later this morning, CPI 8:30 Eastern Time ahead of PPI later on this week. The guesses, the estimates in our survey look like this. The median for year-over-year CPI could have a 4 handle for the first time in 3 years. The estimate 4.2%, that's up from 3.8. Expecting core to hold steady just below 3%, heading into the Fed meeting a week today, the first meeting for Kevin Warsh, the new Fed chair. Into that really volatile price action for equity markets stateside. Equity futures this morning declining by 0.8%. The losses continue on the NASDAQ, down by 1.2% after bouncing on Monday, taking it all back on Tuesday, and then adding to losses this morning. That's the stock picture. Here's the bond market. 2s, 10s, 30s look like this. 2s at 413. Yields creeping higher again by a single basis point. 10s around 453. Off the back of some jitters in the commodity market. WTI and Brent shaping up as follows, even with the tension in the Middle East. Look at this, 88 handle on WTI, 91 on Brent, and unchanged on the session. When I saw the headline drop yesterday, I was like, oh, here we go. Crude might wake up.
Yeah.
Crude didn't wake up at all.
It woke up for a hot second. It was sort of up for 4%, and then it went right back down. And ultimately, people are looking through this and saying that the fact that the ceasefire is being preserved in any capacity whatsoever, with them lobbing missiles at each other and blowing things up, seems a little bit ridiculous. And that gives you a sense of what the desire here is, which is to stop the kinetic conflict and to get the Strait of Hormuz back open.
Crude rolled over and went back to sleep. Seems to be the last 24 hours. Under surveillance this morning, a ceasefire on the brink.
I would say the ceasefire is on massive life support. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. In that part of the world, ceasefires when you're shooting in a more moderate manner. There's a reason for everything. And we hit them pretty hard. We're going to win one way or the other. It's going to be militarily or on paper.
So here's the latest this morning. The US and Iran exchanging fresh strikes after Tehran downed a US Apache helicopter, further straining the fragile ceasefire. Bloomberg's Tyler Kendall joins us for the latest. Good morning, Tyler.
Hey, John, good morning. Well, this underscores just how high the tensions are running as this week marks the worst flare-up in fighting since the ceasefire was announced. CENTCOM says that the U.S. response yesterday was proportionate and done in self-defense, with the U.S. striking Iranian military targets, including radar sites, command and control stations, and air defense systems for Iran near the Strait of Hormuz. It comes after yesterday we heard from Iran's foreign minister in a post on X who didn't deny that Iranian forces were involved in the downing of this American military helicopter, but seemed to suggest that perhaps the incident was unintentional. In the wake of the U.S.'s strikes, we heard from Iranian state media overnight confirming that the IRGC tried to target at least 4 American military targets, including the U.S.'s main naval base in Bahrain. Now, President Trump was asked over the weekend and pressed on it really in this interview with NBC News on what his red lines would be in order to end the ceasefire. He said if Americans were killed or if he feels that a deal could not be reached, because at this point, despite all the escalation, the White House still says that diplomacy is a viable option, and a person familiar with the matter confirms to Bloomberg News that the negotiations are ongoing this week with Pakistan as the main mediator. In fact, John, we got some new reporting from the New York Times yesterday that put a little bit more of a finer point on where these talks may be headed, reporting that the two sides appear to be closing in on 4 main issues related to Iran's nuclear program. That includes the potential for a lengthy moratorium on uranium enrichment, which the Times is reporting the U.S. feels could land at 15 years.
We'll see. Tyler Kender with the latest down in Washington. Tyler, thank you. To build on that, Stephen Kirk of the Council on Foreign Relations writes the following: markets seem to be waking up to the fact that the Strait of Hormuz is not opening anytime soon. Stephen joins us now for more. Steve, welcome back to the show. The president looks committed to finding the off-ramp. The Iranians look committed to testing his patience. And I just wonder, Stephen, how long we can hold on to this ceasefire.
Yeah, the president has indicated over and over again that he's unwilling to escalate. The CENTCOM's response to the downing of the helicopter yesterday was essentially a pinprick. We're talking about radar sites, a number of facilities along the Strait of Hormuz, which have been hit before. The Iranians just move these things back underground and then bring them back up when they are going to use them. Again, this is not a return to combat, and the president has indicated over and over again to the Iranians that he's not interested in that. That has given them license to actually make more demands and be more aggressive in the region. They're now trying to fold Israel and Lebanon firmly into any agreement so that they have some sort of control over Israeli security.
Stephen, what do you think the sticking points are right now in terms of the discussions between Washington and Iran?
I think those sticking points remain what they have been. The question of Iran's uranium enrichment. If the New York Times is right, we're basically going back to where we were with the JCPOA, President Obama's agreement with the Iranians over a moratorium on the nuclear program back in 2015. Then, of course, there is this issue of the Strait of Hormuz. That helicopter that was shot down was patrolling the strait while the Iranians were shooting drones at commercial shipping that is using a lane of the strait that the U.S. is assisting with. The Iranians have no intention of opening this strait without having some sort of control over it. And those are what the sticking points were on April 8th, and they're the sticking points today on June 10th.
But the goalposts continue to change. Earlier on in the conflict, the president said a 20-year ban would be insufficient. Now they're going to settle for 15?
He's clearly looking for that off-ramp. He's frustrated. He said last week that he was bored with these negotiations. We could be approaching a situation where the president actually capitulates. Maybe it's not 20 years, 15 years, 22 years, whatever it is. It seems to me he's looking for something that he can sell, that he can get out. The Iranians, however, haven't been willing to play ball and have remained steadfast in their demands that they have a right to enrich uranium and that they want some control over the Strait of Hormuz.
Stephen, you wrote that the markets seem to be waking up to the fact that the Strait of Hormuz isn't reopening anytime soon. Is that true? Do you really think that this market is waking up to that reality?
Well, you all would know better than I would, but it seems to me that over the course of the last few days, the market slides indicate that people are coming around to the fact that there is a major choke point in the global economy and that it's harder and harder for energy to come out. As far as the oil markets go, There is a difference between the market and the molecules, and we're starting to see shorter inventories in the oil market.
How has this complicated the relationship of some of the Gulf nations with the United States in terms of what they're looking for and how much this potentially impedes some of their ambitions to become global business centers?
Yeah, I think there's two things that are of great concern to our Gulf partners. One is that the president grows frustrated, declares victory, and goes home and leaves them with a mess that's not of their own making and something that they didn't want. It is a major concern. I've heard from Saudis, I've heard from Emiratis, I've heard from others that this is something that the leadership and others are very concerned about. And then there is the question of whether the Gulf model of development can continue as it had. The idea being that this is a safe, stable, secure place in which to invest, to establish data centers. Right now, though all of those things are questionable, although the market, once again, people seem to continue to believe that these places are, over the long term, places that can be critical parts of the global economy.
Steve, there's a whole industry dedicated to criticizing the president. This is not actually a criticism, it's just an observation. This is very off-brand for the president when it comes to geopolitics. This whole adventure has been very off-brand. And I would suggest even the last week has been very off-brand. This is an administration that has claimed to pursue peace through strength and criticized the previous administration for not showing American military might and securing peace through those means. And yet, Steve, this is looking more and more like what we saw under Biden, particularly the last week, letting these kind of things go. Stephen, what's behind the change?
Yeah, this is a rather extraordinary change for the president. He was in the Gulf just a year ago, and he said things that are diametrically opposed to what he, in fact, is doing. Just the investment in the region, the military investment, all of that is counter to everything that he said when he was in Riyadh last May. And then now, where he is willing to let things go, it is one thing for the president to suggest, well, you know, the Iranians attacking are below the threshold of a ceasefire. But when it comes to the Strait of Hormuz, on a daily basis, the Iranians are trying to prevent commercial shipping from going through the lane in which the United States is committed to assist commercial shipping traversing that waterway. The fact that we haven't responded to that does not suggest peace through strength.
Stephen Cook, it's good to see you, sir. Thank you. Stephen Cook there, the Council on Foreign Relations. It's an observation I think we're all paying attention to, the shift that we're witnessing under this president.
The U.S. right now is very much so on the defensive. So they're responding to attacks. They're not on the offensive and making it clear that we will not be tested yet again, because we continue to see these skirmishes happen between Iranian forces, the IRGC, and the U.S., and especially our allies like Kuwait and Bahrain that have been really under intense fire and pressure from the regime.
Crude just about unchanged off the back of this mess at the moment, which is unbelievable. The price action this morning, the fireworks in equities, tech stocks declining once again. We're negative by 0.8% on the S&P 500 and down a whole lot more on the NASDAQ. On the NASDAQ, negative 1.2%. Up next on the program, we'll catch up with Thoma Bravo co-founder Orlando Bravo, declaring an end to software AI disruption fears. Plus, Yahira has your morning movers, Supermicro joining the race to raise cash for AI spending. Check out that move in the pre-market. The stock is down 10%.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
This equity market is beginning to look increasingly fragile, particularly in the chip sector over the past few sessions. Equities declining once again, down by 0.75% on the S&P 500. At the highs yesterday, we'd bounced back big time, up 1%. Then we were down 2% at the lows, down marginally at the close. On the NASDAQ, we saw some wild swings, down 4% at one point. The NASDAQ this morning down by 1.2%. And if you want some really, really wild swings, check out the Philadelphia Semiconductor Index. That particular index was down 8.6% at the lows, and at the highs was up 2.8%. So 10 percentage point range. And to your point, Bram, I know every single morning you're looking at the same thing I'm looking at, which is South Korea and the Kospi, which is pretty wild in and of itself.
I mean, some of these losses have just been shocking, right? We saw a more than 8% move to get down on just one day. You see this incredible volatility, and you start wondering how much are these leveraged funds that are getting whipsawed by sentiment and trading around the margins. What's fascinating is, yes, you're seeing this fragility and this increased volatility, but you're seeing a broadening out with actual gains for 3/4 of the stocks, and you're seeing less bond market volatility. So there's something going on, and no one can really put their finger on what it is that's creating this volatility in these names.
Well, Steve Chivarone touched on this a little bit when it comes to this massive amount of tech equity issuance. Potentially, he says this could be the case for selling pressure when it comes to other areas in the market to make sure that they can loosen up that capital to get in. Friday is going to be a massive deal for this equity market.
There is a record-breaking mega IPO on the horizon, and in between that, some equity offerings from some single names as well. So let's get into that. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Exactly. We start with that one. We are seeing Supermicro down 10% in the pre-market as it becomes the latest company to join the party to raise capital, announcing a $7 billion equity raise. Sales of its AI servers have surged, but that just means it needs more money and more cash to fulfill some $39 billion in orders. This follows a period of significant cash burn for the company as Supermicro has to spend heavily upfront for chips and other components, which of course we know have gotten pricier. Speaking of chips, we are seeing some signs on demand from TSMC, reporting a 30% jump in sales for the month of May. That is, of course, strong, but a bit weaker than Wall Street expecting. Also, hanging over the stock is sentiment in the chip sector is weaker again today, with names like Intel, AMD, NVIDIA, all lower, coming after the Philadelphia Semiconductor Index, as you mentioned, ending the day down 7% in yesterday's session. And we get the next big test on the AI trade later today when Oracle reports shares are falling into that, down some 2.7%. And looking through analyst notes, the big question will be how quickly Oracle is building data centers and converting AI bookings into actual revenue at a time when we know demand is already strong. So all about execution here.
Yahaira, thank you. Thank you for the update. More from Yahaira later on in the program. On our radar this morning, SpaceX drawing tremendous investor demand ahead of its mega IPO. Reuters reporting the offering is approaching 4 times oversubscribed with over $250 billion in orders. Elsewhere, TSMC shares pulling back. The chip giant reporting a sharp rise in monthly revenue. Asia's largest company seeing a 30% rise in sales as AI demand shows no signs of slowing, and yet here we are, down by close to 3%. And finally, check this one out. Apollo and Blackstone finalizing a $35 billion finance package for Anthropic to expand its AI infrastructure. The deal will fund Google's custom chips for Anthropic to lease, with Broadcom backstopping payments on the largest senior portions of the debt.
Things are getting creative in terms of some of the structures and what pieces people are picking off and how they're backstopping some of their investments. The numbers are getting bigger and bigger, the players having to deploy things. When you talk to someone like from Apollo or Blackstone, they talk about trying to get security, having a short duration piece, maybe 5 years, et cetera. The numbers are just mind-boggling, though. I mean, you start to look at some of the circular financing. You start wondering how much everybody is just hinging on each other's success for everybody to go up. You're seeing that with respect to Google and what they're doing with Anthropic. You're seeing this across the board. Everyone is just becoming completely intertwined and hinged on this being a successful story.
That's the obvious criticism here, that this looks circular, that it's off-balance sheet debt with an IG rating. Thank you, Broadcom. And if you're not familiar with the structure of this particular deal, there are 3 tranches. The riskier piece of this, you compensated with extra yield, but Anthropic's on the hook for everything. The more senior portions of this debt, you get the residual value of the chips. If that's not enough, Broadcom steps in, hence the IG rating on the more senior level of the debt. Does it sound risky? Does it sound creative? It sounds creative, yes, but if you think back to, say, the car business of the last 20, 50 years or whatever, take a GM, a Ford, financing the purchases of their vehicles, so long as it's a small part of the business and not a large chunk of the business, and the argument I think we'd hear this morning is that for Broadcom, this is only a small part of the business. More broadly, though, Grandma, I think you're on exactly the right point. We are seeing very creative ways to raise more and more capital. And not every company has very flexible capital structures and the ability to do an alphabet and say, you know what, I'll go to Canada, I'll go to Switzerland, I'll go to the UK, and I'll borrow $40 billion, $60 billion in over 4 months. Not everybody can do that. And when you see the equity piece of this, I actually find the story that Yahaira talked about just moments ago. Supermicro comes out looking to raise equity, stock gets hammered. Meta talks about raising equity, stock gets hammered, just a report of that in the Financial Times. They're the things I'm focused on. Is that pushback going to start to build to the point that these companies have to reconsider their plans?
How much are these companies increasing their risk? Essentially, if they're taking down the riskiest part, if they're taking down the leverage, if you aren't necessarily accounting for the cost of all of the purchases of the chips until those chips are deployed, that is a depreciating asset over time. How do you calculate the risk that's building in some of these companies with all of this creative financing? That, I think, is the increasing difficulty. And the fact that they just keep needing to raise more and more money. I mean, really just a handful of names needing to raise more than $600 billion of debt this year gives you a sense of what we're talking about here.
We're focused on these IPOs on the horizon. I get it, they're all the headlines. I understand that, but the amount of money being raised on the debt, being raised on the debt and equity side just over the last 12 months has been phenomenal.
And it's going to pay for prices that keep going up. This is the key issue, right? Prices go up, so their CapEx has to go up. And then the prices go up further, and then their CapEx goes further. And at what point are you paying for the inflation that you're seeing in all of these different components?
Elsewhere, private market deal makers gathering at the annual Super Return Conference over in Germany. Danny Berger focused on many of these issues. She joins us now from Berlin. Hey, Danny.
Hey, John, that's correct. And there's one issue I want to focus in on particular, and it is the state of software and private equity. And we have the leading voice to talk about that. It is Orlando Bravo, the co-founder of Thoma Bravo. Orlando, always a pleasure to see you here.
Danny, so good to see you. This is our yearly tradition.
It is our yearly. I would be gutted if we didn't meet same place, same time every single year.
One of the reasons I come here is to do this.
Okay, hopefully among the top. And I know this year you have a particular message. I remember earlier this year you were talking at Sohn saying the SaaS apocalypse, the worst is over. Does it go further in your mind, just the worst being over? But is this thing over, Orlando? Where are we in the world of the SaaS apocalypse?
Danny, SaaS apocalypse, for whatever term, and that's a terrible term, by the way. I really don't like that term. It is finished. No more. And it's pretty simple. You know, people are realizing that these are unbelievable companies. And you look at the numbers coming out, even after the first quarter. And secondly, and more importantly, people are realizing that SaaS companies just don't stay still. They're not static. They evolve with infrastructure. They evolve with opportunity. And SaaS and agentic are going to merge very, very, very quickly. And these companies are the future of agents in the enterprise, and the market is realizing that as well.
So the freak out is over, essentially. Is that what you're saying? In private markets, is this stuff starting to be realized, your portfolio, maybe some of your peers, at the valuations that you think they should have? Or is there still some frozen assets, some stickiness that has yet to come unglued?
In private equity, the environment is pretty stuck right now. Now, I do think that private equity is the voice of reason in a lot of this, because it makes sense that deal activity is a lot slower. Because if you're going to buy a technology company or a software company, a solution provider to the enterprise, now you really want to see that they're making a lot of progress around their AI offerings. Enough time has passed that you should see that in the business, because that's where the whole world is going to evolve to. So why not wait a little longer before you pull the trigger and have a little bit more clarity? That makes sense to me.
That doesn't sound like the worst is over, Orlando. It seems like there's still things that need to be tested and figured out. So what is the aspect? Is it just, are you saying our companies are healthy, or is there something else that the worst of the freak out is truly over?
Well, the freak out really happened in the public markets.
True.
Right? And you've seen since April, software stocks have rebounded really, really strongly. But the other thing that you notice, and this is really about public investor sentiment, is that whenever there's an announcement about one of the great LLMs coming out with an amazing model like today, the whole software industry doesn't collapse or react to it. A big place where you saw the freak out, as you called it, be completely over, is where we invest 50% of our dollars in cyber. This is a huge tailwind to cyber, and that's one of the sectors that has rebounded really strongly over the past month.
What about in lending? What are conversations with your lenders like? I remember we had a conversation saying the cost of capital has gotten a little bit higher because of concerns. Has that come back down, or are there still difficult conversations to be had?
Lending is very difficult because, and I'm going to be completely upfront about this, there are many large asset managers that need to raise so much money monthly, and from retail. And it's not the most popular thing right now to pile that money into software. So it is a much tighter environment. Now, on the buy side, of course, that hurts you with financing, but it means you pay a lot less. And funds like ours, we do a lot better in down markets than in up markets because we're value investors. So we're really enjoying this opportunity. But once again, we're treading carefully because we want to buy companies that are part of the future, not companies that are stuck in the past.
By the way, Thoma Bravo, more than most companies, has been very successful with exits. You've also had some really successful IPOs, too. We're going to get SpaceX this week. We learned that OpenAI is going to be coming to market. Anthropic also filed for an IPO. Is this good or bad for the IPO environment and prospective exits? Because, for one thing, it starts the capital flowing, but there's also this question, is it all just being funneled? Are these just black holes of capital if you're competing for the same institutional money?
Exactly. So both points are so true. I was talking to my partner, Seth Borough, about this. He's in charge of a lot of companies along with Holden Spate that look like they're great IPO candidates in the $25 billion, $30 billion valuation range based on about $1 billion of free cash flow and their growth rates. And both of them told me last year, we won't be able to do anything this year because all the attention and all the time, let alone the dollars, are going to be focused on these massive, historic IPOs. So these smaller caps, which we are now, I guess are much more difficult to get the attention in the short term. Now, medium term, I really hope they do well because they're really important moments for capital markets and their depth. And if they do well, you'll get more confidence in the IPO market.
Well, what is a typical period for that? I know SpaceX we don't really have a historical corollary because it's just so large in size. But what would be your estimation of when you can enter back into the IPO market after these come in?
Hopefully 9 months, a year after. Now, that's a guess, right? So many things are up in the air. What happens with interest rates? What happens with valuations? Is there a slowdown in the infrastructure build? There's so many questions, right? It's a wild investing environment. People are saying a lot of strange things in investing right now. And the toughest thing for people that have a core competency in something is to stay the course. And of course, once again, you have to be part of the future, but you have to stick with what you know really well.
Well, I remember you and I last year had this discussion that this industry had lost its way. Do you think people have had that come to Jesus moment? Have they kind of come around, or are there still lessons to be learned, do you think?
They're having it now. Look, if you see some of the software troubled credits, which there are, it's out there. It's not yet a product of AI having impacted those companies or those companies failing to transition to the new platform, which, by the way, is the biggest opportunity in the software industry. It really, really, really is. It's an issue of how those companies were run. People thought 10 years ago, after they saw all this money being made in private equity and software, that it was really easy. I buy subscription revenue, 90% gross margin, I cut some cost, and I'm good to go. They forgot to innovate, and they forgot to invest in R&D, and they forgot the domain knowledge of existing management by replacing them. And that's coming back to create some flatness in the environment, which is very difficult for those businesses.
By the way, any huge calls of how many people are going to be losing their jobs?
Look at this conference. As you know, I'm an optimist, but what we're seeing in development, the great use case for AI is we're hiring a lot more developers.
Orlando, so great to see you. Thank you so much for joining. Always a pleasure.
Thank you.
John, that's Orlando Bravo of Tomo Bravo. Interesting to hear. Again, he didn't like the term SaaSpocalypse ever, but it is dead. But also that IPO window might need to wait a little bit before you can bring companies public, just given the gravity pull of SpaceX.
Interesting. Danny, nice work this morning. Enjoyed the conversation. Thank you. Let's get you an update on news worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. U.S. CPI data due out at 8:30 a.m. this morning. Economists expecting headline inflation to touch 4.2%, the highest since May of 2023. The core CPI forecast is for it to come in at 2.9%, up 0.1% from a year ago. Investors are raising rate hike bets ahead of today's CPI print and next week's FOMC meeting. A Florida trading company says it's in advanced talks to send Cuba the biggest cargo of U.S. fuel since the Eisenhower administration. Vanguard Energy is gearing up to export 250,000 barrels of diesel and gasoline. Anthropic is releasing a Mythos-like model without cyber capabilities. Fable 5 will have guardrails that prevent it from responding to certain types of queries, including those related to cybersecurity and to biology. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. Up next on the program, the Fed rate hike debate.
Inflation expectations, a tight labor market, both are signaling cause for concern. We need to see the Fed remove the easing bias and ultimately remove the insurance cut from last year. That leads us to 3 hikes starting in December.
That's the case to hike. Up next, the case to cut. Not once, but a few times. Veronica Clark of Citi joins us next.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equities declined this morning by 0.7% on the S&P 500, down by 1 percentage point on the Nasdaq, a pullback on the Russell by 0.7%. Yesterday was interesting. The bond market actually provided an offset. 2s, 10s and 30s, a 4 basis point drop across the curve. Yields this morning up by not even a single basis point. 2s back to 412, 10s at 452. Heading into CPI later this morning, as Lisa said earlier this morning, we're looking for a 4 handle on headline inflation.
People are going to be looking at the underlying components. What's driving this? Is it being driven purely by energy costs? The core CPI is going to be really key in focus. How much not only is being driven by energy, but also AI spending? And can you strip that all out and saying the consumer still isn't necessarily increasing their spending that much? Or do you have to take a look at some of the inflationary inputs that were really in play when the Fed was hiking rates?
And then a week today, Kevin Walsh at the Federal Reserve. Under surveillance this morning, the Fed rate hike debate.
I would think of the break-even market as a faulty fire alarm. You rely on it to get that signal, but you're not getting it. Inflation expectations, a tight labor market, both are signaling cause for concern. We need to see the Fed remove the easing bias and ultimately remove the insurance cut from last year. That leads us to 3 hikes starting in December.
So here's the latest this morning. Investors raising rate hike bets ahead of today's CPI print and next week's FOMC meeting. Veronica Clark of Citi suggesting cuts are more likely than hikes, writing, in our base case, the Fed cuts rates 75 basis points this year, with 25 basis point cuts in September, in October, and December. Veronica joins us now for more. Veronica, good morning.
Good morning.
Explain yourself.
I know.
4% inflation later this morning, potentially. We'll see what we get. And you've got 3 rate cuts for this year.
A lot has to change, of course, right? The most important thing I think that will change is that we will see weaker labor market data over the summer. Certainly don't see that yet in payrolls, but there's a lot of conflicting evidence. You know, we've had such strong payroll job growth, but the unemployment rate has stayed at 4.3%. We haven't seen wages pick up. Hiring plans have come back down again. Those tend to lead payrolls. Now initial jobless claims are rising. So I think we will see weaker employment data this summer. And then, yeah, you need to see some favorable details of inflation. And there's probably going to be more of this debate among Fed officials of what's the right inflation measure to look at. Core PCE is incredibly strong, but it seems like the outlier. And I think we'll see some better details even in CPI this morning.
Let's stay on the labour market. You mentioned that. That's the basis for this call. We had weakness in the labour market last summer, weakness in the labour market the summer before.
Yep.
Feels like we've got momentum this time going into this summer.
Yeah, payrolls have been stronger, but I'm really cautious that the payroll data has just gotten really volatile this last year. We've had some months now where they're consistently stronger, but what I think might happen is that when we get such a big shift in immigration patterns, and I've seen this in Canada also, is that you can just create this shift in employment patterns throughout the year, and maybe that's why you haven't seen such a retightening in the household survey, the unemployment rate, that's stayed stable, and that stayed stable while immigration has slowed, and that's stable ahead of the summer hiring season. When you do get students looking for work, new graduates entering the labor force, it's that summer season when you're supposed to hire a lot of people and then you're not. That's when we see the unemployment rate rise.
At the same time, we did see the employment number rise quite a bit, and a lot of investors say maybe this data is kind of messy. So look at what the companies are saying. And what the companies are saying is robust demand, robust growth, robust profits.
Yeah.
At what point does that make you a little nervous about your thesis?
Yeah, they're also saying, though, that we're not hiring people. So we got the full details of the NFIB Small Business Survey yesterday. We got the jobs details of that last week. Hiring plans in that NFIB survey do tend to be a good leading indicator for payrolls, and they broke through the lows in May. So they're the lowest that we've seen really since the pandemic. So yeah, people are still spending, but there's been this pattern for a couple years that you can have this really low hiring, weaker labor market, enough to keep the unemployment rate gradually rising, but consumption is still strong.
Can't the Fed cut rates if it ends up spurring capital markets even further at a time when they are incredibly hot and people are raising tens, hundreds of billions of dollars? I mean, I can't even get my head around some of these numbers, and are able to do so because they are wide open and increasing inflation in certain pockets.
Yeah, that is the best argument for maybe why you shouldn't be cutting, because the inflation that you see really is coming from maybe the business sector, right? It's that AI-related inflation. For PCE inflation, it's also equities that are rising, those financial services prices. PCE in May probably looks pretty strong. But if you're considering what traditional drivers of inflation, tight labor markets, housing, what is higher rates going to do to home prices that are already flat on an annual basis, and wages that have already slowed back to pre-pandemic, and it's not a source of inflation.
A lot of the Fed speak has focused on individuals saying it's time to go back to neutral. Who do you think represents your position right now at the Fed?
I think the Fed official that I would pay most attention to, that maybe sounds the most cautious like I am on the labor market, is Mary Daly. And yeah, most Fed officials, of course, are going to be fine leaving rates as they are now. We're going to see guidance removed and everything next week. But if there were to be any signs of the labor market loosening again, I think someone like Mary Daly would be an early indicator of that.
Bank of America thinks it's messy as well right now in the labor market, but they don't think it's MESSY. They think it's MESSI. They think it's the World Cup.
Right.
Do you think there's a World Cup impact here?
People started to cite that right after we got the data. We had the strength in leisure hospitality, a big interesting increase in local government employment. Maybe there's some security or something related there. We'll get the state level data in a couple weeks. It does not align perfectly with the national data, but probably gets more important as people try to pick out, as the hiring in these states that are hosting the World Cup.
Veronica, good to see you. Looking forward to that data as well. Veronica Clark there of Citi. Heard that explanation repeatedly over the weekend to really support that massive surprise we saw on payrolls.
I asked Scott Kirby about this from United Airlines, and he said it's an infinitesimal point. However, on my plane back from Brazil, the number of people wearing Brazilian jerseys, first of all, that's just sort of the uniform you have to wear in Brazil, is that sort of
that was the Bolsonaro
yellow
uniform at one point, wasn't it?
And green. I mean,
it took on a very national.
It was very political. At the same time, either it was political or everybody was going to the World Cup because nobody could speak English and everybody was wearing that jersey.
This has nothing to do with the economy. My favorite thing about the Brazilian team, they blessed the plane on the tarmac. I think you sent me this video.
They baptized it.
Yes. Can we get a Jesuit or something down at MSG today before Game 4?
Big game a little bit later. You heading over?
No, I mean maybe.
Is the president going back?
So a sports reporter came out and said the president will not be attending Game 4 after rumors. So I guess there was an inquiry sent from the White House, potentially, that I'm reading into this, about him going back. I think he wants to be there for a win. He doesn't want to be there for a loss. He stayed for the whole game.
Bramo's not interested.
Putting aside President Trump.
Tell us what you really think.
To have somebody shut down all the streets, all the watch
parties. But they're doing it again tonight.
All the joy
so what's the
that
reason
typically
why?
comes
I'm totally
from all
with
of
you.
this
Joy.
is
I'm
you have
totally
to get
with
there
you.
4 hours in advance. Come on, this is New York.
They shut down the joy. How dare they?
I mean, it's not even about who it is.
I get you. I understand. Up next on the program, could tell that Bramo was frustrated. Jim Bianco of Bianco Research.
Traffic.
Laura Galante of West Exec Advisors. Henry McVeigh of KKR. Tony Rodriguez of Nuveen, the second hour of Bloomberg Surveillance, just around the corner.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
There's nothing in the data that leads us to believe that inflation is slowing down on a steadier basis.
All the inflation we're really seeing is supply driven.
The Fed is succeeding on the job side of the mandate, but not succeeding on the inflation side.
There's a lot of inflation in the pipeline, which is going to affect the actual CPI numbers.
I think it's going to be very important, and I think it's going to be grim.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Jim Bianco coming in hot this morning, talking about everything but financial markets.
It's the stuff people care about this morning.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. And your price action, financial markets, look like this. Equity futures on the S&P, negative 0.6 after wild swings in the last 24 hours. On the Nasdaq, down by 1 full percentage point. In the bond market, things settling down just a bit. Heading into CPI, 2s at 412, 10s at 453. And in commodities, energy not doing much. It's got every reason to rally, and it isn't. 91 on Brent, WTI at 87. Heading into this at 8:30 Eastern Time. Just around the corner, 90 minutes away, CPI in America.
Yeah, we're going to get a read that potentially is the hottest going back to 2023 in 3 years, north of 4%. And a lot of people are going to look beneath the headline. And the bulls, the hawks on the Fed camp are going to be talking about just the headline number and the reacceleration and how this is problematic, and it's coming from core as well. And the people who are dovish are going to say, look, it's all energy, it's all AI spend. And when you take a look at the other metrics, like we were just hearing from Veronica Clark, it isn't that inflationary. Trimmed bean, it's below 3%. Who's going to win out? Ultimately, this market is looking at the hawks.
There's going to be something for everyone on the Federal Reserve when it comes to this inflation print, whether you look at headline or core. But for this White House, owning a four handle on inflation is not a good look going into peak driving season and obviously the midterm election.
So you've heard the case to cut from Veronica Clark over at Citi. Unemployment, the labour market. She thinks things will weaken through the summer. Don't see that right now. You've heard the case to hike from BNP Paribas. And BAP's point is something I've heard also from Matt Lazzetti over at Deutsche Bank. Framing matters here. Do you think we need to hike? It's one way of asking a question. Do you think we need to take back the cuts of last year is another way of asking the same question. And that's the push that I'm hearing more recently over the last week.
Did we take out too much insurance, given the fact that this market was running a lot hotter, this economy was running a lot hotter than people previously expected? And I would take that a step further and say right now, the momentum that you're seeing in capital markets, despite rates where they are, gives you a sense that maybe this isn't so restrictive for capital markets. It might be restrictive for families, for individuals. But for capital markets, that's fueling capital raises that we haven't seen before. And you're seeing everybody with their hand out. It's governments, it's tech companies, it's not tech companies that need to invest in all of these commodities that are increasing in the prices. And if the market is able to fund it, well, they can still pay for it and pay for higher prices. And guess what? That affects how much you're paying for your smartphone and how much you're paying for your life.
The crowding out is building, and you can see it. And there's just little bits of evidence building up that you're getting some pushback in the equity market. Friday, decent example. Meta in the FT, considering raising equity capital in a similar way to what Alphabet did a few days previously. Just last week, Alphabet raising $85 billion in equity capital, massive number. Supermicro this morning looking to raise $7 billion in an equity deal for AI equipment. Look at that stock this morning, down by 10% in the pre-market. So you're starting to see the evidence just pile up, just little bits here and there. I don't think it's massive pushback, but just small signs of evidence that we're pushing things too far.
At a certain point, there has to be a finite amount of money unless you start printing it. And if you start printing it, well, then we've got another inflation problem. But you start thinking about what Anne-Marie was mentioning, which is, where is the money going to come from to buy SpaceX that's going to start trading on Friday? And it possibly is going to come from a lot of index fund buying, right? So how are these index funds potentially rearranging their portfolios to absorb about 30% of the total float, which is what the expectation is right now?
Futures this morning down by 0.75% on the S&P 500. Coming up this hour, Jim Bianco of Bianco Research, as the market sell-off is deepening. Laura Galante of West Exec Advisors with President Trump eyeing a piece of the AI pie. And Tony Rodriguez of Nuveen on how big tech is contributing to inflation. We begin this hour with stocks adding to losses. Jim Bianco of Bianco Research writing, the market is operating under the assumption that the AI industry is not a bubble. AI is currently in a hype cycle. Jim joins us now for more. Jim, good morning.
Good morning.
We'll save the sports. We'll put that at the end, all right? Let's start with the financial markets. The hype. How much hype is there right now into this IPO?
Oh, I think it's off the charts right now as far as the hype goes. That AI is the biggest technology that we've seen probably in our lifetime. Everybody's investing in it. They've sold it, I'm talking about Dario Amante and Sam Altman, that if you don't invest in our company at $1 trillion valuation, everything else, everybody's going to lose their job and everything else is going to be worth zero. So they've really hyped it a lot. And so two things can be true at the same time. The technology can be very real and it can be very transformative. And we've also kind of overhyped these companies.
It's like employment protection, isn't it? We've said that a few times. You're all going to lose your jobs. You might as well buy the stock.
Yeah, you might as well buy risk on with absolutely everything and give your money away. That's how my father feels.
Do you think we're getting some pushback in capital markets now? Is it starting to build? Just small signs here, there, and there.
Yes, I think so. And also I think that there's been a narrative out there that makes a little bit of sense, that the sell-off we've seen this week is preparation for SpaceX on Friday. You know, where's the money going to come from to buy the IPO? Well, we're finding it out with the sell-off in the last couple of days. But yeah, I think we are starting to see a little bit of a pushback, but you know, that's to be expected. Remember, we had an 8-week, 9 consecutive day rally going into the top. This is the kind of correction you get after that run of that magnitude.
Well, we're going to pull back again this morning. Bring up the chart on the S&P 500. Session lows down 1%. Some comments from the president. Iran will have to pay the price. Iran is all talk and no action. Iran has taken too long to negotiate a deal.
They've taken too long to negotiate a deal, says the president, and that would have been great for them, he thinks. Quote, now they will have to pay the price. So this is definitely rhetoric in terms of escalation, not de-escalation. Just 2 days ago, I was with the president. He said we were 2 or 3 days away. Potentially, it could be very quick to get to an endpoint. He clearly is not happy with what's going on the negotiating table. He clearly is not happy with the fact that they downed a U.S. helicopter. We saw retaliation for that. It sounds like at the moment, if you take his words for real, that potentially we could see more retaliation.
Bring up crude, Brent, WTI. Push that story, those headlines through the energy market. It's worth not even a 2% rally on Brent crude this morning, just short of 93.
I was just thinking, as Anne-Marie was talking, this market's not biting. I mean, essentially, people don't believe that there's going to be a real reacceleration, and you can see that in the muted price action.
Jim Bianco, why are we ignoring these headlines this morning? What do you make of this?
I think there's headline fatigue. I mean, a little bit of that because we've been going back and forth with it. I also think that there's a trouble trying to understand this current state of the crude oil market, how much are we running down inventories, how much is actually sneaking out of the Strait of Hormuz. Kuwait is now starting to ask that they're going to start shipping oil. How are they going to pull that off? I thought the Strait was closed. Maybe it's not. So there's a lot of other things going on in this market than just whether or not the president says we're going to go to war or not.
There is a feeling that even if prices stay here for oil, that companies can absorb it, that essentially it's not a deal killer and that it's not going to really cause this disinflationary demand destruction that people had expected. I mean, how do you fold that into your feeling about AI and the narrative there that's driving everybody to look past all of these real geopolitical risks and the potential inflationary inputs?
Well, you're right. If the price of oil stays where it is right now, it's not a big deal. It can be handled. But the question is, will it stay at this level? Because the push-pull is, as long as the price of oil stays at $90, there's no urgency to do anything about the Strait of Hormuz. And then it just continues and continues, and inventories run down. And do we eventually hit that low where we've kind of run out of inventories, and then we see a spike in oil later on? It would almost be better off if the price of oil was going up now, because then there'd be more of an urgency to put a resolution into this situation instead of just dragging it out as we've seen.
We have seen, though, these choke points emerge, right, where suddenly the physical assets become very desirable and people are willing to pay almost any price for them. And we see that in the chip sector. We see that with some of the precious metals. And then you see these companies raising more debt to pay for the higher prices as everybody tries to get in. Does that worry you that sort of there is this leveraged cycle going on in a way?
The leverage cycle is actually working to some extent, too. If you remember that image that we talked about last year where everybody owns everybody else, and at the center of it was Anthropic, which has now gone from $380 billion in the first quarter to $956 billion now. And all that is now showing up in people like Amazon and Microsoft's income statements as other income. And so it's actually helping the stock market go up for a moment. But yeah, you're right. The whole premise on AI is that it's going to replace SaaS. This is really what it's going to do. That, as I like to say, there's a keyboard in front of us. In 2 years, we won't need these because we'll just have a context window. We'll just ask our computer what we want. It will produce the result we need. And so the whole interface that we'll have with computers will very well change. If that happens, then all this spending that we're seeing on AI is not overdone. But if in a couple of years, we're still going to need all the software that we personally have, plus everything else, and we also pay for AI, then it is overdone. So will it meet that promise that it's going to fundamentally change the way we interact with data through software in a computer? If it does, it's not overdone.
That sounds more expensive than hiring someone to type.
It might be now, but the hope is that the cost will come down in the future, and that's really where we are. If you want an analogy of what we're talking about here, is the iPhone. Why do we pay $1,100 for an iPhone? It's not to make phone calls. It's that I don't need to buy a camera, I don't need to buy a video recorder, I don't need to buy a tape recorder or a photo album or anything else, or a calculator or a flashlight. It's all in one device, so I'm happy to pay that kind of price. Well, if I don't have to pay for all this software and everything else, I'm happy to pay higher prices for AI, but it has to fulfill that promise. If it does, then it's not overdone.
When it comes to what is going on, back to the president's truth about Strait of Hormuz, he also said recently to the New York Post, potentially, that we could be here until September. Would that have any impact?
Well, if it runs down inventories, if the idea here is why we're at $90 is because we're offsetting it through less demand from China, who's running down their enormous inventories, and everybody else. So as long as inventories keep having room to be drawn down, we could make it to September. If we get to that, operational limit that everybody talks about, then we will run into problems. It's hard to say where that level is, but the argument is, and I believe it, it's months, it's not years or anything like that.
Hey, Jim, it's good to see you in person. You want to squeeze in the rant about basketball, about New York sports? Do you want to get that in?
Yeah, well,
some friends ahead of client meetings a little bit later today. Go for it.
Right. I saw this with the Cubs 10 years ago. People were so invested in this team winning. They stood the whole game. You put so much pressure on the team, they lost all the home games. And they had to wind up winning the series on the road. And the Knicks might have to do the same thing.
Jim, it's good to see you. Good to see you in person too, buddy.
Thank you.
Thanks for dropping by. Jim Bianco there of Bianco Research. If you are just joining us, welcome to the program. So these headlines just dropped in just moments ago. This statement from the President of the United States. He has taken a lot in the last week, accepted it and committed to de-escalation and diplomacy. Is that about to change? Check this out. Iran's military is a complete and total mess. Much of it, like their Navy and Air Force, doesn't even exist anymore. They've been completely defeated. Iran is all talk and no action. The bully of the Middle East is dead. They've taken too long to negotiate a deal that would have been great for them. Now they will have to pay the price.
It does look like his patience is wearing thin this morning, although we have to note we have been here before. Is this negotiating tactic from the president to put out truth like this, talking tough, to try to get them to have an agreement, because he has been hanging on to this ceasefire and he keeps signaling that he wants a peace agreement. But when I was with him on Friday and he was speaking to farmers, he said, and farmers who are dealing with higher fertilizer prices, higher diesel prices, he said it's either going to end with a piece of paper or another way. It'll be a harder way, maybe a quicker, but he was talking about more escalation.
Brent crude this morning up just 1% off the back of these headlines. Equities were already lower, down just a little bit more. We're negative by 0.9%, call it down 1% on the S&P 500. With an update on stories worldwide this morning with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Progressive Democrat Graham Plattner winning Maine's Senate primary. Plattner's campaign was plagued by a series of scandals and accusations of past misbehavior. He'll face Republican Susan Collins in November. She ran uncontested in her bid for a 6th Senate term. California's SoFi Stadium averting a workers' strike just days before it's set to host the U.S. team's first World Cup match. Workers are scheduled to vote on ratification of the agreement, which will expire in April 2028 ahead of the Summer Olympics in Los Angeles. President Trump saying Iran is all talk and no action when it comes to working on a peace plan. The president saying Iran has taken too long to make a deal and will have to pay the price. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you for the update. Up next, we'll get you an update on just that down in Washington, D.C. We'll catch up with Tyler Kendall in just a moment. Equity futures just off session lows. We're down almost 1% on the S&P from New York City this morning. Good morning.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Live from New York City this morning. Good morning. Check out the price action. Tech declines across the board. The Nasdaq down by 1.3%. The S&P down by 0.9%. The losses building up just a moment ago. More signs of increased tension between Iran and the United States contributing to that. Just on the margins, check out the bond market. 2s, 10s, 30s. Yields shaping up as follows. 2-year yields up by a single basis point, and crude barely blinking off the back of some important developments taking place right now. A developing story with crude. Brent at 92 and up just 1%. WTI still holding on to an 89 handle. Under surveillance this morning. a renewed threat to Iran.
I would say the ceasefire is on massive life support. If there's no ceasefire, you're not going to have to know. You're just going to have to look at one big glow coming out of Iran. In that part of the world, ceasefire is when you're shooting in a more moderate manner. There's a reason for everything. And we hit them pretty hard. We're going to win one way or the other. It's going to be militarily or on paper.
So here's the latest this morning. President Donald Trump issuing a new threat to Iran. The president posting on social media moments ago, Iran has taken too long to negotiate a deal that would have been great for them. Now they'll have to pay the price. Bloomberg's Tyler Kendall joins us now for more. Hey, Tyler.
Hey, John, good morning. Well, it's clear that President Trump's patience is now wearing thin as he issues this new threat about Iran taking too long to come to the negotiating table. It's raising questions about what could be the U.S.'s next steps here after President Trump over the weekend in an interview outlined that his potential red lines for ending the ceasefire would be if Americans were killed or if he feels that a deal could not be reached or reached fast enough. Keep in mind, after we saw the worst flare-up in fighting earlier this week between Israel and Iran, our analysts at Bloomberg Economics said that this could represent two things. One, Iran may feel more emboldened to flex its muscles amid the ongoing negotiations being dragged out. Or two, this could be the start of a wider escalation spiral. We'll have to see where this goes from here because we did see the U.S. respond last night to an American military helicopter being shot down. While Iran hasn't denied that its forces were involved in that attack, it has indicated that perhaps it wasn't intentional in that helicopter going down, but it certainly flared with the tensions overnight with both sides exchanging fresh fire. John, at this point, the White House still maintains that diplomacy is a viable option. Whether or not President Trump's comments change that remains to be seen. A person familiar with the matter did tell Bloomberg News overnight that the two sides do continue negotiations. They call the negotiations, quote, intense, and that they are being mediated continuously by Pakistan.
Tyler Kendall, down in Washington, D.C. Tyler, thank you. You read those headlines, you put together the stories of the last week. We said it earlier this morning, every single reason building up for a high crude price, and you don't see it on the screen this morning. We're up by just 1%.
Well, I think Jim Bianco really spoke to something that people in the oil industry are talking about, the fact that Kuwaiti barrels for the first time are starting to get out. They're going to China. ADNOC is getting stuff out. You had an Emirati delegation, Iranian delegation meeting when it comes to economic cooperation. Phone calls between Tehran and Riyadh continue. So maybe on the margins, more oil is coming out of the region than we can really understand. And that is what's keeping a little bit of a lid on prices. And on top of that, you got the verbal intervention of the president almost consistently, besides this morning, that he wants to see a peace settlement.
This wasn't meant to be the focus down in Washington, D.C. today. The focus was meant to be a meeting. Still don't know if that meeting's taking place between the president and a bunch of founders, leaders of the OpenAI Anthropic world.
You always call it the phantom call in Trump's first administration.
Is this the phantom meeting?
This feels like a phantom meeting because the president told us on Air Force One, and he was like, did you guys know about that? And we were like, no, please tell us more. Who's going to be attending? He says there's going to be a meeting this week between, he said, all of the big ones, so Anthropic, OpenAI, SpaceX, when it comes to how there could be some sort of financing, public-private partnership. Some are even saying go as far as what they would call nationalization of these companies, the government taking equity stakes, yet there is no meeting. Potentially, though, there's one on the horizon the president is manifesting.
I noticed reporting that maybe the companies weren't even aware of this meeting.
Yes.
Ahead of this meeting. Laura Galante of West Exec Advisors and member of the OpenAI Frontier Risk Council writing the following. The Trump administration has already supported government involvement in strategically important sectors. AI seems to be the next category. Laura joins us now for more. Laura, welcome to the program. What is the argument to take stakes in these companies?
Jonathan, the argument is around the national competitiveness of what AI brings to the U.S. So there's two pieces that I think Trump's reacting to, and Bernie has a proposal on this as well, where they're looking for ways, the administration is looking for ways to take the wealth that is going to be coming and is coming from these AI companies, from the transformation that's happening. And also, there's a public risk and an exposure piece here that's coming down the line, too, ahead of these IPOs. And look at this and say, how do you keep the innovation moving forward? How do you keep this competitive advantage moving forward, especially vis-a-vis China? And this ownership question, do you take a stake in these companies, is really where, the debate's focused the last couple of weeks. But what are we trying to achieve, and are there ways to do that that still give a competitive edge to the U.S. and to this technology.
One key point will be who are the personnel staffings that are going to make some of these decisions and have the expertise. Laura, we've seen a number of individuals depart the White House recently, most recently Thomas Lind, who had really been the architect behind a lot of the AI strategy of the White House. Does that concern you?
I think that more than a single person here or there moving on in terms of strategy, the question is what tools and who is going to be thinking through creative ways to either do competitiveness policy, do industrial policy, and look for ways to keep the innovation moving, to keep these companies in a place where they can have a public discussion around risks, and then be able to channel that to the levers of state that you have when you're sitting as an incumbent administration. And I think the capacity question that you're getting at is huge here. Do you have the people? Do you have the expertise? And then do you have the channel established? What's been really interesting to me is watching OpenAI and Anthropic put out these public policy statements and put out these very clear questions around how should you regulate us? Should we have sovereign wealth funds to figure out how to distribute the dividends here? They're putting out policy hooks. They're putting out big questions saying, we don't have the answers, but we're open to the dialogue. Is the White House, is the administration poised to be able to start answering those questions? That's the big discussion here in Washington, and also really key to how we get policy that is effective here.
Laura, one advisor who's now left, but still close to the president, of course, David Sachs, says America won't win the AI race if we beat China, but end up with a CCP-style social credit system in the U.S. And the dangers that the government becomes more deeply involved in these AI developments. Isn't there a risk of this idea of nationalization? This is not free markets and what Republicans think of them.
Certainly. The concept of an ownership stake in an American company is such a rare occurrence. We have to think back to the 2008 financial crisis, other huge national emergencies, to even have the paradigm here of the U.S. government taking a stake in a company. On the other hand, you look at what the administration did with Intel, the $9 billion investment there on the chip side, a la 10% of Intel, a pretty decent stake, and you're looking at a new question of how do you have a place at the table with this technology, but then you have this call, and you hear it in David Sachs, you hear it in a lot of traditional Republicans and across the aisle, of is this socialism? Is this picking winners and losers? Is there a risk here of anti-competitiveness? And I think that's a really legitimate concern. So how do you get at the objective you want? And the question that I think people are going to keep grappling with are, whatever the lever is to extract some level of ownership or wealth from the dividends that are coming from AI, what container do you use to put that in? Is it a sovereign wealth fund? Is it competitiveness and infrastructure build out? China's been doing this state fusion industrial policy concept for decades. We're not going to beat China at its own game, but we can turbocharge the innovation system that we have here in the U.S.
Laura, appreciate your time. The debate will continue. Laura Galante there of West Exec Advisors. I draw a line between Intel and what's happening here. I think you can make the case with Intel there was a gap in private investment, that the government was looking to sacrifice free markets at the altar of national security, and we need to support a build-out here domestically for that reason. I don't think you can make the argument there's a gap in private investment right now. This is about redistribution of very narrow gains in this economy.
No one can look at this market and say that these companies can't raise money. Tell me that with a straight face, and I'll laugh all the way to the door.
This one feels different. Let's put it that way. Coming up, Henry McVeigh of KKR out with a fresh mid-year report saying the Fed's easing cycle is fading.
world's most powerful investors don't ring a bell, they quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The Opening Trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your Opening Trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
A few headlines from the president in the last 20 minutes or so. Here's the latest from the president of the United States on the situation with Iran. They've taken too long to negotiate a deal that would have been great for them. Now they have to pay the price. Just moments ago, telling Fox News he's close to ordering new strikes on the country.
So we've seen a defensive posture of this administration. We've seen some assertiveness from the Iranians, like downing an American helicopter, and they responded. Now it does seem like the president, his patience is wearing thin, and according to Fox, he's saying he's close to ordering new strikes on Iran. So that would mean that the president is not choosing the diplomatic option that he has been hanging on to for so long. Just Monday evening, he told us that potentially we could have an agreement in 2 to 3 days. Well, this does not sound like we're getting close to any sort of agreement.
It's not much of a bounce in crude, though. Check it out. Brent and WTI up by not even 2% off the back of this. WTI still trading in the 80s, just about. Brent crude short of 93.
I mean, this is the idea that the market keeps getting at. The second derivative gone amok, where essentially nobody is going to allow prices to get that high. So there will be a resolution, so the prices don't ever get that high, so there's no resolution. And that's essentially the doom loop that we're in right now.
Going into CPI later this morning, 60 minutes away, with yields just a little bit elevated. 2s out to 30s, up a basis point or two, and equities declining on the S&P 500 this morning. Session lows down 1% on the S&P. Tech is a factor here. Wild swings in chips in the last 24 hours. Wild swings in chips over the last 3 sessions. Make it 4. The Nasdaq 100 down by 1.5% this morning. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Supermicro is the latest company to join the party in raising capital, announcing a $7 billion equity raise, but shares are falling some 12% now since it is a diluting event. Sales of its AI servers have surged, so the company says it needs more cash to fulfill some $39 billion in orders. And the problem for AI server companies like this one is that they have to spend heavily upfront on chips and other components, which we know have gotten pricier. Speaking of chips, as you just mentioned, we are seeing a second day of weakness in the chip sector with names like Micron, Intel, AMD, and NVIDIA all lower after we saw a wild session yesterday for the semiconductor stocks, with the Philadelphia Semiconductor Index falling some 10% at its lows before recovering, but still ending the day in the red as investors lock in profits in the market's hottest trade, but also maybe make some room for SpaceX. And we end on the restaurant chain Cracker Barrel. Shares are surging nearly 10% in the pre-market after it raised its full-year outlook. Remember, it got major backlash after its rebrand, but now it's trying to make up for it by leaning more into its Americana brand, and that seems to be working for the company. John?
Yahira, thank you. Thanks for the update. Appreciate it. More from Yahira in the next hour. On our radar this morning, Anthropic set to release a new version of Mythos called Fable 5, designed with strict guardrails to block cybersecurity tasks. The company also announcing Mythos 5 without those safeguards that will be available to select groups. Elsewhere, New York City Comptroller Mark Levine blasting Elon Musk's, quote, unprecedented control over SpaceX. Levine warning Musk's 80% voting power disregards investor rights, adding it would be complicated to exclude SpaceX from public pension funds. And finally, Yahara's been on top of the story all morning. Shares of Supermicro Computer falling in pre-market trading. The company aiming to raise $7 billion through a package of equity offerings in an effort to purchase the equipment needed to fulfill AI server orders.
Is there room in the market right now for other companies other than SpaceX or potentially Anthropic and OpenAI to raise money? And potentially, are they going to be charged that much more of a premium? And that's the takeaway here. Also, this is money that's going to go toward building the server parts to pay for existing orders. This isn't speculative, and yet it just highlights how robust the demand is, how unable people are to keep up, and the increase in prices that they have to pay to obtain some of those materials that they then have to finance in the debt markets. I mean, again, the capital raising that's going on right now is a bit mind-blowing.
Never mind the IPOs. They're not waiting for the IPOs.
Oh, yeah.
Alphabet, upsized capital raise of $85 billion. We've mentioned that report in the FT on Friday around Meta doing the same thing, this again. And the equity market started to push back. Now, how much tolerance these C-suites have for that equity pain is something we'll have to debate in the weeks and months to come.
And just to build on what you're talking about, it's an important point. They've tapped the debt market. They're worried about tapping the debt market too much. So now they're going to the equity market and saying, you too need to bear part of this because we can't just go to the debt market. It speaks to the scope of financing that needs to get raised. And to Jim Bianco's point, either this is a revolution that is going to change the way we do everything in a couple of years, or this is an overpriced proposition. Most people seem to believe the former, not the latter.
Kevin Walsh is going to have a really hard task next week talking about some of this. Speaking of, KKR releasing their mid-year outlook, highlighting the top themes from the first half and looking ahead to the rest of the year, including a fresh outlook on the Fed, with Kevin Walsh's first meeting as chair a week away. The team over at KKR writing the easing cycle is fading, and the next debate may be more about how long policy stays restrictive. We have removed our 126 rate cut from our forecast. Henry McVeigh of KKR joins us now for more. Henry, good morning. Good to see you.
Good to see you.
Thanks for being here, sir. Let's get into this. How have things changed for this Federal Reserve in the last few months?
Look, I think what's become very clear is, and it's kind of the title of the piece, we're calling this the divergence conundrum. Half the world is having massive spending increases around national security and then around AI, and that is almost spending. It's an existential threat. You look at the other half of the economy around goods and housing, and it's depressed. So you have this pendulum, like which way do you go? If you're it's a little bit of a seesaw, and the central bank is getting mixed signals, right? Interest rates are a blunt instrument. You probably should be raising rates to restrict the pace of growth in the build out of the national security and the AI, but you probably should be cutting rates to help the lower income as well as the housing market. So that is really what the piece outlines, and there are really three other periods in history: the 1870s, the 1920s, and the 1990s. Usually comes with some type of industrial revolution and productivity boom. My gut is that that the new Fed chair, what they'll try to do is do no harm in June, right? Which is, this is probably not the time to make a massive pivot one way or the other. But my gut is that, I thought Larry Logan and others were right when they moved to a more neutral posture. We have 150 to 200 companies around the world. We have a great headlight system on what you're seeing, and prices paid are going up around the world. They are, right? There are two things going on. One is this demand-driven need for AI, because you need to cement your competitive position. The second is that more and more countries are realizing how to leverage economic choke points for political gains.
Can you make the argument also there's an extra wrinkle here, that the consumer's rate sensitive and all this spending we're seeing isn't? Is that an extra problem for this Fed?
I actually think that what's most interesting about this cycle from a leverage standpoint is we've always lived in a world, since I've known you guys, where the consumer levered up and the corporate levered up and the government delevered. Right now, the consumer, in anticipation of what's going on with the government debt markets, has delevered in aggregate. And the corporate, even though we're seeing a lot of issuance right now, by and large, they have much lower levels. So there are signaling mechanisms going on. The offset of that is when the governments went crazy after COVID by priming the pump, they really ramped up their leverage, and that's what's leading to this breakdown for most CIOs is that their shock absorbers, which are traditionally risk-free rates, are not acting like risk-free rates, right? Japan's bond market selling off because you've moved from deflation to inflation. The UK is the tip of the sphere, right? Which is you've got, if you raise taxes, everybody complains. If you don't raise taxes, then they want to sell the bond market off. And the US is the third, and around Liberation Day and some other areas, it's just the bonds are no longer providing that stability that they did, and it's one of the things that we think is different about the cycle. We've been highlighting that for some time, but that really fits into this narrative, which is you do have this higher resting heart rate for inflation.
They're not providing the stability. Are they the source of risk right now as governments sell bonds at the fastest pace in history?
Yeah, I think we're running. I think we're running. Debt levels running at these same rates for some time will continue to be problematic, and it's one of the reasons we would argue you need to think about other things in your portfolio. We obviously sit on top of we manage $800 billion of private assets, so we have our own views around private equity and infrastructure and asset-based finance. But I think this is true from the individual investor all the way up to the institutional investor that this time is different.
There is a feeling right now that there are pockets of froth that have yet to be worked out of the system, and that there is a lot of money chasing AI. Inevitably, some of it will be lost in big swaths. Yeah. You say that at some point there will be some sort of rebalancing that ultimately will be required. Can you explain what that means?
So if you go, to me, I mentioned those periods, the 1870s, the 1920s, and 1990s. This is probably most akin to the railroad build-out in the 1870s. Railroads actually came about 60% of the market. Of the market cap, right? So it can go on for longer than what you think. And the other thing is if you look, and we see this internally, I would say most CEOs who come on your show are talking about AI productivity. The boom that we've had the past 8 to 10 quarters is not AI. It is started after COVID with automation, digitalization, machine learning. We are just at the start of the AI productivity. And most people are going to like it, they're going to get benefits, and they're going to spend more, because they're going to want to get that internal leverage of the productivity for their employees. So I think the spend signal is actually to keep going, not to slow down. Look, we know from the telecom issues in 2001, these things do get overbuilt. And so there will probably be some overbuilding, and we also don't know which large language model is going to win. So to me, this is know thy customer, make sure you have contracted revenues, and don't do the if they'll build it, will come. I think you're going to see some of that. That's not what we're trying to do as a firm. Particularly, we have a leading infrastructure franchise. We do a lot in AI and the data center build out, but we're trying to be disciplined around that.
Won't they all win if the United States government decides they're going to take a stake in them?
Yeah, I heard your earlier comments. I think this is actually an excellent point. What I see when you go around the world is that countries are having very different reactions to AI. To me, China and the U.S. are the two leads. The U.S. is going for a very high-end corporate model. I would say China is going much more consumer, open source. They're probably going to be the leads. I think there will probably be some convergence of church and state between the private and the public sector. But what's also interesting that people don't talk about, if you go to Japan, they have to have AI because there are not enough people. They're saying bring it on. If you go to India, they got to put 16 million people into the workforce every year, and IT outsourcing was one of their #1 exports. That's probably a little more tense. So I think it's a much more nuanced story than what you hear on the global headlines. And really what we've tried to do through our global footprint is figure out, it's not a one-size-fits-all, and try to figure out within these different economies, what do they need? Some need more power, some need more chips, some need more infrastructure to get the locations built. And so it is really a time to drill in. I think a little bit where you were going, somebody will overbuild, right? That's just the nature of these big industrial revolutions. But the power and the productivity that you get from it are will be very powerful, and we just need to navigate that. And I think the report does a good job of laying out where we think investors should tilt.
When we finish on Henry, one thing we are guaranteed of getting more of, and that's more equity supply.
Yeah.
How the supply-demand backdrop is shifting, and how you and the team are thinking about that.
Yeah, I think we've been, we obviously focus on fundamentals, and we try to make companies go from good to great. Doing this for some time, I focus a lot, like you guys do, on the technicals. The technicals have been as good as they could be for the last 30 years that I see. I measure IPOs, levered loans, and high-yield issuance as a percentage of GDP. It has been at 3%. That is 2009's levels. In 2021, that was 8%. But as you guys are reporting, guess which way the chart's going? It's getting into the middle. So we're not at red alarm where we were in 2021, but we've left green. And so I think that's something as this story unfolds. And Lisa and you were talking about this earlier, which is it's not just the debt. You can't just keep issuing debt. You've got to put some equity into the structure too. And can the market digest that? And so we'll have to watch. But it's definitely going from a very green, incredibly positive backdrop to one that's more mixed. My personal take is it's actually not going to be the IPOs. It will be in 2027 where you have the secondary supply when the unlocks come on. So the IPOs are going to make the headlines, but when you look at it in aggregate, it's probably 300 and 400 billion. That's not a teeny number, but relative to what can come on the supply, that's more probable.
As you look across asset classes right now, which part of the market is more vulnerable to so-called crowding out with all the supply coming through, both in debt and equity?
I think look, to me, most investors are globally underweight infrastructure. They have about 3% of their portfolios in that. That probably should be double. That's going to grow. The tech boom is where you've seen the excess, and it's hard to argue. You have this difficult thing because semiconductor chips, particularly in Korea and other places, are trading like 7 times earnings. They're growing 100%. So it's going to be what's embedded in the price, and it's going to be the second derivative. Our model is showing very strong earnings growth through 26 and then starts to slow down in 27. Higher rates, tightening, central banks, and oil. Oil's actually not a coincident indicator. It's a lagging indicator. Usually comes through the system about 12 to 15 months later. So I think what you want to, I think this year we have the chance that we beat earnings nicely and it keeps the market doing okay. I think when you look more towards the second half of 27, that's where we would see a little bit of softness in the earnings.
Henry, this was a privilege, a pleasure. Thank you,
Always
sir.
great to see you guys.
One of those conversations I'll go home and listen back to. Henry McVeigh there of KKR. Lisa was talking about the record debt that we've seen so far. Hannah Benjamin Cook and the team here in Bloomberg put some numbers on that. $504 billion of debt, sovereign, issued so far this year, more than the first half of 2020. Think about how much was issued through the first half of 2020. We've beaten that.
Yeah, well, prices are rising and the governments want to get on it too because they're all trying to solidify some of their domestic security and their critical minerals. What Henry McVeigh also wrote about in this piece, which I thought was really interesting, was that during times of industrial revolutions, there tends to be a confluence between government affairs and government issues and political issues and economic ones. And we're seeing that in a massive way, and you see it particularly in the physical goods space.
Some big shifts, that's for sure. The S&P this morning, session lows were down 1.1% on the S&P with an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. President Donald Trump telling Fox he's close to ordering new strikes on Iran. The warning coming after Trump posted on Truth Social, Iran will, quote, pay the price for taking too long to negotiate a peace deal. Trump going on to post about the U.S. blockade of the Strait of Hormuz, writing, quote, nothing gets through unless we want it to. It is a steel wall. Iran is doing zero business, not paying their military or any of their bills, and quickly becoming a failed nation, unquote. TSMC reporting a 30% rise in its monthly sales. The increase reflecting continued strength in demand spurred by a global rush to build AI infrastructure. Asia's largest company has become an essential global AI player by making cutting-edge semiconductors for companies including NVIDIA and AMD. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie in the next hour. Up next on the program, big tech driving inflation higher.
Inflation remains above target. I think that the rate-insensitive purchasers, the hyperscalers, that really hits the nail on the head. That is inflation or overheating. This is increased demand outstripping supply and raising prices.
Up next, Tony Rodriguez of Nuveen.
anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Equities declining here. We're down 1% on the S&P 500, negative almost 1.7 on the NASDAQ. It's been a wild ride for tech in the past few days, going into a record-breaking IPO in the next few days from SpaceX. Adding to this move lower, some comments from the president a little bit earlier, losing some patience with the Iranians. Only 24 hours ago, not even the president was talking about closing on a deal with them, and now it's maybe striking him again.
Yeah, he said that to my face. He said it could be 2 to 3 days. And I said, did you mean weeks? Because he usually likes to do 2-week increments. He said, nope, I mean days. So now he's saying that basically when it comes to Iran, they've taken too long, in his mind, to negotiate a deal. He said it would have been great for them. Now they will have to pay the price. So everyone is expecting 2 things. One, is the president just using rhetoric to negotiate better terms or try to get the Iranians back to the table? Because we don't really have a lot of insight on where they are in the stages of these talks, or is he serious? And we're going to see more strikes.
You wouldn't know based on this move in crude. Said this a few times. Brent this morning, around 93. And the surveillance this morning focused on CPI at 8:30 Eastern Time. Big tech driving inflation higher.
Inflation remains above target. I think that the rate-insensitive purchasers, the hyperscalers, that really hits the nail on the head. That is inflation or overheating. This is increased demand outstripping supply and raising prices. It's not something that is going to return anywhere close to 2% this year.
So here's the latest this morning. Investors bracing for fresh inflation data due out today, expecting CPI to hit multi-year highs. Some on Wall Street warning big tech's AI spending spree could continue driving up prices. Tony Rodriguez of Nuveen writing, tech-related investment is now contributing to inflation. We expect this tailwind to remain over the rest of 26 and into 27. Tony joins us now for more. Tony, good morning.
Good morning.
Does the Fed have to respond to that?
We think the Fed is responding because we think the Fed was going to be cutting, so they're responding by delaying cuts. So we don't think the Fed's going to need to respond by raising rates at the moment. Now, if things really get much worse on the energy side because of what's happening in the Middle East, that could maybe push the needle towards needing a hike. But right now, what we think has happened is cuts are off the table for the balance of the year, and you need to see maybe into the middle of next year when you get some easing in the inflationary pressures.
It's inevitable that I'd ask this question. What is much worse? What does that look like?
Well, right now, if you look at energy prices and you look at kind of the futures curve, you're looking at around $85 oil at the end of the year. That's the highest it's been all year. If you just see that get up closer to $100, that's going to cause it to continue to push into the end of 2027. And I think at that point, you'll start to see the Fed need to. Right now, we think they need to take the easing bias off. By the time you get to September, if you're looking at a futures curve that's pricing $100 oil because Middle East developments have deteriorated, then I think you're going to be looking at a hike.
Are we being too cute about this, given the fact that yields are higher and that you're seeing inflation potentially running at the highest pace going back 3 years when the Fed was in a hiking cycle? Are we being overly optimistic about the disinflationary forces and the ability for consumers to just look at a very narrow selection of goods and price increases there?
Yeah, I don't think so, because I think if you were to continue to see this kind of pace of energy price increases, for example, the demand destruction becomes that much more acute. So right now you're already seeing some demand destruction, particularly when we're talking about lower income households because just of gas prices, et cetera. That would really begin to pinch even further. And then I think you'd see declines in consumer spending, increases in consumer delinquencies and defaults. So the demand destruction element would, I think, temper any need for the Fed to have to react to energy prices if they keep rising at this pace.
Are you seeing any demand destruction or destruction of appetite by investors to keep lending to tech investors right now with rates where they are and with some of the price pressures?
Yeah, I would say no, but I think one of the big reasons that's occurring is because most of the very large hyperscalers are actually also leaning into the equity market to help support their balance sheet a bit. So I think if you didn't see that, then I think the appetite in the fixed income market would not be there, and you would see a much higher increase in rates, widening in spreads, et cetera. But the fact that they're being somewhat careful about their balance sheet strength and using the equity market to help finance some of that, I think then the demand on the fixed income side will be there.
Dave Sharon brought up a good point in the earlier hour about how if you were going to hike rates, it's not going to stop this AI trade, and it's just going to hurt the lower income individuals across the country. Do you think that's the message Kevin Warsh is going to potentially hint at next week?
Well, I think if the question is directly related to do you hike over AI spending, he may point to that because, yes, the Fed really can't do anything about that, just like the Fed can't really do anything about what's happening in the Middle East, right? So they are going to try to look through as far as they possibly can, but at some point, back to like, hey, if at year end energy prices are $100 or staying in those, this $90 range, then you can no longer look through it as easily and as rationally.
What do you think the dots look like next Wednesday?
What's that?
What does that dot plot look like next Wednesday?
That's interesting because you have a little bit of just responding to the actual macro developments that have occurred, and you have a little bit of what I would think is maybe positioning in terms of how they want to see themselves versus what they think Warsh and signaling where they want to be. So I think you're going to see dots that increase a bit.
Anne-Marie's on the no dot.
No doubt.
No dot camp.
I'm in the Jackson Pollock camp. Just throwing paint at the wall and essentially seeing what happens.
Might not put a dot on.
You lost me for a moment.
Okay.
Now I'm with you.
It's just like a spray of dots in all different places and being like, figure it out. It's useless anyway.
Tony, it's good to see you. Thanks for being
Good to
here.
see you guys.
Thank you, sir. Tony Rodriguez of Newfeed. Looking for inflation to come in with a 4 handle. We haven't seen that for 3 years. The last time the Fed saw that, the Fed funds, the upper bound, had a 5 handle. That's a 3 handle now. Things have changed a lot. Coming up next, we'll catch up with Gagi Chowdhury of BlackRock, Dan Ives of Wedbush, Tiffany Wilding of PIMCO, David Kelly of JP Morgan Asset Management with inflation on deck. That data point, 34 minutes away.
In your tennis career, did you say, I've had enough and I'm just going to retire at the top? You ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is, you can have results and they could, come at various times in your career, but I was consistent for many years, and you you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences after, before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The markets are wagging the economy, not the other way around.
The majority of the opportunity here is really in the AI compute space.
As long as the capital markets remain open to these really massive market caps, that's the opportunity.
This is really, I think, an earnings-driven story.
It could be more choppy this summer, but we don't think that the bull market in equities is over.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your price action, the score looks like this. We're negative 1% on the S&P 500, down by 1.5% on the NASDAQ. In the bond market, yields shaping up as follows. 2s, 10s, and 30s. Yields higher by 2 basis points on 2s, up 2 on 10s. Your 10-year, 4.54. Heading into this, 29 minutes away. CPI in America at 8:30 Eastern Time. We're looking for a 4 handle for the first time in 3 years on headline inflation in America. And it might get worse from here if things develop in the wrong way in the Middle East. The president earlier on this morning saying this about Iran. They've taken too long to negotiate a deal that would have been great for them. Now they'll have to pay the price. The energy market reaction, there isn't much of one. Up 2% on WTI, still just south of 90. Brent crude just below 93.
Headline fatigue. At what point are we people saying we've heard this all before? Every time a new headline comes off, we can't change our entire structure of trading. And there's a lot of feeling right now that, frankly, everyone's being manipulated in different ways without seeing action. People aren't going to move. Ultimately, they're looking at the supply and demand, oil barrels that are going across, the fact that SPRs around the world are being dragged down, and it isn't having that much of a ramification.
First, we need to say we've been here before many times with the president in terms of using using rhetoric and then he actually doesn't follow through with it. But it does seem to be this morning that his patience is wearing thin, especially since just the other night he told us we could have a peace agreement in 2 to 3 days, not weeks, 2 to 3 days. So now he's saying that Iran might have to pay the price, they're taking too long, and he's telling Fox News that potentially he's close to ordering new strikes. This wouldn't be defensive in responding to the Iranians, the IRGC downing a U.S. helicopter. This would be fresh, kinetic strikes. So you would think oil would move higher. It's not at the moment, and that's because we've been here before.
There's a risk here, though, that we conflate the two stories too much. We're talking about CPI 8:30 Eastern Time. Yes, energy's a factor, a big factor, but the story has progressed in the last few months. There's a bigger focus now, I would suggest, much more so on the inflation taking place beyond just energy and what that means for interest rates. And when you speak to the people who are calling for tighter policy from the Federal Reserve, and you ask them a very basic question, how dependent is that call on what happens in the Middle East? And they say not very dependent at all. There's much happening elsewhere.
It's AI spending. Henry McVeigh was saying that he goes around and talks to all their portfolio companies, and they all say they're raising prices. They all say they're able to pass along the increases in input prices to their customers. I heard that over the past couple of days from a number of CEOs, their profit margins are expanding faster.
Tell us where you heard it, Bramo.
Well, in Rio. While I was in Rio, enjoying, the samba and the beautiful weather. By the way, it's gorgeous there. It's really nice. I highly
Tell us more,
recommend
please. I didn't know.
It really, it's just the island's volcanic activity you can see from thousands, millions of years ago. Anyway, it really gives you a feeling, though, of strength, and that's the feeling that you feel all around.
What is the view like from the Bloomberg office in Rio?
I literally...
Is it better than the view in Manhattan?
Yes. That's a big yes.
I officially submitted a request for transfer.
Did you? Bureau chief. Does
Yes.
the bureau chief know about that? No. Job swap.
Honestly,
job swap.
I'll put snacks in the drawers. I mean, it's really gorgeous. They live well. They live well there.
So do you. Futures right now in the S&P 500. Totally jealous here, not pretending I'm not. Equity futures on the S&P down by 0.9%. Coming up this hour, we'll catch up with Gargi Chowdhury of BlackRock with Markets on Edge, Tiffany Wilding of PIMCO on the latest breaking inflation data, and David Kelly of JP Morgan Asset Management on investing in a diverging economy. We begin this hour with stocks sliding as fresh turbulence rocks the tech trade in the past few days, heading into this week's mega IPO. Gargi Chowdhury of BlackRock writing, stay invested, but broaden the sources of return beyond the narrowest part of mega cap leadership. Gargi joins us now for more. Gargi, good morning.
Hi, good morning.
What's behind the volatility we've seen in the last few days?
Absolutely. So I think it's the trifecta of bad news that's hit the market. Obviously, the first came with the, it was good news, but interpreted as a more hawkish turn from the Fed with the payroll data last week. On top of that, this morning, obviously, we've seen some aggravation on the geopolitical front. And then lastly, already there's a little bit of concern around, how will the supply that's coming this week get absorbed in the market? So you take all of that, and then you combine that with the tremendous rally that we saw over the course of this whole year, but certainly May, and the very narrow rally, 80% of the returns of May came from just the top 10 names. So when you combine all of that together, I think it's really fair to expect to see a pullback. I call it a healthy pullback. I think earnings are still solid. I'm not worried about it, but there are some things that the market just needs to get through.
So we've got this really big, fat, nice earnings cushion supporting demand for equities. Got that. But now you've got all this supply. You talked about making space for it. Do we have enough space for all this supply?
It feels that way. And then, when we sort of talk to our clients, and I was on the road last week, I was in Mexico, not Brazil, but equally lovely. But just talking to our wealth and institutional clients there, as well as the United States, I think what clients are very excited about is this idea that there's all this IPO coming to the market, which does indicate a risk-taking environment, which does indicate to them that this is a good time to stay invested. Whether or not it's about this particular or that particular issuance, that's not what they're thinking about. What clients are talking to us about is just ways in which they can add to durable growers in their portfolio. Now, having said all of that, there is a little bit of concern around how much the market has rallied over the course of the last month. And I think, again, this momentum unwind that we saw even yesterday when it was very sharp, very concentrated, I think that's something that we will get. And on top of that, you have the rate back up.
You're at the forefront of one of the hottest debates right now on Wall Street, which is the index composition as some of these IPOs come to market. The fact that a number of the indexes are going to be welcoming them in much sooner than previously expected. And then under this one change, that about 30% of SpaceX's free float is going to be going into indexes versus 4% had the index characteristics not been changed. For ETF buyers, how much do you think they're prepared for this? How much does this expose them?
You know, honestly, that's what we've been trying to do as a team, as an organization over the last month, just educate, right? And we're having some calls today as well inside the market webinar for our clients, which is just around, as an ETF buyer, here is what you get when you hold. You get transparency, you get liquidity, and that's perhaps one of the reasons that you do want to hold something in an ETF form, because you know exactly what your underlying holding is. And on the flip side, if you want to have a slightly larger allocation than you normally might get from an index, there are so many incredible active players that can get you that similar allocation, but maybe at a more nimble, moving around from one region to another. So I think our job here as market participants is to make sure that our clients understand that just because this is so hot right now and we're all talking about it and it's a very exciting time to be alive, doesn't necessarily mean...
You sound like someone who just got back from Mexico.
I mean, it is, right?
Keep going.
Sitting next to someone who just got back from Brazil. Continue, please.
I don't think that is the only, it's very exciting, but at the same time, recognizing that just because something is a very hot IPO doesn't mean that in the 1 or 3 months that the returns are, always as incredible as the trading on the first day. So diversification, having transparency, and making sure you understand what your index hold is what we're trying to educate our clients about.
Torsten Slok of Apollo put out a note this morning saying tech dominance is pushing single stock risk to records. I mean, how many people realize that when they buy a NASDAQ ETF, they're getting a whole lot of space and they're getting not necessarily some sort of allocation to the U.S. economy? Given that, how much do U.S. economic metrics matter to the vast majority of equity investments right now in the U.S.?
I mean, they do matter, obviously. We recognize that when we see earnings growth come through in the first quarter. Obviously, we wouldn't, yes, a lot of that is extremely secular and related to AI or energy, we know that. But even outside of that, if we looked at Q1 versus Q1 of 2025, having 8 of the 11 sectors having such strong earnings growth and seeing some signs of broadening out, not in performance, but in earnings, is related to this really solid nominal GDP environment that we're in. And I think it does matter. Having said that, right now, the themes that we're talking to clients about and that we're writing around are the 2 durable growers, which is AI and which is energy security. And then the other one is focusing on income. And that's what clients want.
You sound so optimistic. Are clients worried right now?
Honestly, clients are, we do these polling insights that we get from clients, and what we've seen is there was a large worry, there was a dip in client sentiment right around April, and that's picked back up to where we were in the January period. So risk sentiment from our clients are not exhibiting huge amounts of worry. Even if you look at ETF flows, obviously, if you look at over the last 2 months, we've seen incredible amount of inflows into both U.S. equities as well as fixed income. There is a tremendous amount of cash on the sidelines, so I would say that's another good reason for us to expect, the market to hold in okay. Having said all of that, I will caution that we are primed for pullbacks in times where we've had very rapid moves and rates move higher in a very rapid fashion. Both of those, if they happen, I think pullbacks can occur. And if they do, I think it's a healthy opportunity to buy those durable growers.
What's the bond market call? You've given us the equity call. Where's the bond market fit in? Because the big risk, people were worried about a repeat of 22.
Absolutely. So I want to be very clear that this is not a repeat of 2022. This is an environment where you have supply-driven shocks, and that's very different from 2022 when rates were at 0 and you had to move them up very quickly. I think it's more and more apparent that we're not going to get a rate cut anytime soon, and I think that's a realization that we have obviously all agreed upon. But I also don't think that we're going to hike very quickly either, because again, this is a supply-driven energy shock, and there's really no reason to believe that a rate hike is actually gonna help consumers at this point of time. So bond market call, I think, 10 years probably stay around here, and you can get some really attractive entry points to clip some coupon. And we're actually seeing that in the fixed income ETF flows, best month ever in May.
Mexico City?
Mexico City.
Nice, 4 Seasons?
Chapultepec Park. Let's go running.
Okay, very cool. I know it well. Gagi, thank you. Gagi Chaudhry there. of BlackRock. Equity futures right now in the S&P down by 0.9% with an update on stories worldwide with your Bloomberg brief. Vonnie Gwynn has more. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump telling Fox News he's close to ordering new strikes on Iran. The warning coming after Trump posted on Truth Social, Iran will, quote, pay the price for taking too long to negotiate a peace deal. Supermicro is plunging in the pre-market, the AI server maker joining the race for cash with plans to raise $7 billion through a package of equity offerings. The proceeds will be used to further fuel spending and fulfill customer orders. Game 4 of the NBA Finals between the New York Knicks and the San Antonio Spurs tipping off tonight at 8:30 Eastern. The Knicks holding a 2-1 lead in this series. Tonight's game will be played at New York's Madison Square Garden. The Knicks looking for their first championship in more than 50 years. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Thanks for the update. Up next on the programme, the Morning Calls Plus, Dan Ives of Wedbush as SpaceX draws record demand ahead of its IPO. That conversation just around the corner, live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
A lot of non-fundamental factors that are going to interfere with markets and cause volatility over the summer. People need to make room in their portfolios for all the equity capital that's being raised, including SpaceX. We still sit in what is, at worst, the middle of the biggest infrastructure build-out since the railroads. If we see volatility on some of these non-fundamental factors, we're likely to buy it.
That was Steve Chevron of Federated. Constructive on this equity market with these pullbacks. We're down by 0.8 on the S&P. On the Nasdaq, we're negative close to 1.5 going into the opening about 1 hour and 15 minutes away. That's the price action. Let's get you some morning calls. First up, Barclays raising its price target on Datadog to 260, saying its product velocity will continue to drive its leading position. Elsewhere, Bank of America upgrading ST Microelectronics to buy, saying the market is underestimating the chip maker's earnings power. And finally, BTIG boosting its target on Cloudflare to 269, saying underlying enterprise momentum remains strong, and yet still that stock is down by close to 2%. Let's talk about SpaceX, already shattering records ahead of a historic IPO, lining up over $250 billion in investor demand as its market debut fast approaches. Bloomberg's Ed Ludlow joins us now for more. Ed, what do we know ahead of this one?
Yeah, the state of play is that it is many multiple times oversubscribed, but there's actually something happening in the background, which is there is a roadshow, and the book will close for institutional investors at 4 p.m. Eastern time this evening. What we know is that the allocations are going to very heavily favor long-only asset managers, and that there are several institutional entities that have submitted orders for $10 billion worth of shares. By the way, if you are one of those institutions and you have submitted an order, and please telephone me and tell me what's going on. But this is interesting because SpaceX kind of pre-priced its IPO at $135 ahead of the roadshow. There wasn't some sort of traditional range. And the question as it relates to the rest of the year, when we have an Anthropic and potentially also an OpenAI IPO, is what is the story that's being told by the bankers and SpaceX to potential investors in the interim? Yes, they're oversubscribed, which would justify the initial valuation. And our reporting suggests that actually there's a big focus on this data center in space story. SpaceX telling the pool that basically whatever was in the prospectus, they could start doing orbital tests sooner. Maybe 2027, maybe 2028. So there's a lot to happen in the next 48 hours mechanically. But one thing I think is really important for the surveillance audience is take a look at the rest of the month of June. There will be a big, passive issue with the rapid inclusion into the NASDAQ Russell 1000, but also there's a lot that can drive volatility and as a catalyst in this market. So buckle in, John.
Looking forward to your coverage, Ed. It's great to have you here in New York and Ludlow, covering that story over the next several days. I'm always a little bit wary of numbers about things being oversubscribed, because this is one of those instances, just like the debt market that you've covered for years, Bramo, where you ask for more than you think you'll actually get, just to make sure that you get some.
People are trying to front run the index inclusion also. Just keep that in mind. A lot of this is baking in the inherent demand that comes from the rapid inclusion in the NASDAQ and other indexes. And so at a certain point, does this indicate desire for SpaceX or desire for a trade that doesn't really indicate longer term demand?
Dan Ives of Wedbush writes in the following: while there will be some worries that the mammoth SpaceX will take away some oxygen from the tech semi-trade, this will be a short-term bump in the road. Dan joins us now for more. Dan, good morning.
Great to be here.
The appetite for this IPO. I think Lisa makes a fantastic point. A lot of people are talking about the same thing, just trying to get ahead of the index inclusion, aren't they?
No, look, I think that's definitely a play. And I think to say it's not would be wrong because of just the unique situation here from the indexing coming out of the gates. But look, at the end of the day, it does come down to it's viewed as a derivative of the AI revolution in terms of how you're going to play space, data, AI, and look, it's a test for the market in terms of not just SpaceX, but the ripple effect across the rest of tech. And I think that's what you're seeing. You're starting last week in terms of the sell-off that we've seen in semis. I think it's playing into it's a little white knuckle moment that we're going through in tech, just to see how the reception ultimately is going to be.
But it's not just this. It's pushback to equity capital raises elsewhere. The report of maybe Meta doing the same thing. We've had another player this morning suggest they're going to do the same thing, pushback in the equity market. Do we have the space for these names?
Look, I believe you do. And I think even if you look like Google after they did the offering, the view that you were going to have a big sell-off, but instead I think actually took it pretty well in terms of the stock. Look, it's $4 trillion that's going to be spent over the coming years. This is an arms race playing out. I don't care whether it's SpaceX, Anthropic, OpenAI, in terms of the capital raise that we're seeing. And I think these companies understand the demand's there. The difference is if we go back 6 months ago, it's show the monetization. Is CapEx going to accelerate? It's happening. And I think now that there's more of a green light, I think that just gives further confidence. I think investors now are able to see around the corner because we just saw this weekend, our Taiwan checks, further just tighter supply, which is just more bullish for chips, more bullish for what we see, across semis and obviously across memory.
That said, a lot of people can buy into the story and say this truly is a revolution, but say that the pricing is already pretty full, especially because as the supply becomes constrained, people are paying more and more for it, and they're raising debt that they have to pay back later with future revenues that go to that. At what point do you see that as having a viable argument?
Yeah, look, it all comes down to monetization on the use cases, not just on the enterprise, but on the consumer side. Because look, you build it, will they come? So now it's all built, you see the demand there, but now it comes down to the next phase, and you got to see in earnings. The big reason we saw the rally that we have, it goes back to obviously the negative sentiment in March, but then if you go through earnings in April and May, those were, I think Jalen Brunson in terms of what we saw in terms of numbers. Now it comes down to it's setting up for what I believe is going to be earnings over the coming quarters that will further support tech stocks, we continue to think NASDAQ 30,000 in the next 6 months.
You talk about the consumer-facing side. You have to see it there. Does that mean that you like Chinese tech stocks better than the U.S. that's catering more to corporate?
Look, but it's also why, like in Cupertino, what Apple's doing now, the start of at least having an adequate AI strategy, because on the consumer side, it will come and go through Apple. I continue to view them as a toll collector on the AI highway. But look, in China, robotics is where they're winning. And I think you cannot just view this market. It's not just the U.S. China, there's going to be a lot of winners, and we continue to view Alibaba, some others in terms of big tech in China, and where that continues to really be, I think, just starting the next phase.
Dan, speaking of China, what do you make of the U.S. looking at potentially nationalizing parts of these companies, similar to what China does?
Look, it's this balancing act, and I think it speaks to, like, you're not going to see any sort of, like, what I'd be like nationalization, because the reality there is that it further, I think, stumps from a regulatory perspective. But
you do think we're going to see this or not?
I don't. So I don't think in the U.S. you're going to see national, but I do think you will see stakes, just like Intel.
Well, how's that not nationalization?
Look, I think that's, the problem is that a big part of where Intel is today, it's because of the investment that you saw from Trump administration. Then it comes down to, like, was that the right move? I'd argue in that situation, I think it was the right move, because you can't have Intel basically being a blockbuster video of tech. But I think selectively, they're going to take stakes in different companies, because, look, it is true, like, in what's happening in China, that is an arms race.
Let's talk about what we're buying. What happens to demand for the products that OpenAI and Anthropic are distributing right now when they start charging what it actually costs? What happens to demand, and what are we seeing already happen in C-suites around this country?
Look, I think you're gonna have to see the cost of tokenization continue to go down. You will see limits in terms of what we see on caps in some companies, but I think it also going to come down to, like, as companies monetize that, and as they know that those dollars are being spent for revenue that's accelerating within these companies, that's where all of a sudden the two charts start to cross.
Where do you see revenue acceleration because of AI adoption? Where do you see that right now?
Well, I think it's already started happening in the data layer. I mean, if you look at Snowflake, you look at Datadog, you look at Innodata. So it just started off, it was just chips. Now data layer. Then it's going to be software. Oracle obviously is going to be key in terms of what we see from them. Hyperscalers, I continue to think, are not being factored in terms of the true monetization, like a Microsoft being
Which ones?
a good example.
Microsoft and who else?
Look, I think Google, I mean, if I look at, go back to, like, what's happened in Google, and a year ago, New York City cab drivers bearish in Alphabet. Now, what they're monetizing on Hyperscaler, on Search, on Gemini, narratives are very easy where there was change. And I continue to think this is third inning, one out, relative to the AI game.
You're more confident on that NASDAQ call or the Knicks going into game 4?
Well, I think Knicks game 4, but ultimately I do think Knicks in 5, NASDAQ 30,000.
So they win in San Antonio. They win in Texas?
I think they win in San Antonio.
Okay.
Maybe we should go.
Are you going?
We never know.
Okay. Considering it?
Considering it.
Okay. Dan over to Wedbush. Dan, thank you, buddy. It's good to see you. Massive event taking place later this week. A mega record-breaking IPO from SpaceX.
I thought you were going to talk about the next game. I wasn't sure where you were going to go with that.
Same.
The key is, and I think the monetization point's a really interesting one, the areas that have monetized this the best are the ones that are starting to see some of the job justification as well. I'm talking about the financial sector, the software sector, data center, programming centers. That's the forward edge. So how much does monetization come at the expense of other areas?
Futures right now, negative 0.8%. Up next on the program, inflation data in America. We're looking for a 4 handle on CPI, something we haven't seen in 3 years. Tiffany Wilding of PIMCO is here to react. That conversation just around the corner.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Inflation data just seconds away. Going into it, equity futures declining. Tech jitters return. We're down by 0.75% on the S&P. On the Nasdaq, we're down by 1.2% in the bond market. Twos just off the highs of the year. We're up a single basis point, 4.13 on a 2-year yield. On 10s, up around a single basis point to 4.52. We're looking for a 4 handle on CPI this morning with the economic data. Mike McKee has more. Good morning, Mike.
Good morning, John, and we have a 4 handle. 4.2% is the inflation rate for the last 12 months, and the headline CPI, that's exactly what was anticipated. The month over month for the headline is up 0.5% as anticipated. For the core, it is a 0.2 gain, and for the year-over-year number, it is 2.9%. So the Economist survey is bang on what was expected for the total month. Now, we can look at the numbers overall and see that for goods and services, now this is the kind of breakdown the Fed's going to be looking at. Goods prices were down 0.1% if you take out food and energy, and service prices were up 0.3. I'll look for additional breakdowns of where the price action is, and I guess I'm guessing I'm seeing on the screen, John, that we're having maybe a little more market reaction to an exact hit for economists than I might have expected.
Mike, sometimes a meet is a beat. It's better than expected.
Yeah.
We had some very hawkish expectations going into next week. I can tell you that core CPI month over month, it was a very small downside surprise, but a downside surprise nevertheless. It came in at 0.2% against an estimate in our survey of 0.3. If you take this and push it into the market, to Mike's point, you do see a spike in equities just off the lows on the S&P 500, on the Nasdaq, on the Russell this morning. Equities shaping up as follows. On the S&P 500, down just 0.7%. It was down a little bit more than that going into the print. If we turn to the bond market now and check out yields, yields were pushing just a little bit higher at the front end of the curve by a few basis points earlier on this morning. Now just about unchanged at 4.1224. So inflation not as hot as expected, looking at core CPI month over month, in line with expectations basically everywhere else. Going into this meeting a week today at the Federal Reserve.
It took off the worst case scenario, which was an upside beat that would really raise the heat for the Federal Reserve. And also I will point out something else that people have mentioned is that earnings are not keeping pace, at least the earnings of individuals, maybe the earnings of companies are, but not the earnings of individuals. That declined 0.7% when you take a look at the real metric in this latest reading versus negative 0.3% in the previous one. So with respect to spending power, this does diminish the spending power based on wages and the wage gain that's not exactly keeping pace with inflation.
Mike, we'll give you a second and third look. Give us a second look at this data this morning. Where's the little pop coming from? Is it more than just energy?
It doesn't look like it's a whole lot more than just energy. We saw gasoline prices up by 0.7%, and that is a significant, by 7%. which makes more sense. And that's up from last month. So we're seeing a big increase in gasoline prices. But most everything else is up slightly, not up a huge amount. I'll continue looking through this, but things like apparel up 0.3, very similar to last month. Medical care services were up 0.5%. Now that's a big move up. So that's something to keep an eye on. It was flat the month before, but we'll keep looking through the rest of this. Well, I can tell you very quickly that used cars and trucks contributed absolutely nothing to this. Remember when we used to watch them very closely?
I do.
No big deal from them.
We'll come back to you, Mike, in just a moment. Brahma, what do you see?
One interesting note is that rent of primary residence has ticked up just a bit. So you actually do see in this the idea that maybe people are paying a little bit more for some of the areas that have been disinflationary, which is notable. Other than that, I mean, the other issue is electricity. The fact that it still is rising at about 6%, 5.9% clip. I mean, this is going to become a political issue, but it's, yes, this is a story about oil prices, but this is also very much a story about artificial intelligence and data centers.
Without a doubt. Joining us now to discuss, Tiffany Wilding of PIMCO. Tiffany, welcome to the program. 4 handle on inflation, widely anticipated. Haven't seen that for 3 years. Tiffany, can this Fed look through this?
Yeah, I think the key question right now is, is inflation elevated as a result of negative supply shocks or a positive demand in the economy that's lifting inflation? And clearly what you're seeing from the headline story when the higher energy prices is that is being driven by the negative supply shocks that we're seeing coming out of the Middle East and high gasoline prices as a result. Now if we look at core, I think that there's more of a question there, and I think that's why you're starting to see some Fed officials that are talking about interest rate hikes. But at the same time, we know that we've had some pass-through of higher costs as a result of tariffs. And you have the AI story as well, which has been bleeding over into inflation a bit. So there's some supply shocks on that side as well, or kind of one-off things. And we think outside of that, core inflation in the U.S. still looks like, it's on a trajectory that, that eventually should be okay for the Fed. Now, again, we'll get some of the energy that is bleeding into the core, airfares elevated, and things like that. But ultimately, we do think they have room here to look through and wait and see how this plays out.
Tiffany, we've heard that for 5 years. And inflation has been above target for 5 years. And the incoming Fed chair, in his own words, said inflation is a choice. Do they need to do something here just to anchor credibility?
Yeah, so as of right now, if you look at a range of estimates for inflation expectations, they look pretty well anchored. The markets certainly are giving the Fed a lot of credibility. And if you look across the surveys, we would argue the surveys, look pretty well anchored as well. Of course, one-year inflation expectations from various surveys have gone up, but they always sort of tend to lag inflationary pressures. So I think the Fed has some room here to take a look and see what's going on. The other thing about negative supply shocks is, it's a more difficult or tricky choice in terms of the dual mandate. So although it's putting upward pressure on inflation, it's putting downward pressure on activity, potentially some upward pressure on the unemployment rate. So they're going to absolutely weigh that piece of this as well. We do think at the next FOMC meeting that they will drop the forward guidance most likely. There was, the so-called easing bias in the language in the statement. If you sort of squinted, maybe you could see that. And it's a nuance we think they probably will drop just to signal, that there are more two-sided risks here. But at the end of the day, we think the Fed is going to be careful, not to overreact to what could be supply shocks that are pushing up inflation and could be temporary.
Tiffany, when did they move their target to 3% rather than 2%?
Well, certainly that's that will be a question for the new Fed chair, Warsh, when he gets in there. As we heard from Powell, he said that he was not going to change the inflation target during his tenure. They just had a review of their long-term strategy that they discussed last fall, and in that longer-term review, they sort of moved the asymmetric language in terms of how they're thinking about inflation out. So now you're kind of back to just inflation targeting, flexible inflation targeting central bank type of strategy. So all of that sort of signals to us that they're not going to move their inflation target of 2% officially. Now having said that, though, in terms of Fed strategy, we can kind of think of it like the 90s strategy, the opportunistic disinflation strategy, where we've had a series of supply shocks that keeps inflation slightly above target, and the Fed sort of knows at some point, we could fall into recession. We all hope that we don't, but in that case, we'll have below target inflation, and so they don't really want to overreact to get inflation to target now, just given the cost of higher unemployment that could result. So some tolerance for above target inflation for a little bit, knowing that at some point you probably will, get some of those recessionary forces that bring it below.
I don't envy the Fed right now, Tiffany. I mean, there are all these geopolitical choke points that are creating a series of sequential supply-side shocks that, on one hand, you could say they want to look through. On the other hand, there is a secular overlay of what we're seeing with artificial intelligence, this incredible demand for assets of all types, and that seems to be price inelastic. I'm just wondering, from your vantage point, how you view that in the inflation story. Should that be concerning, given the fact that electricity is rising at about 6% year over year when it comes to just the inflationary pressures?
Yeah, I mean, so I think that's the tricky thing as well, right? I mean, there is certainly a piece of this that is demand related. And again, the Federal Reserve monetary policy more generally, has more of an ability to impact demand. And they also want to try to understand, how persistent is this demand impulse going to be? And certainly the AI demand impulse is absolutely there. And we've seen it accelerate at the beginning of this year, coinciding with the Iran events. So I think that's certainly something they're going to weigh. And we're seeing the prices of components related to the infrastructure build out really skyrocket. And that is spilling over into the price components of those, into the consumer price components in those categories. That's impacting PCE more than CPI, not to get too wonky, but the PCE is their preferred measure. Yeah, I mean, so there's definitely, some demand-driven inflationary pressures here, but we've been talking about this two-speed economy for quite some time. And, there's certainly another part of the economy outside of AI and maybe outside of the, top 20% of households that hold, a lot of their wealth in stocks, that isn't doing as well as a result of these economic fundamentals. So, the labor market, for example, does not look like a source of inflationary pressures at the moment. So the Fed has to weigh all of these factors, and again, what monetary policy theory would suggest when there's a lot of uncertainty is you go slow and you wait and see. And again, we think as of right now, that means, they are on hold for the next little bit.
Tiffany, appreciate your time. As always, it's good to see you. Tiffany Welding there of PIMCO, reacting to the latest inflation data. I remember Governor King of the Bank of England looking through inflation coming out of GFC. There was a decent argument for it. I understood it at the time. These shocks keep coming, and we've now had inflation above target 4 or 5 years. Maybe this argument was a little bit more comfortable to make when inflation was around 2.5, maybe pushing 3, but through 4, I'd say it's increasingly getting more uncomfortable for this Federal Reserve.
When we were coming out of the financial crisis, we didn't have volatility in inflation. It was either going up or it was going down. It wasn't going up and down and up and down and up and down. And how does the Fed deal with volatility and inflation with consumers that are primed to prices that aren't exactly fixed and that have been moving around quite a bit?
Mike the Key still tracking the data. I promised Mike a third look. This is the third look. Mike, what do you see?
Third update here. As I mentioned, goods and services. Goods prices are flat for the month. Service prices up 0.3. And then we look at some of the categories here. Gasoline was up, as I said, 7%. That was a big one. And apparel up by just 0.3%. Rent of shelter up by 0.4, but OER up by 0.3. It was 5 the month before, so that's less of a drag on inflation. Airline fares 2.7%. That's one of the bigger ones that moved. But here's another one that's kind of interesting. Last month, tomato prices were up 15.1%. This month, they fell by 6.1%. We're seeing some give back to some categories that we saw in the last big report, and it is kind of an interesting interesting to see. Same thing happening with computers and software, up 0.2%. They were up 5% the month before. So some of the changes here are suggesting maybe a kind of change in pattern that we're going to get. But one thing that will worry the Fed, bottom line, is you look at a 3-month annualized rate, and we're at 8%, up from 7%. So inflation's still overall going in the wrong direction.
Mike, thank you, buddy. It's interesting you get a bigger bounce in the equity market than you do in the bond market off the back of this. Two's just about unchanged on the session. They were higher by a few basis points. Check out the equity market. Taking out about half the losses this morning. We're still down 0.4%.
The risk scenario for a lot of people is if the Fed does start to be hostile to the equity market. That's the phrasing that we've gotten from people. If they signal a rate hike, that could curtail some of the enthusiasm, curb the enthusiasm in markets, and that is not what they want to see.
It's hard to put pressure on this institution to reduce interest rates with inflation of 4%. Which speaks to why the Treasury Secretary more recently has given the incoming Fed chair a little bit of space. How much space the President will be willing to give Kevin Walsh in the next few months? It's going to be an interesting summer.
I'm not sure, because when we said to the President over the weekend, well, the market is pricing in a hike, he pretty much was like, well, I want to see a cut. And that was it. And maybe he's going to let Kevin Walsh, his pick, have a little bit more of an easy ride his first meeting or two, but then potentially it might become challenging, especially if you have more rhetoric from individuals on the Fed saying that they want to stamp out inflation.
We should do pay-per-view next Wednesday, box office. Kevin Walsh just around the corner. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, recapping the inflation data we just got. May CPI data meeting Bloomberg survey estimates. The headline number jumping 4.2% year over year. It's the first time CPI has crossed 4% in 3 years as the war in Iran continues to weigh on fuel and food costs. President Donald Trump out with a new warning for Iran, telling Fox he's close to ordering new strikes. The president posting on Truth Social, Iran paid the price for taking too long to negotiate a peace deal. Global investors awaiting Friday's historic SpaceX IPO. Gulf wealth funds are putting in orders for shares worth several billions of dollars in the IPO, we're told. Saudi Arabia's Public Investment Fund and the Kuwait Investment Authority have each placed orders for shares worth between $1 billion and $5 billion. And that's your Bloomberg Brief. John.
Vonnie, thank you. That's a bit of a flex. Things are tight at the moment in that region. I think that's a bit of a flex going into this IPO.
Yeah, I think what they're saying is they're tighter, but they're not that tight. We're still able to make sure we can get in on massive opportunities, even though we're dealing with the conflict in the region.
Up next on the program, we'll catch up with David Kelly of JP Morgan Asset Management on the risks markets may be overlooking. Plus, Yahira has your morning movers, freight stocks falling as Amazon expands its own shipping service. That story is just around the corner.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data. Yes. We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Clearly what you're seeing from the headline story, that is being driven by the negative supply shocks that we're seeing coming out of the Middle East. Core inflation in the U.S. still looks like it's on a trajectory that that eventually should be okay for the Fed. We do think they have room here to look through and wait and see how this plays out.
Tiffany Wilding, PIMCO, headline inflation 4.2% as expected, the highest in some 3 years. Haven't seen a four handle since 2023. Core CPI, month over month, just a touch softer than expected, in at 0.2%. The survey, our survey, the median estimate 0.3%. With that, equities are raising losses going into the opening bout, about 41 minutes away. Equity futures negative just 0.4% on the S&P. On the Nasdaq, we're down by 0.65. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. We are seeing the freight stocks under pressure. An announcement from Amazon that is expanding its less-than-truckload shipping business to all customers, not just those shipping Amazon products. So you're seeing names like Saia, FedEx Freight, and Old Dominion all falling in the pre-market, since this puts Amazon in more direct competition with them and highlights its growing presence in the freight market. Meanwhile, we're also seeing Super Micro shares falling some 12% in the pre-market as it joins the party to raise capital, announcing a $7 billion equity raise. The company's sales for the company's AI servers have surged, but that just means it needs more money, about $39 billion worth, in order to fulfill customer orders. And we end on the next big test for the AI trade, which is Oracle. It is trimming its earlier losses, now just down 1.5%. And looking through analyst notes, the big focus will be on whether Oracle is building data centers fast enough and converting those AI bookings into actual revenue at a time we know demand is through the roof. John?
Yahara, thank you. Looking forward to that report a little bit later. Joining us around the table following that inflation data, David Kelly of JP Morgan Asset Management. David, good morning.
Glad to be here.
How uncomfortable are things for this Federal Reserve next week?
Somewhat uncomfortable, but I think essentially we're going to get a 12-0 vote to do nothing. The safest thing the Federal Reserve can do politically and also economically, I think, is just to do nothing here. Inflation is higher than they want, but I think there's a good chance that this month, May, will actually turn out to be the high watermark for inflation in this cycle. We have seen gasoline prices come down pretty significantly in June. I think June will see a lower year-over-year rate, and if we come to some settlement which allows oil to come out of the Strait of Hormuz, then inflation will gradually drift down. So it's not nice seeing a four handle. There certainly is no excuse for easing at this point, but I think the Fed can sit pat.
How much of it is out of their control at the moment?
Oh, it's completely out of their control. Well, first of all, they don't really control inflation that much with interest rates anyway. I mean, let's be honest about this. We've seen nothing in the last, honestly, few decades which suggests the Federal Reserve can actually speed up economic growth by cutting rates or slow economic growth by raising them. There's very little evidence that even works. And in this case, it's about energy.
Does the new chairman agree with you?
We'll see. I think he's a very intelligent guy, and I think there was a certain amount of complexity in some of his answers to questions on inflation. I don't think he has any intention of leading a charge to cut interest rates when you've got the inflation rate basically at the unemployment rate target. I mean, their target is supposed to be 4.2% on the unemployment rate. We're 4.2% on inflation. That's double, almost, even in PCE terms, it's essentially double where they want to be.
The one thing that the Fed does have some influence over is financial conditions.
Yes.
And this is the reason why maybe you're seeing a stock market rally a bit more, respond more to this print than the bond market. At what point do they have to take that into consideration, given the amount of debt and equity being raised right now?
Well, again, there's very little. The problem is that yes, raising interest rates sharply would perhaps calm down some of the speculation, maybe cause a correction in markets, which might actually be a healthy thing. But it's such a, it's taking a sledgehammer to a fly. I mean, they will do a lot of economic damage if they do that also. And so they have to, I think they should be worried about too much speculation. I don't think there's much they can do about it.
Sledgehammer to a fly. That said, some people are saying that you have companies raising more and more money to pay for prices that are going up and up and up. At what point is that directly fueling inflation in the areas that the Fed doesn't ostensibly have control over, but comes with the enthusiasm in capital markets?
Well, the inflation the Federal Reserve should honestly worry about is inflation in things like food, clothing, energy, the basics. I mean, if the cost of compute goes up, I mean, that's not great if you're a big tech company, but it doesn't really affect the average person that much. So I think they've got to look at broader inflation. There's not much they can do about it. It really is much more over on the other side of Washington that these decisions are being made. Now, there are things the federal government ought to do to try and calm speculation in financial markets, perhaps, both in terms of AI regulation, crypto regulation. There are things they can do, but I don't think there's very much the Federal Reserve can do right now to calm this down.
David, if you think this is the peak, that's predicated on you think there's going to be a deal. Because we're getting to levels that are very low on inventories and tanks.
That's right.
So most people actually are saying in the commodity market, if there's no deal, prices could surge from here.
That is our biggest concern. The biggest concern is that people will take some sort of comfort in the fact that gasoline prices have come down the last few weeks, because that's because of a massive release of inventory, including from the Strategic Petroleum Reserve, which is down 60 million barrels in the space of a few months. We can't do this forever. And I hope the administration is not taking a signal from the lack of gasoline inflation that this is somehow an equilibrium. It's not, and you're quite right. But eventually, if gasoline prices started going up again, we were moving closer and closer to the midterm elections. I expect that the issue of nuclear and the issue of Hormuz will be separated. And once that happens, and you actually negotiate honestly about trying to get stuff in and out of Hormuz, then a deal will be made.
Massive helping hand from China too, importing less. SocGen wrote about this earlier this week. The refiners reducing demand as well. That's really helped this energy market.
But it's not like they didn't stop moving. It's obviously an inventory draw.
Oh, no, without a doubt. That's what I'm getting at.
And again, because
these are all these offsets that have made this a lot less worse.
The point is, the world uses 100 million barrels of oil a day. You can't take 20 million barrels out of that equation and expect it to be equilibrium. Oil is an unusual commodity.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income,
people want income in their portfolio, and they can get that in many ways. You can get that from the Treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years when I first became a congressman. It takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Inflation coming in hot, but the core a little bit lighter. 30 minutes until the start of trading. I'm Matt Miller. Danny Berger is on assignment. Bloomberg Open Interest starts right now. Coming up, a tame inflation report helping calm markets this morning with stocks clawing back earlier losses. Meanwhile, President Trump warns Iran will pay a price for taking too long to negotiate a peace deal, and SpaceX fever is going global with institutional investors and sovereign wealth funds, including from the Middle East, piling into this record-breaking IPO. In terms of the stocks that we're watching this morning, NVIDIA right now down 1.7% in the pre-market. So you can see tech as well as travel, American Airlines down, and mining stocks down. Anything linked to inflation hedges like gold, for example, falling after the latest CPI print and President Trump's threats to resume strikes on Iran. Inflation, as I said, accelerated as expected in May with the consumer price index climbing by the most since 2023. So 4.2% was the headline number, but the core number, especially month over month, was light at 0.2%. Let's break it down with Michael McKee, Bloomberg's international economics and policy correspondent, here at the desk with me. So, Mike, I guess it's the month over month number that investors are paying attention to here.
Probably, and maybe the composition of what happened. We did see CPI on a year-over-year basis up 4.2%, 4.249 if you round it out to 3 decimal places to see what's going on. And the trend is obviously not your friend. But there's some interesting numbers under the hood. As you mentioned, core up just 0.2 during the month, does push the year-over-year to 2.9%. But beyond energy, the composition of what we see in terms of inflation has changed a little bit. Gasoline prices up 7%. Don't have to tell you about that. Airline fares 2.7%. That's also fuel. But core goods prices down 0.1%. And you look at what the Fed has been saying, they've been expecting tariff price increases to sort of fall out of the CPI calculation, and that seems to be what's starting to happen. Also, motor vehicle insurance, that's one that moves a lot around, and it has been falling now, 1.7%. And food at home, it was up 0.7 last month, and that was considered a real warning sign for the president because, of course, everybody hates inflation and goes to the grocery store all the time, but it rose only 0.1%. Now, overall, what we're seeing is rising inflation. But if we are seeing some decline in tariff-related indexes, then what we might see is the PCE numbers, the Fed's most important forecast coming down a little bit, and that would be helpful. A couple of things where prices moved a lot. Well, be helpful to the folks at 1600 Pennsylvania Avenue.
Kevin Warsh.
But I wanted to mention a couple of things that moved. One of the things that pushed up inflation this month in services was tax preparation. Of course, you got to pay the tax guy, the accountant, when you file your taxes, up 11.8%. And Matt, did you buy your World Cup tickets?
No. You know why? Because soccer is a dead, boring game.
Now, I've just put you out on a limb that the guy sitting next to you is going to argue with you about. But the point being is admission to sporting events had gone down for the last several months, and now they're up 2.8%. That's a World Cup effect.
All right, Michael McKee, thanks very much with a look at inflation. Let's get to the latest on SpaceX. Shares are said to be multiple times oversubscribed ahead of the biggest IPO in history, including billions of dollars in orders from Middle East sovereign wealth funds. Let's dig into this with soccer fan, Bloomberg Tech co-host Ed Ludlow. Ed, no offense on the soccer, the soccer thing. Let's talk SpaceX first. Massive oversubscription here, as expected.
There's always like a pause though, where you're like, remember, that's part of the deal. That's part of the game the bankers are playing in a mechanism like this. But state of play is very simple. Multiple times oversubscribed. There's about $250 billion worth of orders, and they're going to raise $75 billion as it stands. Saudi Public Investment Fund, the Kuwaitis have placed an order per our reporting. And then there's this like group of long-only asset managers, institutionals that we understand, some of them have placed an order for $10 billion worth of shares in a block. Whether they get them or not, like, we'll find out. But the institutional book closes at 4 p.m. I find it super interesting because, like, SpaceX is technically in the middle of or at the end of a roadshow, but it's because they priced, and we reported that they priced $135 a share up front. It was kind of like, well, what's the point of the roadshow? And in the reporting, we detailed that actually orders have increased between Monday to Tuesday, then Tuesday to Wednesday. So it's worked, right? The bankers have done their job.
But it's all based on the dream, right? It's all based on Elon Musk was with JP Morgan and Jamie Dimon investors. Basically pitching the dream, didn't really want to talk about the hard numbers or the near-term forecasts, right?
So to Jamie Dimon's credit, though, he was like, in the end, he was like, but I'm going to ask the same question again. It's why are you IPOing? And Elon Musk was like, oh, because we need money for growth. It goes back to the original story, which we broke, right? I remember breaking this story. SpaceX is going to IPO to raise a lot of money to buy GPUs to put in space. And at the time, people basically laughed at us and were like, no, that's exactly what's happened. And so materially in the background, without making this just like us patting ourselves on the back, since Sunday night through this morning, part of what the bankers have been trying to pitch to the big anchor investors and the institutions is the orbital data center story. And you'll see various media outlets have reported that SpaceX is briefing that they might pull forward the timeline on that. So in the prospectus, they said 2028 is when into 29 is when you might first see a data center in space. They're now saying they'll aim for demos in 27. You know, this is all part of the process.
I mean, all credit to you and to Elon Musk. At the time, it was impossible to believe. And now, like so many other things, it's becoming assumed that that will turn to reality. I want to point out that we're just getting headlines across the terminal right now. Senator Elizabeth Warren calling on the SEC to delay the SpaceX IPO. She's calling for a review of the IPO, so we'll continue to watch this story. It's also not something that's terribly unexpected, is it, from Senator Warren. Ed Ludlow, co-host of Bloomberg Tech, here in New York for this historic IPO. Now, part of what's happening around this and other giant IPOs that we're expecting this year is that investors are trying to free up cash and selling other stocks. But Wall Street is also digesting the latest inflation print. So we're looking at kind of an up and down trade here, as well as a situation in Iran that could be good, could be bad, or could be just the same as it is. Joining us now is Morgan Stanley Chief U.S. Equity Strategist and Chief Investment Officer Mike Wilson. Mike, even if we claw back some of the losses today, we're still seeing this rotation. It looks like maybe out of tech into something else, or maybe it's investors freeing up cash for big IPOs. How do you explain the drops that we've seen today, yesterday, and especially on Friday?
Yeah, I mean, I think so. First of all, we've had this concentrated market in the last month, and it's part of this rotation that's been going on all year from one cyclical group to the next. and I would actually say it's from one commodity to the next. Okay, we can go through that in a minute. And so now what happened last week, and we wrote about this week in pretty good detail, is that the earnings revisions that we've been probably the most bullish on, I think, than anybody this year, have even exceeded our expectations. And they've gotten to a point now where the revision breadth, the leading indicator, second derivative, is now at a level that's unsustainably high, okay? So I'll give you an example. Semiconductor revision breadth got to 70%. That's only happened 3 or 4 times in the last 25 years. The S&P 500 revision breadth is close to 30%, also very, very high. So it's going to roll over. Now, last week, we had a couple companies report in the semiconductor industry. They were fine, but the revision breadth started to roll over. So it's a second derivative, and then there's leverage in the system in that trade, and that's sort of starting to unwind a bit. To me, there's going to be a transition now to some new leadership.
All right. Maybe it's a little too much math for my brain, but I was looking at earnings revisions, and since last time you were on, you pointed out they were pretty much convex, right? I mean, just continued to climb. We have a chart of that. We'll probably pull it up in a second. It looks like we're getting near a plateau, at least for 2026 earnings revisions, which I guess makes sense. What do you make of that? You know, how much longer can we continue to head upwards with earnings revisions? And what do you mean by revisions breadth?
Yeah, so revision breadth is just the breadth of the revisions as opposed to the absolute level, and it leads the second derivative, the rate of change on the actual growth. So I do not expect the first derivative, i.e. the forward earnings growth, to come down or fall.
We're showing it here in white 2026, in blue 2027.
Right, so that white line is going to continue to go, but the revision breadth is rolling over. So that there's a deceleration, a second derivative, okay, which is what the market's picking up a little bit. That's a correction. That's not a change in the trajectory. So as we go forward into next year, that NTM, forward earnings, is going to continue to rise. And that's our call. That's why stocks can continue to rise into year end. Multiples don't have to rise. It's just a forward, you move forward into 2027 as you look forward for 12 months. But the rate of change matters. In the short term, it matters. And that's what's going on right now. That to me, that's going to lead to some leadership change, just like it did earlier in the year when we went from gold and silver stocks to metals to energy, and then we went into DRAM and semiconductors. By the way, all 4 of those are commodities.
I see, yeah, because you said earlier, we're going from one commodity to the next.
That's right.
But semiconductors, DRAM, high bandwidth DRAM is the hot commodity of the moment,
That's
right? Are we going to shift out of that into something else?
Well, it's happening. I mean, Friday's sell-off is a sign that that's exhausted. And we did a chart this week. It was pretty interesting. We looked at silver stocks versus semiconductor stocks, and it's like right on top of each other. And we made this call at the end of January. We said gold's probably going to go down 30%, you know, and that would be normal. That's what I would like to see, because you can't stay at that pace. You know, to your point, you can't stay at that rate of change, both on price of stocks or the revisions. The key is there a place to rotate to that the market can kind of hold in? We think there is, and we've highlighted that as consumer, some of the other industrial areas like transportation stocks, and even the regional banks. And by the way, all 3 of those areas were up yesterday in a down tape.
All right, Mike, we're going to keep you with us. We're fortunate enough to have some time with Morgan Stanley's Mike Wilson today. Let's check on what's going on with markets as we approach the opening bell. Just about 19 minutes to go. We're looking at S&P futures that are now down about 0.5, about 0.5% right now in the S&P. NASDAQ futures down about 0.8%. You can see the 10-year yield is little changed at 452, 453, and Brent crude, which had been falling, is now rising, but only $1.08 to 92.53. So to a relatively low level. Let's get a look at some of the single stock stories we're following for you this morning. Energy stocks are climbing with oil after that turned around as President Trump says Iran is taking too long to negotiate. He threatens more attacks, so either all-out war is coming or they'll sign a deal within minutes. Supermicro is raising $7 billion through equity offerings to fill $39 billion in AI server orders from customers. That stock reacting very negatively, getting more than decimated, but of course it's incredibly volatile, SMCI. Delivery stocks like Old Dominion and FedEx are plunging after Amazon expanded its LTL freight offering to all destinations in the U.S. So when Amazon moves into a market like that, investors take note. You can see FedEx Freight Holdings down 5%. Coming up, President Trump warns Iran it will have to pay the price for taking too long to negotiate a peace deal in negotiations that he says are going very well. This is Bloomberg Open Interest.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Let's get now to high interest. Look what's making headlines around the world. SoftBank's talks with potential creditors to raise $6 billion from a margin loan backed by its OpenAI stake have stalled. Sources tell Bloomberg the company is considering various other fundraising options and could still move forward with the loan at a later stage. But it comes after the firm cut its initial target from $10 billion already. Progressive Democrat Graham Plattner won the party's Senate primary in Maine with about 72% of the votes. Plattner's campaign was marred by accusations of past misbehavior, including disturbing behavior towards ex-girlfriends or allegations of that, which he has denied. The November race is considered one of the Democrats' best shots at securing a Senate majority. And President Trump says Iran would have to pay a price for taking too long to negotiate a peace deal. The U.S. and Iran exchanged strikes overnight after the president blamed Tehran for downing an American Apache helicopter. U.S. fighter jets hit Iranian air defenses, radar sites, and ground control stations near the Strait of Hormuz. And joining us now to talk more about this is Bloomberg Washington correspondent Tyler Kendall. Tyler, it seems the president says he could escalate the conflict, but at the same time that he has high confidence or faith in negotiations that are going well.
Right, Matt, at this point, it's not immediately clear if President Trump is prepared to end the ceasefire agreement that has been in place, but also saw the worst flare-up in fighting this past week after the truce was announced back in April. At this point, this latest renewed threat from President Trump is really underscoring what has been ongoing frustration from this White House, which has repeatedly maintained that they are prioritizing diplomacy to end this conflict. But at this point, we don't know what's going to happen next year. A person familiar with the matter did tell Bloomberg News overnight that the negotiations are ongoing and that they are intense, being mediated by Pakistan. But now we have this risk that we could see further kinetic action after, as you mentioned, we saw both the U.S. and Iran exchange strikes overnight. CENTCOM confirmed that it acted in what it called a self-defense and proportionate manner after we saw this American military helicopter shot down the other day. Our own analysts at Bloomberg Economics say that this escalation in tension could mean a few different things, but their assessment is that this may be a bid to escalate in order to de-escalate, and that neither side seems to be too keen on trying to get back to high-intensity warfare. Matt, we did get a little bit more of an insight into where these negotiations may be headed. There was this New York Times report yesterday that appeared to suggest the two sides are making some progress towards the issues related to Iran's nuclear program. That includes discussions around a potential lengthy moratorium moratorium on uranium enrichment, which, according to the Times reporting, has U.S. officials thinking that that ban may last up to 15 years.
Tyler, just quickly, what do we know in terms of specifics about the Apache that was shot down, the pilots and crew that were on board, and who's responsible for it?
That's one of the big questions. We are waiting for a finalized report to be released. We did hear from Iran's foreign minister in a post on X yesterday, who didn't deny that Iranian forces were involved in the downing of this American military helicopter, but seemed to suggest that it wasn't done on purpose. That has raised questions on exactly how this attack happened. We do know, of course, thankfully, that both of those two American service members are safe and that they were rescued in what is considered a first-of-its-kind mission using U.S. drone technology. President Trump was pushed over the weekend in an interview with NBC News on what his red lines would be in order for a ceasefire to end. He said if American service members were killed or if he believes that there isn't the potential to make a deal. And those are really the threads that we're watching for this morning as we wait to see what the U.S.'s next action will be.
Is there a drum major near you? Is that a marching band?
It's actually the National Park Service, which spends a lot of time here making sure that the White House looks nice and pretty.
Good, good, excellent. Tyler, thank you very much for that. Bloomberg's Tyler Kendall reporting live from the White House. Let's bring back Morgan Stanley Chief U.S. Equity Strategist and Chief Investment Officer, Mike Wilson. First off, Mike, how much does this really move markets anymore? I mean, we're kind of used to no outcome here.
That's right. We've likened this to the tariffs a year ago. We were probably the first ones to sort of not dismiss what's going on in the Middle East, of course, but that the market has moved past the oil spike like it did with tariffs. So if you go back a year ago in June, people were still kind of hand-wringing around the tariffs, like, because we didn't take them down, but the market moved past it, and it started thinking forward, and it started focusing on the earnings revisions, which were turning positive at the time. And I think it's a very good analogy. Nobody really knows how this is going to work out, but what I like to say is that the world is a lot more resilient than people think around these types of activities. And you know, we've had obviously some facilities get destroyed in this, particularly in Qatar. And I like to remind folks that, you know, when Russia invaded Ukraine, we saw the Nord Stream pipeline get blown up. And people are like, oh my God, this is, and what happened? Germany built a bunch of LNG facilities because the world is resilient, you know, like it won't tolerate this. And I also think that ultimately, you know, Iran is fighting not just the United States and Israel on this, they're now fighting the world, right? So the pressure is going to build here. And ultimately, like my base case is that enough flow is getting through now, and there will be new flow, and then there'll be new supply, as we were talking offline. I think this is going to lead to basically many countries basically adopting, you know, kind of going back to fossil fuels.
And new routes as well. I mean, it's interesting
right.
to me that after, you know, a U.S. helicopter is shot down, you have to assume by the Iranians, and then the U.S. launches a counterstrike, we're still seeing Brent at $92 a barrel and WTI under 90. It's like all the horror stories we have about inventories being dry aren't moving this market.
That's right. Well, we're not there yet, right? I mean, and markets, you know, they wait until the last minute because we don't know the answers. It's a binary outcome. Now, what would make me bearish is if the kinetic war really escalated again. Like if it went back to where it was in the first couple of days of this conflict, that's a situation that I'm not planning on. If that were to happen, yeah, oil's going to probably spike to 150 pretty quick, and we're going to have a real problem. But I mean, that's not my base case.
All right, we are fortunate enough to have more time with you, so we're going to keep you with us. Mike Wilson from Morgan Stanley, staying through the market open. Reminder, he still does have that 8,000 target on the S&P 500 at year-end. Coming up in the next hour, more on markets and inflation and the economy with RBC strategist Lori Calvasina. She joins us at the top of the hour. This is Bloomberg Open Interest.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get a look at some of our other movers, the movers on our radar this morning. Freight stocks like Old Dominion and FedEx are plunging after Amazon's expanded its LTL freight offering to all destinations in the U.S. You can see Old Dominion freight line down more than 7%. Chewy shares were surging despite earnings missing estimates and cutting sales guidance. Well, now it seems that people have read through the story and the shares are down 5%. Cracker Barrel boosted its revenue guidance for the full year, beating the average analyst estimate. Wow, the stock is up 17%, which is a strong move for a stock like Cracker Barrel. Check on what's going on in markets right now ahead of the opening bell just 4 minutes from here. S&P futures down 0.5%. Still, NASDAQ futures down about 0.9%. You can see the 10-year yield unchanged at 4.52, and Brent crude holding at $92.42 a barrel. We're about to start the trading day with Morgan Stanley's Mike Wilson. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later on over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We continue to see a sell-off, even though we've come back from lower levels this morning. We were down more than 1% in futures on the S&P. Now we're down 0.5%. We are off on the NASDAQ futures about 0.9%. Dow Jones futures down 0.5% as well. So if you're watching this rotation, it's currently not helping the big indexes. Here on the New York Stock Exchange, EROC ringing the opening bell, gas generator company doing an IPO. So many IPOs. I got to talk to Mike Wilson about that. Einride, which is a Swedish autonomous trucking company, coming here to list on the NASDAQ. So another IPO there. In terms of the stocks I'm watching, NVIDIA, obviously the largest company in the world. When it moves down by 1%, that has an effect on the indexes on which it's so heavily weighted. American Airlines coming down. We're looking at the price of oil coming up, but any tech or travel stocks linked to inflation hedges like gold are falling as well. So Anglo Gold Ashanti down 5.5% after the latest CPI print came in a little bit lighter on the core than had been anticipated. Morgan Stanley's Mike Wilson still with us here at the desk. And Mike, we haven't talked about these gigantic IPOs. What do you make of the, I guess, animal spirits, right? Or else they wouldn't be here. And the mechanical effects on the market. Surely some people are selling winners to get into whatever IPO they want.
Yeah, I mean, look, the market's been very receptive not only to equity offerings but debt offerings. I mean, it's been another kind of bonanza year. Not as strong as 2021, but I mean that's a sign of a healthy market, quite frankly, when you're absorbing this kind of supply. So it doesn't bother me. I think the collection of stuff maybe all at once can create some digestion problems, but there's plenty of liquidity out there. I mean, I'll give you one statistic which I think will help maybe understand this. Companies distribute income, whether through buybacks or dividends, and they do about $1.7 trillion a year. That's just, income back to shareholders. Now, some of that's reinvested like dividends, but that's a lot of money, right? And then you have inflows from retail all the time and pensioners and asset owners. So there's capital out there. And so the fact that the market's absorbing these deals doesn't bother me. The collection in one quarter can create some, disruption, but I think there's capital to absorb this.
By the way, that goes to the heart of my main question. Watching this throughout the last months and years, right? Because spreads have been so tight and equity indexes keep running up. Investors have enough money to pile it into gold and things like Bitcoin. Where's all this cash coming from?
Well, don't forget, the bond market's been in a bear market for 4 years, okay? So what we're seeing is people are not reinvesting their bond proceeds, right? They mature, and they're putting into things that can actually protect them against inflation, something we haven't talked about yet. Like the average asset owner is pretty smart. They figured out that, hey, that the biggest risk going forward is inflation, which is kind of my thought, then I want to own assets that will protect me against inflation. That's not bonds, okay? That's equities, it's gold, it's silver, it's other real assets, and that's what they're doing. So there's a tectonic shift, okay, from the 60-40 to something that looks more like 60-20-20 or even 70-30, depending on your preference.
So what is your take on inflation? Are you concerned it can continue to climb from here? Because 4.2% is a pretty shocking CPI number. If we hadn't all been through the sort of Bidenflation era of 9, this would be insane. Yeah. And then the core looks pretty light at 0.2 if you just month over month.
Yeah, let me make something perfectly clear. I'm a headline guy, okay? I'm not a core guy making all these adjustments because I live in the real world. And by the way, stocks live in the real world, meaning like we don't take out certain things. I mean, one of the reasons why earnings are so good this year, which is part of our call, is that nominal GDP growth is accelerating, and half of that is inflation. So inflation is very, very good for earnings growth, and it's very good for stocks so long as the Fed isn't pulling away the punch bowl, okay? So the fact that the Fed is now talking about core PCE like they did in 2021 and kind of justifying why they're not raising rates when maybe they should be, we'll see later this year, then that allows multiples to kind of stay where they are. And so there's a lot of similarities to me to 2021, right? We have this incredible earnings story driven by higher inflation, pent-up demand, and we're seeing inflation kind of breaking above levels that are comfortable. The Fed is justifying not raising rates because of core PCE, and maybe there's some AI productivity boom coming, which there probably is, and they're gonna hold firm, and that's a recipe for higher stock prices. Now, we could run into trouble later this year if inflation continues to go towards 5%, and then the Fed's going to have to do something about it because they got to retain their credibility. So it's a very similar setup to 21, which was a very good year for stocks, but it rotated around. It's exactly what we're seeing right now, and I think it's going to be more of the same.
But I mean, I imagine your base case is that we don't get to 5% or more on CPI, that the Fed doesn't really do much beyond maybe one hike, right? And that we continue to have this nominal GDP growth that drives earnings.
Well, that's our base case, exactly. Yeah. Now, I think that sets us up for something maybe a little different for next year. We'll have to see, because next year we're going to have a real deceleration potentially in the growth rate, right? But between now and year end, that growth rate is going to stay probably north of 20% on a forward basis, which is pretty healthy. So I don't anticipate a lot of multiple contraction this year, but I think that could be an issue for 2027. We'll have to wait and see.
But this base case is why you like transportation stocks, why you like shippers. I mean, today's idiosyncratic, I guess, Amazon story aside, you think that the economy is continue humming along and that these guys are going to ship more stuff and have enough power to raise prices?
Yeah, what's really going on, Matt, is that the economy now is seeing real velocity in the private economy, right? We've had this thesis for a long time that we're seeing a rebalancing from the kind of government-driven economy to a private-driven economy. That's why all the payroll numbers now are in the private area. And there's real volume going through the economy. We got real GDP growth with volume for the first time in 3 or 4 years, which is driving a lot of these sectors that have been dormant, like consumer goods in particular, we think in the second half of this year. They were working earlier this year until inflation picked up and the war kind of evolved, but we think that comes back. Same thing for things like regional banks. Transportation is another area. And by the way, tech can work in that environment too. It just got a little overcooked here in the short term.
What do you make of the consumer? There's so much talk, probably far too much, about the K-shaped economy. Yeah. But there are, many people struggling with higher prices that are having to decide whether to buy, cheaper food so they can put gas in their car. Yep. Does that not hurt the consumer stock story? It
doesn't hurt the consumer stock story because 80% of the spending is done by the top, 20% or 30% of the consumers. So it's just it's not good for the people at the bottom end of that K. But my job as a market strategist is to say, is this going to change the earnings profile? And I don't think so. In fact, we saw it this morning. Some more of these, retail-oriented stocks, consumer consumption stocks doing quite well, and we think that's going to continue into the second half of the year, particularly if oil prices come back down.
All right, what a fantastic education. I love when you come on the show and we get to spend some time with you because I learned so much. Morgan Stanley Chief U.S. Equity Strategist and Chief Investment Officer Mike Wilson. Let's get a check on what's going on in the markets right now. Just 7 minutes into the session, we're looking at an S&P that is down, still about 0.5%, but at 73.50. So we have lost some ground over the past few days, but we're still at well over 7,000 here, which is something you may not have expected at the start of this war. On the gainers side, and there are 220 of them, you've got Applied Materials, KLA, ExxonMobil, as well as Lam Research and Koch. So some actually pretty small names on this side of the ledger. You typically see the big Mag 7 stocks up there. They're over here, right? Broadcom is not officially, I guess it's part of the Great Eight, as Katie Greifeld calls it. NVIDIA, obviously the leader of the pack. You've got Micron, which has been the standout stock this year. Microsoft, Apple, Amazon, and then Caterpillar, obviously an AI stock as well. All down today, and that's what's dragging stocks. This is the rotation out of tech stocks into those names that you haven't seen seen so much this year. The energy index doing well as oil turns around and starts to gain some ground. Consumer staples are also up, as well as real estate and materials. On the downside, you've got the IT stocks. This is the rotation out of tech that we're talking about: industrials, consumer discretion, and financials. That's what's happening in the markets at this minute. Coming up after weeks of volatility in tech, Oracle's results may be the next big test for the shaky AI trade. More with Anurag Rana of Bloomberg Intelligence next. This is Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Time now for our top call. Some of the analyst action in focus this morning. First up, RBC Capital downgrading Nike to a sector perform, saying the retailer's turnaround is slower and narrower than expected. You can see Nike shares down 1%. Next up is Piper Sandler initiating coverage of Shark Ninja with an overweight rating, pointing to the company's impressive track record of new innovations and strong growth prospects. Shark Ninja shares rising 1 1/3%. And finally, Cantor Fitzgerald raising its price target on Applied Materials to a street high of $650, saying we're at the early innings of an upcycle for the semiconductor equipment industry, and Applied Materials right now up 2.33%. You saw just a moment ago, adding the most points of all 500 stocks to the S&P. Tech stocks, though, are driving the market down this week, with the NASDAQ falling as much as 4% intraday yesterday. Now Oracle's earnings report after the close could be the next major test for the AI trade. Let's discuss with Bloomberg Intelligence senior analyst Anurag Rana. So Anurag, what do we expect? Set the stage for us for Oracle earnings this afternoon.
Now, they should be very good. Their infrastructure cloud business is most likely going to grow around 90%, total revenue growth of over 20%. So we should not anticipate any slowdown in growth in terms of demand for AI infrastructure. The big question for them is going to be just like everybody else. Do they have enough power, enough memory, enough chips in order to fulfill that backlog that's sitting on their balance sheet? I think that remains the fundamental question for all cloud providers right now.
For these cloud providers, we talk so much lately about token costs and companies getting into hot water, using way too much. Are they making 100% of their money back on these tokens, or are they getting subsidized somewhere along the food chain?
So as far as, the cloud infrastructure players are, whether it's CoreWeave or it's Oracle, they are getting their margins because they have bought the GPUs from NVIDIA, installed it, and sold it to the end market. It's really the end person who has to, foot the bill at the end of the day. But at the same time, right now, the cloud infrastructure margins are nowhere close to what an older CPU-based cloud margins are. But that's just to be, you would assume that because this is so early in the cycle. But I would not anticipate that to have an impact for Oracle in that sense.
So what about the spending, the funding of that spending that we're seeing everybody, I wouldn't use the word struggle, but doing, right? Companies the likes of Oracle seem to be able to tap as much investor cash as they need. Is that going to continue here, Anurag?
So, I would say, as far as their debt offering is gone, I mean, they've done that and that's fine. But they also have another equity offering that they have to do as part of their full year plan. But that's the big question as to what price they're going to do it now, because, in the last, you would say, few days, the market's been actually going southwards. So I would have said that, they probably had a better window to boost that, share equity raise, let's say a couple of weeks ago. But if the political, climate improves and we see a rebound in AI infrastructure stocks, then, Oracle will go out and issue those shares.
How will stocks like this be affected by the SpaceX IPO and the other massive, OpenAI and Anthropic coming after it? Because it looks like investors are freeing up cash, selling off Bitcoin, selling off gold, selling out of their tech winners in order to put money aside for these IPOs.
Yeah, that's actually a very good question on that end, and we will see how that shapes up. But when you look at that bucket of Anthropic and OpenAI, Oracle, CoreWeave are still in that bucket because it's part of the same AI infrastructure trade. I think the bigger damage that could happen to some of them is if rates keep on rising, because that really has an impact both on funding cost as well as the valuation of these high growth names. So there's a dual edge over there for the AI players.
What kind of valuations do you expect to see on OpenAI and Anthropic? I imagine they'll both be trillion-dollar plus IPOs, right? So are they going to be 50 times sales, 75 times sales when they go public?
Well, that's, I think, the biggest question at this point, because they already have a private, company valuation close to $1 trillion. The big question is, do the market still looks at only growth rate, or are they going to go start looking at free cash flow? Because we have seen that in the past that, when people are very excited, they only want to look at sales growth. But you see the first hint of a slowdown, then everybody start running and start looking at free cash flow. Look at Figma's IPO. When they came out, everybody was so excited. In the last, I think, 12 months or so, stocks down 80% at this point, because now everybody's focused on stock-based compensation and margins and what could happen with Claude. So there's a fair amount of uncertainty when some of these startups go public.
All right, Anurag, thanks so much for joining us. Bloomberg Intelligence senior analyst Anurag Rana talking about Oracle earnings coming up after the close. And also coming up after this break, private market titans sit down with Danny Berger. She joins us live from Super Return in Berlin with the latest next. This is Bloomberg Open Interest.
bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ula, Saudi Arabia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Companies are performing just fine, but doesn't mean you aren't going to see some accidents along the way. When things grow this fast, typically some things break. There'll be some losers along the way, and at some point in the next 2, 3, 4 years, there'll likely be some kind of shakeout.
The industry lost its way a little bit. I've been pretty vocal on that. The industry was founded on finding good assets, pay a reasonable price for it, operate it better. When interest rates went to zero and stayed there for a decade, the equation changed to find a good asset, don't screw it up.
In private equity, the environment is pretty stuck right now. If you're going to buy a technology company or a software company, a solution provider to the enterprise, now you really want to see that they're making a lot of progress around their AI offerings.
There are entire sectors, Danny, like private equity, like real estate, which are constipated, right? They can't sell. I think on balance, it's also fair to say, my God, there are lots of the canaries in the coal mines are telling you a bunch of stuff.
Those were just some of the power players speaking with Danny Berger at Super Return, Europe's largest private equity conference. Danny joins us now from Berlin. Isn't that the biggest private equity conference in the world? I mean, what's bigger than that?
I don't know. I mean, I guess Milken and Davos have a lot of private equity people at them, but this has got to be the biggest, like, pure private equity. And I got to say, I was just listening back to those interviews and the people around here. There's a real sense of anxiety in this industry. I mean, you heard from the speakers there that things aren't clearing. Victor Kosla used the word constipated, which I guess is quite evocative. But I mean, people are here. The mood is still good. There's not any less attendees here. So even though there's this idea that things need to be worked through, there still is just this underbelly of optimism. And I guess at the end of the day, these are deal people, and they are here to get deals done. So they kind of have to be optimistic to some degree.
Is it super returns that investors are seeing from this sector right now, Danny?
Are you saying, are there super returns that they're seeing?
Yes.
I mean, I think there's this idea that on paper things look good. And the things that have been sold, those have looked good too. But what about everything else that has just been backed up? So basically all the IPOs, of course, we talked to Liftoff last week, the CEO. That was huge returns for Blackstone. We're going to sit down with Martin Brand in just moments about that. I spoke with General Atlantic, who was also part of that deal. So private equity things that are IPOing, that are exiting, they're really strong, but these are the best assets. There's this kind of other class. It's these middle returns, these middle managers who maybe have smaller assets that are struggling to find a home for them, that they're not finding buyers. That may be seeing less returns. Private credit, too, just given the rate environment, mathematically has lower returns as well. And you're seeing that with an impact for the LPs. The LPs, I've been talking to manager after manager. They're sitting down with these managers and saying, listen, we want to consolidate. We don't want as many platforms. We're not going to be giving as many people as much money. We have money to spend, but it's going to be with less people. So you're really feeling the ramifications, and it's another year where people are saying consolidation, marriages of convenience, of inconvenience, it's going to be happening at pace.
What are you hearing, speaking of private credit, about redemption requests, and how much has that spread over to private equity?
They love to say nothing to see here, that it's being worked out. I think There is a feeling that redemptions will stay elevated, but it's the refrain, Matt, you and I have heard so often, that it's a small part of the industry. Even though it's a small part, though, it is dominating the sentiment. On one hand, you have LPs asking serious questions about what's going on, what impact that has. But in the same vein, people who aren't facing those kinds of redemptions, that don't have the wealth product, we spoke to Sixth Street about this, as well as Ken Kinsella of Churchill. It's kind of a great time because people have been pulling back. Process for private credit are less competitive because all of these BDC players aren't present in the market right now. They're kind of being iced out. So for those who can still compete, it's been a really, really good environment, but still there's a lot of explaining to do. I spoke with Blair Jacobson of Ares, who said that the panic among retail investors is just psychological. It's not returns itself. So it's still an industry that is trying to explain itself and say, hey, the fears you have, they're not real. Look at the performance. It's still okay.
We are seeing big IPOs. There were IPOs ringing the bell at the NYSE, IPO ringing the bell at the NASDAQ. Obviously, the biggest IPO in history happens this year, and it'll be followed by two other of the biggest IPOs in history. Exits seem healthy right now.
Yes, but I don't know if they're going to continue that way after this SpaceX IPO. I sat down with Jeff Pearlman, and we'll be hearing him on Bloomberg Deals, which I know, Matt, you're so kindly anchoring for me today. So you're going to hear this conversation I had with Jeff Pearlman of Warburg Pincus. And I think it's really key because I asked him, are these IPOs good for private equity? Are they bad? He essentially said that because they're hoovering up so much of the attention, it's going to take people out of the IPO market for a little bit, that you have to sit, you have to wait maybe a couple of months before you can really dive back in. That was actually something specifically Orlando Bravo said, this idea that maybe you need to wait things out for the IPO market to be able to go back in. So that was Orlando's comment specifically. So yes, IPOs are kind of back, but for private equity, again, Jeff's comments were more, IPOs are not the right exit strategy for private equity, that the public markets are shrinking and too many people have found themselves saddled with assets where their only route is to IPO. So something's a little bit broken there. So yes, exits are starting to come back, but I think IPO exits are going to be maybe perhaps more the exception, not the rule.
All right, really fascinating stuff, Danny. Thanks so much for joining us on your show. Danny Berger there from Super Return out of Berlin. She's going to sit down, by the way, a little bit later on in the program with Martin Brand, the head of Blackstone Capital Partners. Definitely an interview you don't want to miss. Coming up next on this program, RBC's Lori Calvasina reacts to the latest inflation read and the sell-off, and then Elon Musk confidant Scott Painter joins the show after that.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these. Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
the shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance. Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
President Trump has said that prices will go down as soon as the war with Iran ends, but the war is still going on and prices are still going up. The Labor Department reporting today that inflation is at its highest level in 3 years and gas prices are leading the way.
In the 12 months leading up to May, consumer prices with food and energy included rose 4.2%. To illustrate just how much more we're paying, Moody's Analytics says the average American household has pumped an extra $510 into the family car since the start of the Iran war.
ABC's Jim Ryan. Airline fares jumped 2.7% in May and are nearly 27% higher than a year ago. Electricity rates up almost 6% since last year, and clothing is 4.2% more expensive. The United States and Iran exchanging fire overnight as President Trump says Iran has taken too long to reach a peace deal, so will now pay the price. ABC News security analyst Mick Mulroy says Iran is using the Strait of Hormuz as leverage.
Right now, Iran thinks that controlling the straits gives them a lot of leverage. They're asking for everything up front before the U.S. even gets to a nuclear agreement. Sanctions relief, unfreezing assets, all these things that Iran wants, but they want it to simply open the strait, which isn't theirs to control in the first place and obviously was open before the war started.
Microsoft co-founder Bill Gates on Capitol Hill today telling the House Oversight Committee what he knows about Jeffrey Epstein. Before heading in, Gates said,
"Glad to be here voluntarily to testify to help with the committee's work. I'll start with an opening statement in the hearing room. I hope my testimony is helpful to the important work of the committee to find justice for the victims."
Gates' name mentioned thousands of times in the Epstein files. California vote counting is over. Republican Steve Hilton will face Democrat Javier Becerra in the governor's race this fall. You're listening to ABC News. Finals resume tonight in New York with a quieter presence around the Garden.
The city will still enforce a multi-block security perimeter. A large watch party planned for just outside the arena has been scaled down and will now be a ticketed event. Madison Square Garden, which is owned by Trump ally James Dolan, issuing a statement.
calling the mayor and police commissioner party poopers, saying Monday's restrictions were never about the president, just a convenient excuse to restrict how and when Knicks fans celebrate.
ABC's Sophie Flay. Looks like Bill Pulte will be getting the Director of National Intelligence job, at least in an acting capacity, despite the revolt by several lawmakers who say he's not at all qualified for the job.
Right now, we're on things that
The president is moving forward with Bill Pulte as acting director of national intelligence, despite bipartisan concern about his lack of experience. Democrats now threatening to oppose reauthorizing the Foreign Intelligence Surveillance Act, or FISA, as long as Pulte remains in the position. FISA allows the government to collect the communications of non-citizens overseas.
ABC's Karen Waugh. Say hello to new sunscreen.
I just can't emphasize enough how much dermatologists and the broader skincare community have been clamoring for this for so long. And I think the bottom line here is that American sunscreen is about to get a huge upgrade.
It's Tony Salzman with the ABC News Medical Unit says the FDA has added a new ultraviolet filter to sunscreen. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube, streaming live at Bloomberg.com as well. Scarlett Fu out on secret assignment, sitting in. Scarlett is
double secret, I believe that is.
Yeah, we got John Tucker in for the next couple hours, helping us out, which is a good thing. We've got some selling on the street today. We'll get up to date on the market. Coming up, we're going to check in with Ethan Bronner, Bloomberg Israel Bureau Chief, get the latest reporting out of the Middle East. There's been some exchanges of military efforts there. Marianne Bartles, Chief Investment Strategist at Sanctuary Wealth, to get her thoughts on the markets. Caroline Hyde, B-Tech co-anchor. We'll get the latest on all the tech news out there. SpaceX. Going to price it tomorrow night after the close, and we'll get that thing traded on Friday. Steve Mann, Bloomberg Intelligence Global Autos Analyst, will talk to us about SpaceX, Tesla, what's going to happen there. A lot of folks feel like SpaceX and Elon are just going to roll up Tesla at some point, so we'll get the idea what's happening there. So we got a lot coming up over the next couple of hours. Let's kick everything off here. Matt Piper's got a Bloomberg Business Flash.
Hey, thank you. The tech sell-off deepens. Another round bout of sharp swings and high-flying chip makers in just a matter of days. Stocks down after that inflation report out this morning. That report showed inflation has risen to its highest level in 3 years, with spiking gas prices helping push it there last month. Let's head over to Wall Street now and see how it's responding. The S&P is down 0.1%. The Dow is down 0.3. The Nasdaq is down about 0.2 or 43 points. The Bloomberg Dollar Spot Index is down 0.2% at 1208.47. The 2-year yield is about flat, down just slightly. The 10-year yield is also about flat. That's up just slightly. Back to that tech sell-off. Yeah, it continues. SoftBank sinking. SoftBank's talks with potential creditors to raise at least $6 billion through a margin loan backed by its OpenAI stake have stalled even after it slashed its official target. Japanese technology investor and OpenAI backer right now on Wall Street is down about 8 percentage points. It's unclear why that margin loan discussions for SoftBank stalled. And it's not just them. In South Korea, chipmakers Samsung and SK Hynix are also dropping. Samsung right now is down 9%. Hynix is down about nearly 10%, that is. Traders are also watching whether peace talks in the Middle East remain on track after the U.S. and Iran exchanged strikes overnight. Stephen Cook is with the Council on Foreign Relations.
It seems to me that over the course of the last few days, the market slides indicate that people are coming around to the fact that there is a major choke point in the global economy and that it's harder and harder for energy to come out.
Well, let's look at those energy prices. Brent right now is up 1.5 percentage points at $93 a barrel. WTI at about $90 a barrel. And are those wedding bells I hear? No, it's actually an online witch, and it's not John Tucker. Brides are buying so-called weather spells as a way to manage stress and anxiety leading up to the big day. For about $25, you can cast a good weather spell from a witch on Etsy to ensure blue skies on your big day.
I mean, for $5, why not? It's just like,
Sure.
You can't take any chances on your wedding day.
Well, here's the thing. There's
Like
no
I
tracking that which down if it does downpour. So who knows? For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that is a Bloomberg Business Flash. Paul and John.
All right, Matt. Thanks so much. Appreciate that. John Tucker sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and at Bloomberg.com. Market drivers today brought to you by EisnerAmper. Most advisors tell you what happened. EisnerAmper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that can't afford to guess. EisnerAmper.com. And as Matt was just reporting, a little bit of selling out there on the street. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at?
We have to start off with Supermicro Computers. That is ticker SMCI, currently sinking about 12%. That's after the computer hardware maker said it's planning about $7 billion in equity and equity-linked financing transactions to fund component purchases to meet demand for its AI servers. The street is fairly split, to say the least, about what to think about this. Bernstein analysts saying that this is by far the highest equity raise in company history and also implies a whopping 27% dilution, whereas Wedbush analysts view the order momentum as positive, but believe that obviously the exact financial implications will be known later, especially they'll be dependent on margins of the business. Still, the move making that company one of the worst performers on the S&P 500 this morning.
Next up, you're looking at Chewy, and I like this line from the company that they're seeing a, quote, modest level of incremental pressure on premiumization and product attach rates. What in God's name does that mean?
Yes, that's ticker CHWY.
Dogs aren't eating their little Chewy toys anymore?
Well, the pet owners aren't really buying those special toys anymore. So it's falling about 1.3% now. And as you mentioned, they did offer more cautious commentary. To be fair, though, this is not the first that we've heard. Zoetis, Petco also offered really cautious commentary earlier in the earnings season, saying that the health of pet owners isn't that great right now, noting that Americans are really reining in their spending on their pets and even not really getting dogs as often as they were previously. Citi writing that while Chewy continues to outperform, it remains beholden to a pet category that's performance continues to remain weaker this year.
I'm still on the fence whether or not to get a dog.
Same.
I mean, my kids want one. My kids, they're in their 20s.
Yeah.
It's just like, but it's like having another kid. It really is. I can't go through that
Not
right
at your
now.
age.
No.
Cracker Barrel.
Yes, that's ticker CBRL, currently jumping about 30% earlier today, touching a most intraday on record. And that's after the restaurant chain boosted its full-year outlook on the back of a better-than-expected third-quarter results and continues to see a lot of recovery in customer traffic. Benchmark writing that the results also showed improvements in the average check, noting that the company is discounting less and that customers are still buying those meals. However, what I found really interesting is actually the short interest on the company, which is incredibly high, currently about 27% of float, according to S3 Partners data.
Yeah, boy, it's stuck up 30%. You're now over $1 billion. My core order there, Country Boy breakfast with country ham, extra biscuits and gravy.
Yes. So they're all over the logo change and the hit that, okay,
Yeah.
that's in the
memory. We
past.
just keep bringing the biscuits and gravy and everything's fine. Avenel Purnell, thanks so much. Appreciate it like that, getting the latest stock movers out there in the marketplace. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. And by the way, just put a picture of unsweetened iced tea at my table too. Then we're done.
Where, how much does that cost you? Like a whole all-in for a meal?
$20.
Okay.
It's awesome. It's awesome. Let's get back to the geopolitics at hand. There's been some movement there in the Middle East. The U.S. and Iran exchange strikes overnight, endangering talks aimed at securing lasting peace in the Middle East and jolting their 2-month-old truce. Latest reporting, we go to Ethan Bronner. He's the bureau chief for Bloomberg News in Tel Aviv. Ethan, I think there's a ceasefire. I think there's a truth, but boy, there's some action going back and forth here. What's the latest?
Well, it's as you've described. That's the latest. And, and since then, President Trump has said that he's irritated by how long the Iranians are taking to respond in these negotiations. And so he's threatening a kinetic action, as it's known, to attack yet again. It's not clear how serious it is, but, it's a very, very perilous moment in the sense that all parties are a little finger on the trigger happy at the moment. They think it's going to help them in their negotiations, and perhaps it will, but each side seems willing to do the same thing in return. And the notion that it could spill into something broader and deeper is real.
Well, has it already done that with Lebanon?
Well, Lebanon is a fair question. I mean, Lebanon is a pretty tough situation. 1 million people have been displaced. Israel has taken over the bottom 10th of the place and so on. But, you know, that's kind of a sideshow for Iran and a sideshow for the United States. I think the big story for the world is Iran, Strait of Hormuz, that stuff, the nuclear weapons, and Iran is, of course, a country of 100 million people and, you know, an enormous civilization. It's a different game than the Israeli-Lebanese thing, which, you know, I don't mean to make light of, but I think it's a smaller part of it.
Ethan, before the war, the Strait of Hormuz was open to all traffic, free waters. That is not the case anymore. Will that part of the world ever get back to where it was pre-war in terms of really having an open movement in the Strait of Hormuz?
I don't know, and I think that's the great question hanging over this conflict. I think that when the United States and Israel launched it, they didn't really plan or expect the Iranians to do this, even though there was plenty of chatter in advance that they might. And I think it has become a huge dilemma. And, you know, we also, it's hard for any of us to really know what damage exactly Iran has sustained in terms of its ballistics, in terms of its nuclear, in terms of its proxies, all the things that give it its strength over the years. It could be much worse shape than we think, or it could be in much better shape than we think. So all of this, meanwhile, 2 elections, one here, one in the United States, pulling the forces in opposite directions. In this country, they want more kinetic activity, tougher fighting against Iran. The United States, this war is extremely unpopular. They want less, if none. And so the relationship between Trump and Netanyahu is also under strain. So there's a lot of mess underway here.
Ethan, is there worry among the Gulf states that at some point the United States just throws up its hands and declares victory and walks away and leaves them with kind of a mess not of their own making?
Yes, I mean, I think they're worried both that it would go further into war and that it would, as you say, take its ball and go home. I mean, this is a war they didn't especially want. They as worried as they may be, some of them, about Iran and its nuclear ambitions. They were happier to kind of left the status quo where it was. So yes, of course they're worried. I mean, everyone abroad is worried that President Trump marches to his own drum, and you never know what he's going to do next. Of course they're worried.
Ethan, thank you so much. Appreciate it. As always, Ethan Bronner. He is
always
the
good
bureau
to talk,
chief
guys.
For Israel, in Israel for Bloomberg News. He is based in Tel Aviv. That is boots on the ground reporting, folks, for sure. I'm just not sure if we have anybody negotiating with Iran right now. I mean, we haven't sent a negotiating team over there in a number of weeks. So I'm just not sure how this is all playing out through intermediaries. But again, it seems like both sides are talking past each other.
And it's a matter of, I don't know, credibility from what are essentially tweets from the top guy in charge at this point.
Yep.
You know, who do you believe? And is that something you rely on for negotiations of this complexity?
Yeah, this is not like, past conflicts where you had the State Department kind of leading the way, your Secretary of State and so on and so forth, representing the country. It's a little bit different now. And we're seeing that a little bit in the energy markets today. You know, we had that, again, the flare-up of some of those tensions yesterday. And we've got WTI crude oil up $1.50 here, just under $90 a barrel. So it's, again, recall that before this conflict, oil was trading south of $60 a barrel. So a big premium put into the price of oil here. The markets had come back from where they were in the futures market here. The S&P's down 7 points. The Dow's down 230. That's about 0.4%. And the NASDAQ off about 39 points. That's 0.1%. The VIX, it is up to 20.3, but it's off its highs of the day. This is Bloomberg.
24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Matt Piper. This Bloomberg Business Flash is brought to you by IBKR. For the last 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170 global markets matter. Visit ibkr.com/performance. Well, the tech stock retreat deepens as investors cut risk ahead of this morning's inflation report. That report showed U.S. inflation accelerated again in May. The Iran war helped push energy prices up. And speaking of the Middle East, this comes as the president this morning posted online that Iran will pay the price after it targeted U.S. assets in 3 countries. To the big board we go. The Dow right now is down 0.4%, or down 212 points. The S&P is down just slightly. The NASDAQ is down as well by about 0.1%. The Bloomberg Dollar Spot Index is down 0.1% as well. The focus has been on the consumer price data for May that came out earlier that showed inflation at its highest level in 3 years. Consumer prices rising 4.2% in May from a year earlier. Now, that may offer the clearest signal yet on whether a Fed led by Kevin Warsh will keep borrowing costs higher for longer. All eyes on that decision next week. Meantime, shares of Cracker Barrel are up 27% right now. This after the restaurant chain reported a surprise quarterly profit and lifted its outlook for the year. It appears its turnaround effort is back on track after backlash against a short-lived rebranding attempt and logo change, that is. And of course, people like John buying those pancakes, right?
Yep, there you go.
Why not? For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash.
I've been good lately. I've been good.
Yeah,
you know, with the oatmeal. So
okay, the turkey sausage.
Yeah.
There you go. All right, very good. Matt Piper, thanks so much. Appreciate that. As always, John Tucker sitting in for Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. The S&P now turns positive. Go figure. Marianne Bartels joins us. She is Chief Investment Strategist, Sanctuary Wealth. Marianne, what's the conversation you're having with your clients these days? I mean, stocks hitting all-time highs. Volatility's with us. Lots of big IPOs coming. What's the conversation like with your clients?
Well, a lot of it is about SpaceX right now, to be quite honest. And how do you get exposure before it launches its IPO? But obviously, there's been a lot of volatility in the markets. And what clients really want to know is this the peak of a bubble? Do we have to get out? Do we have to raise cash? And our answer is no. Technology, particularly semiconductors, just got way over their skis, extremely overbought. I mean, you cannot go up parabolically and sustain those kind of price moves. We kind of equate it to like the start of a roller coaster. You go up really slow, but when you come down really hard and fast. And I think one of the reasons why we've had such a sharp, fast pullback is that there was a lot of leverage in the market. And I think you've seen some of the leverage now come out of the market. And we're starting to get early signs of an oversold condition. So I think we can bop around in here. And that's why I think you're seeing the market try to stabilize a little bit here today.
Given where margins and earnings have been, can stocks perform well in an inflationary environment?
So we actually took a long look at inflation, and we've bucketed inflation into 3 different categories. We call it the inflation boost, the inflation squeeze, and the inflation damage. And we think we're in the inflation boost, where companies are able to raise prices, and consumers are able to pay for those higher prices, and it results into stronger earnings. And the last time we had a period like this was in the 1950s and the 1960s. Now, obviously, our economy was very different. The interest rate sensitivity was very different. But you can actually have a cycle where inflation is extremely bullish for earnings. And that's the cycle that we think we're in right now.
How about in the bond market here? I can sit there in a 2-year treasury. Boy, you can get 4.11%. I don't have to take any risk. I don't have to be a rock star. That's not bad. Do I just do that?
It's not very exciting either.
I know it's not very bad. Hey, you're talking to the guy who's in laddered municipal bonds for New Jersey. What do you think about the bond market here, Marianne?
I think you can use fixed income as a ballast in a portfolio for income in a portfolio, but as it can really generate the returns that investors want or need, I don't think so. But I do think what I'm stressing is it really is a time where you need a diversified portfolio. And that helps you in periods of volatility that we've recently have seen. And it also gives you broad exposure. What I really like about this market is we've started to see small caps stabilize and improve. And we are recommending to start diversifying in terms of market cap. And we really haven't seen that in a number of years. So diversification across asset classes, diversification among cap size, and also between growth and value. I think there's a lot of still opportunity sets available for clients. You know, fixed income is part of it.
Hey, at the top, you mentioned one of the mega IPOs. Does that suck the oxygen out of the room?
I don't think so. You know, there's been a lot of blame that this correction has to do with investors raising money for the IPO, but we've stopped talking about all the cash that's on the sidelines. I can tell you our advisors do have cash. Cash is not zero. Now, I'm sure there's some repositioning for this SpaceX IPO, but I don't think it's the cause of the volatility and decline that we recently have seen.
Marianne, thanks so much. Appreciate it. As always, Marianne Bartel, she's Chief Investment Strategist at Sanctuary Wealth, joining us via that Zoom thing. Got a big IPO pricing tomorrow.
Oh, we do?
We do. And it's spaceships, it's Mars, it's AI, and it's Elon. So it's got everything. It's got something for everybody.
It's got a lot of promises.
Yes, and we need some clear reporting on that. So we turn to Caroline Hyde. She is a BTech co-anchor here. What are we hearing about the roadshow, Caroline? I mean, there's...
What an extraordinary roadshow.
What an extraordinary... I saw the...
Jamie Dimon hosting, the bro love that went on.
That was very cool. I saw the video. Looked pretty cool. I mean, there's seemingly something for everyone out there, but boy, you really have to just hitch your wagon to Elon Musk.
I got to just say, from that roadshow, the next day I was reporting on it for the morning, and I was trying to pull a cut of Elon.
Yeah.
I couldn't use anything. No. I don't know what the hell he was talking about.
You had to be there as a JP Morgan client, listening inherently. And then Morgan Stanley's been doing it too.
Right.
Look, all of this is as the hype around this IPO is extraordinary. It's done everything slightly differently. Like, we know the price that they're aiming for, even though there's so-called technical pricing tomorrow. It's going to be $135, we understand. Of course, it's going to be raising up to $1.8 trillion of market valuation and $75 billion of new equity. But this is going to be 30% allocated to the retail community. They're still going to be able to get allocations.
Can get a piece of this,
tomorrow.
Right?
What's interesting is, of course, depending who you get allocation through, is how quickly you're allowed to flip it. Now, a lot of these retail offerings, if you go and buy it through Fidelity, they're going to punish you if you try and sell it on the day. So you're going to be like contained for 15 days. But there's a lot of volatility that's going to go into this. And many think that the price is going to be pushed higher by the amount of passive funds that are going to rush in to buy SpaceX, because there's been this fast tracking of entry into a lot of the main indices, like the NASDAQ, for example, of SpaceX shares. And so suddenly, if you're a passive fund and you need allocation, there's going to be this sort of fuel and frenzy behind it. But all of this is to say that demand is clear. $250 billion worth is what's been reported by Reuters, and we understand from our sources that that is similar in terms of level of demand. Some big fund managers are coming in asking for up to $10 billion worth of SpaceX shares because, of course, they've got so many funds they've got to distribute it within. And then you're looking at which particular areas, and geographically, the Middle Eastern investors who have been very long the AI trade, very much piling into XAI, OpenAI, Anthropic. While we know the Kuwaiti investment fund has been asking for about $5 billion worth, we know that there's been big demand coming from the other players as well. So clearly, the hype cycle's there. I mean, we've just got 2 more days to white-knuckle this.
Yeah, like Prince Alaouid bin Talal, he was one of the early backers of Elon Musk. He's going to get a big payday, it looks like, right?
Yeah, and it's going to be interesting as to whether people hold on to their allocation, whether it's paper money, whether they want to sell more broadly in the future. And look, this is why there was that great reporting yesterday, wasn't there, showing the Truist data, that if you look back at the 30 biggest tech IPOs in the last 15 years, generally a majority of them will sink in their first 12 months of trade. That's because lockups expire. CEOs and people want to be able to make some profits. Liquidity wanted from some of the people that work at these companies. So there is some sort of pressure, but more broadly, this looks as though a lot of people are going to be not only holding it in their private funds, but maybe wanting to even buy it in their public funds too. Maybe want even more skin in the game.
All right, I'm going to put on my analyst hat here. Valuation. Bloomberg Television had a great graphic they ran yesterday. Just looking at it, IPOs, big tech IPOs, multiples of revenue, and 15 here, 20 times there. Crazy stuff we never talked about back in the day. This one, SpaceX, 95 times revenue.
It's kind of like Tesla, right?
Yeah.
What could possibly go wrong?
Is there any pushback we've heard from the marketplace from some of these meetings on valuation? I haven't really seen any.
I think it's all about whether you believe in the cult of Elon Musk, whether you believe in the idea of getting orbital data centers. They've started to at least show demonstrations, pictures, if you like, of how that might work. So that's been a key focus. But really, in the same way that Tesla does not trade on fundamentals of electric vehicles, nor does SpaceX. It's bigger than the sum of its parts when you're putting all the business together, because it is the idea of Mars, it is the idea of the moon, it is the idea, though, that this currently is almost a monopoly. Look, who else has been making these reusable rockets, the cadence and the reliability that we've seen with the Falcon 9, now with Starship managing to demonstrate such feats of science? I think for many it's just like, well, I've been burnt if I've been against him in the past.
But there has been some pushback, particularly New York and California pension funds. And the concern there by the controllers seems to be Elon has too much control.
Governance. And in fact, funnily enough, shock horror, who's weighed into this as well, is Elizabeth Warren is sending a last-minute ditch attempt to the SEC, Paul Atkins, saying, look, you've got to stop this IPO process because I'm worried about governance and I'm worried about the safety of retail investors, as you are seeing the fast-tracking of shares going into some of these big indices. Look, whether you like it or not, you're probably going to have exposure to SpaceX because it's going to be in your 401k. It's going to be in some of these, as you say, the funds that are managed by New York City, by New York State, they're pension funds, right? And they're saying, look, we're not so averse to this that we're going to rule out them in our funds. But we are going to keep trying to chew Elon's ear, trying to get letters to him, which he thus far hasn't responded to, saying, we're worried about this. We're worried about your 80% voting rights. We're worried about the overall governance structure of the business. But look, like, for many investors, they want a founder mindset. They want the ability of Elon Musk to be able to drive forward with the big decisions. And for many long-term bettors on him in the private markets, they kind of love that. In fact, that's why they think eventually SpaceX and Tesla should merge.
Yep. I wonder what the over-under is on when this thing will open for trading on Friday. Because when I was doing these IPOs, if I didn't get it open by 10:15, my boss was all over me. Now they don't trade these things till 12
like midday,
Exactly.
Figma, I was there for ages until we got 1 p.m., 2 p.m.
I don't know how this is going to work. So
it is a
that's Morgan Stanley's problem. They're a stabilizing agent, so that's their job. Caroline Hyde, thank you so much for joining us. We appreciate it. Caroline Hyde, she's both BTech co-anchor along with Ed Ludlow, who we chatted with on surveillance earlier today. So we're getting a double dose of BTech, which is awesome for us because there's always a ton of stuff going on out there in the world of technology. S&P unched on the day. I got Dow down 240 points. That's 0.4%. But I got the NASDAQ up 42 points. So there you go. The VIX, which was up at 22 and change, is now at 20.
24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Matt Piper. All eyes on what the Fed may do next week after the Consumer Price Index today showed that inflation climbed 4.2% from a year earlier, the most since early 2023. That news has the markets down at this hour. The S&P right now is down just ever so slightly, about 7 points. The Dow right now is down half a percentage point at 280 points. The NASDAQ is down 0.1%. The Bloomberg Dollar Spot Index is down 0.1%. Well, the more policy reactive to your yield is flat at 4.11. The 10-year is up a point just slightly at 4.52. Taking a look at oil after the U.S. and Iran exchange strikes overnight, which could hinder talks aimed at securing lasting peace in the Middle East. Brent right now is at $93 a barrel, WTI at $90 a barrel. Jim Bianco of Bianco Research on why even with this news today, oil prices are not moving much.
I think there's headline fatigue. I mean, a little bit of that because we've been going back and forth with it. I also think that there's a trouble trying to understand this current state of the crude oil market. How much are we running down inventories? How much is actually sneaking out of the Strait of Hormuz? Kuwait is now starting to ask that they're going to start shipping oil. How are they going to pull that off? I thought the Strait was closed. Maybe it's not.
Well, not great news for those retirement bennies. Social Security is now projected to run short of funds in late 2032. That's 3 months earlier than previously forecast. At that point, it would only be able to pay 78% of scheduled benefits if no changes are instituted before then. As the population shrinks, fewer people are paying into the system. More than 70 million of us received Social Security benefits in April, netting an average of a little more than $1,900 each month. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and John.
All right, Matt, thanks so much. Appreciate that. I don't know about you, Mr. John Tucker. My personal budget has zero in for Social Security.
Yeah, I never really anticipated that it would be solvent by the time I get there, and I'm getting there.
I know. I mean, it's just, can we depend upon Congress to do something to fix it? I don't think so. So in my personal budget, in that little cell there in my spreadsheet, zero per month coming from Social Security. So we'll see.
It would just be gravy for me.
Yeah, exactly. So we'll see how that plays out. All right, we got the SpaceX IPO. That is the big news. But kind of like a corollary to that is, what is Elon Musk going to do with the rest of his stuff that he owns, and most notably Tesla and all the stuff that's in Tesla? What does he do with that? And I don't know. A lot of folks, I think, are suspecting that at some point, if for nothing else, he'll just kind of roll it up into one big company there under SpaceX. Steve Mann, he covers Tesla. He's a global autos and industrials analyst for Bloomberg Intelligence. Hey, Steve, when you talk to Tesla investors, is there an expectation that at some point Elon Musk and SpaceX will buy in Tesla?
It really depends on the timeline you're talking about. I mean, it's you can speculate. There's a lot of synergies, probably many years away from now that, for example, the Tesla vehicles could be riding on or driving on, the surface of the Mars, or the Boring Company is, drilling tunnels in Mars for colonization. But, that's very, very far away. We published a piece of research today, and we looked at it, and really the only thing that, Tesla is really contributing in a consistent, meaningful way is actually their battery storage business. And even that, it's a small chunk of, Tesla's profits. So we don't really see, imminent or near-term synergies for a merger.
Okay, so if there were to be a merger, roll-up, or whatever you want to call it, is that an admission that one company is not really performing, that it would need the other to help prop it up?
I wouldn't necessarily say that. I think Elon really has a long-term view on what he wants to do, specifically in space exploration. And that's where, Tesla could really contribute. Like I was saying earlier, you can have, cars, automated cars driving on, another planet, or you can have, compute or satellites and communications through their, satellite system that communicates between, interplanetary communication. I mean, you can see all the possibilities in both energy and vehicle. But I think a lot of those things need to be proven out first, and I think that's what they're trying to do on Earth first. And secondly, Tesla, really the focus is really on autonomy, the robo-taxi. And I don't think combining the two companies is a good time at the moment. It serves as a distraction, really.
Bloomberg News has got some reporting out on the autonomous vehicle. Tesla has just 59 vehicles in its robotaxi fleet as of Tuesday, limited to 3 Texas cities after Elon Musk said the company would have an autonomous ride-hailing in about half the population of the U.S. by the end of 2025. Talk to us about that part of the business and where we are and maybe where the company's falling short.
Yeah, I think for some investors, it is falling behind. They were hoping the rollout's a little bit faster, but the company did tell us in the first quarter earnings that a bulk of this rollout is in the second half. I wouldn't be surprised that they're waiting for that the steering wheel-less, the brake pedal-less Cybercab to be ready before they ramp up that service in more cities around the country. So let's wait and see. Maybe the Cybercab build out and roll out will be the turning point.
All right. Did Elon overpromise? I'm trying to get you in trouble here. Did he overpromise?
Well, you know how he is, right? I think he has grand plans.
Yeah, we know.
He has grand plans. It's not a bad thing. Stretch targets, you want to call it that. But reality is, these technologies do need time to play out and to be invented, to be discovered, to be developed, and to make it commercially viable. So these things do take time.
Steve, one of the concerns from Tesla investors when Elon Musk was in the U.S. government running the Doge campaign was that he wasn't paying enough attention to Tesla. Is there a concern now with SpaceX that once again his attention will be diverted away from Tesla?
It's very interesting. He was very visible within the government early in the year. It kind of quieted down, but now we're seeing him, on Air Force One from time to time. I'm sure he's got one foot in, and then he needs to, right? A lot of these businesses require regulatory approvals, and I wouldn't be surprised that he's working on all those fronts to make sure his business runs well and gains new businesses.
Is Tesla becoming more of this is one thing that does excite me, Paul?
Okay.
More of a battery company where I can load up on batteries at my house and draw from the grid at night when electricity prices are much lower, that sort of thing.
Yeah, that's a great question, because battery business is becoming a bigger part of Tesla. It's 13% revenue, but if you look at the gross profit line, you're looking at a quarter to a third of contribution. And battery sales are becoming more important, especially during this AI build out phase. A lot of these data center actually requires their own power systems to run the chips. And part of that is really having battery backup to make sure these AI data center is running 24/7. So, you saw Ford Motor Company getting into that business, and Ford's been doing
I think GM's doing
right?
the same thing too.
Yeah, GM is also doing the same thing. Repurpose those battery plants that we use for EVs into battery storage. I think there's a demand for that.
All right, Steve, thanks so much. Appreciate it. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. He's safely ensconced down there in Princeton, New Jersey. Fantastic breakfast, fantastic lunch down there, so I can speak very highly of that. Coming up, we're going to check in with Eliyahu Kamishar, Bloomberg California reporter, on the big take story. Billionaires flee to tax haven just across the California border. I bet it's Incline Village, Nevada. I'm a huge fan of Lake Tahoe. Squaw Valley, one of my favorite places to ski in the world. That's coming up. This is Bloomberg. Good morning.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, you got John Tucker sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. You know we love the big take stories on the Bloomberg Terminal. These are awesome. They're usually really, really cool topics, deeply sourced. They throw a lot of resources at it, and they make these great, great stories. They oftentimes have very fun, colorful graphics to help me understand. Here's a good one I really love. Billionaires flee to tax haven just across the California border. Where? It's called Incline Village. I've been there. Has become a billionaire's playground with prime lakefront property, alpine seclusion, and no state income taxes. That's attracting ex-Californians.
Lake Tahoe.
Yeah. Squaw Valley, which has now been renamed something.
But that's Squaw's in California. Yeah, I forget what it's called.
It's right there on the border. So, and it's just some of the greatest skiing in the world is there in Lake Tahoe. And we've got the story here for you. Eliyahu Kamishar, California reporter. There is a California reporter for Bloomberg News based in San Francisco. Eliyahu, thank you so much for joining us. Talk to us about Incline Village, Nevada. What's going on there?
Yeah, well, Incline Village is a really interesting town. It's just right across the California state line, and it's become this haven for wealthy people to kind of set up their new residency, often leaving California. And the big attraction is the zero state income taxes that Nevada has. So you're seeing a lot of people from Silicon Valley that can maintain their relationship with Silicon Valley because it's only about a 40-minute flight away, but they don't have to pay California's 13.3% upper income tax bracket. And there's also a billionaire tax that could be on the ballot in November that has kind of created a lot of this momentum as well.
So the border goes pretty much right through Lake Tahoe, California on one side, Nevada with no taxes on the other side. So why not? You know who had an estate on Lake Tahoe, a compound?
Who?
Michael Corleone.
That's right.
Remember?
Exactly.
Fredo got whacked. So Fredo's body is somewhere at the bottom of Lake Tahoe, as I remember. The billionaire's tax, is that going to go through? What are the prospects for that?
It has a very good chance of being on the ballot in November. There's still a chance that state Democrats like Gavin Newsom can negotiate it off the ballot. They have until June 25th to reach an agreement. If they don't, with the healthcare union that's put it forward, it will be before voters, and there's a poll that has it a slight majority of voters in California support it. But it definitely would be a big, costly fight between a lot of billionaires that have come out against it and the healthcare union, backed by people like Vermont Senator Bernie Sanders, who are supporting it.
And now San Francisco had one too, and the voters rejected that, or what happened to that?
Well, San Francisco had what was called the overpaid CEO tax. It was actually a tax on big businesses doing in San Francisco. It was seen by many as a litmus test for this statewide billionaires tax, like to kind of test the waters of like what's the appetite for taxing the wealthy. It failed in San Francisco in this June primary. That was and that was with the help of money from people like Sergey Brin, the Google co-founder. So usually in San Francisco, raising business taxes has a pretty friendly reception. So for that to fail, it actually was kind of a big win for opponents of the billionaire tax.
So one of the reasons I love, and I always recommend folks, particularly non-U.S. folks, when coming over to ski, to go out to Tahoe, is because they get a lot of snow, like 30 feet of snow a year.
Yeah, but it's called Sierra Cement for a reason.
That's okay. They groom it nice. I like my groomers. What are the regular people doing there, Eliyahu, in this area? Because we see a lot of times people get priced out of some of these resort areas.
Yeah, the snow, it's gorgeous there. And there's world-class skiing in Lake Tahoe. There's still a lot of regular people that go to Lake Tahoe. I mean, a lot of vacationers, they rent Airbnbs. They have an old family house that's been, that might be worth millions of dollars now, but it's falling apart. And then there's also a lot of foreign workers that staff the ski slopes, and they share apartments or they're staffing restaurants. So there is kind of a diverse mix of people there that get to enjoy Lake Tahoe. But there is kind of this essentially a billionaire's row that's been around, and it's these prime lakefront properties that have, you know, $40 million homes on them. And then recently there was an estate that sold for $125 million, and that set a record for the region.
And I love the fact in your reporting, I think you talked to the liquor store owner who had to sign a non-disclosure agreement if he wanted to do business with, you know, the rich out there.
Yeah, that's what's interesting about Incline. It's a small town, and the wealthy people and the billionaires really kind of loom large in the town. So you have a liquor store owner who had to sign an NDA before he did some business with with one of the billionaires in town. You know, I talked to another person. His wife does mobile dog grooming for the wealthy. And there's also, you know, Dave Duffield, the co-founder of Workday. He's a longtime billionaire in town, and he's kind of been a benefactor to the town and funds the local sheriff as well. So,
all right, very cool. All right, Eliyahu Kamishar, thanks so much for joining us. He's our California reporter with the big take story. Maybe I'll have to go to Egan's Liquors in Spring Lake and ask him to sign an NDA.
You need an NDA. Exactly. You don't want people knowing what you're buying.
Exactly.
Or how often.
Exactly. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence Radio starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business App.
All right, we got John Tucker sitting in for Scarlett Fu on Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, we're going to check in with Michael McKee, Bloomberg International Economics and Policy Correspondent. We had some inflation data today. It's high, folks. It's, you know, the printed number was 4.2% on CPI. That gets your attention. Woo Jin Ho, Bloomberg Intelligence Senior Hardware and Networking Analyst. Talking about Super Micro, $7 billion capital raise. Stocks getting crushed on that. Priya Misra, fixed income portfolio manager. She's at JP Morgan Asset Management. She's pretty smart. She's going to give us some thoughts on the bond market. Diana Rosado Pena, Bloomberg Intelligence consumer analyst, talks to us about Chewy shares. Pretty good. Stocks trading higher. The dogs, they need their bones, I guess. I don't know. We'll see how that plays out. Right now, let's get a Bloomberg Business Flash. Matt Piper from Bloomberg News.
Hey, Paul, thank you. Live from the Bloomberg Interactive Brokers Studio, I'm Matt Piper. Tech stocks are leading the way down for a second straight day, and it all comes right before that monster SpaceX IPO. The sell-off driven by cooling enthusiasm for AI and investor concerns over those huge stock valuations. That all comes amid that inflation report this morning showing that it has risen to a 3-year high. Taking a look at the markets, the Dow right now down 440 points or 0.8%. The S&P is down 0.5 percentage point. The Nasdaq is down 0.6 or 177 points. The Bloomberg Dollar Spot Index down 0.1% at 1208.99. Oil little changed. Brent is at $93 a barrel. WTI at about $90 a barrel. One of those tech stocks we are watching, Super Micro Computer, the maker of artificial intelligence servers, tumbling after disclosing plans late Tuesday to raise $7 billion in a series of equity offerings. Right now, shares of Super Micro are down 17%. Well, there's been a lot of questions on what the Fed will do next week. Economists see more price indexes on the horizon, increases that is on the horizon, which could prompt Federal Reserve officials to consider an interest rate increase this year. Andrew Hollenhorst with Citi says they are looking at 3 rate cuts by the end of the year.
We think cuts are certainly more likely than hikes. To get to rate hikes, I think you need to see evidence that inflation is really picking up, the labor market is tightening, and we have kind of broad inflationary pressure. But having said that, the Fed does have an issue here with their preferred measure of inflation, which is core PCE inflation.
Well, the European Union does not like what it sees when it comes to Paramount Skydance's $110 billion takeover of Warner Brothers Discovery. EU regulators are probing involvement of Middle Eastern funds, helping to bankroll the takeover. A trio of Middle East funds agreed to provide about $24 billion of equity finance to help bankroll Paramount's bid. All up in the air still. For on-demand news 24 hours a day, subscribe to Bloomberg News Now whenever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and John.
All right, Matt, thanks so much. Appreciate that. John Tucker sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Matt was just reporting, got some red on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christine Aquino. Christine, what are you looking at today?
Well, Paul, I'm looking at a green stock today, and that is Robinhood, ticker HOOD. Those shares are up more than 6%, bearing some opening gains, but still very much in the green today. And that is because of its latest data on prediction markets volume. So apparently their May volume for those prediction markets contracts are at 3.9 billion, which is up 22% from April. And that is reason enough for Goldman, for instance, to raise its price target on the stock to 108 from 105, currently trading at 88.93. So that's quite a premium on its current share price. Cantor also similarly positive on that prediction markets metric, and they have raised their target on the stock to 110 from $100 previously. Cantor also seeing that this prediction market venture will raise Robinhood's net revenue by 2% this year and 4% by 2028.
So all this AI stuff, it ain't cheap. So Supermicro, they have to dilute their shares to raise more money to buy this stuff. As an investor, I wouldn't be too happy if they're diluting my existing shares. But
Absolutely, John. That and that is very much a reaction in markets today. Supermicro, ticker SMCI, those shares are down now more than 16%, so extending some of the opening losses that we're seeing today. And again, yeah, as you mentioned, right, the company is going to plan $7 billion in equity and equity-linked financing transactions because they want to satisfy orders for AI servers. That has now amounted to $39 billion. So that's going to be a lot of money that they're going to need to fulfill those orders. And exactly right, John. I mean, a lot of the word on the street is very much about worries over the share dilution impact. Bloomberg Intelligence analyst Woo Jin Ho saying that, you know what, though, it will dilute near-term EPS, yes, but it does also signal that AI demand could lift fiscal revenue for 2027 above the $50 billion consensus. So maybe some short-term pain and then long-term gain that we're looking at here.
All right. Woo just coming on in a couple of minutes. We'll talk to him about that. One more.
All right. Let's take a look at Oracle today. Earnings after the bell, of course, ticker ORCL. Those shares are up about, at the moment, 1.4%, so not doing too shabby. Right. The big question for the release, of course, is how quickly can a company get its massive AI data center projects built? And so in focus, of course, their cloud infrastructure sales. That's projected to have increased about 91% to $5.72 billion in the fiscal fourth quarter. And of course, we have Bloomberg Intelligence Anurag Rana weighing in. We also need to apparently watch Oracle's ability to bring additional GPU capacity online. That is going to be an important determinant of its fiscal 2027 revenue upside.
All right, Christine, thank you so much. We appreciate that. Christine Aquino, managing editor for Markets Live for Bloomberg News. And more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Okay, ECO Go. That's where our next guest, actually, he just hangs out all day there. Michael McKee covers all the economic stuff for Bloomberg. We had some CPI, Mike. I know a headline number. I'm a headline kind of guy. I don't peel back the onion. 4.2% on that CPI print. And then I guess if I want to go a little deeper and look at core, 2.9%. Both of those seem above where the Fed would like them, I think.
Yes, okay. Good guess.
Right.
Mike Wilson telling us just a short time ago that he lives in a nominal world, right, and headline world. So everybody who's looking at those numbers has got to be a little bit concerned, including the Fed. Looking at it from a consumer point of view, gasoline obviously the biggest increase during the month, 3.9%. In terms of what people pay a lot for. Food prices, oddly, fell. They didn't fall, but increased at a very low pace, 0.1% after a 0.7% the prior month. So consumers, a mixed picture for them, but the thing you have to keep in mind, of course, is that prices aren't going down. The level is staying the same. If they're expensive, they're still expensive. And real earnings, if you deflate average hourly earnings by inflation, you get 0.7 decline. Ooh. So you're falling behind inflation even more than you were last month. This is not a good thing for the White House. The Fed is concerned about inflation, and the White House has got to be concerned about voter reaction to all this.
What's the bigger target on the Fed's radar screen? Is it the trajectory of inflation or the jobs market?
Oh, definitely inflation. The jobs market's doing just fine, as we saw last Friday, at the moment. And so the Fed is going to be totally concerned with inflation. Now, the question is this short-term inflation? Notice I didn't use the T word. Is this short-term inflation? And there is some evidence that in today's report, that we're starting to see tariff price inflation fall out of the numbers. Some of the things that went down in terms of goods, core goods, down 0.1%. So that might be over, except that Trump's going to put on some more tariffs next month. We'll see what effect that has. But the war is the big question, and how long that lasts, because we do see energy prices, led by gasoline, energy prices are up 36% over the same month a year ago. So there's a little bit of both in there.
We had a guest on earlier, and I can't remember who, because I have 25 guests per day, who said this might have been peak inflation. What do you think?
There are some people that think that, because what we're seeing now is gasoline prices have gone way up, and they're not coming down. They're just increasing at a slower pace. And it's the pace that is measured by the inflation numbers. What's the rate of inflation year over year? So yes, you're still feeling pain, John, at the Wawa, but you're you're not feeling more pain than you felt last month.
Okay, I use for my metric, the Wawa Foodtown inflation index. Most of the Fed members use core PCA. What does Kevin Warsh, the new Fed chair, he uses something different?
Well, he likes the Dallas Fed's trimmed mean, where they take off a certain percentage of the highest inflation.
You can make these numbers say whatever you want.
Yeah, well, as they say, you can torture statistics. You take off some of the top, some of the bottom, and then you look at the mean middle number. And the people who've studied all this say there's not a whole lot of different or new information. Trim mean tends to run a little slower in the short run, but over time converges to CPI and PCE. So it really doesn't make a lot of difference. There's no doubt at the moment that inflation is rising, and there's no doubt that the Fed is concerned about that. Whether they can fix it or not is another question, because if it's all gasoline, they can't open the Strait of Hormuz.
Yeah, I mean, I'm looking at PPI tomorrow, Mike. I don't see any relief there, do I?
Well, PPI is interesting because, of course, it doesn't track directly into CPI, but and the difference is, for those of you who want a deep dive into nerdydom, is that the consumer price index is what you pay. The producer price index is what companies charge. Mm-hmm. And so we watch the consumer price index to see if there's some impact from tariffs or the war that's feeding into prices, if companies are raising prices because of this. And there's some estimate. If you want something funny to look at, you look at semiconductor manufacturing prices. Okay. It's a hockey stick.
Yes.
It's just gone way up. AI demand is so strong. So that'll feed into other things, could feed into computer prices, and to the extent that some semi-manufacturing is diverted from cell phones and things like that, could feed into those prices as well. So, there are a lot of things that the Fed has to take into account, and in consumer prices, we're seeing still increases, still high levels.
Oh, real quick, Fed meeting, what happens?
Nothing. Well, it's not nothing. It's that they're not going to raise rates. They're going to take out the bias towards cutting rates, and they'll say, we'll see how things progress. It's really going to be a movie review. How did Kevin Warsh do in his first press conference?
Okay, well, then we'll pay attention. You'll be down there in D.C., so he'll have to get ready for you and the rest of your colleagues down there. Michael McKee, he covers all the economic stuff for Bloomberg here. One of the stories that we've been talking about today, Supermicrocomputer. Here's a company that started the day with like $25 billion of market cap, and they announced a $7 billion equity raise. Kids, I don't know how you do the math, but that's dilutive. I don't know by how much, and the stock's down 17, 18% today. You just don't see that very often. Woo Jin Ho joins us here, Senior Technology Analyst for Bloomberg Intelligence. Wooj, I've been doing this Wall Street thing a long time. That's a monster follow-on equity offering, given the market cap size. What's the math tell you?
The math, quite frankly, tells me at face value, what we wrote was 20% plus dilutive to shareholders. I think there's another sell-sider who said it's up to 27% dilutive to shareholders. So, yeah, investors aren't happy about it, but quite frankly, like Christina said earlier on a recap, short-term pain may lead to long-term gain.
Okay, they're going to use the money for what? And when does it pay off? Two big questions.
Yeah.
Here.
Yeah. Hey, Charlie. So
John, actually,
really.
but that's all right.
Oh, hey, John. Sorry
You
about
can
that.
call me
Hey,
anything
John.
you want.
Really straightforward. Look, $7 billion in equity financing, and you try to back that with $39 billion in orders. Most of those orders are coming in fiscal 2027, which starts in July. And the way I'm factoring it in is like 30. Let's just say 30 billion of that comes in the second half of this year.
Specifically, orders for what? It's
AI servers.
Okay.
Right? And these deals are really, really expensive. So if you think about it from this standpoint, a typical AI server deal can range anywhere between $1 billion to $5 billion each. So we're talking about a handful of deals that they're trying to fulfill. And look, they only had $1 billion in gross cash, and they really needed the cash to buy the GPUs to fill those orders.
So I go to the FA screen for Super Microcomputer, and I'm looking at kind of their growth rates and profit margin. I'm surprised to see a profit margin on the net income line of kind of like 4 or 5%. That's not the. I'm usually seeing a lot fatter margins for tech companies. Talk to us about just kind of the business here.
Yeah, look, hardware margins are pretty awful, and AI server margins are probably one of the worst in the industry, primarily because you're selling in large scale and you have very little control in terms of the GPU pricing. I will tell you, and I'm going to get a little nerdy here, is that there is part of the sales include something that they sell called what is it? DCBBS, right? And that's a margin accretive business. Now, Consensus has gross margin around 8.2, 8.3% for the next year. If they can get a half, 50 bips on gross margin improvement, we're talking about $1 in EPS accretion if they're able to get $60 billion in sales instead of $50 billion in sales for next year. So, look, this is why I think this could be ultimately positive over the long term, even though shareholders are hurting right now.
Who's their big competition? Like everybody?
No. Look, we've been joking around on this program quite a few times. You got to get a Dell, right? And Michael Dell has just been killing it on the AI server side. $60 billion in AI servers on track for this year, and I think Consensus has about $75 billion in next year. And that's one of the reasons why that I'm kind of positive on the demand side for Supermicro, because they're only one of two of these providers in the U.S. that can provide that level of scale for AI servers.
These are great days. If you're a core shareholder of the stock, you hate today because it's down 18%. But, boy, if you really believe in it, you'd go out and double down. I mean, it's
short-term pain, long-term gain.
I don't know. It's a tough day. Woo Jin Ho, senior tech analyst for Bloomberg Intelligence, joining us here. One of the hedge funds I worked at for a nanosecond. The portfolio manager was responsible for the core position, but then the trader had discretion to trade around the stock on the edges. And when he got a little rich, he could sell some stock. Got a little cheap, he could buy some stock, and that was your P&L. And we had some really good traders who made a lot of money saying, oh, it's a core position, but boy, it's down 17, 18%. That's a little much. I'm going to go out and buy some stock here. And that position would be his or her P&L. And that's, I think, a good way to manage money and manage around core positions. And that's a pretty cool strategy, because then today would be one of those days, if I still believe in a story, I'm going to go buy some stock down here, 18% lower. I don't know. We'll see how that plays out. S&P off 70. The NASDAQ is off about 1% here, so we'll keep an eye on that. Coming up, we're going to check in with Priya Misra. How about that? One of our faves. Fixed income portfolio manager. She's at JP Morgan Asset Management. Yes, She's in the new building. Yes, she has a great view down Park Avenue. We'll get the latest on the bond markets here. Again, we had inflation coming in pretty hot here today. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Matt Piper. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. U.S. inflation accelerated again in May as the Iran war pushed up energy prices. The core CPI, which excludes food and energy, increased 0.2% from April and 2.9% from a year earlier. That right now has stocks down this hour. The Dow is down more than more than 1%, down 550 points. The NASDAQ is also down more than 1%. The S&P is down 0.8%, or down 65 points. The Bloomberg Dollar Spot Index is down 0.1%. The 2-year yield near flat at 4.11. The 10-year is flat at 4.52. Well, that inflation report will likely be a headache for the Federal Reserve, which will make an interest rate decision next week. Economists Bloomberg spoke to say they see volatility over the summer after this report, with lots of uncertainty around the midterms and a new Fed chair that will get challenged on which way to go. Let's take a look at oil. The Brent right now is at, where is
just under $93 a barrel.
$93 a barrel. Thank you. There it is.
Yep.
WTI at $90 a barrel. Thank you, Paul. My eyes are not great right now. Well, no need for gas in these things. Have you guys been in a Waymo driverless car yet?
I have.
Okay.
Yep.
I have not. So there's hundreds of them in places like Texas, but its rival Tesla has just 59 vehicles in its robotaxi fleet, all in just 3 Texas cities. That's after Elon Musk said the company would have autonomous ride-hailing in about half the population of the U.S. by the end of last year. So that has not happened at all.
He sent them all to Mars.
Oh, right.
That's what happened.
That's going to help the IPO. Okay. Experts say the slow progress is due to the extremely difficult technology challenge of launching a driverless ride-hailing service. And it also does not help that many complain about long wait times and wrong pickups and drop-offs. John tries to get it to his house. It goes 5 houses down.
I would never get in one. I'd just be too nervous driving in something like that.
Yeah, you're in the back seat hoping for the best. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and John.
All right, Matt, thanks so much. We appreciate that. Looking at the 10-year Treasury, 4.52. That's at the high end of what's been the range. I kind of feel like that's kind of where we're going to be for a while. I don't know. Let's talk to somebody who does this stuff for a living. Priya Misra, fixed income portfolio manager at a little shop called JP Morgan Asset Management. Priya, I mean, we saw the inflation print today. There is no wiggle room for this Fed to lower rates anytime soon. Is that what you're saying these days?
Yes, I think they're going to have to drop their easing bias next week, most likely. I think the market's already priced that in. So I agree with you that it's hard. It will be a very hard case for them to cut rates. However, what we saw under the hood, I mean, it's a hot inflation report, but you look under the hood, much of that increase in inflation came from energy, food, airfares. So I think when we look at the details of inflation, we still see the supply shock showing up. So it's not clear that Fed hikes is the way to deal with a supply shock driven inflation, which is why we think the Fed likely stays on hold. We were looking at things like rents, other services. And if we saw an increase there, then I think the Fed might want to start to raise rates or talk more hawkishly because they'd want to slow things down there. We're not seeing signs there. We're not seeing wages pick up. So I think the market's telling the Fed, can't cut rates, just stay on hold, wait for some of this uncertainty to subside and, buy time and buy optionality. And that's what we think the Fed's likely to do.
I mean, you two viewers can see it, Paul, but is that really the view from your office? What an upgrade, Priya.
No, I'm guessing that is...
You think that's a fake background?
Yes.
No. For Priya?
Well, it may be a fake background, but we do have a really nice view. Usually portfolio managers are in an office where we don't really have any view other than our Bloomberg screens in front of me.
Well, that's a good view, too. That's a good plug. Paul likes to think he can hang out comfortably with 452 in a 10, but I say duration risk. What's your view?
We do see some value in duration for a couple of reasons. To your point, it's near the upper end of the range. I think the Fed is extremely credible. I think they're independent. Irrespective of who's the Fed chair, I think there's 12 people that are going to vote. And so the long end starts to get unanchored. If you think the Fed is not credible, I think they're very credible. And then I'm looking at signs of reacceleration, and I'm not really seeing it. There's a lot of AI growth. The economy is resilient, but a lot of this is driven by AI. So I do think 4.5 is that rate range for the 10-year. We're near the upper end of the range. And now you're seeing the stock market sort of take a bit of a breather. So I think of fixed income, all in yields and high quality fixed income, if you're getting 5.5%, 6%, starts to look comfortable for somebody, particularly if they're getting nervous about the risky side of their portfolio. So, I think duration risk in the belly of the curve, the long end, we still have a deficit issue to deal with. But I think if you're looking at the 5 to 10 year part of the curve, which is where the ag is, I think taking a little bit of duration risk, taking some credit risk is one way you can try and beat cash and be in a safer sort of asset.
Priya, I'm sure your phone is ringing off the hook. Your traders' phones are ringing off the hook from investment bankers with another investment-grade bond deal. How is the market absorbing all the supply?
Very well. And this is when supply is running year to date 25% higher than it was last year. And if you told me this at the start of the year, I would have said, well, spreads should be wider, new issue concessions will be higher. And we're not seeing that. And I think it's because of the inflows that we're getting in. So a significant amount of inflows into all bond funds. Last week, for example, was the highest weekly inflow from the EPFR data into bond funds that we've seen, really since the start of the pandemic. So I think people are looking at all-in yields. And I have to say the fundamentals are strong. Look at corporate America. Look at leverage ratio, earnings, interest coverage ratio. These are all strong fundamental metrics. So people look at strong fundamentals of credit, a decent high in, all-in yields, and money comes in. So I think the supply has been taken down well so far. Of course, we're not buying every deal. You have to do a lot of work. Dispersion, I want to highlight that. Under the hood, dispersion within credit is picking up. So we have to do a lot of work to see, do we like this particular deal? Do we like the governance in the deal? So we're not buying everything, but if you're getting compensated enough and we like the structure of the deal and we like the fundamentals, that's where we're in, and so is everyone else. So the supply has been taken down really well so far.
With equity struggling just a bit here, is there a rebalancing toward fixed income?
I think there's some of that happening. Now, the equity struggles are still concentrated. It's really driven by, I think, the tech names that had a really hot run. So I think that's why you might say, well, is this symptomatic of a broader risk-off? So far, if it is tech-driven, I think it just makes people think maybe you need some balance in your portfolio, something that gives you income, particularly if you have these growth sectors. I think where we'll see a lot more inflows is if the sell-off widens beyond just tech, if this starts to be people concerned about, the consumer, and they start looking at how concentrated everybody's equity position is in terms of the AI trade, and they don't feel great about the rest of the portfolio, I think then you might see more into fixed income. We are, though, waiting for that Fed meeting. And the Fed's been sounding a little hawkish. So I think once that event is out of the way, and the Fed's not signaling rate hikes, because I think people remember 2022, and I think we could not be in a more different macro environment. But once that event is over, I think we're likely to see more money come into fixed income because people will see a Fed on hold for the foreseeable future.
Priya, thanks so much for joining us. Always appreciate getting a few minutes of your time. Priya Misra, fixed income portfolio manager at JP Morgan Asset Management. I had one of my investment banking buddies, usually comes down with his wife, come down to the Jersey Shore compound during the summer and just kind of hang for a while, enjoy the beach. He said, ain't happening this summer. His calendar is booked the entire with deals. It's the business he's ever been.
This is good.
Yeah, I said, dude, delegate, my friend. I mean, geez, Louise, you're not a kid anymore. So, but anyway, I think that's happening all across the street. She's saying, invest bond markets, equity markets, M&A. The street's cranking here.
I don't know. Is that a bubbly sign?
I don't know. I don't know. See,
I'm so negative today.
All right, let's go to some earnings here. Chewy, for those dog lovers out there and pet owners out there, shares dropped as much as 6.5% after management gave additional guidance metrics on the conference call, including cautious comments on customer additions. It's all about the pooch out there. Diana Rossetto-Pena, consumer staples analyst for Bloomberg Intelligence, joins us here. How's business at Chewy? Because we got a lot of viewers and listeners that are big fans and consumers of Chewy.
Yeah, well, I mean, they were cautious, even though results were good. They lower revenue guidance, and that was pretty much because they don't necessarily expect a lot of discretionary spending going forward. They're seeing that consumers are being strategic. It's something that we have seen across our consumer staples world. So we're not that surprised, but still.
I don't know. If given a choice between cutting back on the pets and cutting back on the kids, the pet would win. I got to be honest. Sorry.
I agree. I think it's more on like the discretionary spending of it.
Not food, but like the big fluffy whatever thing that goes squeak, squeak.
Yeah, toys and the like. Obviously, there's some stabilization on the pet population. So that is also a headwind to discretionary. So you're not going to buy.
There's a what on the pet population?
There's
fewer.
Well, it's stabilized in the past couple of years. There's been some surrendering more than adoptions because people that adopted pets during the pandemic, they had to get rid of them. So that obviously diminished the population in the United States. So now it seems to stabilize, which is not necessarily a good omen for discretionary spending in terms of crates and new like leashes and stuff like that.
Is Chewy a global company or the U.S. only?
U.S. only. They're having some operations in Canada and the like. They're exploring that, but it's mostly U.S.
So when you're modeling out this company and the revenue, do you do it by dog? Like is the dog population increasing, or is it just a function of like GDP kind of growth? Or I mean, because it seems like we did, as you mentioned, people probably peaked in their dog adoption and so on during the pandemic, and then it's been winding down since.
Yeah, so we there's two metrics that are important for Chewy. It's the active consumer growth, so people going into the platform and being acquired in the platform, like becoming customers of Chewy, and also how much they're spending. And right now they're getting closer to, usually the typical consumer is spending about $600 a year on Chewy. That has increased, and that is the biggest metric that they say that they're probably going to see softness in 2026.
Tom Keene, I mean, we go by vet bill and kennel fee. We all know those two characters. I think Tom's still spending quite actively there on Chewy because he says that
it's an average.
There's a box showing up everywhere.
Yeah.
All right, Danny, thanks so much. Appreciate that, Danny Rosa Settlepayne. Yeah, she's a consumer staples analyst for Bloomberg Intelligence. Chewy with a little bit of softness in their results, but I think people are still going to. You're right, John. People are going to always spend on their pet.
It's a mystery to me why they wouldn't expand to other parts of the world, because in Asia they're psychotic about their pets.
Yes.
I mean, in a great way.
Yep. So there might be some opportunity there. S&P, we're down 62 points here. That's 0.1%. Towards the lower end of the day's trading volumes. That's not very good. Or trading range. Dow off 550 points. That's 1%. That gets your attention. And NASDAQ down 290. That's also down 1%. So there's some broad selling out there to go. WTI crude oil, it's up $1.25, still below $90 per barrel, but there's tensions renewed in the Middle East. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Matt Piper. There are hopes that Federal Reserve officials will hold off on raising interest rates after the inflation report out this morning showed that the consumer price index climbed 4.2% from a year earlier, the most since early 2023. Now, despite an energy-fueled jump in the overall CPI, the details of the report painted a milder picture, providing a possible welcome signal to Fed policymakers. Let's see how Wall Street is responding. Everything is down right now. The Dow is down 595 points, or more than 1%. The NASDAQ is also down more than 1%, down 306 points. The S&P is down 0.9%. The Bloomberg Dollar Spot Index down about 0.1% at 1209. Brent at nearly $92 a barrel. WTI is at about $90 a barrel. As for what the Fed might do, Veronica Clark with Citi Research sees 3 rate cuts for this year.
A lot has to change, of course, right? The most important thing I think that will change is that we will see weaker labor market data over the summer. Certainly don't see that yet in payrolls, but there's a lot of conflicting evidence. You know, we've had such strong payroll job growth, but the unemployment rate has stayed at 4.3%. We haven't seen wages pick up.
And the World Cup is often called the biggest event on the planet, but that's not the case here in the U.S. More than half of American adults say they are unlikely to watch any of the games on TV at home. Is that you guys not going to watch?
I will watch.
Okay.
I will watch.
Oh, yeah. No, I love a sport where you can end up with a 0-0 tie. I'll watch.
Well, get this. FIFA officials booked tens of thousands of hotel rooms in Kansas City, Missouri. That's one of the host cities. They were meant for just the organization, and they've now had to cancel 75% of them over lack of interest. Wow. So cancellation fees, they didn't actually get any. It was part of their contract. So imagine canceling all those and then not having a penalty. That's what happened.
So I should drive in next week and not take mass transit?
I don't know. I don't know.
Good luck. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and John.
Matt, thanks so much. Appreciate that. John Tucker sitting for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're monitoring President Trump. He's in the Oval Office. He is signing a $70 billion immigration enforcement bill, and if he takes questions, we will dip into that. We'll stay on top of that. All right, June is Pride Month, so over the next couple of weeks, we're going to highlight segments on topics related to equality. Today, we're speaking with Terry Williams, President, Founder, and COO at One United Bank. Terry, thanks so much for joining us here. Talk to us about One United Bank. What are you guys up to these days?
Yeah, thanks for having me. So first of all, we are a community development financial institution. We are focused on building wealth in all communities, but particularly low to moderate income communities. And we think that we can do that with AI. So our focus,
Well, no, keep going. I'm sorry to interrupt.
No, our focus is now bringing artificial intelligence to the money management field. We introduced a product called Wise One. And what it does is it helps people, regardless of how much resources you have, help you better manage your money. Americans today have 5 financial accounts. It's really hard to keep track of all those accounts. And so what we do is allow people to combine their accounts and then give them great insights on how they could, improve their credit score, reduce unnecessary fees, save more money, and build wealth.
Well, what's the state of community development these days, since you guys are so intimately involved with it, and how much of it depends on support from the federal government?
Actually, community development is doing very well these days. Our focus on affordable housing, which we've been focused on for, over 30 years, we've actually lent over $1 billion to low to moderate income communities to provide affordable housing, and there is a huge need for it. And I would also say that, yes, there's government support, but there's also a lot being done that doesn't require government support. We, as an example, have, financed housing that is not government supported. So I do think that there is an opportunity still here in our communities to build those communities, to focus on community development, with or without government support. But we'd like to see interest rates go down.
Yeah.
So.
Looking in your notes, Terry, I was, kind of shocked to see this data, which we've all kind of seen in various formats. But Federal Reserve data shows that median white households hold roughly $284,000 in wealth. compared to just 44,100 for Black households and 62,000 for Hispanic households. And that divide is widening. How do you address that?
So a couple of ways. One, I'm going to go back to AI. And the reason why I use AI, because it really does level the playing field. It's a new technology that we are all learning together. So it provides great job opportunities, great lessons. And so I would say I would start with AI. But the second one is continues to be, sort of home ownership. If you look at the communities, that's where the difference lies. And that's where Americans build their wealth. And so there's still, this is why I was talking about interest rates. There still is an opportunity to increase home ownership, to help these communities build credit. We partner with an organization called Isusu, which helps people that are renters improve their credit scores, which can lead to home ownership. So those are the two things I think that should be the focus. AI for jobs, as well as insights on your money, but also home ownership continues to be an opportunity.
I should point out, One United Bank is the nation's largest Black-owned bank, correct?
Yeah, yes, we are.
And you're talking about the community development. No, please continue.
Yeah, no, the reason that we became the largest is we combine, I call it tech with humans. I mean, we were one of the first digital banks in the country, Black or white. We started our digital platform in 2005. So we've been doing this for over 20 years. The same thing with AI. We're the first bank in the country to offer an AI-driven money management app as a subscription. So you don't even have to open up a bank account with us. So we've been cutting edge on technology, but we also have great customer service. Today I would say that technology without humans doesn't work. Humans without technology doesn't work. So we've been really good at combining the two, and it has worked for us.
Is that an effective pathway to banking Americans who might otherwise not be, unbanked?
Yes, it is. And it's also a great app. Our Wise One app is great for people that have a lot of money, because a lot of people don't know where their money is. They don't know from a day-to-day basis or month to month, what's their cash flow. Similar to a business, you can manage your cash flow. So whether you're unbanked or have a lot of resources, you need a money management app.
Right. Terry, thank you so much. Really appreciate getting a few minutes of your time. Terry Williams, President, Founder, and CEO of One United Bank. Right now, let's go down to Washington, D.C. President Trump is taking questions in the Oval Office.
Didn't explode. That bomb was lodged in a helicopter. It didn't explode. It was on fire, but it didn't explode. Those two guys, they knew how to fly, but they got very lucky. And then we had the unmanned boat going very, very fast at speeds that you wouldn't want to go. That's why it's unmanned, I guess, because nobody can go in that. But they rescued, so both people are, fortunately, the pilots are okay. Now, look, I've been working with Iran for a number of months, and they should sign their deal. It's a good deal. It doesn't give them the right to have a nuclear weapon. In fact, it totally prohibits them from ever having a nuclear weapon. And it was just tap, tap, tap. I don't know what they're doing. So they then shot at our helicopter. Very expensive helicopter, by the way, but much more importantly, the two men, fortunately, they're okay. But an amazing rescue. If you ever get a clip, you won't believe the rescue, how cool it was. The equipment we have. Look, we have the strongest military in the world. And I gave them a break at the request of Pakistan. The Field Marshal and the Prime Minister of Pakistan are great. We stopped them from going to war with India. You would have had a nuclear war if it wasn't for me. But they became friendly to me, very friendly, and they're close to Iran, and they worked, and they still are working on trying them to do what's right. But we want a deal that's meaningful. We want a deal that works. We don't want to just have a Barack Hussein Obama deal, JCPOA, the worst deal. That was a path to a nuclear. It's the exact opposite. I like on television, they say, oh, they should have kept that deal. First of all, it was over. It was a short-term deal. But That deal was a path to a nuclear weapon. This is a path against a nuclear. You can't have a nuclear weapon. His was a path to a nuclear weapon. They were developing during his administration nuclear weapon. If they had a nuclear weapon, there'd be no Israel, there'd be no Middle East, and they would have absolutely shot at us. So we'll see what happens. But we hit them hard yesterday, and we're going to hit them again hard today, in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers because you know what? They dealt with some very stupid presidents. I have to say that. I'm embarrassed to say it. Some very stupid people were sitting here. Yeah.
Mr. President, you mentioned the Senate race in Maine. Are you all in supporting Susan Collins? Does she have your full support and endorsement in her Senate
She does
re-election?
because she's a sane woman. She's not my best friend at all. These guys are. I get along well, but I have some. But she's a sane person, and she's a person that never missed a vote in many years. I mean, she's like had 10,000 votes. She had 10,000 votes. She never missed a vote. Unfortunately, because sometimes she voted against me. You know, look, she's a sane woman, and she's a respected person. Maybe a little different ideology than me, but this guy is a thug. He's a fake thug. He's a phony. I made a lot of money picking out phonies. He's a real phony. He's bad. He's a bad person.
Mr. President, are you going to go back to attack, or are you thinking of attacking Iranian power plants and bridges as you've?
Well, I'm not going to say that to you, but I can do that. Look, I could knock out. We have the most powerful. I built the military with these people approving it. And we approved numbers that nobody would have ever thought we would have been. But we built it. We gave a lot to Ukraine through Biden. He gave a lot of money, a lot. But we're in great shape. We have a lot of storage capacity. But he gave a lot. And if you look at what's happened, when I left, our cupboards were full. He gave it. Now I sell it to the European Union, and they give it to Ukraine for the most part. But we have the strongest military anywhere in the world, and sometimes you'll have to use it. And we have to remember, and when people hear this, Iran very simply cannot have a nuclear weapon, and they won't. And they've agreed to that. All they have to do is they have to start signing a paper. It's fully negotiated. We have a fully negotiated, but they're tapping and tapping. And I say, all right, let's give them a couple of more days. They're tapping because it's a meaningful paper. They know when they sign that paper, it's meaningful. The Obama deal, JCPOA, one of the worst, one of the dumbest documents I've ever seen. Yeah, please. Go ahead.
Mr. President, when are you meeting with tech executives about the government taking a stake in AI companies, and what could this partnership look like?
About AI? Well, I can say this. We're having a meeting with them. It's an amazing industry. It's bigger than any industry anyone's ever seen. We are leading China by a lot. And, whoever leads that is going to really lead the world to a large extent. That's how big it is. And I'm going to have meetings with the top 12 or 15 executives very shortly. And we're talking about giving back something to the public. And if we do that, the public will become very rich, the people in our country, because that's the kind of money we're talking about. And I think they'll do that, and I think it'll make it very popular.
What would you like that? Thank you, President. I have two questions. First of all, Turkish President Erdogan keeps threatening Israel. Do you think there's a chance of a conflict between Israel and Turkey, and will you sell F-35 to?
Well, as you know, he's a very good friend of mine, and we've worked very well together. I like him a lot. I'm not supposed to say that because the press will say, oh, he likes Erdogan. No, he's a hell of a leader and a strong person, very strong person. I haven't heard that at all. If I did, I'd call him, and I think I'd make sure that things were fine. I don't think that will happen with Turkey. Not as long as I'm president, because he respects me and I respect him. But beyond that, we have a good friendship. So, we'll see.
And my second question, that's my second question. Besides peace in the Middle East, what do you wish yourself for your birthday?
For my birthday? Well, I'll go a step bigger. Peace for the world, okay? Peace for the world. Middle East, yes. Peace for the whole world. Yeah.
Mr. President, there is a New Jersey Democratic congressional nominee over in the 12th district. His name is Adam Homily. He has a connection to the blind sheep. Yeah. And I was wondering if you could get your thoughts.
I think it's terrible. Okay?
I
think it's terrible. I've seen it. I mean, he was more, now he's trying to sort of say, yeah, I sort of knew him. He didn't know him. They were very good friends. And you look at you go back and look at what happened during that period of time. He was a witness at the trial for him. He was a positive witness for him. He said the most glowing things. The guy knocked down the World Trade Center, admitted that he knocked down the World Trade Center. I think it's another one, if you look. I actually think the one in Maine is worse, because he's just an outright pig. He's like a pig. I watched him a couple of times. He's like a pig. That's what he reminds me of. I come up with good names for people. I don't want to stick him with that one, although I think pigs would be very upset about it. Go ahead.
Mr. President, July 1st is coming fast. How confident are you that you'll be able to renew the USMCA, and what more do you expect from Canada?
Well, I'm not looking to renew it. I don't, I made the deal, and the primary reason I made the deal is that NAFTA was the worst trade deal I've ever seen. Yeah. And I made it better, but I had the right to terminate. And, with NAFTA, we didn't have the right to terminate. I had to get these senators to approve that deal. That was a tough thing, Congressman, too. NAFTA had no termination. So, I've never said this before, but I'll tell you what my thinking was. NAFTA was a disaster for our country. The worst trade deal ever made, by far. They had typos in, okay? And they were supposed to correct them. And they never corrected them when they were signed. They knew there were typos. And there's a process for that. You state your claim and, you get a change. They had typos on percentages. Or maybe somebody wrote, and that was for years. They never ran, they had horrible, all against us. So it probably wasn't typos. NAFTA was the worst trade deal we ever had. USMCA did one thing that I loved. After 6 years, it comes up for renewal. I don't know that I'm going to renew it because, to be honest with you, the United States does much better. Hey, we don't need anything that Canada has. We don't need anything that Mexico has, but they need everything that we have. And they have to treat us better. With Mexico and Canada, we have trade deficits. We should have surpluses with them. We don't need their cars. We don't need their lumber. We don't need their energy. We don't need anything that they have. So the primary thing that I got, it was a much better deal than NAFTA. Much, much better. It was sort of a good deal, but it was a great deal for one reason. It gave the right to terminate, and who would have thought that I was, they just didn't want to have it during the 4-year period when I was president. So now they made it so that I wouldn't be president, and because they rigged the election, the second election, as you probably hear and probably know, most of you know that happened, and now it's been proven, and it will be proven as time goes by even more so. We have things that you won't believe. When we release the full files, you're not going to believe how crooked the 2020 election was. But who would have thought that it comes due in my term? This was, thank you very much. So it was very important that we be able to do that. So we're talking to them. We'll see if we do something.
Mr. President, just before we came in here, you posted about Bill Pulte and that he'd be starting the job early. You said he's going to be downsizing the DNI. Can you talk about your thinking
people
there?
have wanted that downsize for a long time. But many people don't want it at all.
Does that mean
a lot of people thought it was a
intelligence
duplication. Yeah, a lot of people thought it was a duplication. He's done a great job at Fannie Mae, and you take Freddie Mac, Fannie Mae. The value of that has increased so much since I've been in charge. I had the right to sell that. And in my first term, a group came to see me wanting to buy it, and they offered me exactly 10% of what it's worth today. And I didn't want to do it because I didn't want to look foolish when they flipped it a year later for hundreds of billions of dollars more. So I kept it. And I put him in charge as soon as I got here. And he's done an amazing job. Could be worth $1 trillion.
That's a pretty different portfolio, though.
Well, it is, I know. But, smart people are smart people. I always say I'd rather have smart than experience, but experience is good too. I would say this, he's going to be there for a short while we pick somebody else. We're interviewing 5 different people. They're all very good, very different, and we'll put somebody there. But people want it downsized. The senators and the Congress people, I think everybody wants it downsized, and many people, I think, and I won't speak for Todd, but and I'm not sure how Todd feels, but by the way, he's great. I hope you people have given him an easy run because he's very busy. He doesn't need stupid people saying, why didn't you get a higher mark at a certain college? Because he's highly educated. He was a great student. He's great at everything he's done. But how come he got a B+? See, they'll go after him for getting a B+ instead of an A, but the other guy can be a thug and let him run. He's okay. He's fine. The one thing about him, it's great, because every time they bring something up, he's worse than anybody that we've ever seen. And I hope the Republicans are going to use him as your standard bearer when they say that, gee, Eric, we don't like the way you dress today. It's unacceptable, right? And then all you have to do is point to this thug that they're trying to put in. So pretty much that's the way it is. He's going to do a good job. He's going to be there for a very short period of time. He will be superseded and replaced by somebody that's going to have the job permanently. Okay?
What do you think of the president? What do you think of Democrats saying they'll hold up the...
I don't care what they say. Democrats. They're not Democrats. They're Democrats. They're dumb people. Yeah.
Do you need their votes?
Then I guess something's going to happen. No, we can't let them extort us. I told the guys today, we can't let them. They've done it on numerous occasions. I said we can. What we're signing today has been amazing. But they tried to extort us, and eventually, and they were losing tremendous support because they're extorting on law and order, and they can't win on law and order. People want law and order. They don't want crime, and that's essentially what they were doing. And ultimately, they could not take the heat. But we can't let them extort.
Mr. President, it starts tomorrow.
What starts?
The World Cup.
Yeah.
Soccer World Cup, football.
Most successful World Cup they've ever had.
Exactly.
They've never sold tickets at that level. They've never sold that many tickets so quickly. It's amazing because you don't think of soccer. We use the word football, soccer, right? But you don't think of soccer in this country. It's the most successful. I spoke to Johnny this morning. He's fantastic, and he's the boss. He said there's never been anything close to what's happened.
But because of the success, some people are afraid that it's going to be harder and harder to get visas to come from outside. Can you reassure
we're working on it very closely to make sure the right people come into our country. I will. I will.
Are you concerned, Mr. President, about the latest inflation number which came out this morning? Could that be a
No, I love it. The numbers were great. You know what I really love? I love the inflation. You know why? Because as soon as this war is over, you know, I can say it now. Something you didn't know. You know, we've been taking out millions of barrels of oil. Nobody knows it. You know who doesn't know about it? Iran, until right now. We took out the other night 22 ships, late at night with no lights, because they don't have any radar, because we blasted the crap out of it. We took out, that's why oil's $85 a barrel. I mean, you take a look. Remember when I did this, I said, look, the one bad thing will be we hit the best economy we've ever hit. And I said to my people, I had Scott, I had Howard, I had Pete, I had all of them. I had Todd in the room. I said, the one thing we have to do now, we had just hit the highest stock market in history, highest 401ks in history. Everything was going well. And I said, I hate to do this to you guys, but Iran's going to have a nuclear weapon very soon. We have to go and attack. So we hit them with the B-2 bombers, which took a lot of courage. It was totally successful. We buried it, very hard to get. But now we had to make the second move. And I said, you know, the bad part is the stock market will go down by a lot based on predictions of experts, like 25%. And it was worth it. To me, it was worth it, not to have a nuclear weapon. And the other thing is that oil would go to $250 a barrel. It's at 85, and which is pretty amazing. And here's the key. We just hit today another stock market high. 74, in my short time here, 74 days we had stock market all-time historical highs. nobody can believe it. The Dow, the S&P. S&P was at 7,000. They said in 4 years, maybe 5 years. It will never hit it during the term. It was too much. I hit it in my first year. I hit on the Dow, it was 50,000 was an impossible number. They said 5, 6 years out, you'd hit. Well, I hit it in my first year. And now I get everyone in the room and say, congratulations, but now I'm gonna take it down a little bit because we cannot let Iran have a nuclear weapon. And they all agreed with me, Todd, you remember. Everybody agreed. And we took a little journey down to Iran. We first stopped off at Venezuela, by the way, and we have paid for that war many, many times over. And we have great relationships with the people of Venezuela. We get along with them great. It was a great success. It was a one-day war. It was really, to be exact, 48 minutes of fury, and it was over. And Venezuela is doing great. Relationships with the people are great. It's become a happy country, believe it or not. I mean, it's become a happy country. And we're taking out millions of barrels of oil from Venezuela. And then we went to Iran. And essentially, we've done the same thing. It doesn't look as pretty, but there's no Navy. 159 ships at the bottom of the sea. There's no Air Force. All of their planes are blown up. Most of their drones are gone. Most of their drone-making ability is gone. Most of their missiles are gone. All of their leadership is gone, so they replaced it. All of that leadership is gone, so they replaced it. And that's the people we're dealing with now. And I think they're going to want to make a deal, but we're going to find out.
Inflation to come down between now and
when the war is over?
Yes.
It's coming down.
I know you can't.
It's going to come down like a rock. And again, we're taking out millions, which I'm just announcing today for the first time. But we've been taking out millions of barrels of oil. Millions of barrels. Every night we took out oil. But now I'm going to tell you because they just figured it out. So now that they figured it out, I can tell you. It was very hard for me. I wanted to say it so badly, but I didn't want to ruin it. But it was very hard. But millions of barrels of oil has come out. And that's why it's at $85, $90 a barrel instead of $250. But we have the greatest military in the world, the toughest military in the world, just the best in every way. Nobody even close. There's no military that's even close. I rebuilt it during my first term. I'm using it now. When this conflict is over, Todd said, please call it a conflict, right? As opposed to the word war. He didn't like the word war, but it's sort of a conflict. It's a military operation. When it's over, you will see oil drop to where it was before. We were getting gasoline. Just before it started, I was in Iowa, and we passed gas stations, $1.85 a gallon. And we'll be back at those levels very soon. Thank you very much, everybody.
Thank you, Russ. Thank you, guys. Thank you, guys.
All right, President Trump live at the White House there on Bloomberg Radio. Thanks for joining us here on the Wednesday edition of Balance of Power. The president making a lot of news and generating a lot of headlines in what was, in fact, a signing ceremony for, in fact, the president's just now. If you're with us on YouTube, you can see he's putting Sharpie to paper the Secure America Act. This is the $70 billion that was passed through reconciliation. And there you have a big round of applause from leaders on both sides of the Capitol. I won't say the aisle. This is a Republican celebration here. Both chambers, Senate and House, helping the president celebrate this moment. Is he making more news, James? Are we done? Looks like we're done. All right, press is being ushered out of the Oval Office. We wanted to make sure we spent some time listening to the president here, who just said we have been taking out millions of barrels of oil. Announcing it, he says, for the first time because Iran, quote, just figured it out, unquote. They just figured it out, so now that they figured it out, I can tell you. Spending time each night taking out millions of barrels of oil through the Strait. Interesting. President talked about quite a bit here and suggesting that we are potentially on the verge of a peace deal still, but saying as well that the resumption of military activity is in the offing. The president saying we will be attacking Iran hard. He was asked as well about the inflation data this morning, and you're going to be hearing this played back more than once. The president saying the inflation numbers were great. I love the inflation. He was making a point that he loves seeing these numbers, I guess, because they will soon be coming down once the war with Iran is over. Taken out of context, those remarks could be potent. Want to spend some time, and we're going to connect with Tyler Kendall at the White House in just a moment. But Becca Wasser joins us right now for more on what we're hearing about and learning about when it comes to the war with Iran. She is our, of course, lead defense analyst at Bloomberg Economics. And Becca, it's great to see you. We still don't know what hitting hard means, do we?
No, we don't. And we don't know whether he is going to hit at all.
Okay.
But if we are thinking about what the range of options are, we've seen these continued self-defense strikes that seem to be against proportionate targets. Reportedly things like air defense systems, ground control stations that are needed to help with some of the drone attacks. Those are the types of things that we've already seen. He also said that it was going to be a very powerful attack last night. And it was largely after those same target sets. But if you wanted to expand it out to something else and hit hard, there could be an expansion to more basic civilian infrastructure, whether that is communication nodes, energy infrastructure, going after some of that energy infrastructure on Karg Island, like in some of the earlier days of the ongoing conflict. There's a whole wide range of options. But I think the bigger question is he actually going to strike? You said it best. Are we on the verge of a deal, or are we on the verge of more strikes? And we're in this limbo once again.
What do you make of the idea of moving millions of barrels of oil through the Strait? This is something that Bloomberg Economics has been watching very closely. What do we actually know?
Well, I'm old enough to remember Project Freedom, which was the one-day effort that the U.S. military had to try and escort ships through the Strait and get them out so that they could alleviate some of the pain on the global economy.
Even 24 hours, I think.
Yeah, it was less than that, and in part because it led to an exchange of fire in the Strait of Hormuz that risked the very, very fragile ceasefire at that time, because this was much earlier in the ceasefire. I think what we've seen now is this a little bit more less fanfare effort to try and provide guidance through the Strait by basic communication with ships who have their transponders turned off, as well as overwatch by U.S. aircraft, helicopters, drones, to try and ensure that those ships were moving safely. And I think that has been a quiet effort that's been ongoing and has, according to the president, at least had some success.
Wow. And is this every night? Or when he says millions, do we have any idea how to further quantify that?
I don't have any specific figures, but if he says every night, my guess is it probably is every night, because it's probably in dribs and drabs. You're not going to have a convoy of 5 or 10 ships moving all at once. That's a little bit too obvious. So it's probably like a 1 ship, 2 ship, and so slowly over time, that can definitely have an impact. You know, does it reach the level that he says? I don't quite know.
That's fascinating. And to suggest that he can now announce this because Iran finally figured it out? Do we know what he's referring to?
I don't know what he's referring to exactly there, but I do wonder if it is somewhat related to the incident that we saw yesterday with the Apache, which perhaps was maybe doing some basic patrols, perhaps was providing overwatch for one of those ships, and then there was the incident with the Iranian drone, which reportedly went up on the canopy of the Apache helicopter and ended up in the cockpit between the 2 pilots.
Wow. Absolutely incredible stuff, Becca. Thank you. In the clutch, as always, Becca Wasser at Bloomberg Economics. Before we get to Tyler on the North Lawn, let's go back to what the president just said about his intentions with Iran. Listen.
We're going to be attacking them very hard.
You're resuming bombing?
Yeah, well, we are. Based on the helicopter, I guess we have the right to do that.
Based on the helicopter, referring again to that Apache that went down just about, 24 hours, maybe a little bit more than that, and resumed the exchange of fire between the U.S. and Iran. Tyler is out on the North Lawn right now, having just heard from the president in the Oval Office. Tyler, we're moving millions of barrels through the Strait. It sounds like every night, according to the president, or maybe it's millions in total. Do we know any more about this?
No, Joe, at this point, that's the president's comments, as we know that this White House has been trying to prioritize making sure that oil can flow to the market and get the Strait of Hormuz reopened. But there was just so much accompanied inside of President Trump's remarks there, but perhaps most notably is that there is still this huge risk of escalation on the table. And the president didn't seem to rule out that that risk could extend to hitting Iranian infrastructure and energy sites as well, depending on if Iran comes to the table in perhaps a more meaningful way. So a lot of developments to track here. The president telling reporters, in part, quote, "I'm not going to say that to you, but I could do that," in reference to what those military strikes could ultimately look like.
Really something. We should check oil prices here, Tyler, because they are kicking higher. And of course, we've seen triple digits. New York crude, though, WTI is back above $90. It's $91 a barrel, up 3%. Brent's up about 3% as well to almost 94. Asked about the inflation numbers, Tyler. That was really something. And I can just imagine the Democratic operatives who are making ads out of this right now. The inflation numbers were great. I love the inflation. What did he mean?
Well, he then went on, it felt like, to come around on those comments, and he said that inflation will come down once the conflict subsides. So perhaps he did realize after he said that the inflation numbers were great, after today's data showed us that inflation accelerated in May to the fastest pace in more than 3 years, driven in large part by those price spikes related to the conflict in Iran and outstripping Americans' pay gains, according to the data earlier this morning. Of course, as you well know, this has become a political issue. The conflict in Iran, it dovetails foreign policy and domestic policy, as the economy and affordability remains Americans' top focus. Even before the conflict in Iran started, we were talking so much about the word affordability. And this White House has repeatedly tried to deploy measures to help bring down prices. Perhaps the one that they've yet to tap yet is that federal gas tax holiday that we know had been floated. Instead, the administration has really urged Americans' patience, saying that it will be worth it in order to ensure a future of Iran without a nuclear weapon. But it does appear that the White House's patience at this point is wearing very thin in order to announce such a deal that would encapsulate that end goal for this president. And perhaps that's behind some of the rhetoric that we're getting out of this White House today.
Got it. Tyler, in our last moment here, I've got to ask you about FISA 702 set to expire Friday. The president weighing in on Truth Social. He's been busy typing today, making it clear that Bill Pulte will start June 19th, but he's actively looking for a permanent nominee. Are we going to get a short-term solution? Is that what he's asking leaders for?
It feels like it, right, Joe? And it is our understanding that House Speaker Mike Johnson was here again at the White House today to help further these discussions. That is how down to the wire it is becoming. We know that Section 702 under FISA does expire this Friday. You heard President Trump in that post on Truth Social reiterate the urgency here, particularly as the U.S. faces a whole slew of high-profile events like the 250th anniversary this summer. He'd like to see it done before then.
Can almost see the claw over Tyler's head. Almost. Tyler, thank you. Busy day at the White House, and we'll check back with Tyler Kendall later in the program. I'm Joe Matthew in Washington. We'll turn to primary night next. The president had a lot to say about Graham Plattner. This is Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks very much in the red. We've got the VIX back above 22. The SOX is selling off and oil is climbing. Oil back right around $91 a barrel as President Trump said the U.S. will resume attacking Iran, quote, very hard, following renewed strikes overnight. Right now, West Texas Intermediate crude, $90.79 a barrel. It is advancing by almost 3%. Brent, the global benchmark at $93.81, up by 2.6%. Equities lower again with the S&P 500 index down 70 to 73.16, a drop now of 1%. The Dow is off by 605 points, down 1.2%. The Nasdaq Composite Index down 332 for Nasdaq. That is a drop now of 1.3%. We are seeing another sell-off in the world's biggest tech companies. That means the Nasdaq 100 index is lower, down 1.3%. It also means that the Bloomberg Mag 7 index is trading down by 1.4%. Again, the SOX lower by 2.7%. The 10-year, 4.52%. The 2-year, 4.12%. And the 30-year, 5.00%. Gold is down 3%, $41.32 the ounce. And again, West Texas Intermediate crude up 3.1%, $90.92 a barrel. Super Microcomputer is plunging after saying it plans to raise $7 billion through a package of equity offerings to buy the components needed to fulfill customers' orders for the company's artificial intelligence services. Right now, the stock is down by 17.9%. After earnings, Chewy up 0.1%. The big tech event after the close of trading will be earnings out of Oracle. Oracle shares right now down by about 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe Matthew, that is a Bloomberg Business Flash.
All right, my friend. Thank you, Charlie Pellet. We'll have more on the markets in about 20 minutes' time here. That's the way we do it every day on Balance of Power, as we connect the dots between policy and the investment decisions you are making. Big wind-up, all leading us to the SpaceX IPO on Friday, and we'll be talking a lot more about that. The FAA is launching an investigation into the Arch, the Arc de Trump, whatever you want to call the triumphal arch, as the paperwork refers to it. That's going to, I guess, be built over there in front of Arlington National Cemetery. It's in the big rotary there on the other side of Memorial Bridge. You've heard about this, the 250-foot tall arch, not the claw that you're looking at on YouTube, but the arch that they have yet to build. And apparently they are gearing up for quite the project here. Amazing details in this reporting. National Park Service documents showing a very aggressive schedule here for the project. The administration wants to have construction underway for 20 hours a day, year-round, until it's done. The timeline, by the way, this would involve 2 daily 10-hour shifts, making it difficult to find a firm that can promise to do this. Here's the thing, though. This would require massive cranes. The arch is 250 feet tall. So you're going to have one crane at 300 feet and another at 320 feet. If you've ever flown into Washington here in a national airport, you go right over that thing. You're going to have a 320-foot crane there, knowing that aircraft fly around 500 feet on their way in and out of the airport, because that's right on the edge of the airport there. I mean, the airport's right there. The FAA says it's now reviewing whether the planned height would present risks to planes flying in and out of the D.C. area, concluding in a preliminary report that it would at least need blinking red lights on top of the archway. Would those go on top of the angels? Maybe if they held like a big torch or something, Statue of Liberty style, the planes would see it. By the way, it's going to be made out of concrete, clad in granite, unlike all the other monuments around here built with natural stone. That's the vision Donald Trump has. They hope to have it finished before he's out of office. Graham Plattner has a vision as well. As a United States Senator, he got 72%. Did you see this? We got to go through the primary results here, and I want to start with Maine, because we spent so much time talking about this going into it. This is the progressive oysterman. I'm supposed to call, he's an oyster. And you know all about the scandals and all about the baggage. The ads are already running. They're doing the Reddit posts. The New York Times already did its deal on Plattner. He's still got 72% of the vote to 20% for Governor Janet Mills, who, of course, dropped out of the race. What does that tell us about the general? That's the question that everyone is asking this morning as Plattner laid out in his victory speech last evening, taking it back. Listen.
We will take back this Senate seat. We will take back our power.
Yeah, we're going to find out with the help of Brooke Sutherland. Our bureau chief in Boston is back with us right now, high atop the financial district in the great city. Brooke, how did he do it despite all of the bad news? And what do these results portend for the general election?
Sure. I mean, this was a strong showing for Graham Plattner. And, you know, again, we had our reporter, Greg Ryan, on the ground in Maine talking to people. And overwhelmingly, the sentiment that he got is, you know, while people had some concerns about some of the reports and the controversies in his past, they were willing to give him credit for being transparent about them and holding himself accountable. And they also care very deeply about beating Susan Collins and replacing her in the Senate with a Democrat. And so I think given that, there was a really strong showing of support for Graham Plattner. Now, on the other hand, that 20% that Mills got is higher than what she was pulling at before that New York Times report about some of his ex-girlfriends finding his behavior disturbing. I also want to point out that David Costello, who we have really not talked about at all in this race, ended up coming in at 8%, which was well above what any poll showed pretty much ever over the course of this campaign. And so there is a protest vote there. And I think that underscores that Plattner still does have some work cut out for him to convince people in Maine that he is the right person for this job and that these controversies are not disqualifying. He really focused on that in his victory speech, just, you know, talking about all of the stories that have come out and pitching this story of redemption. And I think we're going to see that theme continue to be top of mind for him.
I'm glad this is why we wanted to talk to you, Brooke, because I wanted you to read into that 20% and, for that matter, the 8%. Now, you had Ro Khanna up there last weekend as kind of the closer, the big shot surrogate in from California. What's the party prepared to do for Graham Plattner, aside from spend a lot of money? Are we going to see lawmakers, you know, potentially mortgage their reputations by endorsing him?
You know, we did see posts from Elizabeth Warren and Bernie Sanders last night, both of whom had endorsed Plattner, congratulating him. They, by all accounts, are standing by him. And, you know, this was a race that Democrats really considered to be a must-win if they're going to have a shot at retaking the Senate in the midterms. And so I do think you're going to see them spend on this. You're going to have to see surrogates show up and campaign because it's really, really crucial for their hopes. I mean, if you look at sort of the broader election map, if you take Maine off the table, it gets a lot harder for Democrats. And so whatever the concerns are, I do think you're going to start to see more Democrats line up behind Plattner, just given how crucial this race is. And, you know, perhaps talk to him a bit more about this and you know, listen to that message of redemption that he's pitching and see if that's something that they believe in.
Yeah. How much did he refer to it in the victory speech, if at all, last night?
Not directly, but it came up quite a bit. I mean, he wasn't ducking it. He was making comments about it. And, you know, one of the comments that really stuck with me is, you know, all of the political pundits and political establishment pointing out these controversies in his past. But he said, this campaign is not really about me. It is about us. And so what he's done in Maine is really target people's anxiety about rising costs and their frustrations with the political establishment for not doing what these people think they should be doing to really solve these problems. And so he's tapped into that. And I think people do believe him when he talks about wanting to get universal health care, wanting to raise taxes on the rich. And ultimately, I do think that message is breaking through for people more than some of these controversies.
That's great. Brooke, it's been great comparing notes with you this week. Can we get Brooke all the time now? Is that... James said, yeah, we can do that.
There's more elections to come.
Right.
So.
Yeah, well, let's hang out. We're doing this primary season together, Brooke. It's great to have you, our Boston bureau chief. I just imagine walking out of Bloomberg's beautiful Boston bureau, walking past South Station over to James Hook for a lobster roll. Man, that would be really good today, wouldn't it? So we go back to the inflation story here. Normally I would, you know, dial up Stuart and ask him what he thinks about the numbers, but the president just dropped a whole piano on the data here. You're going to be hearing about this all day today. He was at a signing ceremony, it was a completely unrelated event, but a reporter asked him about the inflation data because, you know, for most people, it's not great. 4%, four handle for the first time in 3 years in May, 4.2% consumer price index, up from 3.8% in April, going in the wrong direction here. And a lot of it, of course, has to do with energy. But the third consecutive month that we've seen Iran bump prices higher. So let's go back about a half an hour ago in the Oval Office and listen to this exchange, because you're going to be seeing this in campaign ads for the rest of the cycle. Listen.
Are you concerned, Mr. President, about the latest inflation number which came out this morning? Could that be a
No, I love it. The numbers were great. You know what I really love? I love the inflation.
I love the inflation. He said separately the numbers were great and went on to talk about how they're going to come down. And I think that was the point of this. I love that seeing this now because they're about to come crashing down when the war with Iran ends. But look, they don't put things in context usually in political ads. So let's get the truth on the data in a couple of minutes that we do have with Stuart Paul. He's, of course, the U.S. economist at Bloomberg Economics, and he's with us live from New York. You see a four handle coming? This was the expectation, right, Stuart?
Yeah, four handle for the headline was the expectation, where the numbers were actually a little bit better than I anticipated. It was actually in the core. It looks like core goods prices are turning over, and I think that that's probably what the president was pointing to. I will say, I think there are probably only 3 rules in politics. You'll know more than me. The third rail is Social Security. Never let them see you in a funny hat, and definitely do not say you like inflation, because the American people certainly don't. But if there is anything that the president might like in today's numbers, it's that for the tariff man himself to see core goods prices starting to turn over, it does suggest that the breadth of inflation really just isn't there. There's really just cost push factors that are driving up the headline number. Frankly, for the Fed, that just means that they can sit on their hands for a little bit longer.
If they knew what they were doing, and I wouldn't put it past them, and the press office of the White House, they ought to be tweeting this video of Stuart Paul right now. This is the best context you're ever going to get on what the president actually meant. Stuart, we've got a minute left. Crude oil prices are bumping higher again. Gas prices have been actually trending lower recently. What's the next CPI report going to look like? And what's the Fed going to do with all this data?
The bottom line is basically that you need to see 0.3% or higher month-on-month headline inflation for year-on-year headline inflation to stay above 4. So if we see continual fading of gasoline prices, as we saw throughout the first week of June, it will mean that we'll lose that 4 handle in the next couple of months, and that'll be a necessary condition for the Fed to move, frankly, in either direction.
I'm really glad you could stop by. So don't wear a funny hat, don't love inflation. What was the other one? You had 3 rules.
Social Security, it's the third rail.
Oh, yeah, the third rail. Okay, see, Stuart could run a campaign. Do more than economics, Stuart. From Bloomberg Economics, Stuart Paul, thank you, sir. We'll assemble our political panel next here on Bloomberg Radio.
1240 on Wall Street. We do check markets all day long here at Bloomberg. Another day of selling for the U.S. stock market with the Dow, the S&P, NASDAQ all in the red. World's largest tech companies declining again today. 1% drop right now for NASDAQ, down 260 points. The NASDAQ 100 index also down by 1%. S&P keeping it all in context at 73.33, down by 52 points now, a drop there of 0.7%. Dow Industrials down 533 on the Dow, a drop of 1%. The Bloomberg Mag 7 index lower by 1.2%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, hit hard, down 2.1%. All of this with the VIX just above 21, a 10-year at 4.53%, the 2-year 4.12%, and the 30-year at 5.00%. Gold is down $133 the ounce. Spot gold down 3.1%, $41.27 the ounce, while West Texas Intermediate crude is advancing up 3.2%. WTI at $91.06 a barrel. Brent, 93.98 now, up by 2.8%. As for the energy backdrop and the U.S. election, David Kelly is Chief Global Strategist at JP Morgan Asset Management, and he was a guest this morning on Surveillance.
Eventually, if gasoline prices started going up again, we were moving closer and closer to midterm elections. I expect that the issue of nuclear and the issue of Hormuz will be separated. And once that happens, and you actually negotiate also about trying to get stuff in and out of Hormuz, then a deal will be made.
JP Morgan's David Kelly interviewed on Surveillance. Meanwhile, beef prices have hit a fresh record. Hopes for consumer relief are fading as drought and the reemergence of a deadly cattle parasite keep the U.S. herd smaller for longer. The Bureau of Labor Statistics says U.S. consumers on average paid just over $7 for a pound of ground beef in May, slightly higher than the previous month, but up 13% from a year earlier. And President Trump has turned into an M&A enthusiast with a surprise shout-out for Citigroup CEO Jane Fraser. In a post on Truth Social, Trump touted a metric that is cherished by investment bankers, congratulating Citigroup for its position as the top advisors on M&A. It's unclear, however, what league table the president is relying on to put Citi in the leading position. The presidential proclamation comes as a surprise for Goldman Sachs, whose executives have been touting their major lead in merger advisory rankings. Recapping, S&P 500 index down 0.9%. West Texas Intermediate crude 91.03 a barrel, up now by 3.2%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
I appreciate that, Charlie. Citi shares are slightly lower here, down 0.5%. He called her Jane F. in the post, which was curious. The president's been posting a lot today, and he just spent quite a bit of time talking with reporters as well in the Oval Office because it is now law. Reconciliation. They got it over the line, and the president just signed it with the Sharpie on the Resolute desk. $70 billion for immigration enforcement. This is ICE, right? Paid off for 3 years now. The president doesn't have to come back around on this. And you better believe the Democrats are a little sore about it, which is why the last 48 hours or so we're starting to hear already about the prospect of a government shutdown this fall, because, you know, it's an election season. This usually you kick the can to get it past November before you get a real budget deal. And there are some speculating now on what Chuck Schumer is going to do and maybe direct members to oppose any funding patch or CR, depending on what form this takes. Just park that. Nobody's predicting shutdowns yet. Just park that, because you better believe we're going to come back around to it. We have to deal with FISA first, and the president's starting to lean in today. He actually wrote something on Truth Social knowing that Mike Johnson was in the Oval Office yesterday because they can't get the votes to extend FISA 702 as long as Bill Pulte is holding the keys here for our intelligence community. If you've been following this story, you know all about it. He's been named the acting director of national intelligence. This is the guy who runs Fannie and Freddie and FHFA. No intelligence experience. So even some Republicans are saying, come on, you got to give us more than that. If we're going to get the votes to pass FISA, we need a name for a permanent DNI. And so just like that this morning on Truth Social, the president says, I have named William Pulte to be acting director of national intelligence, who will take over June 19th. That's news. and have asked him to execute the immediate and needed downsizing of the office, confirming reports, reverting staff to their home agencies. He says, at the same time, I'm looking for a permanent ODNI nominee with experience in national security. FISA 702, he writes, is very important to our military, keeping the American people safe, especially during World Cup and American 250. If nothing is done, this important law will expire this week. So here's the second bit of news. I am asking Congress to send me a short-term extension of FISA to provide time for the selection and confirmation of a permanent head of the agency. So we don't have a name, but we do have the intention of announcing one, and that is where we want to start our conversation with our political panel. We've got a good one for you today. Rick Davis is back, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital, joined today by Matt Robeson, joining our conversation for the first time, former campaign manager, Democratic strategist. Matt, it's great to see you, and welcome to Balance of Power. I'm not sure where either of your heads are on this, so let's start with FISA. Rick, will it expire on Friday?
Yeah, I think it has a great potential to expire. The last time the Senate took a vote on this, 7 Republicans joined Democrats to vote against an extension. So if you start with the assumption that you have 7 angry Republicans, you don't even start the process of thinking which Democrats you need to get to 60. So I got to believe Thune's looking at this as a real puzzle. And how am I going to get 60 votes for a temporary extension with no promise for who the future DNI is going to be?
Right. What do you think about this, Matt? What do Democrats need? Even if the president presented a name today, would it matter? Would it make a difference?
It probably wouldn't. He'd have to name a permanent replacement. I mean, the issue, I agree with Rick, the issue for the president here is that he's alienated so many Senate Republicans. He's burned a lot of goodwill with Tom Tillis, John Cornyn, Bill Cassidy. He told Lisa Murkowski that she doesn't deserve to win re-election, and he just made vulnerable Republicans walk the plank on the immigration reconciliation vote. Not exactly a popular topic among the general public. ICE these days. The other issue that you have here from the Democrats' perspective is this goes right to the heart of affordability, which is the #1 campaign issue that we're bringing into the midterms. Don't forget that the median home price these days is a little over $400,000 against a national median income of a little over $100,000. So housing is completely unaffordable. Bill Pulte has a day job, and he's supposed to be the guy in the Trump administration who's fixing that. So Democrats have every incentive to try to make hay out of their #1 campaign issue.
Well, that's an interesting connecting of the dots. He's keeping his day job, if we're going to call it that, Rick, as director of federal housing. Would it make you more comfortable if he got a fill-in? Like, I mean, of all jobs to be balancing at the same time as DNI, does that give you heartburn on its own?
Yeah, Matt did a really good job of connecting the DNI's job to housing issues and affordability. So kudos to you, Matt. I haven't heard a Democrat actually stick the message in a long time. Well done. Yeah, look, I mean, I think it's more not likely to, get to the point where voters are, scratching their head going, so I don't get it. What's Pulte going to do? Walk into the CIA and offer everybody their 30-year fixed rate? I mean, I don't think people are really thinking this one through with all the other things that are going on, including today's headline about inflation. It's a confusing issue to anybody outside the Beltway, but it is the #1 issue inside the Beltway. And so I do think this is mostly a Beltway issue. When you start talking about jobs, I mean, look, everybody in the Trump administration has 3 jobs. That shouldn't surprise anyone. This one is extreme, but it is not unusual. And so whether or not this can transcend to the point of being one of many political issues Democrats want to step out on, I think it's a nice talking point. Matt framed it really well, but I don't think it's going to really penetrate much.
Really interesting. I don't know if the president's got Susan Collins on his side here, but he actually said nice things about her in the Oval Office a little while ago, knowing that we had this primary last evening in Maine. Matt, the president has spent years criticizing Susan Collins and calling her a rhino, but said today she has my support because she's a sane woman. She's not my best friend, but she's sane and a respected person. A little different ideology than me, but this guy, Plattner, he said, is a thug and a bad person. Plattner won the nomination with 72% of the vote, but the governor who dropped out of that race still got 20%. Another candidate got 8%. And I'm wondering your feelings about this today, Matt, about how this general election is going to shape up. Does Plattner look weaker or stronger than you thought following last night?
I think he looks about as strong as I expected him to be. And I think the real issue going on here, actually, Rick framed it very well on your show yesterday, that this is really all about the fundamentals. You know, Maine is the linchpin in the fight for Senate control. That's why the president gave that statement today with all the authenticity of a hostage video. As the NRSC, the National Republican Senatorial Committee, said in its post-primary memo this morning, it's a fatal mistake to assume that Plattner is too damaged to win. We've seen this reflected in prediction markets, on Polymarket. He was still at 64% likelihood to win as of this morning after a dip following the scandals of recent days. But, you know, you look at those fundamentals across the country. Plattner himself is at +7 in polling averages. 2/3 of Mainers tell pollsters that they don't think that Collins deserves re-election. That includes a majority of Republicans. Ouch. And Democrats now have a 7-point lead on the generic ballot. I think the major thing, and I'd be very curious to see what Rick thinks about this, is there's a winning playbook that I've had to run myself as a campaign manager in New England over the years against moderate Republicans. Collins really is a rhino, both literally and figuratively. She's the last New England moderate Republican of her kind. I ran this kind of race in 2012 when I was running a congressional reelect against the most moderate of moderate Republicans, and we were able to tie him to Tea Party Republicans at the time. Nowadays, they've replaced the T with Trump, but that's the playbook that I expect Plattner to be able to effectively run. And as hard-hitting and effective as the ads are that Republicans are now putting on the air, highlighting some of Plattner's very problematic statements and behavior from the past, it's up against this tsunami of baseline fundamentals.
What race was that in 12? Did you mention? I'm just curious to know who's the moderate Republican.
We were running against Richard Tassay, the former lieutenant governor under Mitt Romney.
Wow,
a gay Republican.
That was your campaign. Wow. All right, I need to talk to you offline about that. That's
an even more scandal-tarred Democrat. Yes, than Plattner.
Tassay.
So I've been there.
I'm gonna. Okay. So Rick, I want your thoughts on this. He had a sign behind a Plattner last night in Maine that read, "They don't know Maine." This outsider approach with 72% tells you what about his chances in the general?
You know, it's interesting. I mean, I think all of this is really overtaken by a national narrative. As much as that hurt Susan Collins, this election is as much about Trump as it is about Plattner. I think this falls into the category if Plattner took a vacation to the Caribbean between now and November and didn't show up again until Election Day, he'd stand the best chance of winning because he can only get in his own way, right? The Collins campaign will use the age-old technique. You think I'm unpopular? Wait till we see what we do to you. And she's going to have to just drive his negatives down below where she is. But she's caught in this wedge. Matt alluded to it. You know, when you ask voters in Maine, Republican voters, she has two problems. One, sometimes she's too popular with, or she supports Trump too many times. And on the other hand, she doesn't support Trump enough. So she's caught in this sort of MAGA wedge, you know, within the Republican coalition itself. So motivating them, making sure that she's seen as independent with independent voters is all going to be a really heavy lift for the senator. At the same time, really driving Plattner's numbers down. And of course, he's done a lot to help her with that over the last month. Again, I mean, there's very little Plattner can do to improve that.
Rick, we've only got a minute left. I just want your thoughts quickly on Nancy Mace, who was dispatched last evening in a primary for governor of South Carolina. She and, by the way, another Republican member of Congress named Ralph Norman was also ousted. He came in third. Kevin McCarthy told the Washington Post, "The only thing I hope is she gets the help she needs," talking about Nancy Mace, saying he watched her political and personal life unravel in recent years. Rick, is her political career over?
Yeah, I think there's a real retooling. I mean, just consider the amazing speed to which her entire career has fallen apart. this rising star in the low country of South Carolina crashes and burns on this election. Yeah, there is a hope that she is able to get some time and figure it out.
Wow, remarkable stuff, Rick. Thank you. Matt Robeson is with us today, and our great panel will be back in our second hour. Thank you, Matt and Rick. We've got a big one for you. Nikki Haley is coming in studio next on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says we will be attacking Iran very hard. Welcome to the Wednesday edition. As the U.S. and Iran trade fire once again, with Trump now saying that the regime has taken too long to negotiate a peace deal. I'm Joe Matthew alongside Kaylee Lines in Washington. Kaylee, the president also telling reporters that we've begun taking millions of barrels out of the Strait of Hormuz every night.
Yeah, every night, he says Iran is just now becoming aware of that. We don't know exactly what the president means by that. We also don't know what exactly the U.S. is planning to target, as when questioned by reporters, the president would not get specific whether or not he would be looking at things like power plants, for example. But of course, these strikes that President Trump is now seeming to promise follow the strikes we already saw conducted yesterday in retaliation or response. The military calls it self-defense after that Apache helicopter was downed over the strait.
Still technically in a ceasefire, although he didn't delineate that. We're also trying to chase down what he meant with regard to those barrels of oil going through the strait every night. It's not keeping oil prices lower. We've actually got New York crude and Brent both slightly higher today, and another tough run for stocks here on a CPI day that the president also weighed in on.
Yeah, 4.2% on the headline inflationary figures year over year, the highest we have seen going back 3 years, and yet the president says those numbers are great. He said, and I quote, "I love the inflation."
Right. That was a strange moment that's going to likely end up in a lot of campaign ads. We'll put some context around that. We believe he might have been referring to the core, which came in a little bit cooler than expected. Either way, we have a lot to talk about, Kaylee, with Nikki Haley, who is with us in person today in Washington.
Yep, the former ambassador to the UN, former governor of South Carolina, will be here in just a moment, right after we get a check on these markets on the CPI day. For that, we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much indeed. Lots of cross currents moving stocks today, and let me hit on quite a few because we got the Dow, the S&P, NASDAQ, all in the red. Yes, geopolitics, major factor here as West Texas Intermediate crude hovers around $91 a barrel. It is up right now by 3%. Barrel of Brent, $93.82, up by 2.6%. We're also looking at a sell-off in tech names. The S&P, let's begin there as a baseline. The S&P 500 index down 1%, down 70 now. Dow Industrials down 618, down 1.2%. But in tech, NASDAQ down 1.3%. The NASDAQ 100 index down 1.4%. The sell-off in semis continues. The SOX right now is down 2.9%. The SOX, the Philadelphia Stock Exchange Semiconductor Index. All of this with the VIX holding above 21, a 10-year at 4.53%, the 2-year 4.12%, and the 30-year 5.01%. Gold down 3.2%, 41.23 the ounce, and again, West Texas Intermediate crude just below $91 a barrel, up now by 3.1%. Shares of several large trucking companies are plunging after Amazon announced an expansion of its shipping service that has already shaken the transportation and logistics sector and unsettled investors. Amazon is down 2.1%, but among some of those trucking names, we do have shares of Old Dominion. They are declining now by 5.7%. Saia is down 3.7%, and FedEx Freight recently went public. It is down today by 5.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, outlining it for us perfectly. Thank you so much. Oil prices higher, stocks being dragged down as we look to what seems to be an escalating situation in the Middle East after the U.S. already conducted strikes against Iran yesterday in retaliation for the downed Apache helicopter over the Strait of Hormuz. President Trump saying that more attacks are on their way. This was the president in the Oval Office earlier today.
We hit them hard yesterday, and we're going to hit them again hard today, in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers because you know what? They dealt with some very stupid presidents.
Tapping us along, as the president made clear on Truth Social, that the regime is simply taking too much time in negotiations. And this is where we start our conversation with an important voice in foreign policy and in domestic politics. That would be Nikki Haley, the former ambassador to the United Nations, former governor of South Carolina, chair at Hudson Institute, founder of Stand for America, the advocacy group. It's wonderful to have you with us, Ambassador. Thanks for joining us today on Bloomberg. What are your thoughts then about this active conversation right now? Is this the only recourse at the moment to gain more leverage, to hasten an agreement with more strikes?
First of all, I think you always have to look at what your adversary is thinking. Mm-hmm. For them, they're not looking to win, they're looking to survive. So there's a difference. What they think is if they can put enough political pressure on this administration, if they can put enough economic pressure on this administration, they think the U.S. will cave to a weak deal. This is the same playbook Iran has always done. They stall, they start talking, they make you think you're going to get a deal, they throw cold water on it, and all the while, They're strategizing, they're rearming, they're getting ready for the next conflict. Iran was never going to do a deal. They are never going to get rid of their nuclear ambitions. That's their number one priority. Now they've actually found more leverage with the Strait of Hormuz. And so they don't want to go back to what it was pre-war. They now want to have sovereignty over the strait. They want to make sure that they have the threat of nuclear ambition, and they're going to continue to do that. So I think Trump was right to strike yesterday, but the idea of a deal, that's just not in their cards. One of the surprising things that's not talked about, they have excavated 50 of the 69 tunnels that hold missiles. They're rearming. Now, that's not enough. We've weakened Iran tremendously, but it shows you how they think.
Well, so if Iran is never going to make a deal, and the U.S. is now obviously bogged down in the Middle East for some time in the absence of one, are we coming out on the losing side of this, Ambassador?
No, the only option is to win. Trump has to finish what he started. And the key is stop waiting for a deal, finish it. They're very weak. But what you have to do is go after their finances. What has not, and what the administration should do, is go after Russia and China. Russia right now is providing them drones. China says they want this hostility to end, yet they are providing them man pads for air defense systems. They provided satellite imagery so that you can hit our military bases. If you go after those two, they're providing money. If you go after those two, that's going to take away Iran's ability to help. The second thing is you do have to acknowledge Kharg Island is where they get their revenues from. And at some point, that's going to have to be addressed. But what they're doing is they're creating a distraction. You know, what they've said is, well, Israel is hitting Lebanon. No, Israel's hitting Hezbollah, the terrorist regime in Lebanon. The Lebanese people don't like Hezbollah. And so the key is Iran's going to keep making excuses. They're going to keep creating distractions. At the end of the day, they just want to survive. They just want to make it another day.
Well, you just said a lot, and we need to unpack that. So, the United States seizes Kharg Island. That would involve troops, as we understand, in an operation that could bring some risk, but would have, the point you're making, a very direct impact on the economy in Iran. When you say go after China and Russia, is that sanctions?
Yes.
Because we find repeatedly that sanctions don't change behavior with these two.
You have to truly hold them accountable. You have to make sure that they feel the pain. You know, and a lot of that is a lot of the oil that China would buy from Iran, they wouldn't pay Iran directly. They'd do it through shadow accounts through the UAE. You have to go to UAE and say, look, we're working well together. You can't keep helping China help Iran. All of these adversarial things, those are the ones you go after. The point is, if you take your money away from Iran, they can't build nuclear production. They can't mine the strait. They can't fund Hezbollah, Hamas, and the Houthis. You know, right now, Iran's talking about now starting to hit Israeli boats in the Red Sea. They're not stopping. Their intention is to keep being aggressive so that they can get what they want, which is sanction relief, to unfreeze the assets, and to try and get the country to see them as someone they need to be dealt with.
Well, as if they heard you, Ambassador, the U.S. just announced sanctions on quote-unquote clandestine banking in China linked to Iran, sanctioning some Chinese and Hong Kong-based individuals. So perhaps that would be a start to what you're getting at here. But I want to go back to something else you mentioned, that's Lebanon and Israel's conduct there. Your point is well understood that it's Hezbollah that they're targeting, but obviously there has been a lot of associated collateral damage. And I wonder if you view Israel as now being actually a very complicating factor in the path forward, if Israel's desires and objectives are diverging from ours.
The U.S. partnering with Israel and what they did to really bring Iran to its knees was so important and so helpful for the national security of the U.S., of Israel, and of the West. So very important that that happened. Israel has to defend itself. But think, just since the April ceasefire, what you've had is the Hezbollah has struck northern Israel over 2,000 times with rockets and drones. What country would put up with that? What country would allow that? So it's not that Israel was doing this, it's Hezbollah. So Iran is trying to make this gray by saying, oh, they're hitting Lebanon. This is not the case. Lebanon is not the issue. It is Hezbollah that's the issue. And you can't let this terrorist activity that is associated with Iran continue. And I think that the U.S. and Israel are partners. I think that while Netanyahu and Trump may disagree at times, I think they agree on a lot more than they disagree. And I think at the end of the day, they both have the same end goal. And so I think that partnership stays strong.
It's amazing that we're having this conversation in June of 2026, remembering the No New Wars mantra that followed the Trump campaign throughout his re-election. There's amazing analysis from our colleagues at Bloomberg Economics found since taking office last January, President Trump has greenlit at least 14,418 military strikes around the globe. I'm just curious, if you were sitting behind the Resolute desk, would you have started this war?
I think that Trump did the right thing. Iran was the weakest they had ever been. If Trump wouldn't have gotten involved, they just would have gone back to doing what they're doing. Keep in mind, you have to know the ideology of that regime. In 1979, they called the U.S. the Great Satan, and they said death to America. Believe adversaries when they say they want to kill you. I personally was targeted. There was a hitman that was actually paid money on U.S. soil to kill me. They are coming to America to kill Americans. This is a regime that finds that their Messiah is coming, and in the meantime, their struggles are supposed to be real, and they're supposed to cause chaos and brutality and murder in the process. You can't change an ideology like that. So they were going to rebuild. They were going to continue to cause harm. They were going to continue to put national security threats on Americans. Over 1,000 Americans have been injured and killed from Iran. We shouldn't even be allowing one. This had to happen. Now he just has to finish what he started.
So you see the national security justification for this particular excursion, as the president has called it. He also has suggested that once this Iran situation is over, whenever that is, he may turn his sights to Cuba. And I wonder if you see that as urgent, what you would expect the U.S. to do when it comes to Cuba and a regime that clearly is teetering on the brink.
In the U.S. put in their national security strategy to make the Western Hemisphere a priority. I think that you saw that with, extracting Maduro in Venezuela. The Venezuelans are going to see so much progress with that. That was something that needed to happen. They deserve freedom, and they're going to get it. What you're seeing in Cuba is a little bit different, because Cuba doesn't have a Delcy Rodriguez, a number two, that can go and run things. Cuba doesn't have a Machado, a head of an opposition that can go forward. So I don't think that this administration is going to go militarily into Cuba. I think they're just going to put pressure through sanctions and weigh them down. They already stopped the oil that was going from Venezuela to Cuba. They had Mexico pull back on the oil that was going to Cuba, and now Cuba's feeling the pain. They can only take so much pain. What they're going to want is sanction relief. They're going to want to get the Cuban economy going again, but unfortunately, they're going to have to continue to deal with the people that are leading Cuba right now. That's not going to be an issue. That's not going to be something that they can change.
Yeah, there have been questions about whether we could sustain action in two parts of the world militarily like this, because we have a massive buildup in the Middle East that's standing by to do what you're suggesting, which is to finish the job. If in fact we went pedal to the metal and took the advice of Nikki Haley, how long would it take?
Stop negotiating with them.
Okay.
That's never going to happen. We've lost time. Go finish what you started. I think within a week to 2 weeks.
Is that right?
They could.
Long before the midterms.
A week to 2 weeks, they could. It would take them the amount of time to extract the nuclear enrichment that they have.
Seize
I think
Carg Island.
You'll have to have special forces there. To go and hold Carg Island is going to obviously take a little bit longer, but this is one where they need to be focused and mission-driven on go after the revenues that are going to Iran, and that's the only way to get rid of the regime. And then the Iranian people have no way to defend themselves. They've killed thousands of people in the streets and made examples of them. What's happened in the past is the U.S. has actually helped countries so that the people can rise up. That's the way that this is going to end, is when the people feel safe enough to rise up that they can go and take their country back.
If the U.S. were to pursue the course of action you're describing, do you believe it would be prudent for the president to go to Congress first. Do you see that constitutional necessity that he has consistently denied is necessary?
I always think you need to go to Congress. You need the buy-in of Congress. You need the buy-in of the American people. You need to explain what you're doing, why you're doing it, and what you know. And yes, it's just good practice to go to Congress with more. This administration has done a lot by executive order. Yeah. The danger in that is the next administration, if it's not a Republican, all of that gets reversed. And then we're swinging the pendulum. That's not good for the American people. Congress needs to step up. There are a lot of things Congress could be doing, but right now we're hearing a lot of talking and not a lot of action.
The political pendulum also swings as we watch the primary season unfold, and there was a state you know a lot about that was, of course, voting yesterday in South Carolina. The president's endorsements have been on the line quite a bit here more recently, and they paid off last evening, particularly in the race for governor, in the primary for governor. Pamela, Yvette, I'm curious your thoughts on this and what it looks to be the end of a couple of political careers, including Nancy Mace and someone who you endorsed and endorsed you back in Ralph Norman. What transpired last night, and is it good for your party?
Well, I think, first of all, primaries are always good for our party. Yeah. I think that it's very important that you have debate, that you have, them touching as many hands as they can and really getting their message out. So I think having a full primary was a great thing. The press has been covering that Nancy Mace was a factor, and because of the Trump endorsement, she lost. Yeah. She was never a factor in this race. Wow. She was always in 5th place. She was never going anywhere. She knew that, and South Carolina knew that. So, she laid her bed. She's now laying in it. That's what she's doing. Ralph Norman, who I respect and love, we go way back. He does what he says he's going to do. He's got real clarity. Certainly I wish he would have made it into the runoff, but he was always pushing, and then you had Evett and Wilson in there. And so look, it's the power of the Trump endorsement. Evett wouldn't have made it in the runoff without the Trump endorsement. So his endorsement is strong. It does move the ball. And we just have to make sure that who we elect in a primary is who we want to vote for in a general.
Well, and to that point, I wonder if you think the president is making the correct endorsement choices, even if we look beyond South Carolina to say somewhere like Texas, where Ken Paxton is now the one who is going to have to try to hold a Senate seat in Republican hands.
It's going to cost a lot more money for Republicans to hold that seat. I do think we'll hold the Texas seat, but it's just not Republicans. Look at Graham Plattner in Maine. It's amazing to me. I always say it's important to understand that in a primary, you make your choice. In a general election, you're given the choice. You have to choose between the two. But in America, typically only 15% of Americans vote in a primary. So what you're getting is the extreme of both sides. So by the time most Americans go to vote, they're having to choose between two extremes. It's because we don't talk about primaries in high schools. Our kids don't know that. They know to vote in November. They know to do that, and they do. But until we start talking about the importance of primaries, and until Americans see that that's actually the race that matters, you're going to have the Paxton race, you're going to have the Plattners, you're going to have those that make us kind of uncomfortable. But, all in the name of getting a majority, let's get the right, good people in there so that we can start getting things done. But more than that, let's look at what's not getting done. You look at the debt that America has right now. What has Congress done about that? So you want to talk about a war, but why aren't they talking about balancing a budget? We're $39 trillion in debt. We're going to be $40 trillion in the fall. That's unacceptable. That's like the U.S. taking in $5 trillion a year and spending $7 trillion a year. Now we're 100% over GDP. Yeah. The last 2 recessions, we had a buffer. If we have another recession, there will be no stimulus. There will be no tax breaks. You aren't going to have a cushion to do anything with. That is something Congress can address now, and they've yet to do it. Social Security is going to run out in 6 years. Every U.S. Senate candidate needs to be asked, what are you going to do about it? Because 75 million Americans will be affected by that. You don't wait until that falls on us and do a quick Band-Aid of a deal. It's something I talked about in the campaign, was reforming entitlements. You have to do that. In a few years, 15% of our federal outlays are going to be interest. That's not okay.
Well, I'm just listening to you speak, Ambassador, and I'm wondering if you plan to travel to campaign for candidates that you decide to support, whether it's in the South Carolina runoff or nationally, and what your plans are beyond this midterm cycle. We all remember when you said your time would come. Is it coming in this next round?
First of all, I'm going to help any candidates that I can. You know, we have been helping Susan Collins raise money. I plan on going to Maine and campaigning for her, doing that. When we see a good candidate, I mean, that race matters to us so much. And she's been such a remarkable senator. You know, it shouldn't go overseen that she's never missed a vote. Never missed a vote. And regardless of where her views are, she's respected, she's a hard worker, she's come out of tough races, but we need to make sure she wins again. We can't take this for granted. So yes, I will be out there in elections helping Republicans. That's something I'm always going to do. In terms of my future, you know, I'm going to keep talking about the things that matter. I'm going to talk about foreign policy. I'm going to talk about the debt. I'm going to talk about the need for us to self-correct. I think that's what I can do. You know, I talk to a lot of business leaders now about how you manage business in, you know, this world that we're in, and that's kind of where I am right now. I'm not going to look forward. I'm not running in 2028. That's not something that I'm interested in, but my voice is going to always be there. I think it's too important for us to stay silent in times like this.
Well, and as you talking about foreign policy, something that you were vocal about in 2024, President Trump, as Joe alluded to earlier, was very much not running that kind of campaign, and yet he does seem to be running that kind of presidency, much more foreign policy oriented. And I wonder if you expect that trajectory is going to continue, where that once again is back at the forefront of conversation.
Well, I think, you know, you can say no new wars, but the reality of Ukraine and Russia is there. Russia invaded a free country. That's something that we can't step away from. The reality of the threat from Iran on our national security, you can't walk away from that. So yes, in a campaign you can say no new wars, but reality hits you in the face when you get to that leadership position and you have to make those decisions. And I think he's having to make those decisions now.
It's a pretty dangerous time that we're living in and talking through with you, Ambassador. And there's a big question about who should be running the nation's intelligence apparatus. This is a big problem on Capitol Hill. FISA expires, it looks like, on Friday because lawmakers need more than Bill Pulte. They want a permanent name that the president might announce. He says he's working on one, but Pulte will be on the job later this month. Are you comfortable with that?
Well, I think Trump has made it clear that he's going to put a permanent person in there. That person needs to have experience. Our intelligence is everything. I can tell you from when I was at the United Nations, the profiles of our adversaries, knowing what they're saying, knowing what they're doing, knowing the threats that face us are hugely important. It would be irresponsible for Congress not to renew FISA. I can't stress enough how that keeps Americans safe. And regardless of what you think about Pulte, FISA needs to continue, and Trump needs to put someone qualified in there that can make Congress feel like they can move forward. So both of those things need to happen.
Just quickly, is it also irresponsible to have someone even in an acting capacity who's used non-public mortgage data to go after perceived enemies of the president?
I think that what we want is transparency. Let us know who's serving us. What are they doing for us? Be transparent about it, and what's your end goal? I think that there are, cabinet members who are doing a great job. I think there are other cabinet members who we may not know as much of what they're doing. Open it all up. Let the American people see. At the end of the day, Americans want to know that government's working for them. They still don't trust government. They don't trust our agencies. They don't trust Congress. They don't trust elected officials. Americans deserve better. They're paying higher in groceries, higher in energy, higher in insurance, all of these things. Kids can't afford their rent. If all of that's going to happen, it makes an American public more resentful, and it makes them more angry at why people aren't working for them. And my advice is, look, we're going to be okay, but do your part. Step up. Don't vote for somebody because they look good in a picture or hold a baby well. Are they fighting for you? And if they're fighting for you, fight for them. But if they're not, it's time to turn the leaf and get someone else.
All right, we'll leave it on that note. Ambassador, thank you so much for joining us. She's now chair at Hudson Institute, also former ambassador to the United Nations and former governor of South Carolina, Nikki Haley, here with us on Bloomberg TV and radio. Thank you so much. And now we want to get a quick check on the markets once again, because as we just discussed with the ambassador, it is a volatile situation in the Middle East as the U.S. looks like it may be on the brink of once again attacking Iran. So for the latest on how markets are reacting, we turn to Charlie Pellet.
Thank you very much, Kaylee. And right now we got oil higher, stocks lower. Do want to begin with a developing story involving SpaceX. Now, sources tell Bloomberg SpaceX's IPO has attracted demand for more than 4 times the available shares. Banks are expected to stop taking orders from institutional investors after the market closes today at 4 p.m. Wall Street time. SpaceX's IPO is set to price tomorrow and then trade the following day. Start setting the ticker on your monitors. SPCX will be the ticker. It'll trade on NASDAQ. The Dow, the S&P, NASDAQ, all very much in the red. Low of the day right now on the S&P at 73.04. We're down 81 now. Drop there of 1.1%. A flare-up in geopolitical tensions, spurring a rally in oil. Also, tech names continue to sell off. The Dow is down 654 points now. That is a drop of 1.3%. S&P keeping it all in context, down 1.1%. NASDAQ Composite Index down 1.4%. The NASDAQ 100 Index down 1.5%. The VIX up 8.7% right now. The VIX trading above 21. The 10-year 4.54%. The 2-year 4.13%. And the 30-year 5.02%. Spot gold now down $148 the ounce. Spot gold down 3.5%. $41.12 the ounce. While West Texas Intermediate crude up 3.6%, $91.35 a barrel. Brent, $94.22 barrel of Brent right now, higher by 3%. Super Micro computer shares are plunging. Right now, we've got Super Micro down 19.8%. It plans to raise $7 billion through a package of equity offerings to buy the components needed to fulfill customers' orders for the company's AI servers. Oracle coming up after the close of trading, and we do have Oracle shares ahead of earnings, down now by just about 1.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie, many thanks. We'll be back with Charlie and the markets coming up in just about 20 minutes time here, about 15 minutes on Balance of Power. Thanks for joining us on the Wednesday edition. After our fascinating and wide-ranging conversation, we covered a lot of ground with Nikki Haley, Kaylee, from Iran to the primary season. We want to stick with foreign policy for a moment and assembled our political panel for everything that we just heard. This, of course, is the former U.S. ambassador to the United Nations. Rick Davis is here, Bloomberg Politics contributor, Republican strategist, and partner at Stone Court Capital. And we're joined by the first time by Democratic strategist Matt Robeson, former campaign manager from the great state of Massachusetts. Gentlemen, thanks for being here. And Rick, I'm deeply curious your thoughts on the justification for this war that we heard from Nikki Haley. She is firmly behind the president, and even then some. Sounded a little bit like Senator Lindsey Graham, the finish the job camp. As the president today says, we will start attacking Iran again very hard today. Do you agree with Nikki Haley, and what would finishing the job actually look like?
Yeah, I was actually very impressed that she took as strong a stand as she did. I mean, she's always been a defense hawk. Part of what I love about Governor Haley, it's great to see her on Bloomberg. It's nice to have her back in the dialogue. Look, I mean, her 2 pillars, sanctions on Russia and China, absolutely the right thing to do. The president's been cowed by China on rare earths, so he's been hesitant to want to really use that card. But the Senate has given him lots of room with Russia and China to do what they need to do, not just in this war, but in the Russia conflict in Ukraine. And then the second pillar, Carg Island, is really representative of a lot of the things she talked about. She didn't get much into the details, but sounded like ground troops to take out the uranium was one of her options, and that means a significant increase in the kinetic end of this war. Look, at the fundamental core of it, she said the right thing, which is you can never get a deal that you can trust with this regime. Ultimately, you'll need regime change, which means the people of Iran need to be given the tools to take control of their own destinies. And I thought she had a very clear-minded view of how to actually solve the problem rather than just kick the can.
Well, and with that notion of perhaps diplomacy not ultimately having a chance at prevailing. Matt, I wonder if even if you disagreed with the initiation of this conflict to begin with, if it is now the best course of action for American interests, both in terms of our national security, but also our economic interests for the U.S. military to just try to finish this as best they can.
Well, Kylie, I mean, I defer to the ambassador's vast expertise on these matters. I will say that it's hard to see how sanctioning funding and logistical sources from China and Russia would really change behavior, which is an issue that came up in the last segment. And it's really hard for me to see how hitting Karg Island, trying to degrade the Iranian regime's income, would help with the looming price bomb that is facing Americans. One thing I can predict is that the notion of boots on the ground is going to lead to huge congressional pushback. The fact that majorities in both chambers of Congress have now voted to severely curtail U.S. military action in Iran tells you everything you need to know about how realistic it is that Congress would get behind putting boots on the ground. I'm not sure I understand how President Trump would get congressional authorization for that, as the ambassador said he would need to do. So I think the real issue from a purely political standpoint is prices are going through the roof. That's the number one issue for voters heading into the fall. We have a looming depletion of key inventories of feed-ins to commodities that Americans depend on, that we're paying through the nose for. That's the issue that should be really keeping the White House up at night. I'm not sure how escalating the conflict is going to address any of that.
Rick, what do you think about the congressional side of this? The ambassador was very direct. He said the administration has to get the permission of Congress to finish the job. And some would say that it's just too late, Rick, that the White House has done so much on its own without Congress, and knowing that these war powers resolutions have passed, that they would never get the votes. What do you think?
Yeah, look, I don't think in a situation like this it's ever too late. Yes, the president did not sell this war to the American public or to our allies and friends around the world. And that was a critical mistake. This go-alone strategy is now bearing out some of the problems that it has inherent with it. But I lived through the surge in Iraq where everyone thought the war was lost and we were going to just, sort of slowly turn tail and run. And we convinced the American public and Congress to support a surge in Iraq. And this is not significantly different from that dynamic. It was not a popular thing. John McCain ran his primary in New Hampshire on the surge. I mean, like, talk about a very unpopular concept in New Hampshire. But he won, and he got the support of the people and Congress, and that turned the tide of the war there. So the question is, do you want to take some sacrifices? Do you want to get out there and make this a political issue? It's killing the president now. He ought to try to make it better.
Well, and of course, this is what the ambassador was getting at, the idea that you can campaign on no new wars all you want. A campaign sometimes is going to be very different than the reality of actually governing. On the subject of campaigns to govern, though, Matt, we also obviously talked to her about the South Carolina gubernatorial primary, in which Nancy Mace came in a resounding 5th place. Ralph Norman also obviously did not advance. Pam Yvette, who received the endorsement of President Trump, did so. And I wonder if you read into that at all in terms of the strength of the Trump endorsement being on show once again, or if, as a campaign strategist, you see this as a result of perhaps just some weak campaigns.
Well, absolutely. I mean, I think we've had ample evidence at this point that Trump's hammerlock on the Republican Party is as strong as it ever was. We've seen it in Indiana. We've seen it in state after state. I think, the issue for Republicans is that kind of sends them out further and further on the branch away from where the mainstream of American voters are. And again, we alluded in the last segment to what the polling is telling us and what special election evidence is telling us about where American voters are, the amount of enthusiasm that Democrats and Democratic-leaning independents are bringing into the midterm elections. In the 117 special elections that we've had since the last cycle, there's been a move toward Democrats in turnout of 5.6 percentage points. So it's all well and good for Trump to exert this kind of influence in South Carolina, in other solid red Republican territory, but it's not in the Republican Party's long-term strategic interest. And Democrats, my side, aren't too upset about it in terms of our midterm prospects.
Really interesting. Got a minute left, Rick. What's your thought on that?
Yeah, I don't know how much of the turnout is a factor of enthusiasm or whether or not it's just demographics. Matt knows well that Democratic voters are more likely to turn out. They're more college educated. They have a voting history of turning out in midterms and special elections, where these Republicans don't. And so that is an adjustment that you have to make on your own and figure out how it affects your campaign. But it all portends for a raucous November election.
We are in for one heck of a general election season. And with the help of Rick Davis and Matt Robeson, we're going to have it covered for you. Gentlemen, thank you. Great panel, great conversation. I'm Joe Matthew alongside Kaylee Lines in Washington. We have much more ahead here on Balance of Power, only on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Worst level of the day right now on the S&P 500 index. Stock market losses are intensifying. Right to the numbers here. Lots of factors for the sell-off. The S&P down 93 now to 72.93. That is a drop of 1.3%. We got a flare-up in geopolitical tensions. That is spurring a rally in oil, and stocks are selling off. Right now we've got the S&P down 1.3%. Again, lower by 92 points. The Dow, 50,108. It is down 762 points. That is a drop of 1.5%. NASDAQ down 1.6%. Tech names being hit hard again today. The NASDAQ 100 index down 1.6%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, down now by 3.1%. All of this with the VIX closing in on 22 amid geopolitical tensions. The 10-year at 4.55%, the 2-year 4.13%, and the 30-year currently at 5.03%. Gold is down 3.6%, 41.05 the ounce. Crude 91.59 a barrel on WTI, up by 3.8%. Barrel of Brent 94.35, up now by 3.2%. Starbucks may have a deal brewing in Japan. Sources tell Bloomberg Starbucks is considering options for its Japanese business, including a stake sale. This would follow the disposal of a majority interest in its China operations. Starbucks shares up now by 1.1%. Again, recapping the Dow, the S&P, NASDAQ all lower, oil higher. S&P down 1.2%, NASDAQ 100 down 1.7%, and the SOX down 3.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
Okay, Charlie, thanks. He'll be back in just about 20 minutes. Top of the hour as we kick off Bloomberg Business Week Daily with another look at the markets here, keeping our eyes on the Wednesday trade as we talk politics here in Washington. The President of the United States held a big signing ceremony a little bit earlier. You knew reconciliation passed, the $70 billion for ICE and Border Patrol now signed into law. And the next stop on the road brings us, Kaylee, to FISA 702. And the president is now starting to get involved, knowing that we've talked to a number of lawmakers, Democrats and Republicans, who have quote-unquote heartburn over the idea of Bill Pulte as DNI, and that's been slowing things down on the renewal front. Vote set for Friday. Now the president is asking not only for a bit of patience in naming a permanent DNI, but also a short-term solution here, essentially kicking the can to buy time to come up with the right candidate.
Yeah, another short-term extension after we've already seen short-term extensions previously, knowing the original bipartisan deal was to extend this key warrantless surveillance program for 3 years. That all fell apart with the tapping of Bill Pulte. But perhaps the suggestion here that he is looking for an alternate candidate to serve on a permanent basis is supposed to be something of an olive branch to concerned Democrats. So let's get into all of this now as we turn to Republican Congresswoman Nicole Malliotakis of New York, who is here with us in our Washington, D.C. studio. Congresswoman, welcome back to Bloomberg. It's good to see you. I don't know if you think that this short-term extension is possible by even Friday. At this point, is the president doing enough to make it clear that Bill Pulte will eventually have some separation from the nation's intelligence services?
Look, I think that we have to extend FISA. To me, as a New York Republican in a post-9/11 world, I think there's a few things that are more critical at this moment, and to make sure that that FISA authority remains with the intelligence community. It has stopped terror attacks. It has provided necessary information to keep our country safe. And it is critical that it does get extended, particularly when you think about all that is happening this year. It's not just the 25th anniversary of September 11th. It is, you have the World Cup starting this week, and you have the Knicks, you have America 250 events coming. There's just so much activity, not to mention the conflict with Iran. So there's a lot happening right now where we need to make sure that our intelligence community has that as a tool, because it's just so critically important.
We've been discussing the fact that it's not top of mind or in front of Americans the way a TSA shutdown might be, where you know, you've got lines at airports. There's a point of pressure here. Not everyone knows what FISA 702 is. What would you tell someone in Staten Island who asked you, who cares what happens if it expires? What would we lose?
Yeah, and part of the reason why the average person doesn't know what FISA is because it is so heavily classified, and you can't even publicly give examples of the types of things that have been stopped because of it. Although, there were reports that in 2024 there was a potential attack at the Taylor Swift concert, for example, that was thwarted because of FISA. But basically, it is a tool that is used, a surveillance tool that the intelligence community uses to track foreign individuals not on U.S. soil, and that is how they conduct a lot of this investigation. Now, the controversy with some of the members of Congress, right, has been that if that foreign individual outside the United States communicates with somebody who is in the United States and is an American citizen, those are the privacy concerns that some of the members have. But I think that at minimum, we should be able to do a short-term extension of the existing law. There's still negotiations that are happening in terms of whether there should be a warrant or not a warrant if an American citizen inadvertently got swooped up in an investigation of a foreign individual. So I think that, but we can't let it go dark. I think that's the bottom line for people like me who are very concerned about what could happen if FISA were to go offline and that tool was taken away. And remember, there were a number of reforms, about 50 reforms that were added about 2 years ago when FISA was reauthorized. And so there were already very significant reforms. And remember, President Trump had been one of the biggest critics of FISA because he felt that
used against him.
Exactly. And he's the one saying we cannot let this thing expire and that there were reforms. And so he's advocating for and hopefully can convince some of those members who have been kind of reluctant right now to support it.
Well, I wonder what you make of the president's timing decisions here, tapping Bill Pulte as acting DNI just before FISA expires, having the DOJ announce this anti-weaponization fund just before you're trying to get through a massive budget reconciliation package. Is he just making it more difficult for those of you who stood up on Capitol Hill?
I think maybe it wasn't the most politically savvy things to be saying when you're trying to get certain things done. Look, you got to love President Trump for his honesty, right? He's very blunt. He's out there. He's transparent. He says what he feels. He does what he thinks is the right thing. I think that it probably was not the best timing if he truly wants Pulte to have that position. With that said, I think that a lot of members are looking to see if we could get somebody a little more qualified specifically in the national security space. We think, and I think that that's probably where this is going to end up. It'll probably be somebody else, and I think is concern about that, and he needs to address it over the next 24 hours or so for us to get this, I think, across the finish line.
Before we move on, though, should people brace for at least a temporary expiration, or could this still be saved by Friday?
Look, I'm hopeful that we will get the job done.
Yeah.
I've spoken with folks over at the White House, folks at the speaker, and I mean everyone understands how critical this is, and we've been told to not rush out of here. Usually the last vote of the week, everyone's already planning. It's a mass exodus. Yeah. We need to stick around. I'm prepared to stick around, and we need the members to stay here. And I think that the attendance does become a problem, though. And I think that's irresponsible. I think the members need to stay here until FISA is extended. And a short-term extension, I think, probably is the only solution at this time, considering how late it is. And the Democrats have already said they're not going to help at all. So if they're not going to help at all, we need every Republican to stay here and just do that temporary extension to make sure that it stays online.
Well, as we consider what else the president is grappling with here, he announced in the Oval Office earlier that the U.S. is going to be attacking Iran very hard, to use his words, after we saw the response yesterday to the downing of the Apache helicopter. In your mind, is it in the best interest of the United States to just go forward with the military option in the absence of real progress on diplomacy?
Look, it's hard for me to say without having all the information in front of me of what the military with the intelligence is saying. I do believe that Iran has been dragging its feet, and if they're not going to come to a deal, then we're going to have to deal with them in a different way. And the president has made these threats, and if he's making these threats that they're going to take military action if there's no progress in negotiations, I think he needs to follow through with that. I think you can't. I think you can't bluff in this situation, and it's too serious. This needs to be resolved. And as Secretary Rubio says, it's got to be resolved one way or the other. And so I think that it's good to be pushing Iran, but at some point he's going to have to make a decision if they're going to, just use military force to get the Strait back and to try to put an end overall to their capabilities, any nuclear capabilities. I think it's in Iran's best interest to make a deal, but they also know, with an election coming up, that time is on their side in a sense, right? Even though the president says that's not true, and I think the president is working on his own timeline. He may not be as concerned about the midterms as some of the other, some of us are. But at the end of the day, we need to do what's in the best interest to ensure that Iran does not have that nuclear weapon, that the Strait opens up, the oil begins flowing again, and that that enriched uranium gets turned over to somebody. It may not be the United States, but maybe an intermediary, but it's got to get out of the hands of the Iranian regime.
Well, we saw evidence today that for a third month, this war or conflict, whatever you want to call it, is pushing prices higher, and look no further than the gas station. I noticed today, knowing you were going to join us, New York is actually above the national average. Nationally, 415. I think you're at 442 in New York. President was asked today about prices, and you might have heard his response by now. It's a little bit difficult to tell exactly what he meant with his answer, but let's listen. He had reporters in the Oval Office a short time ago.
The numbers were great. You know what I really love? I love the inflation. You know why? Because as soon as this war is over, I can say it now. Something you didn't know. Do you know we've been taking out millions of barrels of oil? Nobody knows it. You know who doesn't know about it? Iran, until right now.
Interesting. I love the inflation is going to be in campaign ads, whether it's out of context or not, right, for months ahead. It's unclear how he meant that. I think he's suggesting that because it's going to fall, he's getting a kick out of these numbers now. I'm not sure. What does it mean for your voters, though, and for your reelection campaign?
Well, I don't love inflation. My constituents don't love inflation. I don't love high gas prices. My constituents don't like high gas prices. I do agree with one thing that the president did say, is that it's going to come down, and it's going to come down quickly as soon as this is over. Remember, President Trump brought gas prices below $3, and it was the first time we saw that in 4 years. Under Joe Biden, it had gone all the way up to $5. It always stayed roughly between like $4 and $5 the entire 4 years. And so I do believe that he has the ability to drastically bring down those prices, but we need to get out of this. And I think that that's the key here. How is that going to happen? Because the negotiation is taking longer than we anticipated, and I think that we just need to see how because even if it were to open today, the Strait, it could take months for those prices to still reflect. Sure. And still some of the open tariff issues that we have, there's still a lot of questions there, and so that's coming into play as well. I think long term, what he's doing today will have a positive impact long term, but for the short term, it's been a little bit of a bumpy ride. Yeah.
Well, the president just posted on True Social, Congresswoman, that he last month secretly directed the military to support oil tankers and other commercial ships through the Strait of Hormuz. He says, quote, "Today, I am pleased to announce this effort has resulted in more than 100 million barrels of oil making its way through the Strait and into the open market. More than 200 commercial ships have safely traveled through the Strait." So perhaps we were secretly doing Project Freedom all along, but I would imagine this rings as good news to you.
Well, that is welcome news, and I think again what you're seeing. This is why I think prices, when this gets resolved, it will come down, because look, we've ramped up domestic energy production. Now we have a much better relationship with Venezuela, right? And we're benefiting from that as well in terms of oil. And then now you're going to see the Strait opening up and these barrels getting through. That's about 20% of the global market. Yeah. And obviously, the global market is what really affects this price, not just that America's producing more, so, the prices come down for us. It's a global issue. And so I think that, these three things combined will be better in the long run. Now, New York is a different story. Now, why you say New York is above the national average is, honestly, it's because of a lot of terrible policies at the state level. I mean, New York has crushed the energy sector, and electric bills have skyrocketed. Gas prices for your heating your home have skyrocketed. And
your state taxes are the reason why a gallon costs more than the national average.
It's the state taxes, but it's also 26% of the energy supply or electricity supply was at Indian Point Power Plant, right? And they have closed that down in the state of New York, and now that's putting a lot of pressure on the industry. So I think that New York, sadly, like California, above average on most things when it comes to cost, and that's because a lot of the local state issues that come into play that affect it. Now, I've also temporarily introduced a bill to temporarily suspend the federal gas tax.
That's right.
I think that's good for commuters, and it's also good. It's for diesel as well. That'll help out farmers. It'll help out truckers and shipping industry. I think that's something we can do temporarily just to ease the pain at the pump until this gets resolved.
Well, it's great to spend a little time with you, Congresswoman Nicole Malliotakis, Republican from New York. You in the skybox or courtside tonight?
I'm going to be watching from the comfort of my little TV, But, we got the congressional baseball games tonight.
Yes, you do.
It's a big,
Baseball games
big
tonight.
sports day today for New Yorkers.
It's Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. I'm Carol Massar, along with Tim Steneviker, live here at Bloomberg headquarters in New York City. And we've got stocks once again under pressure due to a continued sell-off in the world's largest tech companies. That's happening. Also, you've got shares coming under some pressure as oil prices climbed. Again, the president talking about the war. Feels like, Tim, no end in sight.
Yeah, S&P 500 off its worst levels of the session. Interestingly enough, Carol, industrials are the worst performing sector in the S&P 500, down 2.6%. It's all really emanating from his commentary from the Oval Office earlier.
Yeah, he did say that the United States will resume attacking Iran very hard. Those were his words. We're going to get an update on the war. We're going to get an update on trading in just a moment. Also ahead this hour, we are, of course, on inflation watch. We did get a read this morning. Inflation here in the U.S. accelerating in the month of May to the fastest pace in more than 3 years due to the Iran war pushing up energy prices. We're going to tie a lot of things together in the next 60 minutes.
Yeah, on that, and the latest out of the Middle East, Chris Kennedy is going to be joining us. He covers economic statecraft for Bloomberg Economics. He's going to help us tie it all together. He's going to join us from Washington, D.C.
Yeah, we're going to talk, too, about some of those primary races because there's a lot going on around the country.
Maine.
Yeah.
The state where I went to college.
Yeah.
The way life should be. That's what they say about Maine.
It is kind of beautiful, to say
Listen,
the least.
there's a bumper sticker up there. If you can't handle our winters, you don't deserve our summers. Okay? So that's all I'll say.
All right. Good to know. Hey, we're also going to get into what investors are doing with their money in real time. We're going to talk about that with the CEO at Wealthfront.
Also, a little bit on banking. Goldman CEO under scrutiny for standing by the bank's top lawyer. We're going to be talking about that a little later in our program, too.
Yeah, this is rather timely considering the Wall Street Journal just reported, just crossing the Bloomberg, that the Department of Justice asks big banks about whether they debanked clients. So we got a lot to talk about. In the meantime, let's get you caught up on the market action on this Wednesday. Here is Charlie Kelly.
All right, I thank you very much indeed. Shares of JP Morgan Chase, they are down now by 0.1%. Bank of America up by 0.9%. That headline bears repeating, Carol and Tim. U.S. Justice Department has sent subpoenas to several of America's largest banks, including JPM and Bank of America, requesting information about whether they, quote, debank clients for political reasons. Also, some Middle Eastern headlines to pass along. Israeli Defense Minister Katz says the IDF is poised to strike Iran, quote, with great force. Katz says the Iran war is far from over. All of this with the Dow, the S&P, NASDAQ very much in the red amid a flare-up in geopolitical tensions. That has spurred a rally in oil. West Texas Intermediate crude very close to $91 a barrel, up now by 3%. Barrel of Brent, $93.93, up by 2.7%. Wall Street's also being rattled by a renewed sell-off in some of the world's largest tech companies. First of all, let's begin with the baseline. The S&P is 73.21 right now, down 64, down 9 tenths. NASDAQ is down 1.1%, while the NASDAQ 100 index is down 1.2%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, it is down now by 2.2%. The VIX holding just above 21, the 10-year 4.54%, the 2-year 4.12%, and the 30-year 5.02%. Gold down 3.3%, 41.17 the ounce. And again, West Texas Intermediate crude bears repeating. WTI up by 3% right now, 90.81 a barrel. And for on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, increased tensions in the Middle East, risk derailing intermittent indirect talks between Iran and the United States. That means a path to a deal allowing for the reopening of the Strait of Hormuz is clouded, stoking some concern over inflationary pressures that could make the Fed raise rates before the year is over. We're going to talk inflation, a deeper dive in just a few minutes. But right now, we want an update on this now more than 14-week-old war.
This as President Trump pledged to strike Iran again after accusing the country of delaying talks on an interim peace deal. It puts further stress on a fragile 2-month truce. He spoke earlier from the Oval Office.
We hit them hard yesterday, and we're going to hit them again hard today, in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal.
All right, let's get more on the U.S. war in Iran. Of course, that was President Trump earlier today. We also want to talk a little bit about the U.S. political backdrop following the latest round of primary races. With us is Chris Kennedy. He's economic statecraft lead for Bloomberg Economics. He's out there in our Bloomberg News D.C. bureau. Chris, good to have you here. Lots to get to on this Wednesday. Let's talk about the war. President Trump, first of all, saying Iran would, quote, pay the price for delaying negotiations for an interim peace deal after those renewed attacks overnight put further strain on really what's been a very, very fragile 2-month truce. So what does this mean in terms of U.S. actions? Does this war continue to drag on? What's next for the U.S.-initiated war? Because it keeps feeling like we're going to come to an end, but it just doesn't really happen.
Yeah, so I think the president is clearly frustrated with the pace of negotiations, the fact that they haven't been able to get to this sort of interim deal that would allow deeper technical negotiations over Iran's nuclear program to proceed. Our assessment is still that the actions over the past few days are not going to jeopardize what we're calling a ceasefire. Of course, it's a relatively warm ceasefire. We continue to see attacks from both sides. At the same time, I think what we've seen in terms of the actual strikes is that these have been quite calibrated on both sides to prevent a real, escalation that could, plunge us back into the sort of really hot conditions we saw before, back in March and early April.
So are you still calling this a ceasefire? Is the ceasefire actually holding?
We're calling it a protracted conflict, but low-level conflict. So I think it's hard to call something a ceasefire where you're seeing these sorts of strikes. But this is what we anticipated would continue to happen. I mean, the two sides are still very far apart on many different issues. But specifically, what we're seeing now is Iran is really hardening its demands that both Israel stop its attacks on Lebanon and its campaign in Lebanon, but then also the question about the unfreezing of funds and sanctions and whether that's going to happen before we get to this, window of time where the deeper negotiations can happen.
What's the leverage that each?
I think.
Yeah, sorry, Chris. I don't mean to jump in. I'm sorry.
Go ahead.
What's the leverage that each side has?
Well, clearly, Iran is feeling very confident that they have the ability to, completely shut down shipping through the Strait of Hormuz at any point. We're hearing reports that there is some shipping going through. The president confirmed as much. The president, the U.S. seems to still be counting on economic pressure, potentially bringing Iran to the table. But clearly, the president is becoming frustrated with that. So I don't think that the points of leverage have really changed, but what we've seen is a hardening of positions.
All right. So on and upward, because I do feel like, markets seem to shrug off a lot of stuff. We sometimes certainly see reaction, but it does feel like there's a lot being shrugged off. I want to move on, and I want to talk about the political races and the primary races that are underway ahead of the upcoming midterms. War, inflation, all of this matters to voters. We know that. We've had some key races, Chris, in Maine, Nevada, South Carolina, North Dakota. Talk to us about this. How this is really kind of, I would assume, a vote, too, on the current administration's policies. What are these primary races revealing when it comes to what we are getting out of the White House?
Sure. So, looking at the South Carolina races yesterday, for instance, so we saw Lindsey Graham cruise to the general, won his primary. I'll note that, he received less support than he did in 2020. He had the backing of the president. And then similarly, the president's preferred choice in the governor Republican primary also advanced. I think that tells us that, despite the president's dropping approval ratings over the war, over the economy, he still really is such a powerful force when it comes to the Republican base, and that means these primary races that we're continuing to see play out over the last couple of months and into the summer. And so, South Carolina, that Senate race isn't going to be consequential for the balance of power following the November election, but it does show that the president is still important. Now, Maine is obviously a different story. Maine is an essential race for the Democrats to win. Graham Plattner, if he beats Susan Collins, that puts the Democrats in a much better position to take control of the upper chamber in November. And I think this is a really risky situation. It shows a few different things. Number one, the Democrats don't really have that level of leadership at the national level. I'm repeating what many people have said, but we see an insurgent candidate, not particularly well vetted, getting through and advancing to the primary with a lot of support from the base and a lot of support from, across the board in Maine. I mean, it was a pretty substantial victory. Of course, Susan Collins faces major headwinds. The war is very unpopular. The economy's, falling. Trump is unpopular in Maine. But we don't know what's going to happen over the next couple of months. We've seen this trickle and then this deluge of bad news about Graham Plattner. So a lot of things can happen. And I think there's risks on both sides.
Yeah, it's noticeable given that Graham Plattner has talked about, his narrative is really about affordability and making sure that Mainers. It seems like maybe Democrats, to a certain extent, have learned their lesson about messaging from the 2024 election. I don't know. Do you think that's true?
I do think that there is a very organized part of the Democratic Party that is very focused on this more populist, economic message, and that is, resonating with voters as we're seeing in these primaries. We have some additional primaries coming up. I'm looking very closely at Michigan, where we have a similar dynamic playing out. That primary is in early August. But it comes with risks because these are young candidates. They have a lot of views that diverge from the traditional Democratic Party views on things like Israel and touching on some of the hot button social issues, that were questionably popular in the 2024 election.
All right, going to leave it on that note. Hey, Chris, thank you so much. Covered a lot of ground there. Chris Kennedy, economic statecraft lead for Bloomberg Economics in our DC News Bureau. He talked about kind of critical issues for voters. Inflation is certainly one of them, and we got a great read on that this morning, with U.S. inflation accelerating in May to the fastest pace in more than 3 years as the Iran war pushed up energy prices, outstripping Americans' pay gains. It all ties together, Tim.
We got Michael McKee with us. He's Bloomberg TV and Radio international economics and policy correspondent. He joins us here in the studio. A few different numbers to go through, Mike, but we're reminded of what the president said from the Oval Office earlier. He called the inflation print, quote, great. Is it great?
It depends on how you want to look at it. It's the greatest increase in inflation on a year-over-year basis.
I don't think that's what he meant.
Well, he's the gift that keeps on giving because the Democrats just got to love this. He said, I love the inflation. Now, he went on to say that because when the war is over, it's going to drop like a rock. But I can imagine them just cutting that little bit out, and that goes into the campaign ads. Because the thing about it is, as you mentioned, Carol, inflation's running ahead of incomes. Average hourly earnings were up this month by 3.4%, but 4.2% for inflation. So you've got a real earnings, inflation-adjusted earnings, 0.7 below. And that's going to be felt at home. And it's going to be felt at the gas pump still, because even though prices have eased off a little bit, the gasoline prices were up 3.9% in May.
What you're so good is reminding us what kind of goes into this. I mean, how much of inflation is because of the higher energy prices? And is the president to some extent right that a lot of this will go away when this war ends? However, the caveat is we thought this was going to go away weeks ago,
2 weeks.
And here we are,
months
many
ago,
weeks
said
in.
2 weeks.
Yeah,
It would be over in 2 weeks.
Well, they told Anne Marie Horder Monday that 2 or 3 days. So it's Groundhog Day, and until it ends, we can't know what's going to happen. But if it ends, we will see prices come back down again, but it'll take time. And there's disagreement about how long it will take. The general feeling is about a month to come down, to get enough oil in the system that we see prices sustainably come down. But there's also a feeling that until sometime next year, if at all, we won't get back to the $2.98 average that gas prices were before the war started.
Just in time for the summer and those drives.
Before we get to summer, we get to the first Fed meeting of Kevin Warsh. And unfortunately, Carol and I will be on a plane next Wednesday as the new president.
Which is kind of a bummer because we love tracking the Fed.
We will not be able to listen or watch what he says. It's like we're going to be in this vacuum
Unless
for 5 hours.
Wi-Fi.
There is Wi-Fi, but there's not like the ability to stream.
Yeah.
I've checked
Oh.
already because this is like a very important
Can't we
meeting.
watch Bloomberg on the plane?
No live TV on the plane, Carol. I'm sorry.
You got to change airlines.
Yeah, maybe change
Exactly.
airlines.
Exactly.
So, Mike, the question is what position does this put the new Fed chair in communicating to markets, but also communicating to the man who appointed him?
Everybody's asking that question, and I'm asking the question, well, what does Kevin do now that Donald Trump says he loves inflation? It's kind of the opposite marching orders.
Do you think he knew what he was saying?
I don't think...
Okay. That's not fair. That's not fair.
Who knows?
Okay.
But Warsh is, in some ways, this is a gift to Kevin Warsh, the inflation numbers today, because there's no way you can cut rates with inflation at these levels. So then the next question for Warsh is, when can you? How far down does inflation have to come? And we don't know what he's going to say, but it's going to be very difficult for him or anyone to make a case for cutting this year because inflation is still rising. Now, the good news for Warsh and company and the president is it looks like tariff inflation is starting to fall out of the numbers because core goods prices were down 0.1%. So that will be helpful unless the new tariffs he's going to put on in July create problems again. But it's going to take a while for gas prices to come down. Now, we saw an unusual drop in food prices, not a drop, but an unusually small rise, just 0.1%. And we saw beef prices actually fall. Well, what's happened since May? Screwworm. So now we're going to probably have food inflation again, and that's going to be hanging around. So it's going to be difficult for him to do anything. It's a question kind of what can he say to reassure people, let people know the Fed is on the job, but he's probably not going to be able to reassure Donald Trump that rate cuts are coming anytime soon.
Well, Mike, that other part of the mandate, the labor market seems to be doing well as of Friday, right? So is that, thank God for the Fed that they can do that? Because if the labor market was coming undone,
Oh, sure.
Inflationary pressures.
The worst situation
would
be inflation rising and the labor market collapsing because that would suggest that the economy is going to stall out.
Yeah.
And so this is a good news situation for them. Now, we're still waiting to see what happens with the economy and the war. Is there at some point demand destruction because people are paying too much for gasoline and therefore they don't have money to spend on other things?
I feel like, Tim, you and I have on market guests. And we will often sometimes either get someone who is like, this is all crazy, the AI spend, it's overdone, it's overheated, the valuations, even of like the upcoming SpaceX IPO, too much. And then there are others who are like, earnings are good, there's growth, the job market, what is the economic backdrop?
I don't want to say you're old, Carol, but you and I both remember the 1990s and how earnings were good.
Hold like a fine wine, I'm good.
Earnings were good, and the outlook was great, and then, look what happened. So I don't know. I'm not qualified to comment on the AI or the SpaceX valuations.
Economic backdrop?
The economic backdrop is pretty good, and if it weren't for the war and it hadn't been for the tariffs, we wouldn't even be having these discussions. The Fed could probably still be looking to cut rates, but now people are saying, well, was the December cut a cut too far? Did they go too far given the situation that we're in?
Yeah.
It's true that they can't fix the oil problem. They can't raise rates and open the Strait of Hormuz. So it's a tough situation for them to be in, and of course everybody's looking at them to solve the problem.
Well, speaking of solving problems in SpaceX, Carol.
Yes.
We might have Starlink internet on our flight next week. And if we have Starlink.
Well, I was supposed to have it on a flight recently.
Yeah, we had no internet on that flight.
And it was no bueno.
If we have Starlink, we can then access Bloomberg Television.
That's what I was thinking.
But if we don't have Starlink, then
I'll send you a little signal. I'll tug at my ear so you guys know that I'm thinking of you.
All right.
No signals on Fed Day.
Michael McKee is probably the only guy who can call me old, and I still love him. Michael McKee, Bloomberg TV and Radio International Economics and Policy, CEO of Wealthfront, is next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, and the NASDAQ 100 index all trading lower right now. A flare-up in geopolitical tensions spurring a rally in oil. West Texas Intermediate crude advancing now by just about 2.7%, $90.55 a barrel. Barrel of Brent, $93.60. Brent crude up by 2.3%. Stocks lower, though, across the board. Tech hit hard again. Semis trading lower. S&P down 76 to 73.09. That is a drop of 1%. Dow Industrials down 656 on the Dow, a drop there of 1.3%. NASDAQ Composite Index also lower, down 1.3%. The Bloomberg Mag 7 Index trading down by 1.6%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down another 2.6%, with the VIX holding just above 21. 10-year at 4.54%, the 2-year 4.12%, and the 30-year 5.02%. Spot gold is down $141 the ounce to $41.11, a drop there of 3.5%, while West Texas Intermediate crude again trading higher by 2.6%, $90.50 a barrel. Super Micro computer shares are now plunging by 20%. Super Micro plans to raise $7 billion through a package of equity offerings to purchase the components needed to fulfill customers' orders for the company's AI servers. Again, Super Micro now down by 20.6%. Recapping, S&P down 79, down 1.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, we'll come back to Charlie a little bit later on. Now, Wealthfront, it is one of the OGs when it comes to what was originally known as robo-advisors, getting its start off the great financial crisis back in 2008. I know folks don't always use that term as much, but more importantly is what they are up to and how the industry continues to evolve. Company, by the way, reported earnings last week. Stock traded down about 14% on the news. Those earnings on June 4th as the company just completed its first 6 months as a public company. We've got a great guest to talk about it all.
David Fortunato is CEO and president of the $1.3 billion market cap wealth management and financial solutions platform, Wealthfront Corporation. He joins us here in the Bloomberg Business Week studio.
David, great to have you here. Let's start with nuts and bolts, the basics, earnings. You reported last week stock was down about 14%, down as much as 17% intraday. Following quarterly update, first quarter revenue missed estimates, stock down about 34% year to date. Help us understand, in what has been a very active market year, volatile year, ability where there are some things that have just so outperformed, and yet your stock is down. Why is that? I don't quite understand it.
Well, we've stayed focused on building for the long term. We've grown our assets to more than $99 billion as of the end of May, grown clients to just under 1.5 million clients. We've done that all while navigating a relatively complex investment environment for clients. So as rates fell last year, we saw clients transition from cash management to investing management. We drove cross-product adoption and helped clients invest for the long term while maintaining a really healthy growth in our cash management product as well. And so the combination of those two things is helping us weather a complicated investment environment.
When you talk about the cash management product, you're just talking about a high-yield savings account, right?
With liquidity features, we have a money market fund that helps folks that are in high-tax states be able to minimize their state tax payments as well.
Help us understand the identity of Wealthfront right now, because as Carol mentioned, one of the OGs when it comes to this idea of a robo-advisor, but the product has really evolved a lot, and I think some critics might say it has moved away from the roots of like just set it, forget it, and look at it quarterly. Like you do active trading. I think you can do crypto at this point in there.
Not really doing crypto. Yeah.
Okay, but there's like options to buy individual companies now, which is totally different from what I understand the company started as, which is low-cost index funds, diversified geographically, and the like.
That's still the huge majority of our assets, the majority of our attention, and where we focus on. So even in our single stock trading product, our stock investing product, folks are buying ETFs in that product more than they're buying individual equities. And so if you look at the way that our clients invest, they're focused on the long term. Ultimately, what we're trying to build is the best place for responsible investing. And we want to help folks that are in their 20s, 30s, early 40s be able to invest for the long term responsibly.
How are they investing? So, we all kind of laugh in the newsroom, like, just buy the index. index because it's increasingly year after year.
Well, also, and that's kind of like all we're allowed to do.
Well, we
given
are,
what
right.
we do for work.
But even in general.
It's a good strategy.
Yeah, no. So, like, I am curious what you see on the platform. Like, how are people investing? Were people buying a lot of energy names this year because of the war? Like, what were they doing?
We've seen a lot of focus in global diversification as there is complexity in the U.S. markets. Folks want to make sure that their assets are protected. They have some principal protection.
But they're not running away from the U.S.
They're not running away from the U.S. And we've certainly actually seen so we follow investor sentiment very closely.
Yeah.
We do our survey monthly at the end of every month. The end of February, investor sentiment was quite good. End of March, investor sentiment had fallen steeply and quickly. It recovered about halfway in April and recovered fully by the end of May. What we observed is the products that we have are a range of bond products to single stock investing. Throughout that period of a fair amount of volatility and folks' views on the markets changing, the most popular product remained our global diversification investing account. But then we added S&P direct indexing, NASDAQ 100 direct indexing, which allow you to invest in the index but get more benefit from tax loss harvesting.
Just one follow-up. How much does sentiment follow up with an investor making a move? Like there's sentiment and then there's actually making a different trade or moving assets.
Most of our clients are not changing as a result of sentiment, but you do see some flows on the margin driven by sentiment.
You know, we mentioned 2008. It has Silicon Valley DNA and roots. I'm wondering what you're seeing in terms of portfolio size and assets of clients right now. What's the typical portfolio size? How much assets? Where are the assets that your clients have? There's a New York Times article today that talks about how SpaceX employees, there's about to be 4,000 new millionaires, and more than 100 people from the SpaceX IPO having a net worth of more than $100 million as a result of that IPO. Are you seeing that money come in?
We've seen both companies in private markets that create liquidity opportunities through secondaries or through IPOs ultimately lead to assets flowing onto the platform. We don't get into specifics of how many clients we have that are employees of different firms, but it's always been an area of strength for us to help people invest for the long term, optimize their taxes, and do that with knowledge workers. We have a lot of clients who are employees of all of the different companies that you might hear about. And ultimately, the value that we offer to them is the same value that we offer to a 22-year-old opening their first investment account.
So how big is a typical account?
$70,000 is the average client, but we have accounts as small as $1 and accounts as large as $100 million.
Interesting. All right. Competition. We were talking about this too as we were prepping to talk with you. Robinhood, total assets under custody recently exceeded $320 billion. And they've got about 27.4 million active funded accounts. Schwab, total client assets, 12.6 trillion as of 1 month ago. And they talked about total client accounts of 39.1 million. They've also got reported active brokerage accounts. That was actually 39.1. Total client accounts, 47.2. Wealthfront on earnings last week, funded accounts 1.46 million, grew 15% year over year. Funded accounts of 1.9 million also grew 15% year over year. And you talked about, I think, 99 billion in assets on the platform. Who is your competition? Like, who do you see as your biggest competitor in this space? Because it increasingly is growing. The big guys now maybe ignored you guys initially, but they have actively gotten in. I'm just curious. Who do you see?
The number one practical competitor that we see is underconsumption of financial services or underconsumption of investment. So folks are coming to us. They're doing something that is a shorter term investment or is a more speculative style investment. And ultimately, they're graduating to a diversified managed portfolio. They're looking for more tax efficiency if they've seen the impact of even gains in individual stock trading leading to negative outcomes. Most of our clients that are coming on new to the platform are in their mid-20s is the average. So folks are getting started early, and they're moving away from products that, our clients are professionals. They work a job. They don't have time to day trade every day. And so they're looking for someone to manage their assets for them, and that's what we do.
Is there an average age? I'm just curious, or what's the
average age on the platform is around 35, but average new client is around 25.
So younger. That's interesting. And they're working, it's not inherited money, or it's a combination of both?
I think that one of the things that is underappreciated is there is a pool of the millennial and Gen Z generation that's very actively earning and saving. So our clients tend to be anyone who is earning more than they spend in a given month. And so whether they're starting by saving a few dollars or saving tens of thousands or hundreds of thousands of dollars a month, we offer great solutions for all of those clients.
Interesting.
We're all over this SpaceX IPO, expected to start trading on Friday. Curious about access to SpaceX, if it is included in indexes at some point in the future, how you would allow your users who don't want access to SpaceX, if it isn't an index. It's funny, this is like it's a very polarizing thing.
Yeah, it's interesting.
Right now there are folks who are like, I want a piece of this, I want in on it, and there are folks who are like, I don't want to touch it. How do you do that on the platform?
So we don't do IPOs. In general, we advise clients that it's probably not in their long-term interest to participate in IPOs. There's a lot of volatility around IPOs, as we discussed earlier. What we have said is most of our clients can participate in direct indexing. That gives a fair amount of flexibility in portfolio construction and what we can do.
So explain what that is for people who aren't familiar, like buying the S&P 500 versus direct indexing.
So we'll buy the underlying holdings of the index.
Rather than an ETF.
Rather than an ETF, and then we'll manage the allocation of those individual securities to match index performance while also being able to take advantage of tax loss harvesting opportunities, selling losers, replacing them with correlated stocks.
So it's even more efficient than tax loss harvesting within an index.
It is. There's more opportunity and more volatility inside of an index.
So then would that allow you to essentially say to a customer, a client of Wealthfront, you can own the whole S&P 500. Let's say at one point SpaceX does become part of it. But if you want to remove SpaceX from that allocation.
That's a feature we've had for more than 10 years.
You can do that, okay.
So you can pick and choose.
Yeah, I mean, if you try to exclude half of the index, then it's less likely to work.
Do people take you up on that?
Makes sense.
Clients are active in adding stocks. I would say there's a population of people that are very excited about SpaceX being part of the index in the future, and there's a group of people that are skeptical of SpaceX being part of the index and want to exclude it.
David, how are you guys using AI?
We've always been a digital-first financial advisor, and so when you look at what a financial advisor does, they're basically a natural language interface on top of some software tool that's helping them think about and plan the financial future for their clients. So the opportunity that we see is to use the financial tools that we've built, the financial planning tools and all of the investment tools that we've built to be able to do intake and understand our clients and then invest for their futures.
Are you worried, though, about AI kind of basically doing what you guys do?
I don't think we're worried about it. I think we're excited about the opportunity.
It's more of an opportunity than a risk?
I mean...
Go ahead.
No, I didn't.
I think it's an opportunity. I think that we're a technology company at heart. More than half of our employees are software engineers. We've been building all of the tools necessary to be able to help folks invest for the long term, understand them very deeply. And what I see ultimately is we're the lowest cost producer in the space. We have the lowest cost to deliver our investment solutions to clients, which I think creates an amazing opportunity for additional automation and advice.
All right, just come back because we want to do this over again. This was fun.
Thank you.
David Fortunato, he's CEO and president of Wealthfront Corporation, joining us. When we come back, standing by your lawyer. That's what the Goldman CEO is doing. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ very much in the red. Geopolitical tensions, one major source of concern. Also, Wall Street's getting rattled by a renewed sell-off in some of the world's largest tech companies. Right now, the NASDAQ 100 index is down 1.6%. The NASDAQ Composite Index is down 1.5%, with the SOX, the Philadelphia Stock Exchange Semiconductor Index, now down by almost 3%. S&P 500 index down 88. That is a drop of 1.2%. A lot of red today with the Dow down 1.4%, down 725 points. And to be sure, the S&P 500 index right around session lows. Again, NASDAQ 100 down 1.5%. The SOX down 2.85%. And the 10-year currently yielding 4.53%. The 2-year, 4.12%. The 30-year, 5.02%. Gold is down $150 the ounce to $41.08. That is a drop of 3.6%. Geopolitical tensions sending oil higher. West Texas Intermediate crude up 2.2%. 90.17 a barrel. Brent crude 93.24 barrel of Brent up now by 2%. Oracle's report after the close of trading represents the next test for AI stocks after a disappointing forecast from Broadcom. Company's revenue growth has jumped due to a push into cloud services amid soaring demand for AI computing, but that transition has been costly and turned its free cash flow negative. Ahead of earnings, Oracle down 0.7%. Recapping, S&P down 1.2%, and for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right, let's get to it because we got a lot to do with the dynamic duo that is up on set with us. All right, this is, first of all, one of the most read stories on the Bloomberg today. Goldman Sachs CEO facing fresh scrutiny over his decision to stand by the bank's top lawyer after the U.S. Justice Department released years of her emails with disgraced financier Jeffrey Epstein. So we're going to start there, and there's other stuff to get to when it comes to big banks. With what you need to know, we have Bloomberg News banking reporter Todd Gillespie and Sri Natarajan, Bloomberg News chief Wall Street correspondent, right here in studio. All right, great reporting. I don't know who wants to kick it off, but first of all, remind us who this lawyer is at Goldman and the Epstein connection. Sri, do you want to start, or Todd?
Sure. I mean, Kathy Rummler is the general counsel at Goldman Sachs, has been in that role for a few years now, but really been in the news for the last several months, especially since the DOJ disclosure of the Epstein files, which showed that Rummler appeared to be one of Jeffrey Epstein's closest associates, at least in terms of the volume of emails exchanged with Epstein. Then, with all that mounting scrutiny in February, Rummler actually submitted her resignation, and at the time, the CEO of Goldman Sachs, David Solomon, said he reluctantly accepts the resignation and she will be missed at the firm.
To be fair, close association, lots of emails doesn't necessarily mean any wrongdoing?
100%, and that's why I was being clear that it was the volume of emails and sort of the exchange was there, but she's always maintained that she was friendly with him in a professional context. She was a lawyer at a white-collar law firm at that time, so she is a defense lawyer, and he was sending prospective business contacts her way. But this latest development where after that February resignation, now we're reporting that the CEO has asked her to stay on at the firm in some capacity, even if not general counsel, it goes against the grain of everything we've seen Epstein related in the last several months, where anyone who has been under scrutiny has been forced out of their roles, fairly or unfairly, but that has been the case in most of those other circumstances. So this at least goes against that for now.
It goes against that for now, and we're going to get to more of that in a second. But Todd Gillespie, I want to bring you in and just remind us, because we spoke to you about this a few months ago, about the content of the exchanges in that we did find and that you and the team found in the Epstein files, and sort of the nature of their relationship.
Yeah, well, I mean, it's been extensively reported, a lot of the interactions that they've had. I mean, she accepted thousands of dollars in gifts from him. She advised him in a number of contentious media and legal scenarios, informally, obviously, at the time. She wasn't, the Latham and Watkins, who Kathy worked for at the time, has said that Epstein was never a client of the firm. So it was seemingly done in a sort of an informal capacity here. But the volume, as Sridhar says, the volume of these interactions, they talk about everything from they make jokes about fat people at the New Jersey Turnpike, to talking about, food and, things that they see in the news, and, also, more intimate legal questions as well.
And the
that
time
relate to
period
his,
was after it was well known that.
Yeah, so I mean, Epstein was convicted, back in 2008, I think, for soliciting sex from a minor. This was well after this period. This was around, the 5 years or so before she joined Goldman Sachs, and before Epstein died in 2019. So this was before her time at the firm, and obviously, this predated her time at the firm, and the firm has said that she fully disclosed her interactions with him and that they've been satisfied by that as well.
What is Goldman saying about all of this in terms of why David Solomon wants to keep her on for a certain time as an advisor?
Well, I believe the company has declined to comment when we spoke to them.
So nothing publicly, but we have reported that David Solomon has privately and very strongly maintained that he doesn't think Rumler did anything inappropriate or wrong. And you also have to remember, David Solomon has been CEO of Goldman Sachs since 2018. He's gone through his own bout of intense scrutiny over his leadership style. And if there's one thing that we know about his style, is that he doesn't like being told that he's wrong. He doesn't like when people push back hard against him on certain things. And in this case, I think he feels the right thing here to do is to stick with Rumler, even if it's in an advisory capacity, because I think it's a genuine feeling when he expresses the fact that he truly values her advice.
I got to say, go ahead, please.
Well, the other thing just to bear in mind is right now the firm is doing better than it ever has. I mean, its stock just passed $1,000 for the first time ever. David really has his hands very firmly on the steering wheel of this company. And, you really get the sense that no one really wants to question him all that much.
But it doesn't mean that there hasn't been pushback from some senior partners, as you guys mentioned in the piece.
Oh, 100%. In fact, there was a report today in the Financial Times that talks about one of the top partners at Goldman Sachs who left recently having clashed over this very matter with the senior leadership rungs of the firm. So, yes, I mean, even in the last several months when we've reported about this focus on Kathy Rumler and Jeffrey Epstein and all those emails, there has been a lot of hand-wringing inside Goldman Sachs. But again, this is clearly a very top-down firm. This is a place where David Solomon is firmly in charge. And when he truly believes that he's in the right, it's not going to be easy to change his mind. And that's why, perhaps it's a good show of loyalty, but he's sticking by his decision.
All right, while we've got you, a couple of other things we want to quickly get to. Citibank. President Trump turned into an M&A enthusiast. Surprise shout out for Citigroup CEO Jane Fraser, excuse me. The president putting out on social, he said, wow, Citi was ranked #1 in topping M&A advisory market by value in Q1. He did this post this morning. He went on to say, congratulations to Jane F. and all of her great people. They've worked very hard. Really big comeback for Citi. Citi shares are down. I got to say the big banks are kind of some are up, some are down. Is he right? Is Jane Fraser doing a good job?
Well, Carol, I mean, I think Jane Fraser I think most investors would say she's doing a pretty good job at running the bank. I mean, the stock price was up more than any other big US bank last year. She had an investor day that was pretty well received just in May. So, yes, broadly, the sentiment of what Donald Trump is saying might be true to many investors.
But is it #1 in M&A?
But it is absolutely not #1 in M&A. And that's one thing that, maybe
not
Trump needs
list?
to...
Not any list?
Not Bloomberg Deals list, not Dealogic. None of the league tables put it at #1, but they are, by some counts, #1 in power sector advisory M&A, which is what came up on Fox Business this morning on a banner across the screen, which might have something to do with Trump's post on Truth Social, because Leon Colvaria, top banker at Citi, was being interviewed on Maria Bartiromo's show this morning, which might have something to do with it.
Yeah, let's be clear. Sure, they're also #1 in every merger and acquisition deal announced between 1 p.m. and 3 p.m. on the third Tuesday of every month. That doesn't mean that they're the #1 M&A advisory bank in the world, and that is exactly what the president said. It's a shame we never had President Obama tweeting about league tables. And it is funny when President Trump tweets about stuff like this, because he has tweeted about bank CEOs in the past. But nothing that matches this tone.
Well, that's what's crazy. Hey, 20 seconds left, though. You did some reporting, Todd, back in October. Is President Trump banking with Citi? Just quickly.
Well, we know Eric Trump is banking with Citi and that he has taken some of his father's money and put it in a trust at Citigroup. That hasn't been publicly disclosed, and at the time the Trump General Counsel said there was no new trust in our story. But yes, there are signs indeed that Citi, more than any other bank, really has got itself in somewhat closer proximity to the president.
We're not done. Don't go. Todd Gillespie and, of course, Sri Natarajan of Bloomberg News.